Hey guys, welcome to Monday edition of Forex Focus. We're just reviewing our intro card with a young Frank Caberna. I don't know, maybe it's me. I'm hard on him. Maybe I've aged him because he looks closer to my age than yours. I'm here with Bridget Laszlo. Bridget, how are you?
I'm doing great. Yeah, that's Pete's tactic to have everyone smiling on the show when we go in, is he'll just make a dig at someone else right before we go on, and then ear to ear every time.
How was your weekend?
Oh, it was fabulous.
Yeah? You knock out all the shopping?
Yeah, I did. I did a lot on Sunday. I was like thinking of sharing this stuff I'm getting my family on here. It'd be funny if like I was sharing it in production, could just bleep it out. Like, you know, when someone like cusses on TV and it's like beep, beep. So I did some of that on Sunday, which was really nice. It was kind of cool. Like, I'd never lived in the city before, but seeing everyone like doing their Christmas shopping and walking around, it was just lots of holiday spirit.
Yeah.
So that was really nice. And then,
so where did you go? Because I went to there's a place by us, a shopping center called Old Orchard. And it was insane. I mean, just the parking was like gladiatorial. You know, everybody, one guy was leaving, 3 cars are lined up, and everybody keeps budging like, no, I was here first. No, I'm closer to the right. No, I'm so it was tough. Did you just local?
Yeah, so I just walked to like 900 North Michigan, so like the Bloomingdale's building. Got some stuff in there.
Very nice.
Yeah, it was nice. It wasn't too crowded. And everyone, every store I went into, they were really helpful, and it wasn't too busy. So that was great. It was kind of those last minute gifts where I'm like, okay, I need to make sure everyone's treated equal here and has good
look
stuff.
At you,
and
the diplomat.
I know,
already.
right? Yeah, but it was really nice. So that was good. And then my roommate, her family lives in Dublin, Ireland. So on Friday, we all went out together to Old Howden Ale House,
Nice.
just kind of as a farewell, since she won't be back till January. So I'll miss her, but it was fun to get all the friends together. So yeah,
Very good. Look at you with the diplomatic, making sure everything. It's so funny. My wife and I, when we had my kids now are 30, 29, and 26, but when they were 10, 9, and 6, we'd count boxes to make sure everybody had the exact same
it's so real.
boxes. I know
Yeah.
it was
kids, because kids will notice it and they'll be like, "Why did she get 2 more?"
He was
gifts?
out last week,
Yeah.
and it's not like a sea of toys and stuff, so there's a little fewer boxes there. He was out last week, and we were going out to do something, and I didn't even know he would like walk by the tree, and he goes, "There's 2 fewer boxes for me than Sammy." I'm
No,
like,
and
you've got to be kidding me.
They don't understand value at that age, because it's like you could say, well, no, sweetie, you got a $100 gift and he got $250. It doesn't matter. The 2 boxes. I remember like when I was a little kid, like my dad brought home a chocolate bar from work and he broke it in half, and like my sister cried because it was like, it wasn't whole anymore. It was 2 chocolate bars. It was so. I swear, it's like you don't understand it when you're a kid. And now I'm glad. I'm so much more of a like quality over quantity person, and I'd rather just have a nice gift or 2 and just hang out with my family than need. I still remember going through the catalogs, like circling the toys.
Oh yeah.
Oh my gosh, it was like being a kid at Christmas was really like the coolest thing ever.
Yeah, now there's not even a catalog anymore. You got to do everything virtually.
Now it's all on
now
Amazon.
I'm sounding like I'm dating myself like an old man. That's exciting. Good for you.
Yeah.
All
what
right.
about you? What were you up to?
Kind of the same thing.
Yeah.
So trying to get some last minute stuff done. We have a sink in the kitchen and it's leaking, and I was like, I'm loath to spend $300 on a plumber when I think I can do this myself.
Oh God, nothing ever ends well when it starts with.
Well,
maybe no.
This whole thing. It's like usually, it's probably getting way too. But when you change, what causes this sometimes a leak is this little cartridge that's in there that when you turn the handle on and off, this cartridge lets the water in or out, and it wears out over time. So. I had ordered 2 new cartridges, which were the wrong size to begin with, so I ordered 2 other ones, and it's this whole thing where you've got to go underneath and disassemble the whole thing and stamp it up. And I'm like, it's so funny because my wife is such a good sport, and she knows me. I said, I'll knock this out in 10 minutes, no problem. So she empties everything out from under the sink, and after an hour, she's like, getting a little worried because this isn't going well, and she's hearing a lot of swearing. And it's like, you do realize I'm cooking, Christmas Eve and Christmas Day, and if I don't have a sink, this is going to be a little bit more challenging. And then all of a sudden it said on me, maybe this was not a good day to do it. And classic me too. I print out the instructions, and there's these 2 little boxes that talk about how you align these crazy things you put on. And you got to align them just right. And of course, and they got like big asterisks by them. I read them, I don't think about it. I'm like, I can't get this thing to work. Finally, I stop, look at it, and realize, okay, I'm not following what they're telling me. Put it together, ends up, I get the hot and cold backwards. So I'm like, okay, we're all set to go. I turn it on, and nothing happens. But the sprayer works. And then she looks at me and she goes, no, that's not enough. The sprayer's not going to get me to what I need. So I'm like, because she looked at me like, I looked at her like, is the sprayer going to work for the next 2 days? She's like, no.
Yeah, she said if you're going to do it right.
No. And I knew the fact was, you don't want me to call a plumber on a Sunday because that's going to be double time. That's going to be about like $400 an hour. I said, I'm back at it. So long story short, got it working. It's all good. It's funny because I put this all up and she's like, should I put the stuff underneath? I'm like, just wait, let's see if we have a leak. And so we went out shopping. I'm thinking, oh my God, if it does leak, nobody's home and it's just going to be a gusher. But all in, we're all good, everything good. So did that. We did a little bit of shopping and just some fun stuff. My daughter's out, my son is out, so we're kind of getting everybody at the house, and it's really kind of fun.
That's so nice.
We love being empty nesters, but it's kind of fun to have everybody back.
For sure. My family, we're having some family friends over that actually like have been our friends for, they're friends for like 20 years,
since you were kids, yeah.
Longer, yeah. And they're wonderful people. But both of their daughters recently got engaged. So it's going to be an interesting dynamic of, oh my gosh. And like it is, I'm officially at the age now where people are starting to like get married and have kids. And so it's always like very interesting. Everyone's
You're
in
still
such
awfully young. There's not a lot of people getting married.
Yeah, but still,
your contemporaries, are they your contemporaries or are they a little older than you?
One's a little bit older, one's around my age, but yeah, it's just, it's super exciting, obviously, but definitely like crazy, like, oh my gosh, like it really hits you like, wow, I'm growing up.
Yeah.
And then I think it'll really hit me when the high school friends start getting engaged. That's when it's going to be like, whoa. Where did you grow up, by the way? Where are you
Here. I spent my entire life in Chicago except for 4 years of college. I went to Tulane in New Orleans because my dad was a cattle broker. He was a trader. Mm-hmm. My grandfather was a pork belly trader. So by the time I was an early kid, I started.
Did you say pork belly?
Pork bellies, which is what they make bacon out of.
Oh my gosh, I didn't know that was a thing.
Yeah,
That's so funny.
Pork bellies. It's funny. My dad retired at 60. He had a great career. Never traded another contract. Always loved to hear the gossip of what's going on the floor. My grandfather died at 92, and I had to go in the pit to get him out of his pork belly. He was still trading, so. He was wild.
Wow. Okay.
But since I was a little kid, you couldn't work on the floor until you were 16, and and at that time it was very, if you'd been around a while, my dad and grandma, the rules were pliable to say anything.
Yeah.
So at 14, I started clerking down there, and I realized this is what I wanted to do. I loved it. It was exciting. It was for me, and especially going to college, I could see. Macroeconomics, model building, actually how that applies to exactly what I'm doing. How that moves interest rates, how that moves FX. And I started my career in the FX bits. So it was always very fascinating. So if you weren't here, you couldn't. The edge of being on the floor was great. And you always wanted to be as close to the order flow as possible. So for me, I started trading when I was 20 between my junior and senior year in college. And was here ever since because that's where the trading floor was. And then I built some businesses here, and that's where I was. So I've never been anywhere else.
Right. That's pretty rare, I feel like, these days. Because I feel like everyone I know, myself included, has changed career paths like 20 times.
Now, did you have any desire to go to New York?
Did I ever? Have I ever been to New York?
No, my daughter, when she graduated college, I got to go live in New York. And living in New York is so hard.
Yeah.
And all of her friends went through the same exercise. They're all out of there now except for one.
So one of my best friends from like childhood lives there and she loves it. I honestly think, I don't know. It's not that I'm opposed to ever living there, but it's just not a place I'd want to start out. It's just a lot. I really like just from the expenses to even the apartments. I like liking where I live
Right.
and feeling excited to come home to my apartment.
And you're not
don't
gonna
want
do that in New
I
York,
don't
yeah.
want to have to close my drains so
Yes.
rats won't come out. Like, I don't want to have to put my trash on the street. And I have been to New York. I love it.
Yeah.
And I think my friend who lives there loves it. I'm sure if you pick the right place and have connections, it's great. But not a place I would want to start out.
Right.
Great city though, but I don't know.
No, yeah, because my daughter they do this thing where nobody can afford a one-bedroom starting out. So,
No.
So her and her roommate, they get a one-bedroom and they put up something called a flex wall.
That's such a thing there.
It's
Crazy.
it's a huge thing there.
Crazy.
So they take the living room, cut it in half to create 2 bedrooms. And it leaves you with a living room that's like 5 feet by 5 feet. And they've got this little love seat, and the TV's like 3 feet away. And I remember
know.
pictures of them watching TV. It was nuts.
I know. Yeah, it is. I do like having, it's not even so much about the space. It's just like, I've heard so many things about like paying these broker fees, and then you move in and they lied about there being an infestation, and then their hot water doesn't work. And it just feels like everything that can go wrong does. And I get maybe it's character building. I don't know if I want that kind of character building. If that means being a little bit softer my whole life, that's fine. I think I can live with it. I don't ever need to experience.
No, and you're exactly. My wife, when she went there the first time with my daughter to find an apartment, I get a call like at 9 o'clock. We found this place. The apartment finder wants $2,500 in cash.
Yeah.
And I'm like, no, honey. When you go to the building pays them a commission for bringing you there.
Mm-hmm.
And she says, no, honey, you're wrong. This is the way it works in New York.
It's awful.
And so off she goes to Chase to get cash. And then it was like 2 hours later, and the building wants $5,000 in cash for 2 months deposit because nobody will take a personal check. So it was like just one thing.
And it's like you have to make like 40 times the rent. It's a whole thing.
They wanted my tax returns, and I was like,
yeah.
This is
Meanwhile,
where it
I
ends.
just met my landlord through a mutual friend,
Right.
and he's like, "You want this place?" I was like, "Yeah." And I thought the like $500 leasing fee the building made me sign
Right.
was ridiculous, but always something to be grateful for, I guess.
And there's so many great. I told this story when I was doing future shows on Tasty Trade, and there were so many guys. I remember this guy Max, a wonderful guy. He says, "Pete, why didn't you call me? This is all you are getting just scammed left and right." So
Yeah.
Max has always been my resource ever since. But let's start talking about markets because we do have stuff going on, and if we can jump over to the platform. Interesting week last week. Fed announcement.
Yeah.
They just took the equity markets to town on Wednesday. A little bit of a reprieve. Thanks, guys. Dollar had a little bit of a reprieve. They sold the dollar off a little bit. But we look today.
And we're back.
Sterling down 67, euro down, and let's just get into them.
And do we tend to see like a little more liquidity in the markets around the holidays, or what would you say there's kind of a trend, or it kind of is pretty variable?
That's a great question. And 20 years ago or 15 years ago, where the markets weren't, when everyone didn't have this fantastic electronic access to everything.
Right.
In the old days, to trade crude oil, I used to have to fight my way out of the pit. I had to pick up a phone. I remember buying crude at 9 a.m. and getting the fill back, actually, where I got filled 4 hours later. Which is, if you think about it, no one would tolerate that now. You move, your mouse across platforms, and you have access to hundreds of products. Mm-hmm. So I think with the electronification of markets and the leveling of the playing field, does it get a little slower out in the holidays? It can. Mm-hmm. But if things are moving, and things are moving, people are still trading. So are some people on vacation? Absolutely. Will we see probably, if you looked at volume in the U.S. equity markets as a benchmark, the SPOOs, NASDAQ, you'll probably see that volume down a little bit. You'll see futures down a little bit. Used to be down by half, 2/3. It would go from, in Euro FX, we trade 150,000 contracts in pit. It'd go down to 35,000.
Yeah.
Not the case anymore. So we'll see maybe volume be a little bit lighter, especially around, and this is a good point, around the cusp. But what I mean by that is in the afternoon here, we know our futures close between 4 and 5 in Chicago, but spot FX is always open. It'll get a little thinner between 4 and 6 o'clock when just U.S. is going out and the New Zealanders are coming in, the Australians are in. We don't have the rest of Asia. Markets tend to have a little bit more elasticity, so they'll move a little bit more.
Yeah.
So, yeah, we do need to be a little bit mindful of on that. If there are any, and we'll take a quick look at the calendar, if there are any calendar events, and there's not a lot, because we're getting towards the end of the month. There's not a lot there.
Right.
We could see a little bit more outsized elasticity, but the old days of it being holiday markets and not a lot of interest, if stuff's moving, and we are seeing things move. I mean, euro right now back below not 105, but below 104. And let's just go out to the intraday, take a look at the hourly. Here, we'll even go a little bit more granular than that. Let's go to 15 minutes. So, Friday we tried to up a little bit higher, but we are definitely giving back ground again. We're getting back down to that 103. We're not quite there, but that 103.5. I look at this now. We've gone through Sunday night. The market tried it a little bit higher, coming into the U.S. session. For FX, we're closed Wednesday from Tuesday at 4 o'clock in the afternoon till Wednesday at 3 in the afternoon. We'll open back up.
Yeah.
Same thing on New Year's Day. It's the only time FX closes. Thanksgiving, everything else. Now, futures have like half a day on Tuesday. They'll be closed on Wednesday. A little bit different schedule. So be mindful of that if you're managing positions. Christmas Day is always a very, very light day, irrespective of what's going on.
Your kids aren't going to be open. Or maybe they will. Kids are opening presents and you're like making trades in the back.
Right. It's
can neither confirm nor deny.
Yes.
Yeah.
Right. So, but unfortunately, they basically shut off all the plumbing. But I look at this, and this is again wondering if euro's going to find a little bit of a bounce into year end, or is just this, we're getting bounces now. If you want to trade both sides, that's great. Now, have we gotten some other? We have gotten some other bounces,
right?
From the lows going in, started December and stuff. The question is, what are your expectations? If you're looking for 104 is too cheap, and I think we're going back to 110, that's going to be a tougher trade. You're going to have to sit with that for a while,
right?
If you want to scalp the range, which I'm going to just say guess. One standard deviation probably sits around 45 to 50 pips right now. If you want to scalp 50 pip ranges, this market is giving you that. It's not giving you 100, 200. It's not giving you a sea change.
Well, and with the holidays too, like like you said.
Right now, do we sometimes see year-end flows? New Year's Eve is always an interesting day because sometimes we see end-of-the-year flows. I don't know what they're going to be. You could argue, well, there'll be more selling because people will lighten up their books. I don't know. It just depends how corporates and larger funds position who manage at the end of every month. So month end can be a little bit interesting. But we look, and especially cable holding in better than everybody else. But you take a look. Sorry, guys. Aussie, we are literally, what are we, 30 pips off the lows. Yeah. So Aussie, no relief at all. The Kiwi, which has been something we've been focusing on more and more, same thing, not much of a bounce. Yeah. When you see tape action like this, new lows put in, some back and forth. Yes, we tried Friday with a little bit of pullback. From just a tape aspect, the rallies don't hold much time.
Yeah.
We can't, if we had built higher here and higher up here, I'd say, okay, maybe there's a little bit of two-way risk coming back in here. And granted, I'm a contrarian, so it's hard for me to sell a break like this because if we go back and we look at the daily in Kiwi, this is a heck of a break here.
Yeah.
800 points.
Yeah.
Now that's almost 13%, if not more.
Yeah.
So you're talking about a 13% move since October to December. That's a huge move of an FX. So is the market cheap? Absolutely. Is momentum playing a little bit of a role here? Yeah. So for me, when you look at strategy, what are you looking at? What are you looking for in terms of opportunity. If you want to play It's Awfully Cheap game, you have to, first of all, bring your size down a little bit.
Yeah.
If you're a 2-lot trader, you're probably trading 1 lots. This is not the 2 weeks you're going to make a killing.
Right.
You want to stay engaged, and if they're open, I'm usually engaged. So set your expectations a little bit more realistically around, okay, what is this market giving me? If you want to play the low end here, and again, we're going right in the U.S. session on the lows, it'll be interesting to see if buyers emerge or it just continues to bleed down.
Right.
You got to be mindful of, we break 56 cents. We're getting into new territory.
Yes.
And the market's going to get a little bit more dynamic, which means it could have a propensity to run. So I think your expectations both about wins and what you're willing to lose. Again, making those decisions early, better than just buying them because they're awfully cheap. They're down here and you're like, oh, I don't want to get out because they're awfully cheap.
And are you someone who tends to look at chart patterns a lot in terms of things like, oh, head and shoulders or that kind of thing? Or
Great question.
Yeah, I don't know. I'm curious your thoughts on that.
You know what? It's a great question. And let's just do a little exercise because this is...
Yeah, because I've always thought they were pretty interesting. But anytime I'll study like economics, they'll talk about charts, and it feels like they're more of a theoretical and not as represented in reality. But I've noticed more in Forex that they seem to be a lot more commonly used.
Yeah. And here, we can draw, I'm going to draw a couple just chart lines for you here. So, and some of the paradox of it too. Now, this is an upward ascending triangle. So the more touch points you want, you've got 1, 2, 3 to the upside here. Really just the one here. We could also draw it against this line here, which gives you a little bit more. You've got 1, 2, 3, 4, 5. Now, it's already taken out that trend line there. Now, here's the challenge with this too, is you can also go back a little bit longer, draw this neckline here, and you can say, okay, this is a trade-off of technical analysis. If you've done it enough, if it helps you contextualize movement, it's great. The pattern recognition piece, you need to be careful with, because if you've done this long enough, I can draw you a bullish breakout pattern and I can draw you a bearish continuation pattern on the same chart. Which one do you want?
Right.
So
Okay.
when there is a lot of people who believe very strongly, I love a chart because it gives new traders a visual of where things have been. I think you need to be a little bit mindful of, and a couple of things. If you do want to be a technician, let me see if I can get rid of a couple of the lines here just to make it a little less messy. As you get closer to the apex of something like this, if we were to come back up and just chew through here, breakout up, breakout down does you no good. You'll get a lot of false positives on that. If you're looking for a descending wedge, which is basically you had a big down move, some consolidation, and now the market's breaking out. If you look at momentum trading technicians, they're going to look at this as a bearish indicator.
Right.
So can it be? Sure. If that works for you, but here's my challenge for that. We are awfully cheap, and the market's broken out. If you're going to sell this breakout, which is, you'd be a seller right here. If you're going to think about, I want to manage both sides of this trade.
Yeah.
Where are you going to get out if you're wrong? Basis technical analysis.
Yeah.
It's got to go back and violate this line. So are you willing to take 50 points of heat to the upside to sell this? If you are, then the pattern
Then great.
Then the pattern can work for you. If you're not, it may not be the right thing. So do I look at it more, some of the more obtuse things like cup and handle and head and shoulders? Sure. I'm not a big line drawer on stuff. Some guys are. Other guys like to use momentum indicators like moving averages. Now, I do look at moving averages, and it's funny. It's the guys who taught me to trade FX 40 years ago were all old school bankers. and they looked at 100 and 200-day moving averages because the guys who taught them did. Now, why is that important? It only is because a lot of guys look at it. So it becomes a little bit of a self-fulfilling prophecy.
Totally.
So I wouldn't, do I look at it when it gets to a moving average level like that, a bigger one? Do I see if there's a reaction? Yeah, but I don't put too much investment in it. So the takeaway is, if you find that pattern recognition helps you quantify, if the goal is, if it helps you quantify where you're getting in, and more importantly, where you're getting out for both profit and loss, it's a good tool to use.
Yeah.
But don't let the charts take over your decision making.
Right.
So it's a great question. I will run through that a little bit next week. So, but good question, good walkthrough. Dollar certainly has a ton of strength, no matter where you pick it right now. It'll be an interesting week to see if that continues as we roll forward. But I mean, FX is on sale. It's your call whether or not you think it's cheap. But I've also seen when we get to new levels, and we're way over time. Guys, that's it for today. Coming up next, Tom Sazoff, Tony Batista, Vanetta Logan. Have a great day. Bridget, fantastic seeing with you. Great segment. Have a good day, guys. We'll see you back here a little later on this week.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it, with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
I don't want to be here.
Yo, yes, you do. Look at you festive. You got festive leggings on.
I do have festive leggings on.
Yeah,
That
match
is-
your shirt.
That is
You're
true.
looking beautiful.
I will say it took me 10 minutes to get here this morning.
Yeah, no traffic.
There was no traffic.
Yeah. Don't you think that that's odd?
Nobody on the road today.
I guess all the other overlords gave their servants the day off today.
Hey, you're lucky you don't have to work Christmas.
That's right. If the markets didn't tell us that we were going to be closed on Christmas, we'd have to be here. You know that.
I know that. But
No doubt.
how was your weekend? It was the last weekend before
Horrible.
Did you get all your Christmas shopping done?
Horrible.
Based on the cherry bomb that I proofread last night.
He was in a mood, huh?
I was like, this is the grinchiest cherry bomb ever. Tom was like, I don't see any reason to buy people things they don't even need. Let me tell you about all the foods I'm going to eat. That's literally
Basically how it was. You're right. Paraphrasing.
I was just proofreading it. I was like, oh, okay.
You don't have to read the cherry bomb now.
They don't ruin it for everybody. All I was saying is that buying presents when you get to a certain age is stupid.
It's not stupid.
It is. It
It's
is
not.
ridiculous.
You can
You're
still-
buying presents.
Did you cut that part out? Because I read it. I don't remember reading that part of it.
That's because you both have the same mindset.
You're buying presents for people that already have everything. Like, there's nothing.
You could still get something like an experience.
I saw inches of universal age limit for Christmas gifts. I missed that. Christmas gift exchange. Yeah, I agree with you, Saz. I'll give you that.
Right, at certain age, like at 30 years old, you don't need to buy something presents.
You're married, for crying out loud. Get off my teeth.
That's not how any of this works. Again, you can gift people experiences.
What does that mean?
Like if
We got my son-in-law the greatest experience. Poop 900 or whatever it's called. Poop 911 or something like that.
Skibbity toilet?
They have 2 dogs, so they come once a week to clean all the crap in your backyard for you. That's not the greatest present ever? I thought it was the greatest present ever.
your kids weren't doing that anyway.
Hold on, who did you get that for?
My son-in-law. Sasha's.
Oh, I thought you said your son. I was like,
Oh,
Vinny
no, my
wasn't
son-
cleaning that up anyway.
No, my son-in-law.
You got him.
They got 2 dogs.
Yeah.
So they let him out the backyard.
Yeah.
They go into their area. They pee and poop. And then, once or twice a week, you got to come and pick it up. So we got a service that comes and picks up their poop for them.
Stop doing this.
Isn't that a great present? I thought that was the greatest.
Are we on cable access right now? What are we doing?
I thought that was the greatest Christmas
What if
present.
That is nice. That is actually
What
very
if you
nice.
don't want people coming in your backyard?
Okay, how many times have you said on this show and on the breaks, I gotta pick up the poop?
You've been fined by the city.
There's so much you've been fined by the city. You have so much
Yeah.
crap in your backyard.
Yeah.
I don't have any crap.
Dog feces.
I don't have any
No,
dog.
well,
Not
when you
anymore.
had dogs.
But you did. You did. Come on, I thought that was the great. Beth, please, somebody say it's
No,
the
I'm validating you. That's
You did
that's
a great
good
job,
gift.
Tony.
I was
You did a
very
great
thoughtful.
job.
So you could give people
thoughtful present.
things that
Okay,
they
congratulations.
normally wouldn't buy
Give 'em-
themselves.
Poop or pick her up or.
We only did it for 6 months, though. We didn't get them a whole year.
But that's fine. But you give
Screw
things
them.
you give things to people that they normally wouldn't
I hope they're not watching the show.
wouldn't buy for themselves. So you
6 months of a pooper scooper.
so you didn't buy any
You don't have to go out
presents.
there in the rain. You don't have to go out there in the snow. You don't have to go out there. They pick it up. They do everything.
Oh, sure, they're amazing.
They're amazing.
Yeah, they are.
So wait, did you buy any?
They get Harvard grads to do
They
it.
do. They do. I mean, the quality of people is not that great, I'm sure, but whatever.
Sure.
It is what it is.
So wait, did you buy any presents over the weekend?
I'm going to say, I have no idea. I'm going to say 0.
Yeah, I think
0, but I was.
I was
Okay,
gonna
I was
say
right.
all you came away with were some like king crab legs for yourself.
I did do some food shopping. I was very effective.
for yourself.
Yes.
Yes.
Yes, I got some.
You treat yourself very well for
And
Christmas.
the good news is Rhodey was still open.
Ugh,
Ugh, Brody.
Grody. Yeah, that.
I
Ugh.
went there. It's great.
Why can't they file bankruptcy yet?
They did file bankruptcy.
I know,
when
but
was
why
open.
can't they just go under peacefully?
When I went
Like a
there, I
mercy
asked the girl,
killing.
I go, I thought you guys filed for bankruptcy. She goes, I don't know nothing about bankruptcy.
Yeah, she's just trying. She's working there for minimum wage. She doesn't know. She's not on that earnings call. She's just trying to get through
just saying.
life, man.
I'm just saying. I was trying to be nice.
Okay,
Make
well,
it small talk.
I mean, I spent the weekend, I mean, I'm like looking on sports Twitter and I'm seeing like what all the quarterbacks are getting like their offensive line and kind of like you could say that like you and I, we're protect, right?
Yeah.
Like you and I, we protect Tom and you know, we make him look good.
Right, we're like the offensive line.
Right.
Yeah.
I'm just saying, if you're at QB1, what like?
Yeah.
I just regifted you a chocolate babka. Oh my God, you're so.
You gave her that arugula that was sitting outside.
No, the arugula is on the table. He gave me a babka. Thank you.
I gave her a chocolate.
Look at her. Thank you
Thank
for
you.
that. Thank you, me lord. I love the babka. I will.
But my Zabar's,
I will eat it. I will share it with my family all year long.
my Zabar's did get delivered to my parents' house Saturday.
I
that ordered.
regifted her a chocolate babka.
I didn't order a chocolate one, so this will actually complete the set. So
Their cinnamon is the best.
I know. Well, that's what I ordered, but
But I didn't want to tell the person that sent me the beautiful gift.
No.
That next time when you're going to give me something from Zabar's, make sure it's cinnamon.
just cinnamon.
You're unbelievable.
Oh, man.
I
Unbelievable.
thought that would be a little uncalled.
So did you decide what's on your menu
Yes.
for what? First of all, what did you eat for the Indiana game? R.I.P. to
Chinese
my
food.
Hoosiers. You got Chinese food?
Yes. Went out and got Chinese food. Did it pretty.
Not at any of the places he said he was going to. He went.
I went to Shendu Impressions.
Like I
Just
told
got-
you.
it
Oh,
was good.
the Shindu
Like I
impression.
said
We
he
haven't
would.
had that in a while.
It was good. It was really good.
Yeah.
They got some spicy stuff, which I give them credit for.
Okay.
But
Yeah, but you're a gringo. They're not gonna
no, but
make
I like
it.
spice.
They're not gonna
So,
make it spicy.
It was good. It was good. And
So what's on your Christmas
sucked.
dinner? Yeah, I know.
game was horrible.
Well, that's
Kind
What was horrible?
The Indiana game.
Oh, Indiana game was terrible.
I mean, they scored 14 points in the last 2 minutes, but they
yeah,
didn't
to make the
deserve that.
score look good, but
Yeah, they didn't deserve. They
No.
got basically blown out.
no.
Look, well, we are trying. What do you want us to be great instantly?
Yes.
Like that's not how that
I was
works.
hoping for a better game.
All right. Well,
I thought the coach called actually a really crappy game, the Indiana coach. But anyway, neither here nor there. What else? What else?
what is on your menu for
I'm-
Christmas?
I'm making prime rib and a lobster tail.
Will you do the queen's cut or the king's cut?
Oh, you're doing a surf and turf?
I am only because my wife doesn't eat meat.
Oh, you poor thing.
She don't eat no meat.
The holidays, eating the meat's this like a sure
It's okay.
thing.
I make lamb. No, for my big fat Greek wedding. No.
I know.
Okay.
Yeah.
So prime rib and lobster tail.
Yeah.
Like a lobster thermidor, or just like a
No,
like
it's a lobster tail.
wow.
Bought them at Costco, fresh caught. Look good.
Ooh.
We'll see.
Fresh court, previously frozen.
I don't know about that. I'm saying I don't know. Fresh caught though.
And what do you do for Christmas?
Beef tenderloin and king crab legs, but we ate the king crab legs last night.
Okay.
I gotta get more now.
That's funny.
I almost did the king crab legs from Costco, but I decided to go with the lobster tail.
Okay.
Less
I was just curious.
Less work.
I was just curious. So no one's eating ham.
Now you know you got to cut the shell on
I
the
know how to
lobster
do it.
tail, pull it out, put it on top.
Yeah, a monkey could do that. Yeah, I bake it a little bit and then I put it in the
Salamander.
salamander. Brush with a little butter, put it in the salamander.
You
Salamander.
make a compound butter.
What's that?
Just use clarified butter.
Use clarified butter. You can make a comment. Well, like you just put like a bunch of like herbs and spices in the butter. Yeah. Why would you use seasonings?
Right. He's salty enough.
Yeah. Why?
Don't
why
you worry,
season?
I got this down.
Why season anything? All right. Well, that's fine. Hey, I got a little holiday special here for you today. I'm just gonna do this now because why not? What do you?
All right, what do you got?
I made a little video. We have.
Oh
been
no.
blessed
Is this gonna embarrass
by
me?
the holiday spirit here
Oh, no.
at Tasty Live. So you're welcome. Here's
Have
here's
we
my
seen
gift.
this?
Watch this. No, you not.
I didn't proofread this. Oh god.
You want me to get in first? You want to get in first?
I hope you got extra large.
Saz, get in here, you big stud.
Look at that. He has hair.
Get out of here. Oh, this is my bad arm. Oh, that's my bad arm.
Just
Bad
kidding.
arm.
Wait, you gotta put the hat on. Hold on. Here you go. Aww.
Been over your head?
So you're naughty.
I'm nice.
You're naughty.
I'm gonna read. I'm
no,
nice.
it's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Aww. So cute. You guys in your get-along sweater.
Very cute.
I know.
That's our second one that we've worn together.
I know. How's it feel?
Dirty. Dirty. It was a little dirty.
I just take a shower afterwards.
No.
A little dirty, not gonna lie.
No, that's like 40 years of friendship, man. That's nice.
Tested right there.
All right. Well,
Is what it is.
Yeah, you guys are doing things. Hey, we got a great show for you today. On a little bit of an odd week of programming, we will have a full day of shows today, but a half day of shows tomorrow.
Who's the poor SOBs that have to work tomorrow?
And then no shows Wednesday in observance. It's Christmas Day. Markets are closed. And then Tom and Bat will be back on Thursday. Godspeed with that. Just the two of them staring at each other. But for you, for today, at the top of the 8 o'clock hour, we got a little options jive. We got Kai in the research corner. I think Kai's the one that told us about Chengdu impressions.
He did. He did not.
I think he did.
Okay.
I'm pretty sure that he did. Okay, actually,
told
girl.
him about it and sent him there for his first time.
Okay.
So
you told Kai about Chinese food.
yes,
That's not how it went.
That's not how.
All right, when you can drag him in here when he gets here, and I'll.
Okay, I will. You know what? I will do that. Kai's gonna be in for a research corner. That's gonna be at 8 o'clock. At 8:40, we got Dr. Jim in the house. The Skinny on Options abstract application: how to strategically diversify in 2025. Dr. Jim's going to break it all down. That's going to be at 8:40. 9 o'clock, market measures, evaluating Vega, theoretical versus realized risks. What?
Oof. A lot going on there.
That's what it, what? We don't, what is it, what does that mean though?
Say it again. What is that? What's it called?
Evaluating Vega, theoretical versus realized risks.
I'll have to wait and see.
Okay, that's, you don't know either.
I do. I've seen it. I just can't remember. I can't remember all the details.
Sure. 9:30. How about this? Live from the trade desk, big boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. And hey, it's not too late to get your guesses in for our Guess the Market. I really, really, really want lots of people to win Tom's money. Please. It's really my only thing I'm looking forward to.
We gotta give that out.
If you think you know where the S&P 500 is going to close on the last day of each quarter, we would like to know what you know. Just go to tastylive.com/guess. You have until January 3rd to submit your guess. And every year I'm surprised by how accurate people are.
Well, depends on how you look at it. Yeah, there's a handful that are around where we close, and the other 99.5.7% are nowhere to be found, just like
But you got to stay tuned for, what is it, next Tuesday afternoon. We're open all day.
Well,
that's where we give away the big
oh,
grand
New
prize.
Year's Eve. Yes, New Year's Eve. Yes, you don't care
Grand
about
prize
people's
winner.
schedules or lives. Yes.
Do they have to be present to win?
Present, yes. They have to be watching. If you're not watching, you can't win.
No, that's not true.
We go to the next person. I'm sorry.
That's not true.
You don't call in within 3 seconds. Yeah.
That's right.
Anyway, so yes, get your guesses in for that. But that is our run of show for today. In the meantime, in between time, you guys want your daily dose?
Sure.
Yeah. Hit me with my theme music. Let's go.
Theme music. Let's go. Make some noise.
Talk amongst yourselves here.
Your leading story.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Jump in.
In today's headline.
This just in. Breaking news.
All right, everybody. Today is a magnificent Monday. It's December the 23rd. This is the part of the show we like to talk. Start over. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. I had a little too much eggnog. Are you ready for the news?
Ready for the news.
You just like eggnog?
When I was a kid, I did.
I love eggnog.
Yeah, when I was a kid.
Ooh, you put like a little bourbon in there.
You know, I like it, but I can only take a small dose. It's really rich.
Because you're lactose intolerant?
No, I
Hurt
just
your
don't,
tummy?
I don't like it that much.
Hurt your tummy? I like eggnog. Now I want eggnog. Anyway.
A little eggnog.
Hey, getting to the first headline of the day. Put it on the board. Yes, Wall Street Santa Claus rally window is about to open with the Dow down in December. You know, it was not until maybe the last 2 years that I knew, and I think it was Chris Vecchio who explained it, there's actually a defined period for the Santa Claus rally. I just thought it was any reason that the stock market
And only
went
Vecchio
up.
would pay attention to
No,
that.
I thought, and I think a lot of people
It
think
really
that it's...
is any reason.
No, I thought it was any reason that the stock market goes up in December. Technically, though, the Santa Claus trading period is Christmas Eve through January 3rd. It's a seasonal stretch where investors look for a Santa Claus rally. And since 1950, your senior year, the S&P 500 gained an average of 1.29% during that Santa Claus stretch. The aristocrats. But no, let's talk about it, whether you think it's a defined period or not. No, okay, but we have had a very beat up Dow as we head into this period, and the S&P was not positive last week. Well, what are your thoughts for the last 2 weeks? Like, what do you think's going to happen?
I have no idea. I think they're going to go lower.
Okay, well, it starts tomorrow. Santa Claus starts tomorrow.
Oh, is that what it is? Starts tomorrow?
It starts tomorrow, so Christmas Eve.
Is that when Santa
January
leaves
3rd.
the North Pole and he's on his way?
Yes.
Got it. So the rally begins. Got
That's the official start date tomorrow. Okay, I got it.
Uh-huh.
No, but what are you guys like looking at? What are
Nothing.
you?
We're relatively flat.
What do you do with your trades this week? Because the volume is lighter.
No, it's not.
It's not?
We were at one of the busiest days of the year was Friday.
Okay, no, but this week.
I understand, but I'm just saying.
Nobody knows what
before
this
everybody
week is
before
gonna
everybody
bring.
thinks it's going to be light. One of the busiest days of the year was Friday.
Yeah, Friday's option
Yeah, but that was quadruple witching, though.
70. Don't put facts into a story that sound nothing's making. 71 million contracts, 37% above average levels.
71 million contracts is like in the top 5 the whole entire year.
And we talked about volatility also. Volatility of the 500 most liquid stocks, 30-day implied volatility was higher in only 23.
Wow.
So volatility was down, but the market business was crazy on Friday. So yeah, don't think it's going to be dead. It's not.
Well, what are you doing with your index
I don't think
positions?
it has to be dead.
And what are you doing with your bond positions?
Bonds were long, indexes were short.
Okay.
That's the theme of the year of 2024, and I suspect 2025, barring any 50% sell-off in the market.
Shifting gears to commodities, U.S. President-elect Donald Trump said on Friday the European Union should step up U.S. oil and gas imports or face tariffs on the bloc's exports that would include goods such as cars and machinery. I just want to talk about oil and gas and do with that what we will.
I mean, gas was up small last night. I mean, it was up about 15 cents last night, but it's only up 3 now. And crude oil hasn't done anything. The funny thing is every Sunday night, natural gas opens up, then by the next morning it's unchanged. Crude oil's unchanged. Nothing.
I mean, it's had a hell of a week, though, right? Going from 3 to almost 3.5.
But I would say nothing much.
3.4 inches.
Beth, before you put up the next slide, do you guys want to guess what the best performing commodity of 2024 was?
Commodity.
Commodity.
Is Bitcoin a commodity, or is that a...
It beats Bitcoin, but yeah, throw that in there. Beat Bitcoin.
Commodity. Was this something we trade?
No, not really.
Oh. Then it's probably something like palladium or platinum or something. I don't know.
What do you guess?
Hogs?
Ooh, no, it's cacao. Cacao, yeah. You got a little chocolate over here, but a little chocolate for the market because
now I know I should get this
cocoa is the
story.
best performing commodity of 2024, beating even Bitcoin. That's pretty good. It more than doubled
We
in
don't.
2024. I know you guys don't trade it. I just thought it was an
It's
interesting.
not a question of us even trading it. We don't even support it.
Oh, yeah, okay.
It's not on our platform.
Yeah, I know that.
It's on a crappy other exchange that does no volume.
Okay, but
So it's untradeable.
okay, but you're untradeable. But you could trade it
You can't.
all right, like.
It's irrelevant to us.
All right.
Cocoa, dead to us.
Well, I thought it was an interesting fact, though. Like, you wouldn't have guessed that it was the best performing commodity of 2024.
No, but nobody trades it, so who cares? It's like saying orange juice.
All right, I'm gonna keep it moving. The CFPB is suing J.P. Morgan Chase, Bank of America, and Wells Fargo over Zelle payment fraud. They sued the operator of the Zelle payments network and the 3 banks that dominate transactions on it. The agency alleges that the firms failed to properly investigate fraud complaints or to give victims reimbursements. Let's look at some financial stocks.
I use Zelle. I'm going to get something in this lawsuit. I'm sure like $4 or something like that.
We all get $1.50.
Yes. Go.
Go.
Get them.
JP Morgan, BOA, BOFA.
I don't think this will have any impact on any of those stocks, but
It doesn't seem to be bothering the stock at all. JP Morgan 237 looks unchanged, maybe down a skosh this morning, but not far off its highs of around 250-ish or so. Started the year closer to 150-ish. So JP Morgan, big year.
For the first time ever since President-elect Donald Trump was elected, Bitcoin had a down week. But Bitcoin's 10% correction is a buying opportunity, according to the Bitwise CIO. I know it's a silly headline, but I just want to talk about Bitcoin to start the week as we wind down.
according to Bitwise, you should scoop and scoop.
Scoopy.
That is their entire business. I think it's the start of a much bigger correction.
It is at a 2-month low.
Okay.
I want to talk about that 96,000 and change. I mean, last week it was over 106,000 and change. So
I think it'd go to 75,000, 72,000.
That's what your target, that's what you're looking at?
In the 70s, yeah.
How about for you, Bat?
I mean, I hate making predictions like this. I don't think it sees the 70s like Saz, probably in the 80s, if I had to guess.
Okay.
Yeah.
I was just curious. I don't.
80s, I think is a pretty good, but I think it's in the 70s, possibly 60s.
What
it always
about
does more than you think, up and down.
Yeah.
So
what about coin?
Coin, I think, is the sale here too. So I don't know. Like if Bitcoin goes lower, Coinbase is going a lot lower.
Oh, okay.
Coinbase down about $1 this morning, maybe even $2, sitting at 277.
I mean, it's already sold off pretty good.
It has off its highs of like 350 or so. It's down around $60 or so.
Coinbase sells off,
Is that a buying opportunity?
more. I mean, coin is closer to a buying opportunity than Bitcoin. I think when you see Bitcoin continue to go down and Coinbase stops going down, then that's a buying opportunity.
You know what? Coin's got derivatives to it. You could trade options to it. It makes a lot,
Yeah, it's way better trading Bitcoin.
Hey, from Nike to Intel, CEO departures at U.S. companies hit a record this year. CEO exits at U.S. public companies hit a record in 2024 as CEOs faced competitive and strategic challenges. Turnover included chief executives at companies that had long dominated their industries like Boeing, Nike, Starbucks. What do you think was the cause for the turning tide?
These are crappy CEOs that should have been gone a long time ago. And it's just all of a sudden, these.
But why all of a sudden? Because they'd been coasting.
Because all of a sudden, because that's what happens when the first one falls, all the other ones fall into place.
Interesting.
That's a very typical move for businesses. Somebody's got to go first, and everybody follows.
See you, Saz. Intel basically unchanged, sitting on its lows. Nike also doing the same.
U.S. public companies announced 327 chief executive changes this year through November.
Good.
Good riddance.
Good riddance. Get gone. Hey, this is interesting. Banking app Dave is back from the brink, and it's the year's biggest gainer among financials with a 934% surge. I didn't even know this was a publicly traded company. It's just Dave. D-A-V-E.
I thought it went
You okay?
business.
No. They were going to go out of business. They were like on the brink. That's what this headline says. And I had to look this up, and I was surprised.
Where is Dave trading for?
$67 and change. If it just says Dave Inc., so I'm assuming that I got it right.
Yeah.
You guys do not resuscitate.
Did it
$1 billion company?
It must have had a reverse split, like a.
In 2023, the stock dipped below $5.
I haven't looked at this stock since like 2020.
Me either.
Yeah, I was super surprised.
It had to be like $1 stock that must have had a 24%
In 2023, a reverse split effective. Yeah, January of 2023.
I was gonna say.
Effective. Yeah, I'm
Had to-
32 for 1.
32 for 1?
Yeah, reverse.
Yeah, but what a turnaround, though.
Yeah, so it's up to $2.
Right.
Yeah.
Yeah, but they did it.
Yay!
Yay!
I mean, I knew it got down. I thought it was bankrupt, but I knew it must have got down to like 30 cents or something, or 20 cents. And they did a 32 for 1, whatever it was. Well, who cares? But what's Dave?
Dave's not here.
Dave is a challenger bank.
That's a good question.
no
They make
open
money by
interest,
extending small loans to
$3
cash-strapped
live market,
Americans.
Or a
Yes.
challenger bank.
Yes.
Got it.
So, there you go. Hey, in other
We traded
news,
it like 2020 or something.
Qualcomm has secured a key win in its chips trial against ARM. Qualcomm central processors are properly licensed under an agreement with ARM. A jury found in a trial in U.S. federal court that removed some, but not all, uncertainty around the mobile chip maker's expansion in the laptop market. Qualcomm, ARM.
We
Qualcomm.
don't have a position on it either, but we haven't traded ARM in a long time. I don't even know where it's trading.
Qualcomm up $4 or $5 to 157.
Yeah, this was good news for them.
Uh-huh.
I don't know where ARM is. I haven't traded it in forever.
ARM IV rank of 14, trading 129. It's actually down around $3 or so. Trading near its recent lows, I guess.
In other chip news, NVIDIA fears may be overdone, and this analyst offers a simple reason why. His reason why is just the Blackwell chip. Spoiler alert, you don't have to read the whole article. But what are your projections for NVIDIA in 2025?
I think it's...
Shares of NVIDIA are down around 10%. Since peaking in November.
Shares of NVIDIA are $10 off their all-time highs.
They are down more than 10%.
They're $10 off their all-time highs. I think NVIDIA is going to have a tough year ahead.
More like $13 or $15 off its all-time highs, which would make it 10%, which would make you correct.
So you think NVIDIA is going to have a tough year in 2025?
Yeah, I do.
Why?
Just because
Just
they had,
gut check. Just gut.
had an unbelievable couple of years.
Yeah, they have.
I think they're going to have a tough year.
All right.
There you go.
What's the IV in there?
NVIDIA's up around buck and a half. IV rank at 31. Good, not great.
All right. Hey, Palantir joins the NASDAQ today, so congratulations. Palantir, Axon, and I forget the other. Oh, MicroStrategy is going in the NASDAQ today. But Palantir and Anduril are joining forces with tech groups in a bid for Pentagon contracts. The data analytics firm and the defense tech company are in talks with about a dozen other competitors, including SpaceX and OpenAI, to form a consortium that would jointly bid for U.S. government work. What are you doing in Palantir?
Palantir had a big day yesterday, or Friday, where it was up around $10 or so. It's up about $1 today.
I'm flat at looking for a spot to get short.
Okay, good luck
On
with
its
that.
highs.
I think Palantir is one of the riskiest stocks for 2025
Why?
because
Started the year at $16.
It's because it's grossly overpriced. But whatever.
Yeah, but his buddy, like they've got an in the administration.
Of
Like
course.
it's gonna be
It's locked
easy
and
peasy.
loaded. Yeah.
It's easy street,
Easy,
man.
easy, piece of cake.
Easy. Hey, Google proposed on Friday a loosening of its agreements with companies like Apple and others that set Google as the default search engine on new devices in a bid to address a U.S. ruling that it unlawfully dominates online search. As the threat against Google and the threat looms that maybe they're going to have to break up parts of their business, Google has a famous $18 billion yearly deal with Apple to make Chrome the browser.
Google only
choice.
up $1.50 on that.
Yeah, so Google's like, okay, we can cut that out. Okay.
Earnings February 4th. Good IV rank at 37.
Good job, Google.
Google, do something?
Apple might be working on a smart doorbell. Bat, I know you have a Ring camera.
I do.
right?
I love them. I got them everywhere.
I have a version of that too. Tom, you don't? Nothing?
No.
You don't know how to use it. Okay, well,
Go to Tom's house, thieves.
Apple could use Apple's Face ID technology to scan people's faces as they approach the door and then connect wirelessly to a deadbolt lock and automatically unlock for residents of the home, much like you unlock your phone. You can now unlock your house with your face. What? But there is a lot of reporting that Apple is hoping to expand its footprint in customers' homes, and this smart doorbell could be a nice.
This was a Shark Tank thing too, wasn't it? I think it was.
I think Ring did start like on. I don't remember. Yeah, I think you're right, Bat. But what do you think of Apple? What are you doing in Apple?
Nope, no Apple position.
I gotta be honest. The Ring camera is better than the Google Nest or whatever it's called. The Google cameras.
Oh, sure.
Just to let you know, everybody out there thinking about.
I just think it's weird that you have to like continue though to just pay like a monthly subscription for a camera that you like that's surveilling your own property, and they're like, oh well, if you want to actually see what we're recording, you need to give us $5 more.
That's right. It's called a business model.
It's
Up
like
about
$1
$2.55 on Apple.
All right, well. That's good times for all. Hey, Tesla is going to report their deliveries in early January, but Tesla's 2024 deliveries growth could hinge on the Cybertruck. Tesla is aiming to post slight growth in 2024 deliveries over last year, but it's going to be a struggle as we come down to the deadline. Tesla delivered a record 1.81 million vehicles in 2023, but they're on track to be flat this year, but the stock is anything but flat. The stock is up, 75% since the election.
Yeah, stock started the year around 260 or so. It's trading at 431 and change, up around $10 this morning. It is off its highs of around 490, almost 500. But a good year for Tesla. Never fade a superstar, right, Tom?
What are you guys doing in Tesla? Where do we go?
Short it, hoping.
Ivy ranking 91 in their earnings January 22nd. I had a roll to February.
Short it, looking to get shorter.
Okay.
Any rally.
All right, good luck for that.
I'm neutral.
And again, that delivery report's going to come out in early January. So, the FDA has approved Eli Lilly's weight loss drug Zepbound for sleep apnea, expanding its use in the U.S. The weekly injection is now the first drug treatment option cleared for patients with obesity and moderate to severe obstructive sleep apnea. On Friday,
My deviated septum?
On Friday, the Novo Nordisk NVO was down huge because their weight loss trial didn't quite go as expected. But then Lilly, remember NVO? You looked at it Friday. Yes.
Yeah.
You're with me. Okay, good. Yes.
Down around 15 or 20 bucks.
Yeah, it was a big move. I know you guys don't trade a ton of NVO, but
we have one small position on there.
It's up $3 this morning, 88.
On the other side of this is Lilly though with this good news. Zepbound.
Lilly's been on the leaderboard for what seems like forever, although it's probably mid-price for the year, sitting at around $7.82 right now, but it is up around $14.
Sad news for Tom because he famously he loves parties. He loves family.
He
loves gatherings.
Parties and family.
He loves a theme.
He does love a theme
But Party City is closing all of its stores. Tom, I'm so sorry.
This was a money laundering scheme for sure.
Party City?
Yeah, I mean, what?
I never been to one.
You've never been to a Party City.
I mean, but look at
Where is there a
Right, look at him.
Party
Good. Why would the Fun Vacuum go to the Party City?
Right?
Where is there a Party City?
Well, there aren't any anymore.
There's some
They're
in the
closing
city.
all the stores.
Yeah,
Is some in the city? Party City?
Yeah.
Yeah.
It's a good name, Party City.
Yeah. But you never, I would go for like a graduation
Yeah,
or.
you didn't need a paper plate with a theme on it or something?
Yeah. Although I will say, Amazon and like China are just super undercutting their business because you go to Party City and things are so expensive, and then you just go on Amazon and you could buy like 1,000 balloons for like $1.
Yeah. We'll give you a coupon.
But Party City, they'd been trying to restructure their debt for over the past 2 years. They filed for bankruptcy protection over their inability to pay $1.7 billion in debt. So party's over for Party City.
Oof.
But you could have gone to Party City, though, Tom, to get some decorations for Jules's retirement. Costco is opening new stores in 2025. Costco says 2 new stores will be in Texas, 2 will be in California. Costco opened their 897th store in Pleasanton, California on November 27th, with people camping out overnight to be the first to enter. They're also going to open a store in Genesee County, Michigan, and Sharon, Massachusetts.
Why would people camp out overnight to be the first into a Costco?
Because they might have special deals or offers for that store. Why don't German Shepherd me? Don't.
They get the chicken for $4 instead of $5.
I mean,
the rotisserie chicken.
Why would you?
Do you know what I'm most excited about, though?
Not really.
Most breaking news: Costco is switching their food court from Pepsi to Coke. So your girl can now get a giant Diet Coke as I roam the aisles.
I like the Pepsi there.
Yeah.
I like Pepsi better.
Take it up with Costco management. Costco's food court will now offer Coca-Cola products.
$9.50 down around $4 or so for a Costco.
I haven't been to a Costco food court in a while.
Okay.
What was your go-to when you used to go there back in
Costco
the
food court?
Yeah. Could not have been the pizza. Pizza.
I liked their chili.
Oh, I used to like their ice cream. They used to have great ice cream.
I used to like that turkey
I liked
thing.
it. No, you're right. I can't stand their pizza. It's all
pizza's horrible.
Gross.
Horrible.
And I don't.
The
like,
hot dogs are. I mean, they're big. That's what she said. But,
I don't like that cheese. I don't like that.
I like the turkey bake, the chicken.
I don't like that chicken
cheese.
bake.
Yeah.
Oh, it's good. It's not good for you.
I do like the ice cream.
They used to hand dip it and put the nuts on it.
Oh, not that. I like the cup.
Oh,
the soft serve.
Whatever. I like their ice cream. You're right.
Yep.
And the chili when they had it.
Yep.
Okay, this is riveting. And the chili. Costco says chili?
They did at one point.
That's interesting.
They had a pork sandwich too for a while.
I don't really like.
How old are you guys? What year was this?
But I haven't been to it now that you can't go up and order. You have to go through the machine.
Yeah, it's silly, isn't it?
Oh, it's because you don't have a credit card?
No, it's just. I don't feel like dealing with it.
Well, he doesn't have one of his own. Whose do you carry? Oh, the wives. Never mind.
Yeah, I don't feel like dealing with it.
Hey, Netflix has secured the U.S. rights to the FIFA Women's World Cup for 2027 and 2031. Netflix announced the partnership on Friday. The streaming giant said coverage would also include commentary and entertainment from studio shows and top-tier talent, as well as Netflix original documentaries in a lead up to the tournament. Netflix is again on the clock as they are going to do 2 NFL games on Christmas Day, featuring opening act Mariah Carey and halftime performance by Beyonce. But Netflix struggled during the Paul Tyson fight to handle the amount of traffic. So again, they will be put to the test. But the stock just kept going up. So what do I know?
It didn't matter. You're
It
right.
doesn't matter.
Netflix up
What
$3.
are you doing in Netflix? But I gotta watch my Chiefs Steelers Christmas Day.
Well, it's only on Netflix.
Only on Netflix.
I don't. They're gonna have problems. I bet you they don't deliver.
I don't know. I don't know.
I am not happy about that.
Does that mean you
Well,
won't
you'll be with your family. Hopefully, you're
won't be able
still
to watch it, or will you have to watch
nice
it on
enough
your
to
phone,
them
like
that
on
they
a
give you
small
the
little
password.
I don't know what I have to do.
What are you doing in Netflix?
Netflix 909 trading 911 up around $2. Ivy rank of 67 is good. Earnings January 21st.
Hey, do you know why you keep me around? Because
No, but
I
I've
alert
been
you to
thinking
this.
and asking myself that question for years now. Go ahead.
Hey, Mega Millions, Tom, because I only tell you about this when it gets close to like $1 billion. So tomorrow, there's going to be a Christmas Eve Mega Millions lottery drawing for $944 million. So stay with me. So the pot keeps rolling, but I didn't mention it when it was 500 million because that's not interesting to you. 700 million, not interesting. Now we're almost at $1 billion. Christmas Eve drawing. Okay, now it's interesting.
He's gonna send his biatch to go get some.
That's you. That's you.
Yeah, we're probably gonna have to do something here.
Mm-hmm.
Yeah, I mean,
944
that's a
is
good
close
way to ring in the new year by winning.
Yeah, everybody would be so happy for me.
Seriously, I don't think half the team shows up if you win. I think they boycott.
That Range Rover gets torched. A jackpot winner. So if there's a winner in tomorrow's Christmas Eve drawing, you could receive annuitized payments. Or if you take the lump sum, you get an estimated $429.4 million.
The big question, Sadnov, would be, would you wait until after January 1 to get the lower tax bracket that Trump's going to give us, 15% or something like that? 20-something, or will you do it?
You do have a year to claim
and
your
support
prize.
Biden. That's what I want
You
to
do have a year to claim your prize. I don't know how that works, but
I would probably wait to claim the prize.
Of course.
Just because I would, just
like the lower taxes. Understood.
No,
you don't have to say
not
anything
because of the lower taxes, but because I would just wait a little bit because I don't want to ruin Christmas for a lot lot of people.
it's too late. It's too late. But anyway, I'm just letting you, for all the people, if your state's a mega
But if I
million
win
state,
on Tuesday night, I'll let you know. I'll tell you.
you got to be in it to win it.
Early.
Hey,
Guess what bet I won?
in a actual heartwarming story this holiday season, Matt Ishiba is the Suns owner, and he's announcing $2 value meals for all Phoenix Sun home games. He says it's ridiculous that a family of 4 would have to spend hundreds of dollars. They'd have to spend like $320 for the cheapest seats, a couple beers, 2 sodas, 4 hot dogs, and parking. So he says all Suns home games, hot dogs are going to go from $9 to $2, 16-ounce Dasani, $8.50 to $2, fountain soda, $6.50 to $2, bag of chips, $7, $2, bag of popcorn, $2. Down
See,
from $7.
the Bulls should take a look at this, Sadnov. Don't you agree?
The Bulls.
So he says a family of 4 used to spend $98 on hot dogs, water, and popcorn. Now they can enjoy that same meal for $24.
I like it.
That's good. Good job.
Good job out of him. I've never seen that before, ever.
Thanks, Joe Biden.
Unless
What is wrong with you?
there's something wrong. I've never seen that deal before, unless it's like they can't sell tickets in the bleachers of the White Sox games.
All right.
Dollar hot dogs.
All right. Hey, finally today from a viral video of the day. It's a tale as old as time, Santa versus the Grinch. But 2 of my favorite, stunt TikTokers put this video together. You might have seen their Halloween ones where they race through the neighborhood for candy.
Yes.
But this one's pretty good. Watch this. The skill.
I haven't seen this.
And then they're on a frozen lake.
That's pretty good. That's pretty good.
It's like Charlie Chaplin levels of commitment there.
That's
to
good.
The bit. I thought it was pretty good.
Good job out of them. Good job out of them.
That's my time, blessedly.
Woo. Well, we're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. Bye for now.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us
This is for our
presents.
super
What is this
producer,
all
Beth.
about?
This
What
is
this
so
all about?
nice.
Oh, a little mini fridge. I love it. I love
Look
it.
at that. And it's red.
It goes well with my Mr. Coffee here.
She
I don't know
gives
if
you
can-
something hot. She gives you something cold.
Tom's is a regift.
What?
Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before. It's for,
I want the refrigerator.
for your pistachios.
It's for your-
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
And
use
it's
that hole for
cherry
anything
red.
else.
Shells
Your
in there.
shells.
Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you.
I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're
Am I
holding a little
basket. I got a little basket.
Okay, you're
go
Trader
ahead.
Joe's.
Okay, that's fits me.
Random guy, me,
Yeah.
standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
You don't
so.
say anything.
I am not clocking Min's in the line.
I would
I
say,
do that.
hey, your fly's open.
I would do that.
I would think it's a trap that he would want me to talk with, like, purposefully. So I'm not going to say anything.
What if he says to you, more importantly, what if I'm the dude in front of you?
Yeah, do
and
not
my fly is
engage.
open, and you say, hey, your fly is open. I go,
thanks.
Do you like that?
I would like.
What do you say next?
Thanks.
I want to go home.
I was a late bloomer.
Well, you're too busy.
Yeah, I was an athlete. I was.
Oh yeah. You're too busy with Aragon and Argon?
Yeah.
In the shower, what's your go-to for soap?
Like a Dove liquid soap.
Thank you.
Unscented.
Thank you. Liquid soap.
Yeah.
These two guys,
liquid soap.
These two
Hate it.
guys use a bar. I'm like,
hate it.
What year were you born that you still use? It's
I can't
disgusting.
stand
Pretty disgusting.
Huh?
I can't stand liquid soap.
So that when you pick it up, there's hair all over the bar, and you're, oh my God, it's disgusting. Like, actually, I got to remember in your bathroom, do you have a pump with liquid soap, or do you have a bar in your bathroom in the first?
No. Communal bathroom used the liquid soap.
Yeah, right.
This I have to hear. What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with Tony.
They're not cleaning their in my powder room. Okay, that's the logic.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. A little bit different than what you saw last night, Sal. Now, if even the S&Ps were up 15 or 20 handles, you said almost 30. I didn't see them up 30, but it does have the high here, 6,033.
I saw them up 30. Factoid.
The high here is 6,033. That would be counter to your up 30, but that's okay.
Really? I'm telling you, they were up 30.
Okay. Doesn't matter to me. NASDAQ up 7 and change. Russell down 9. E-mini S&Ps are down 12 right now. Dow down 205. Volatility still in by 18 cents, 18.10. You can see it at the low end, middle of its range, low end for the last couple of days. Bonds are down 9. Bitcoin just under 95,000 a moment ago, up to 96,200 just now. Ethereum 33.16. It was under 3,300 to 32.50 and change. Oil down 35 cents, under $70 to 69 and change. Seems to be going sideways. Gold down $11 after a 2-day rally in gold. Silver doing the opposite, up 27.5 cents. Nat gas, which was trading 3.5, a number we haven't seen since, I don't know, maybe the summertime, is now just under 340, 337 and change, down for the first time that I've seen in about the last week or so. Couple of movers, Tesla being one of them. We just talked about it a moment ago, trading 429, actually lower than where it was. It was up around $12 or so. But that's all I got. So now it's only up around 8.
Yeah, natural gas did have a big turnaround from last night. I'm looking, so did the market. We were doing the show last night. S&Ps were up, 19 or 20 most of the night.
Yep.
And yeah, I thought it was kind of a joke that they were up because I thought
Well, they sold off on Friday a little bit going in.
sold off 60 handles.
Yeah, going into the close.
Yeah, I thought they'd be pretty weak this morning. They're weak now, but they were not weak last night. That's for sure. All right, let's do it. Emails that came into us over the weekend. It's Monday, December 23rd. We are now every single day. It's lighter.
Yes, the solstice was this weekend, wasn't it? Or Friday or something?
Yes.
Yeah.
So we're in a much better place now.
I don't know about that.
Positive.
What'd you say, Beth?
I said Mr. Positive.
We're in a much better place. It gets lighter every day, Beth. We're practically, it's almost summer already. December 23rd, let's do it. In theory, if the stock market exchanges, options, stocks, whatever you want to say, temporarily closed in light of a global catastrophe or a world war, whatever, how would in-the-money options be settled if their expiration is during a shutdown period?
I'm not 100% sure. I know we've had these in the past, and the way I remember them is we would have a special closing rotation. That's the way I remember it. I don't 100% know for sure what the procedure would be.
So I looked it up.
Thank you.
Because I wasn't 100% sure either.
I don't get the privilege of being able to see these ahead of time. I have to answer.
I understand.
Honestly.
Well, I didn't know the answer either.
I know, I'm just teasing.
So I had always thought that they have some kind of a closing rotation, but when I looked it up, basically what they said is that the OCC will determine whether they use the last traded price.
Rare.
Rare, depends.
I would think, in my opinion, I'm just giving you my opinion.
So they have two options. They can use the last traded price, or they could go through some kind of a closing rotation if they plan on reopening.
Right.
So they said that the OCC has a little flexibility there, but it's up to the Options Clearing Corp.
I mean, that's the key there. It's up to the OCC.
It's up to the OCC, and it's nothing that anybody, nothing to do with brokerage firms, nothing to do with even the exchanges themselves. That's to do with OCC, which is the Options Clearing Corp, and the default is to go back to the last price that they traded at, last day of the closing prices. Let's go next slide. It's never really happened before, so who knows? I recently bought an at-the-money call in XYZ. The stock shot up. I rolled my call up and out, and the stock shot up again. How do I protect myself from the stock coming down from here and still benefit from the upside move?
So they made two phenomenal trades, and
no, they made one trade. They bought it
and at the money call, and the stock
went up,
shot up. That's a
and then they rolled the call
trade.
Up again.
And they rolled the call up and out, and the stock shot up again.
Two phenomenal trades.
Two phenomenal trades. That's what I said. I mean,
how did I lock in the profits?
I mean, let's assume it's one contract and you don't want to get out, because if it's two contracts, you always say, reduce your size, get out of half, let the rest run, blah blah blah. You could sell it further out of the money call, reduce your delta a little bit that way. You can actually sell out the call and then sell a put if you have the buying power, which would give you a higher probability of success. I mean, there aren't too many things you can do with the risk that you have there, but selling a call would probably be the easiest thing.
Well, you're not going to sell a put because you have defined risk here, and you're not going to set yourself.
That's why I said if you had the buying power, you can have a higher probability of success.
So I think the answer here is, the simplest answer is that you're going to sell an out of the money call against it. So whatever call you're long, just sell something higher than that. That's what I wrote back to this person. So if you're long just an in the money call and it's worked great for you like this, sell it just out of the money call.
Yeah,
take some money off the table.
You reduce your delta by whatever the delta is of the call you sell.
Yep, you can reduce your risk by a third, by half, whatever it is. Lock it up. Let's go to the next slide. I'm uncertain how to manage a position where the short strike goes in the money at the 21 data expiration mark. I currently have two positions that are in this situation. Do I roll these positions out to the February expiration cycle at the same strikes, or do I roll the strikes down so that both legs are out of the money? Well, this person is short an in the money put. This person is short a put vertical where the strikes are in the money.
Okay, so put vertical. Put vertical, I probably wouldn't do anything. I mean, assuming it's a relatively tight $5, $10 wide, put vertical. You could sell, if you still had enough premium in it, an out of the money call spread to make an iron condor. Wouldn't use any more buying power. It would collect a little bit of premium, which would be good. You could roll it to February, same strikes in this time frame. I would look to do that. I rolled some positions to February a little bit early last week. February had around 62 or 63 days, 60 days today, maybe a little bit more when you did it here. And then you might be able to roll your strike down a little bit for small credit or even, or same strikes for higher credit and sell a call spread. Typically here, I'm looking to sell a call spread, whatever I do. If I stay in the same month or move to next month.
I mean, in this situation, for me, you're short an in the money put spread. Stock's lower. I mean, you can certainly roll out to February if you want to, but I don't know if you
collect pennies. You don't collect that.
I don't even know if you can do it for a credit. That's the problem. For me, I either sell an out of the money call spread if I can get some credit for it, or I roll to February and sell an out of the money call spread. Either one of those two things. Keep the dream alive, but sell the call spread. By selling the call spread, you just introduce upside risk, but you also collect a bigger credit.
Yep.
No additional capital required. Let's go to the next slide. For a covered call strategy to generate premium income from optionable stocks held in a long-term investment portfolio, is there any guidance on selecting the call strike price, how many deltas or standard deviation away is the best strike price for 45-day covered calls rolled at 21 days?
I'm having a hard time reading it, but we typically go somewhere for a wide range, the 30 to 50. Like, where's the optimal for selling a covered call? Is that what they're asking here?
The question is just what are the mechanics here? And my response with respect to the mechanics are, if you're going to select a call strike price, the default is between 30 and 35, and that's how many deltas. I mean, so
I was going to say the 30 delta is what we usually.
So fine. 30. I said 30 to 35.
45 days out or closest to it. Yeah. Like now, I'd be looking at February because we're stuck in no man's land. 25 in January, 60 in the back month. I would be going to February. I would default to a little bit longer than shorter, but around the 30ish delta.
Yeah, you're going to go to the closest to 45 days, closest to between 30 and 35 deltas. You're going to roll at 21 days. Boom, boom, boom. That's it. That's the guidance. That's the mechanics that suggest you're at the optimal point in the decay curve for a covered call. That's what you want to do. About 45 days out, about 30, 35 deltas. Let's go next slide. So I saw your segment on the zero DT study from the selling vantage point. Have you ever calculated what a long strategy looks like from a delta perspective based on implied volatility? This person's wondering if there's a sweet spot to start doing zero DT strangles and let them cash settle on the chance we start seeing some wild volatility.
I mean, we look at the inverse of this all the time. So, I mean, if I extrapolate out and come back, I would say that this wouldn't be a viable long-term strategy. So I don't know the answer to it.
We did a study on this. Jacob did the study with zero DTs. And what we found is if you manage the longs early, you can be long or short on the zero DTs. And each one...
But it was almost like a 50-50
Yeah,
shot.
each one has a chance to be profitable. If you hold it to the end of the day, you didn't do nearly as well. If you held it to the end of the day, you didn't do nearly as well with the long zero DT strangles. So this all becomes a question of when do you close out the position, when do you manage the position. I'm going to say if you want to try trading from the long side and you want to do something early on, go do it. But by 10:30, 11 o'clock, you better be out. Our research we did a really good piece on this. There was no edge over kind of long or short. We prefer the short side just because it's simpler for us, simpler to manage, simpler to understand, keeps everything consistent. But if you want to do the long side, the results were fine as well because the stuff's all over the place. It's like 50-50. But if you hold the long stuff to the end of the day, it was death.
Would that also mean that you might think about doing a straddle on this? Because the straddle was the one that had the most movement to it.
You could. You certainly could. Let's go to the next slide. And the last one. Earlier in the week, you talked about correlation and how important it is. My question is, I have a position in Apple, which has a correlation to the SPY of 0.49. And I have a position in AVGO, which has a correlation to the SPY of 0.37. Does this mean that Apple and AVGO are correlated to each other because their numbers are relatively close to each other?
My question is an Apple, which is the correlation that's about 49. Apple 37. Apple and AVGO are correlated to each other because they don't. Yeah. I mean, 10 points is a lot, but they're correlated to each other. They're both going to go up with the market just about 30 to 50% of the time, right? I mean, basically what it's saying.
So, I thought about this for a while, and then what I wrote back to this person is, I'm a Bears fan, and if the Bears beat the Lions, and the Lions beat the Packers, then the Bears should be favored against the Packers.
No. You can't do that. I don't think you can do that.
Can't. I agree with you. You cannot do that.
Oh, okay.
Which is why I'm telling you right here that if Apple has a correlation to the SPY of 0.49 and AVGO has a correlation to the SPY of 0.37, AVGO and Apple are not highly correlated. They just have a similar correlation to the SPY. I was using that as an example to show you why the logic doesn't work.
I know, but a similar correlation to the SPY is almost saying the same thing.
It's not because you can easily have two underlines that have zero, that are both zero.
They could be up and down on different days and still have
zero correlation.
Still have a 37,
they can have no correlation to each other.
Yeah, I'll give you that.
Yeah.
Okay.
So
on further review, I will give Mr. Sosnoff the circle gets a square.
I thought you would like my example. The Bears beat the Lions, Lions beat the Packers, Bears should beat the Packers. Doesn't work that way. But anyway, So what happens here is that just because those two have a similar correlation to the SPY, does not mean that they have a correlation to each other. So that the answer to this is yet.
Good job, BU. Let's take a quick 90-second break. We'll come back. We got more Tasty Live after this. What comes up next, Sosnoff? That's right, an option jive. We'll be back in 90 seconds.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All right, so I've got some good news, and
and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Got the need for speed? No problem! On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
It's options.
Tomas, we are back, my friend. I'm getting a little bit of a cold, I think, Saz. No,
Oh, don't get near me, sicko.
I don't know if I don't know. I'm gonna have to take 2 weeks off. Sadlov, what comes up next? An option jive with this man, Kai. What's up, Kai? How are you?
I'm doing great. How are you?
Very well, very well.
You
Thank
just
you
say
for
you're sick,
asking, my
right?
friend. Yes, I'm a little under the weather.
Oh, okay.
Saznov, say
All right,
something
so ready
nice.
for some.
I'm ready for something
information
special,
from the
Kai. I'm
past
ready
week.
for something special.
Yep, very special. We're gonna have some a little bit different information and more information than the last week.
Oh, you overperformed last week. Who
Again.
knows what you can do now? You're on track right now.
You're
But
just
go
an
ahead.
overperformer. I can't even describe.
Yeah. All right, so for the indices performance last week, definitely we saw a lot more activity and volatility coming in the market. All the indices we saw in the red, especially the Russell, was down 4.8%. We don't need to show the average long-term weekly performance. These are definitely larger than the expected move for sure, right? 2% to 5%.
Absolutely, and that's why volatility expanded the way it did, now contracted the way it did. Yeah, I totally agree.
Yes.
I'm surprised it's down that much considering the rally back. But I guess, yeah, that's right. It was only $60. Yeah, that makes sense. Sure.
Yeah. It came back a little bit on the Friday, but overall still down a lot compared to the weeks before. So next slide, we see the expect move from the beginning of last week was only $49 from SPX because the VIX was down below 14%. The expect move should be 1%, but actually we moved 2%. And this week, I just saw this the beginning of this morning. The expect move becomes 82 because the implied volatility VIX jumped to 18.4. But last week, the highest point is over 28%. So we already came back down a little bit.
Got it.
Yeah, you would expect shortened week 2, right, with the day off in between there, half day tomorrow.
Still
so
a bigger. Yeah, considering it's 3.5 days.
1.4%.
Sure.
So 1.4% is in line with the average weekly upside move. It's about 1.5%. So let's see what's going to happen. Probably, I think this is going to be a little bit more quieter week.
Mm-hmm. You would think, but be careful when you least expect it.
Hold Hope so, right? We hope so. And also, we're going to have a great market measure talking about the Santa Claus rally. So I analyze the traditional wisdom that we should see the Santa rally between December 25th to the January 2nd. And we're going to have a great segment to talk about in the past 30 years. Does this theory hold true?
You're talking to the Grinch right here. Be careful. Go ahead.
I'm not a Grinch.
All right.
You're not the Grinch?
Yeah.
No.
Okay, so next slide, so we're talking about the expect move in the past 45 days. So last week, we had a big down move. So definitely we're in the middle of the trading range. So if you trade any 45-day DTE options in the past 3 months at least, none of any days the ranges actually exceeds the expected move. So if you sell naked positions, it's actually pretty good.
Okay. Right in the middle.
Okay. All right. So next slide, we're talking about major assets implied volatility. So this week, add Bitcoin at the bottom. Other than oil, all the implied volatility increased last week, especially natural gas, jumped from 32 IVR all the way up to 90%, 90 and up. So last week, we saw the volatility come in, which is actually great for the premium sellers, I would say. In the past couple of since COVID, I would say the overall market is very friendly for the premium sellers. Do you agree?
Yeah.
Yeah. Okay.
Yeah.
All right. So some major movers. Definitely is one of the biggest ones. Definitely VIX. So VIX. The highest day is Wednesday. The closing price on Wednesday is 27.62. So this is the second highest closing price in this year. The highest one we saw is August 5th, right? And if we're looking back in 2 years, it's still the second highest one. So they're 99.5 percentile in the past 2 years. And if we include 2022, we saw a lot of down days. They're only 10%. Occurrences that the VIX is trading above 27.6. So we still consider 27.62 as a really high level for implied volatility for VIX and for premium sellers.
Yeah, I wouldn't have realized that was the second highest closing of the year, but sure, makes sense.
Yeah, because we only have one big down day on October 5th. That's the only one surpassed last Wednesday.
Yep, got it.
Right. So so next one. So the daily change for VIX on Wednesday is 11.75 positive move, and there are only 14 occurrences that we saw since 1990, and there's no occurrences we saw before 2008, which is very interesting. I think one of the reasons is before. I don't know the reason. These are just numbers, and half of these occurrences happened after 2020. So 7 occurrences between 2008 to 2020, and 7 occurrences happened between 2020 to 2024 in the past 5 years. Which means that 11, almost 12 points jump inside a day is actually a really big change for VIX on a daily basis.
So you're looking at it as there's
close to close.
Yeah, but do I see anything here about expecting more implied volatility in the coming years? I mean, is that what you're trying to imply here, or at least look at?
Oh no, this is just historical data to see for 1 day VIX jump. How many occurrences that exceeds 11%?
I think it's just for context.
Good to know.
I don't think you can draw anything.
Got it.
Oh yeah. Yeah. Okay, so next one is the big move is the Bitcoin. Bitcoin, last week we saw high to low, more than $16,000 move. Definitely a lot of people crying on the internet. But if we look at percentage change weekly, it's only negative 5.6%. And this is exactly same as the long-term weekly downside move at 5.6%. So on average, this is in line with the long-term movement. but looking at it from the high to low is 16,000 because we're reaching the high right now. So any small percentage move can generate a large dollar move.
Yeah, that's interesting. Yep, I like it.
Okay, so next one is natural gas. So natural gas up 14%. We're reaching a level that's the last time we saw is November or December 2022. So this is the highest level for future price in the past 2 years. And the long-term weekly upside move is 6%. So 14% is one of the largest move for natural gas in the past 2 years.
Yeah, I mean, it had a nice turnaround this morning. It was up. It's down 2.5 cents now, but it was up 17 cents last night. Pretty big turnaround.
Nat gas is a hard thing. I find nat gas a very hard thing to trade. Options and futures.
I said last night, I go, it was up 17 cents. I go, don't adjust your position because by tomorrow morning it'll be down.
Nat gas is
and
a
also
very big
it's a
product.
huge product.
Yes, totally agree.
Yeah. So next slide, we're take a look at the largest weekly moves in the S&P 500. So just instead of taking the largest underlying, I chose the largest liquid underlying with at least 3-star and above on Tasty Trade platform. So the for the upside movers, the largest ones, DRI, Darden, which had the earnings last week, and PLTR 6%. Pfizer, Dollar Tree, and Carnival. Carnival had earnings on Friday too. So these has large move, and the IB rank is all above 25, 30, and 50%, which is pretty good. So for the downside, the largest movers is MU, AVGO, Lennar, which had earnings, Tesla, and Palo Alto Networks. So if we look at the average percentage change of downside moves, much larger last week for all these. Probably associated with the downside of the overall market move.
All right, another good to know here. I mean, so a lot of these stocks we trade, some of them we don't. I don't see anything that can use for their earnings coming this month.
Yeah, this is already passed.
Yep.
Yeah. No,
Okay.
I see. I'm just taking a look at some of these stocks. Yeah, they're.
Yeah.
Maybe
Okay,
goes up a
so
little.
the last.
The other one's down a little. Yeah. Go ahead. What's the last one?
All right, so the last two slides, we're going to summarize what happened in the past week and also what happened in the past year about earnings. So the past week, we have a little bit interesting stock trading, and for large moves, is Micron down 16%, Cintas down 11%, and Darden is up 15%. How was your Micron position?
MU.
Yeah, I'm looking at it. My Micron position was kind of like, I didn't think the stock was getting down. I didn't think the stock was getting to $90. Let's put it that way.
It's funny. I don't usually get emails about Micron, but I got a lot of emails this weekend, and more, a handful about Micron. It does have an Ivy rank of 27, which is neither here nor there. But would it be the put selling candidate that you would look at it?
Right.
I mean, I'm certainly long it a little bit. I mean, got up to 110 last week. Back down to, where is it, $90, $89 right now?
$89, yeah. It's down about 50 cents.
Yeah, it's tough.
I'd certainly rather be long it by being short puts than short it by being short
That's
calls.
what I am. I'm long Micron by short puts.
Yeah.
Cool. And the next earnings is not gonna happen until January 15th. Which we're going to see the large banks start to announce their earnings. I believe 7-8 years ago, the earnings season started with the Alcoa, right?
Used to.
Right.
Yeah, now it starts with the big banks, Wells Fargo, Citibank, and all of these.
You are correct. The banks have taken over.
Yeah, so before January 15th, the week of January 15th, and we're not going to have any interesting earnings. So this is the earnings review for the past year, for the past 4 quarters. In the past 12 months, we had the fourth quarter of 2023 and all the way to this quarter. So let's take a look at the percentage winners. We only talk about the overnight move and also the return from the stocks. The we can see this quarter, actually, we had the worst performance in terms of the percent of winners. We have 46% versus 54% losers. In the past 3 quarters, we have 49, 48, 51. So the average percentage of winners is 49%. It's actually very close to 50%. And the return, extremely close to 0%. It's actually smaller than negative 0.1%. I just put the numbers here. So over the long term, we only look at 1 year. We're going to have a summary for the last 3 years, probably down the road. The long-term percentage winners very close to 50%. The returns extremely close to 0.
Yeah, tough one for me because we have a much bigger swings than that shows.
Oh yeah, for sure.
Yeah, that's the challenge. Our swings are bigger.
Okay.
Unfortunately.
Yeah.
Unfortunately.
Mm-hmm.
That's it.
Good job. Good job out of you, Kai. Even the S&P still down 10, NASDAQ up 20, Russell down 5, Dow down 168. When we open it about 10 minutes out enough, even the S&P is going to be higher or lower than where they are right now?
Well, they're going to be up at some point today.
Oh. Close all watertight doors then. We'll be back in 90 seconds. Let's take the live. Volatility unchanged, down 23 cents. Give a little bit of credence to Sadnos' up move. We'll be back in 90 seconds. Let's take the live. Thank you, Kai. Appreciate it.
I'm bearish. I think they're going to.
I know you are.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
People are always asking, where can they find my podcast? They're There it is, son. Look at that. Option trades today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option trades today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, option trades today. You can find me on YouTube or wherever you find your podcast.
Option trades today. You listening to me? Option trades today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Warm.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell. Before we get to the opening bell, Sadnov, do you know what makes this day special?
No.
You really don't know?
No.
Well, Sadnov, this day, in about 5 or 6 hours from now.
What's going to happen?
In 2003, I ran into my future wife at Barney's.
Oh, God.
When she was buying shoes for her boyfriend.
No way.
Yes way.
Aww.
I sweeped her off of her feet.
Got it.
Brought her to Starbucks across the street. We sat there for 3 or 4 hours. She was 3 or 4 hours late for a dinner she was supposed to make for her boyfriend. And I said, listen, you seem wonderful. You're very nice and everything else like that. If you ever have any, if you ever want to get rid of the boyfriend, give me a call. She gave me her card. I gave her my number. And on Wednesday of that following week, she didn't say hello when she called me. She just said, is that soon enough? And I knew who it was on the phone. And I said, yes, that's soon enough. And we went out the following week.
Watch the movie.
What's that?
Can we just watch the movie or read the book? I have to hear the story.
03, Sadnov, our first pseudo date. That's right. She had her flashes on in the 15-minute, 2-hour zone. Ended up being 4 hours.
I thought she flashed you.
Yeah. That's how she won me over.
Because flashing you.
No, she had her car flashes on.
Car flash.
She flashed me later on. But
if she flashed you, that would work. That would work for you.
It's giving a little Dr. Jim-esque.
It is a little Dr. Jim. I know we've had the Starbucks connection together.
It's giving
but I don't go
Dr.
back
Jim.
to Starbucks every year. We were at the Starbucks on Oak Street there, the original one.
Maybe we can take it.
03, Sadnov, 03. That's right.
Set up a tour. Just and
we could
relive the the whole experience.
First date,
like a reality tour. First date,
like dinner date.
Idea. Where would you take her? Let's see.
Think about it. 03 now.
03. I mean, you probably went right to Gibson's.
No. That was it could be seen with too many people. I was just hoping to get going.
Oh, you know. Probably.
I didn't think I was going to be. I wanted to be there for a long time. I was just trying to have a good time.
I don't know. Where?
A little bit off the beaten path. Come on, where would I go?
I don't know.
Come on, a little bit off.
There's 5,000 restaurants.
Gene and Giorgetti's. Come on.
I'm going to guess Gene.
Yes. You went to a steak joint. You were right there.
Oh my God.
Gene and Giorgetti's. That's right.
Yeah, but it all depends. Like, I could tell you based on what you would order whether or not I'd want to go out with you.
We didn't have steak. We had the Chicken Joe.
Chicken Al Joe.
Yeah. Chicken Al Joe.
It's a power move.
Yeah. We shared it. Yeah.
Shared it.
We each had like a chicken wing and 4 bottles of wine. It was a fun night. Had to get it drunk. You know how it is.
Okay.
Actually, she didn't give it up the first date. I think she wanted to.
Stop.
I think she wanted to, but I slow played her.
Stop right there.
She wanted to for sure, but I slow played her. You know.
Of course she did. Surprised she kept her clothes on at the restaurant.
She kept pulling her shirt down. She had like a shoulder thing on. She kept pulling it down. She kept pulling it down.
That's enough.
Yep.
Nothing says romantic hotspot like red leather couches that they have there, and the
hey, it worked. It worked.
And the mirrors and the seats. I like that place. Don't get me wrong.
You can't face the mirror when you eat, though.
I can't.
You don't want to watch yourself
all those
eat.
Freaking mirrors in the dining room. I don't look at myself and
my son just wrote to me, "Oh my God, please God."
He's right. I mean, if I was him, I'd bury my head right now. Just put a pillow over your head, Nick.
Happy pseudo anniversary, honey, or first date.
It's not an anniversary.
First date. You know how it is. First day of the best day of her life. First day of the best day of her life.
I love you guys, but it's seriously giving Dr. Jim.
Just because you just don't remember, Beth. You're more like a guy anyway. You're like Chris anyway. You're more like a guy. She probably doesn't remember.
Oh,
true.
God.
Oh, she remembers. She remembers. Believe me, she remembers.
Oh, God.
Mm-hmm. Where was your first date?
First date? I told you.
Well, where'd you meet?
Oh, we met at a bar.
I met at a bar, the old-fashioned way.
Yeah, midnight on a snowy night in a bar. Me and my friend Teddy.
You were best available?
Only.
Only.
We didn't think we had a chance.
Only available. Well, even the S&Ps are down only 2, Sadnov, as
back then drinks were only like $1 or $2, whatever. They were cheap.
You had a $10 bill on you. You could last all night.
5.
Uh-huh. On this day in 1988, Vincent van Gogh cut off his left ear. Imagine that.
1988.
Sorry, 1888. I apologize.
I was going to say 1998.
I'm reading. I'm sorry. There's your opening bell, my friend. Even the S&P's down.
1998. That guy lived a long time.
NASDAQ up 60. Ooh, even the S&P's almost turned green for you, South enough. Russell down $1.30. There they are, green. Dow down 120.
Raised.
Volatility in by 46 cents. Be careful. We're going to go a little higher.
All right, let's see what we got here. Ooh, Japanese yen, bad.
Mm-hmm. Japanese yen.
Bad yen. Bad
There's
bonds.
one thing you can get rid of this year that you didn't trade. What would it be?
One thing I could get rid of that I didn't trade.
Yeah. You could put you could give your worst trade in, and somebody would have to take, that old bond.
I wouldn't have shorted NVIDIA at about 100 or 200 or 300, whatever number it was.
Yeah, you got a few of them. Let's see about even the S&P's up 6. Good on you. Lilly up 16, Meta up 10, Tesla up 9, AVGO up 5, Netflix up 4, Nvidia up 2, Google up $1.50, and Boeing, which could not find an uptick forever, has been upticking every day forever, up $1.65. On the downside, we got MSTR down 10 and change, Coin down just about 6. ARM, which we talked about earlier today, down just about 3. CRM down around 2. JP Morgan, we also talked about down $1.60. And Royal Caribbean, down $1.50, going out of business.
Royal Caribbean, yes.
Mm-hmm.
I'm just looking at our positions. That we don't have that many. Ooh, here's a problem, child. Taiwan Semiconductor.
Well, volatility in by another 3, almost 2.5% here should help your existing positions. Going to make it a little bit harder to find new positions. But don't worry. Every Tuesday and Thursday, I give you a couple on my option trades today. Just have to wait one more day. Tesla up 6 now. Ivy rank at Tesla 95. It was 100 and change the last couple of days, actually coming in a little bit, but extremely high at 95. Boeing up $2.
I don't know what to do in Boeing. That stock, I mean, I've had it. I'm trading it from the long side.
I've had to roll up. I started at the long side, but I sold both sides. I now have the 160, 195, but I'm all the way out in February now.
Let's see what I got here. Tesla. I'll stay a little short that. Taiwan Semiconductor is going to be a little bit of a problem today. I got to do something. In there. And I can't do much in there. The markets are kind of wide.
Yes.
All right, let's see what else we got. You know what stock's a pig? Starbucks.
Well, I mean, there's a new kid in town. There's a new sheriff in town. That's right. Bad coffee coming over and saturating the North Shore of Chicago. Starbucks down 33 cents, but can't get out of its own way. I mean, not even a month or so ago, the stock was 102. It's 87. Good Ivy rank of 47. Earnings are February 4th.
Yeah, bad coffee is destroying Starbucks in the neighborhood. It's kind of sad. Yeah, we don't know what to do. It's just a bad situation. I feel bad for them.
What are you doing here? Just rolling in Qualcomm? Or is that
Yeah, I'm trying to there's a couple stocks I need to adjust on the opening, but one of the stocks I'm trying to adjust is Taiwan Semiconductor. I'm not having a very good time of it. Are the markets in there crazy wide or whatever?
TSM, it's got earnings coming on the 16th. Let's take a look at what's going on there. January options are a little bit wide. Yeah, 560, 630. They'll probably tighten up a little bit. Yeah, they are a little bit wide. Those
Yeah, they're a little wide.
Yeah, I would definitely give you that.
And look at
MU up 40 cents. We were talking about MU just a moment ago. Just letting you know.
MU is another stock that we've got a few little problem child in. It's a stock that's had, I guess you could say, maybe a little more than a monster sell-off. I think got to lean a little bit long in MU here.
I mean, like I said, I'd rather be long it than short.
Yeah, but I'm not overly bullish on the stock market here. I got to tell you, not overly bullish, and
well, we've had a little bit of a sell-off here, sad enough, right? I mean, from 6,200 down to, I guess, around 5,900 or so, sitting right at 6,000. Be a good place to close the year. Put the 6,000 hats on.
I rolled up some puts this morning. Palantir down. That does not surprise me. Everybody thought it was going to be up this morning. That don't surprise me at all. What are you thinking?
I mean, I think
first glance.
Volatility's in by 28 cents. I think we're a rudderless ship today. That's how it's setting up so far. Maybe a little. I mean, I don't know. You got Bitcoin's kind of weak.
I like the rudderless ship idea so far this morning. I think that
you got a positive P&L for all your moaning and groaning. You got two loaves of bread under your arm.
I'm not groaning.
Sounded like it a little bit.
No, I'm not complaining.
Okay.
I just said I just don't have my. I don't have any bad positions on yet. I say.
You'll do something about that.
Bonds, notes, and Japanese yen are my worst positions. But, I mean, I think after Friday, a lot of stuff came off.
After expiration, and for me, it was really the week before, but sure.
Yeah, a lot of loose ends got cleaned up. I don't like the NASDAQ here up
98, so enough. It's a half a percentage point.
Yeah. Don't like the NASDAQ up 98 here. I do like AMD finally rallying a little bit. God knows we can use that. All right, what else do you see?
Nothing, my friend. I'm ready to take a quick 90-second break. I get Monday started. My Monday does not start until
I need some trades.
Well, you're not going to get any from this guy. We got Dr. Jim up next. I mean, the skinny on options, abstract applications, and nothing says Monday like that, gentlemen. I mean, Monday slaps you in the face when Dr. Jim comes on. I know it's the beginning of the week when I've got Dr. Jim on. So that's what I want to do next. We'll take a quick 90-second break. We'll come back. More Tasty Live after this.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time to introduce Monday to you. That's right. Nothing says Monday like this man, Dr. Jim, the skinny on options, abstract applications. How are you, my friend?
I'm well. Gentlemen, we made it. I mean, I'm live on the Tasty Network with Tom Sosnoff and Tony Batista on Christmas week. And this is crazy, guys. We made it to Christmas week. So what are you guys most excited about this week?
Well, I'm most excited about 21 years ago today.
Oh, God.
Here we go.
I met my wife shopping for shoes in Barney's. I took her across the street to Starbucks, and the rest is history. I slow played her for a couple of weeks, and then she came groveling, and the rest is history.
What were you doing?
So wait.
Shopping
hold
at
on,
Barney's?
because I've
Buying
never
myself
heard this.
shoes.
Hold on.
Yeah.
I've never heard this story.
Yeah.
Tony, are you trolling me?
Yeah.
Or is this actually how you guys did it? You went to Starbucks.
Yeah. No. Well, I mean, we met.
I mean, you and me, man. It's like we're separated at birth. It's like, I mean, you wouldn't know it looking at us. But man, our life's paths have been so similar, Tom. And here we are together on the show.
Believe me, when I found out how many years ago was it now? About 13 years ago? How long you been with us now?
Oh, it'll be 9 years.
9 years?
On January 16th.
Believe me, when I found out 9 years ago that you met you brought your wife to Starbucks for a first date, it ruined it for me. I'll just put it to you that way.
I mean, I took your story, man. Like I didn't. You've been.
Yeah, I hit it first. I did it first. Mine's 21 years old. Yours is a lot less than that.
Yeah, you never even told me, man. Like you can't. If we're gonna have this relationship, you can't be keeping secrets from me like that, man.
It's not a proud moment for me that we have this similarity together. Sorry.
Man, I know.
Mm-hmm. Yeah.
So Tom, how are you doing, man? Like you're going a little deep with the V there. Like I'm not sure how I feel about that. How are you doing?
I wish he would stand up too, because it's a little bit short. It's almost like a belly shirt. You know what I mean? Like you can.
Yeah.
Beth, am I lying? Tell the truth. Am I lying?
Omaha.
He's long on the top and short on the bottom?
Yeah.
Okay, yeah.
Right, Beth? Am I lying? Like you were worried when he sat down, you were going to see
Works.
something.
No comment.
Oh, stop yourself.
I thought I saw a little high ass crack. I wasn't sure, but I couldn't tell. So,
Why does my head look so big on the screen?
You have a giant
We were
head.
just getting a close up.
They had to zoom in so they could
You
see
look
the
great,
action.
Tom. You look great.
You have a giant head. I mean, you know that.
Man.
It's
Hey,
got
did
a
you
lot
guys
of
see my
brains.
Lions yesterday?
What?
Your Lions?
Did you guys see my Lions yesterday?
I thought you'd be happy about your Dolphins.
Yeah, but my Dolphins are looking good too. They still got a chance, Tom. That $23. It's not yours just yet. Like they mathematically have a chance. They win the next couple games and we get some losses. You know, we sneak into the playoffs and, you know, Dolphins at Kansas City again, round 1. I feel pretty good about it.
You should.
Yeah. So I heard about this, the fumble play, the fake fumble play. I haven't seen it. So I heard it was historic. Would you agree with that label?
It wasn't historic. It wasn't a fake fumble. It was a fake fall down.
So was it similar to the Marino fake spike?
No.
Way back in the day? Okay.
Not really. Because they double faked. So the running back fell down and the quarterback fell down or acted like he did. And then he threw it was a cool play, but I don't know why you wasted it on the Bears.
They were just testing it out. It was like a test pancake.
Yeah, I know. But
yeah, that's right, Tony.
It was just a test pancake.
Why would you waste that on the Bears?
To show off. I mean, why not?
That was kind of like a little bit of an in your face thing.
Yeah.
You know, that was like, I don't like it.
Yeah. What are you going to do about it?
Gamble and Dan's going to have all kinds of new stuff for the next couple teams.
Dan. And now you're a Lions fan again?
Come on, I'm from Detroit, man. Like, have you ever seen the movie 8 Mile? Like, I grew up on 10 Mile. Like, I grew up 2 miles away from where that movie was shot.
I did see 8
That's
Mile.
my people, man.
You know,
yeah.
I will say this about Detroit. That team, I'm going to just go on the record, they have no chance. They have no chance.
They're likable.
They're likable.
No chance at what? Like, so what? You're talking about the Super Bowl or no chance at what?
Everything in life.
No chance of making it through the playoffs. Yeah. No chance.
Okay, well, they're about to lock down the number 1 seed, so there you go. You got that.
Technicality.
No chance.
All right, guys, let's do it, man. Beth, let's go, because it's already going off the rails today. Let's kind of get some finance going. How are we going to strategically diversify our portfolios in 2025, gentlemen? Are you guys ready? Because I have a feeling you guys could use some of the information here this morning. So, Beth, go ahead and get us going here on the very first slide. So Wednesday's FOMC meeting, guys, really shook up an otherwise quiet market with the second biggest one-day VIX spike ever recorded. So naturally, many traders and investors are looking to equip themselves to be better prepared for the next volatility shock, which makes today the perfect day to talk about how to strategically diversify your portfolio in 2025. Now, to be fair, I have not seen the memo out of VIX HQ. Are we allowed to count that VIX spike? Or was that another VIX intern calculation mess up and we can't count it?
That's right.
You guys let me know.
You can count it.
We can count that one.
Yes.
Yeah, we'll let you
All
count
right,
it.
that's good. That's progress, right?
Yeah.
Because apparently the last one was imaginary.
That is true.
It wasn't right. Yeah.
Yeah. So all right, that's good. All right, excellent. Okay, so did you guys see Wednesday coming?
Yes.
You did.
Yeah, we're amazing.
Yeah. Well, Tom, you've been short NASDAQ from what, like 17, 18,000? So
No,
you're making
I don't
your way
have
back.
any short NASDAQ positions on. I was only short the S&Ps.
Really?
Yeah, it was only the S&Ps.
All right. Wasn't that the biggest? So not percentage-wise, of course, but actual point move. Wasn't that the biggest move in S&P history?
No. Was it?
I'm pretty I think maybe it was.
200 points?
I mean,
I wouldn't think so.
What, 240 points? But 240 points. I mean, have we had a move? And not even the close, but let's go high to low. I think that's the biggest one ever.
I mean, I'll take you for your word, but I don't.
I would be shocked if that was
I'm not sure. I'm actually not sure. I'm kind of asking.
I don't know. I would be shocked.
I don't know either.
why would you be shocked? I mean, the index is so high now. I mean, a big move like that is just, that's a huge move.
We've had 10% moves before, 7% moves. I know the index was lower.
Wise.
I know, but I just don't. I think I can't imagine that's the bet. I don't know.
Well, actually, yeah. When you bring it up that, because if you think back to like 2020, right? I mean, it was limit up, limit down for like a week. I mean, it was kind of back and forth, and that's when the S&Ps were at what 2,700. So I actually think
they started when the pandemic started. They were 3,300. So I have to think, there was probably moves of at least 200 points, but I don't know.
Yeah. Okay, all right. Well, fair enough.
Percentage-wise,
I'm glad
it absolutely was not.
No, it was nothing. I mean, it was a flesh wound, Tom. It was a flesh wound. It's nothing. Okay, so. All right, but it shook things up. It's like, all right, now things are kind of interesting. This morning has been fairly quiet, I think, right, Tony?
Yeah, it's been fairly quiet. We've been oscillating back and forth. We're near the lows of the day, down 15 on the E-mini S&Ps. Nasdaq's up 17.
We're right on the lows now.
What's that?
We're right on the lows now.
Yep.
Yeah, but we'll see what happens. But I mean, the market was kind of lulled to sleep, and Wednesday kind of shook some things up. So people, I mean, a lot of people reaching out to me. Had family, friends, like reaching out like, hey, Jim, what can I do? Like, blah, 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 blah. And even people inside the Tasty universe are like, hey, how can I strategically diversify going into 2025? So I want to talk about that this morning. So, Beth, let's go to the next slide. So we're going to talk about 3 different portfolio types. Long portfolio, short portfolio, neutral portfolio. So let's say that you are a long trader. You kind of like carrying positive delta. You like playing the market to the upside. Here's a way to think about how to set up your portfolio for 2025, kind of painting with a broad brush, but hopefully giving you some tools that you can start using right away. So my core portfolio might be long. So this could be long shares. It could be long futures. It could even be short puts. I mean, there's a number of ways that you could kind of slice this up. But yeah, you got long delta, correct. My added positions, though, and this is where it gets this is kind of the key. This is the rub. My added positions, you kind of want to layer in a short bias. You kind of want to bring in some additional positions that have more of a bearish skew. So it could be a skewed strangle, could be a call ratio, could be short call spreads. Your net portfolio is long with positive portfolio delta, but the key is you have a mixture. You have, you're not just going all in on, I mean, Tom, let me think, Christmas. I know you're not a pumpkin pie guy. Are you a pecan pie guy? I don't think you are that either.
That's me.
No, not at all. That's Tony.
Tony, did you say that was you?
That's me.
Because that's me. Here it is again, man. I'm just saying, like, wow.
Well, Dr. Jim, if you're looking into your future, my man, I would change course. Dramatically.
I'm just saying.
Hard right.
Follow in the Batista line. I mean, I'm probably part of the will now. Am I part of the inheritance?
Yes.
I mean, if I'm not yet, let's make sure we get that cleaned up. I mean, give me a little something. Just give me the terrazzo.
I'll leave you a taste. I'll leave you a taste.
I mean, something, man.
Yep.
No, I'm cherry pie all the way. Maybe blueberry.
Cherry pie is like a pie for children.
I'm a cherry pie all the way. Children.
You know what's so funny about cherry pie, though? Do you guys remember when we had the tour and cherry pie was the answer? Do you guys remember that with the 20 questions or whatever?
Yeah.
Sure.
Yeah.
Oh, but the best part about that tour was honestly putting it together. Because I remember sitting around for, so many meetings trying to put that together, come up with the 20 questions. And we were all concerned that somebody was going to get it like early, like on the first question. And I just remember sitting there and we were all laughing, thinking somebody's going to jump up and say, cherry pie. And it's like, it's not going to work that way. Anyway.
Didn't.
Man, maybe you kind of had to be there, but it was funny. I promise. So you're a cherry pie guy, but you can't go all in on the cherry pie, Tom. You got to diversify the spread, You got to have some cherry. You got to have some pecan. You got to have some pumpkin, right? For all of your guests, right? All of your people that might show up to your holiday gatherings. Same type of thing here. Because think about what do we do? What do we do on a daily basis, right? We manage winners. We want to have logs in the fire. We want to have different weapons at our disposal, right? Like, take my Detroit Lions.
I got to give you a little pushback here. Have you met Tom? He don't give a crap about anybody else, what they're eating. It would just be all one thing, all just cherry pie, all just short premium, all just done. That's it.
All just done. All just duck confit. Either you like it or you leave.
All duck with
Either you
feet.
like it or you leave.
That's right. That's right. Either you eat it or you don't. I don't care.
Yeah.
That's it.
That's pretty funny.
That's
pretty
true.
good stuff.
Mm-hmm.
But when it comes, so here's a question for you guys. When it comes to overall portfolio delta, in terms of how much leverage you're carrying, I typically think if you're somewhere between 1x to 3x, you're pretty comfortable. You could even maybe go up to 4, 5, 6x at times. What do you guys think is a comfortable level for most people when it comes to how much delta they're carrying relative to their account size?
I mean, do you want the numbers that we give out when somebody asks this question to us?
Well, I mean, what else would I possibly want?
The hidden that you do on the Ocho channel. That one. Yeah. We would like those numbers.
Yeah. 100 to 250 deltas per $100,000.
Okay, so if I've got 200, so let me work that out. If I've got 250 deltas,
yeah, that's $100,000 of no. That's you have 250
that's like
deltas.
125,000. That's 130,000 at notional, approximately, with the S&Ps at 6,000.
That's 150,000 actually. Yeah, 150,000.
Okay, yeah, okay, there you go. So 150 for. Okay, so you're only going up to 1.5x.
That is. I'm not sure exactly your question. If your question is
conservative number.
If your question is what is the maximum we'll go to, notional to net lick, it's between 4x and 6x. But if you're asking between 4x and 6x is the notional, if you did the math and carried it all the way out, that would be our maximum. But if you're asking like what would we consider to be anything that's not neutral would be between 100 and 250, let's say. We would consider that to have a little delta on. Under 100, we consider that to be basically neutral. So if you want,
got it. Okay.
Okay.
No, that's good. No, that's good. Yeah, I mean, I'm at the same levels. I mean, yeah, I mean, 1.5x is pretty comfortable. That's a pretty comfortable level. Like you should be able to.
That's a very comfortable level. Exactly.
Exactly. I mean, with a modest amount of skill and ability, you should be able to manage, most scenarios with that. I mean,
even Sadnov would be able to do that.
I don't know about that. Let's not get carried away. I know it's a holiday week, but I mean, we try to keep him under 1x. Let's keep him, with the leverage points on the lower end. But anyway, if people are wondering how much delta they want to carry, that's one way to think about it. All right, next slide here, Beth. So what about my short traders? So these would be the Sosnovs that might be out there. So Tom, I'm assuming this is kind of how your portfolio is set up. You've got a core portfolio that's kind of short. You've got short delta, whether it's shares, obviously mostly futures. But then your added positions, Tom, this is where you're adding in your long bias. This is where I know you're getting long some Tesla. This is where I know you're getting long some NVIDIA, like these companies that you know and love, right? Skew strangles, put ratios, short put spreads, etc. But your net portfolio is short delta. And again, the leverage varies based on kind of what we just talked about, giving yourself plenty of ways to manage winners. So Tom, I'm assuming this is how you set up your portfolio, generally speaking, correct?
It's close enough. Yeah, sure.
So how is it off?
I said it's close enough because I don't always set up my portfolio that way. Sometimes I'm a lot more neutral. Sometimes I'm even long.
Have you been long delta at all in the last 10 years?
Yes.
No, Tony, is that true? We know that's not true.
You should have just gone this year. You should have just said this year. You went 10 years. You went too far.
No, it's the greatest bull market of all time. Unless it was a mistake.
A little bit during COVID, he got some long delta. Yeah.
Oh, okay. All right. Okay. So, okay.
I said you went too far.
You asked a question. I'm telling you right now. Yes, I carry long delta.
You went too far. I said
it took a global pandemic to get my man at 50
the
long
greatest
deltas,
bull market
known to man.
3X. That's right. Yep.
Unbelievable. There you go. All right. So fair enough. All right. So this is how Tom sets up his portfolio, everybody. Just to be very clear, disregard everything he's saying. So core portfolio is short. Added positions, long bias. But again, all kidding aside, this makes a lot of sense, right? Because now you can manage winners. You can manage them early. You can go after 50% of max profit. You can, should I stay or should I go? There's a lot of things you can do. It just makes a lot more sense, right, to kind of put some concrete numbers around this. Let's say you want to hold, and I'm just picking a number at random. Let's say you want to hold 300 short deltas, right? It makes a lot more sense to have 500 short deltas in your core portfolio, however you're doing that, futures, shares, even short calls, whatever, and then have long 200 deltas sprinkled in elsewhere. It still gives you the same net amount, but it just gives you so many more ways to win, and that's essentially how we're setting things up. So that's your short traders. Beth, next slide, our neutral traders. So now you actually have even more wiggle room than the previous two. You have so many more things that are available to you at your disposal. Core portfolio is neutral, so primarily strangles and straddles. Your added positions, you're going to be looking for things on both sides of the market, long positions, short positions to maintain that neutral delta. And then, of course, your net portfolio is neutral delta. The key here is, what is neutral delta? I think plus or minus, 1/10 of 1% of your net lick is a good number, because you can't stay exactly at zero. It's too hard. You're going to rack up commissions. You're going to rack up transactions costs. You're just going to chew yourself to pieces. You've got to, allow some kind of range that you can float. So if you've got 100,000, that's plus or minus 100 is going to be pretty neutral. If you've got 50,000, that's plus or minus 50 is going to be pretty neutral. And then what you layer on top of that is kind of up to you. Very similar to the layers I'm getting in my hair today when I get my hair cut.
So we use
the entirely up to my stylist.
Will you take off the backwards baseball cap finally?
Well, I actually don't wear this often for my show, but you guys kind of this comes right after a squat session, delt session, kind of a nasty tricep pump. I don't have time to do the do, man. It takes a while.
I got it. I'm sorry we're not important enough.
Our emails to customers when they ask, like, what is, we use a round of a very close to similar number as you.
So when you say we, again, I'm on the outside of that, which is amazing to me.
Well,
so maybe,
because
Tony,
you don't,
after 9 years.
You can't get it right, that's Jim.
Because we answer a lot more emails than you do. That's why.
There's a circle, right? And there's dots in the circle. Like Tom, Tony, Luckbox Jeff. On the outside of the circle is Dr. Jim. And I think I'm pretty far outside, actually. I'm not like tangentially on the outside of the circle. Like, you got to really squint to see my little dot out there.
You know what? Luckbox,
I'm not sure I'm on the paper.
Luckbox Jeff might be a good nickname.
Luckbox Jeff's not bad.
Luckbox Jeff is a pretty good nickname.
That's been his nickname from day one.
You might have done something.
It's not bad.
Not bad at all.
So can I be on the inside of the circle now?
Yeah, I would put you there.
Like, Tom, when you start saying we, can you imply that I'm included in that pronoun?
I can't. Sorry.
Okay, well, maybe 2025 is my year. So maybe I can strategically diversify my way into the tasty universe. All right, let's get him a few takeaways, because these layers in the do, they ain't going to do themselves, man. So a key benefit to actively trading your portfolio is giving yourself multiple ways to win. And strategically diversifying your positions across your core portfolio and your additional positions is a smart way to do just that, which could be a strategic way to set up your trades for 2025 and beyond. So, gentlemen, do you think volatility is back? You think we're going to have a volatile 2025?
Ooh, I really don't know. I think 2025 is, yes. I'm going to say my first thoughts are that 2025 will be a little bit more volatile than 2024, because I thought 2024 we just didn't have a lot of we didn't have a lot of big moves.
Really,
we didn't have anything.
Last little pop.
So I think it's going to be. I think it's going to be more volatile. Yes.
Yeah, I think so too. I absolutely think so too. And yeah, I think it's going to be a good year. Lots of fun things on the horizon.
Yeah, new ideas. Yeah, for sure. I would think so. Although volatility at 1840 is pretty much mid-ish range, maybe even the higher end of where we've been all year. I don't know exactly what the median is, but it's got to be pretty close to that.
No, that feels high. That feels high. Like, it feels like 2024 has been a pretty light year for volatility, so it wouldn't take much to outperform that.
Totally agree.
Yeah.
Yep. You got it. You're right, Dr. Jim. You're right again, my man. Good job out of you. You know what that means. It's time for you to go. We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measures sponsored by the CBO. Sod enough. We'll be back in 90 seconds. Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others. The beauty of thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
Didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with this market measure sponsored by the SIBO. But before we do, take a look at the market. Even the S&Ps were up around 32. They're down around 32 or 3, Sadov. NASDAQ down 71. Russell down 26. Dow down 375. Volatility percolating 1860 on volatility after trading almost $1 lower than that. That's 1770. Bonds down 13, Sadnov. I know you got out of a few, back down near its lows. 114.0302 was the low in bonds. Sadnov, what do you think here? Ooh, breaking news, Sadnov. This one is going to deal with you personally. Nordstrom agrees to be taken private by the founding family for a $6.2 billion deal. Sadnov, will the rack survive? Can we save Tom's wardrobe?
Nordstrom rack. Let's take a look. What's the symbol again for Nordstrom?
It starts with an N.
NWN?
No, NDSN, Nordstrom Corporation.
Wow, that's a new symbol or something.
I think so, right? Is that that's Nordsun. Sorry, not
that. Was NWD or something?
Oh, JWN. Sorry.
JWN.
JWN. There you go. $24 and change. $24 and change.
Is that up or down?
Down 30 cents right now.
That stock has always been around $24.
It's been stair-stepping higher, but yeah, you are right. But I mean, it says its value is around $4 billion. There would be a takeover. I don't know if the stock is halted. It doesn't say it is.
I love the rack.
I love a good rack too.
I love the rack.
I know you do. I know you do. I don't know if it'll survive, Saz. If it does not survive, where will you find your wardrobe?
That's a damn.
Go back to
question.
the Gap.
If Nordstrom doesn't survive, well, why would they not survive?
Well, if the company goes private and the founding company, family doesn't want to have a discounted Nordstrom there to tarnish their brand, maybe stay a little bit more upscale. It would just be Nordstrom. You'd have to pay Goyim prices.
There's no reason why you would take the company public and get rid of the rack.
Private.
I'm Tom Sosnoff. He's Tony Batista. He has no idea what he's talking about.
Nice try, Tom.
They're taking the company private.
Private.
Yeah, I know.
So you just said take the company public.
I meant private, but there's no reason they would take the company private and get rid of one of their most valuable parts of the franchise.
How do you know it's the most valuable part of the product? You've seen behind the curtain?
No, but there's always a line. Can't be bad.
Well, if there's a line and you're not making any profit margin, does that mean that it's a profitable part of your company, your business?
Sure. What business would you have where it has a line?
You know what? You'll argue with Mother Teresa. Go ahead.
We have a couple of things coming up. One is you can play Guess the Market. Oof, there it is. tastylive.com/guess.
You have to play Guess the Market if you want to win.
I haven't done mine yet.
I haven't done mine either.
Okay,
I'm getting really close because I want to,
I'm ready. I'm actually ready.
Are you?
Let's see. tastylive.com/guess.
Oh, you're going to put them in?
Right now.
Oh.
Because I already know what's going to happen.
Wow.
Oh, like, were you as confident last year when you were 25% off?
tastylive.com/guess.
You're a hunter and pecker there, I could see.
I'm a hunter pecker. Name. Let's show you how easy this is.
Go, Milord.
Wow, this is how the magic happens.
What name do you put on there? Do you just go Milord?
Yes. All right. So here come my guesses.
Now remember, it's SPX. Not SPX. Don't confuse it with ES because I know you're going to be very, very close. 40,
where
50
do you
handles
think
can
the
make a difference.
SPX will close?
I'm not going to tell you.
Where's the SPX right now? Give me the SPX right
5,900.
5,900.
5,912.
5,912. So where will it close at the end of Q?
That's down 17. I don't know if that's going to skew your number a little bit.
I know, but I was just figuring out how I'm going to have this whole year planned out.
Mm-hmm.
So,
would you like to know the expected move for the year?
No, I'd like to know the expected move for the first quarter.
Expected move for the first quarter. So you want to say around 90 days or something? Yeah. I don't know. 370 points. 400 points. Make it easy for you since we're 5,900.
What about the second quarter?
Okay, why don't I just put your freaking answers in then? Okay?
I don't need you. Just give me tell me.
Well, if the first quarter was 400 points, what do you think the second quarter is going to be?
Okay, hold on.
550 points. I'm rounding up.
Thank you.
You're welcome. I'm just trying to help you because I want you to have every advantage that you think you have.
I'm almost done.
Mm-hmm. Would you like to know the third quarter now?
I don't need your help.
I can't believe I'm going to remember my anniversary like this. Can I tell you the third quarter? For the end of the year, you're looking at around, call it 800, round it up.
Okay.
You're in? You're done?
I'm about to submit. I forgot left one thing blank.
Left one thing blank, one quarter.
Oh my gosh.
Hold on a second. Oh, here I am.
Don't worry, it's the same blank you usually get on a Saturday night. Go ahead.
All right. I'm submitting. And then all your.
Okay.
Done. My responses have been recorded. Took 2 seconds.
Nice. Beautiful.
I feel really
amazing.
And it was so easy. You got it so.
I feel really confident about this year.
Do you?
Yes. I'm not going to give you my guesses until after January 3rd, and I'll tell everybody what I guess. But I'm in.
All right.
As of December,
I can feel you. Beautiful.
As of December 23rd, I'm all in.
Perfect.
So I played Guess the Market for 2025.
I like it. I like it.
I'm not eligible to win, but I am the early favorite.
Of course you are.
Of course.
Of course you are, me lord. You're further away this year than I am. So
I doubt it. I beat you 3 out of 4 quarters this year. That's all.
What does that mean? It's not how you start the race. It's how you finish.
I don't know. It's beat you 3 out of 4 quarters. That's all that matters.
You didn't. You beat me 2 out of the 3 quarters. The third quarter, I beat you.
No.
Want to bet?
Yeah. Who can prove it?
I can prove it. Nick has it. Nick, please send it to Beth. Will you please?
Sure.
$20?
Oh gosh.
We have $20?
No, you only won 1 quarter this year, but I'll check it later.
So we have no bet.
No bet.
God, you can't get a 20 off of you for nothing. Unbelievable. Tight it is.
Almost like you.
It's like you could make diamonds
Studied
there. You're so freaking tight.
We have a digital collectible coming up, a 3-part series. Dr. Jim, Ryan Grace, and
Dream Team.
And Mike Butler and friends over 3 months.
Mike Butler and friends. It's Mike Butler, Mike Butler, friends and his, what is it? Mike, his friends and his whiteboard. That's awesome. I really think that's great. That's one of the better titles you've come up with. Did you come up with it?
Yeah.
It's good.
Anyway.
I like it. I give you a compliment.
So everything you wanted to know
everything you want to know about crypto is good, but
everything you want to know about crypto, we're afraid to ask. We're doing that on January 25th. The Beginner Trader with Dr. Jim coming up to Chicago to film this on for February 22nd, and then Mike and his friends. We're going to do 3 digital collectibles. You can sign up for one. You can sign up for all 3 with just 3 clicks, and own it and stream them. That's all we have going on in the first 3 months of the year. We're not going back on the road until May, and then we have a crazy schedule after May. So there will be a couple of events in Chicago, just some very small events before each one of these shows. We're going to doing a really small live event before each one in the back of my coffee shop.
You said the back of my car. I don't know why.
At Bad Coffee, we have a little stage.
Oh, wait a minute. Now it's your coffee shop?
Yes.
It's the back of your coffee shop?
Did you put any money into it?
Yeah. Technically speaking, I own the ground underneath your coffee shop. I own the air rights to your coffee shop. I own it all.
Air rights?
Yeah.
Okay, then I'll send you the bill.
You send me the bill. I'm going to send you the bill.
I needed somebody to.
As a matter of fact, I'm going to take a look at that lease that you signed.
I need somebody to pay some of the debits. There you go. Anyway, we're gonna have a little fun at with all 3 of these events. So, and we got little pop-ups going on. So it'll be fun for the next couple of months.
Beautiful.
All right, let's go and do today's market measure.
I'm ready.
So we're doing something today called evaluating Vega. Evaluating Vega. What we're going to look at is theoretical versus realized risk. I'm going to tell you where we're going with this in a second. Let's go to the next slide, Beth. So Vega measures the change in an options value when implied volatility goes up by 1%. So most of our trades are short Vega, meaning that we want implied volatility to go down in order for us to profit. We just sell we're just premium sellers. A bigger Vega means that we have more theoretical opportunity from IV contraction, but also more theoretical risk from IV expansion. Let's go to the next slide. So the most common pure short volatility trade that we use is a strangle. The delta of a strangle determines how much Vega risk there is. The larger the delta, the more risk or opportunity we have from an implied volatility move. Bigger the credits, more money we can make. Smaller the credits, less money we make, but a higher probability of profit. Is there a delta that we can get the most amount of theoretical opportunity with the least amount of realized risk? In other words, how do we optimize this trade? That's a question.
How would we
Is there a delta where we can get the most amount of theoretical opportunity with the least amount of realized risk?
27.5.
You're going to go with the 27.5 delta. I'm going to give you a hint. Okay, you want a hint?
It's closer to 50.
I'm going to give you a hint.
Go ahead.
It's a trick question.
It's going to be closer to 50. I'm going to say 27.5 is closer to 50. I don't care about your hint.
It's a trick question.
I don't care.
Okay. So is there a delta where we can get the most amount of theoretical opportunity with the least amount of realized
options
risk?
are perfectly priced. There's probably going to be no theoretical anything, but yeah.
Bingo. Let's go next slide. So we did a study for 2014 to present, 10 years, 45 days to expiration. We looked at 16, 20, 30, and 40 deltas. We observed the historical volatility of P&L we managed at 21 days and the current Vega in the Feb 21st cycle, theoretical risk reward forward, and then closest to 45 days. So we're just looking at everything. Let's go next slide. The first one. So we said with higher delta strangles, we get higher theoretical risk opportunity from Vega, but also higher realized risk. So which delta maximizes the Vega opportunity while minimizing the actual risk incur? And so we look down below and we see at 16 deltas, we we have a smaller vega. We have smaller volatility risk because the strikes are wider. And we have a smaller volatility of P&L, which means we also make less money. At 20 deltas, it goes up a little. At 30 deltas, it goes up a little more. At 40 deltas, it goes up a little bit more. And correspondingly, the volatility of the P&L, the risk goes up accordingly.
They almost look about 3 times as much across the board there. I don't think there's anything you can pull across some of the
It would be really hard to look at those numbers and say that there's an advantage anywhere.
Right.
Okay? So what we're going to do is we're going to go to the next slide. And here we're going to say, no matter how wide our strikes are, the amount of vega we are short per unit of historical risk is virtually the exact same. This suggests that historical realized risk and theoretical risk opportunity increase proportionately with delta. What's so interesting about this is you look at SPY, you go all the way back to 2005, the realized risk per unit of theoretical risk, that's vega plus volatility of P&L, is the same across the board, regardless of what strike you use. What this is suggesting is what Tony just said a minute ago, which is options are priced so theoretically perfectly, and they scale symmetrically across all the different strikes, that it doesn't matter what strike you necessarily use.
Right.
Now, it might for probability of profit, of course. It might for the amount of risk that you want to take. But when we talk about the theoretical risk versus the opportunity, it's exactly the same across the board.
It's a good way of putting it. Nicely done.
16, 20, 30, and 40 deltas are all the same. Let's go next slide. So for takeaways, vega is a Greek that can be used as a proxy for theoretical risk reward. When comparing the vega to the realized risk, we see that the ratio of vega to realized risk is the same no matter what strangle you sell. This suggests that theoretical risk reward and actual risk and the actual risk incurred are directly proportional. What's so interesting about this is it essentially says, you know what? Do whatever pop, choose whatever strikes you want based on the pop you want. That's your probability profit. How much you want to manage, things like that. But your theoretical risk reward and your actual risk are directly proportional.
It's a good little takeaway. Nice little segment by them, Sadnov.
Yeah, it's really good.
Very nice. You know what? We're going to take a quick 90-second break. You want to know why?
Sure.
Because we got my friend, that's right, Mr. Scott Sheridan from the Scott Sheridan Studios and Tasty Trade. Immediately following these messages. Back in 90 seconds.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I like the
Tomas, we are back, my friend. You know
really
that
good. Is it?
You did this to me last week. You're gonna do it to me again. You guys.
Beth, wait a minute. Shh. Oh, go ahead. Sorry, I'm busy.
You're not even in the room and you're talking.
Sorry.
If you ever get a chance, you want a bunt cake, go to that place. It's good.
Nothing bunt cake or something like that.
Whatever it's called. Everything but the bunt or something.
All right. Did it. Tasty Trade World Headquarters, your friend and mine from the Scott Sheridan Studios. You get paid every time I say that. From the Scott Sheridan Studios.
Hey, do I get rent?
What's that?
Do I get rent?
You get rent. As much rent as we get from bad coffee. Mr. Scott Sheridan. How are you, kind sir?
Ouch. I'm good. Hey, Beth, look at your phone. I'm sending you pictures.
Okay, Scott.
Thanks.
What are you sending pictures of? Are these like things?
I'm going to tell you.
Oh, okay.
This is worthwhile.
Oh, you're coming with like content and stuff. I like this.
Not those kinds of pictures.
Oh.
Okay.
Oh, how boring.
Not the bag in the hotel pictures.
Oh, how boring.
Right? So I told Tom, Beth, tell me when you're ready.
I didn't get anything yet.
Take a minute.
You didn't get anything?
Did you pull a Tom? Is it text, email,
Text,
Teams?
your phone.
Okay.
It says waiting.
Okay.
No?
Nothing yet.
Oh, you know when people have clicked on your pictures and stuff?
Yeah.
How do you know that?
Trying again. Anyway, okay. Bears are horrible.
Oh my God, the Bears are disgusting.
Football players are amazing. Great. Love the games starting at home. Great way to play it. They should keep going. What's really... So I didn't see the line of the Boise State.
Indiana stinks.
Yeah, but I went to bed and I thought I lost all my bets. And then I woke up to see that they scored 2 touchdowns in the last 2 minutes, which was great. So I got a little bit of my money back, but they do stink. So all the Indiana fans out there, and there's a lot of them because we have a lot of alum.
That was a mistake.
And they were all loud and proud, like, oh my God, this is the greatest ever. Yeah. And they got slapped.
Yeah.
They were loud and proud.
They were loud and proud, and Notre Dame slapped them.
Yeah.
So I think Georgia, Notre Dame is going to be a great game. I think, what's the line on that one? I'll take Georgia if you want Notre Dame, but what's the line? It's got to be 4 or 5.
I don't know.
Penn State's favored. Texas, I know Texas got to be a big favorite over Arizona State.
Georgia minus 125. Notre Dame plus.
How many points, though?
Under over is 44.5.
What's the points? 3?
3.5. Georgia minus 1.5, I think.
Ooh.
Notre Dame plus 1.5. That's what I got at. Just a early line. Don't quote me, but that's pretty close.
I like it now because they play next. What, they play Monday, Tuesday?
I don't know.
Tuesday. I think it's New Year's Eve or New Year's Day, so Tuesday, Wednesday.
Is it on Netflix? Because we're not going to be able to see it. They're going to screw that all up. You know.
And the Bears are Thursday night. Let's just get this over.
It's Thursday night. Yeah, just get this over.
Let's just get this over with. Let's start the process. I would take the offensive coordinator for Detroit.
Great. I'm glad you would. So would everybody. There's 7 teams and a new head coach.
Yeah, but it's the Bears. And we're going to have a new owner.
I don't know if we're going to have a new owner, but that kid. Yeah,
where there's smoke, there's fire. I agree with you.
Right?
I'd take anybody. I'd take the offensive coordinator for the Bills.
Detroit.
But they're going to take Mike Grable.
We got to go offense. We got to get some in the offense. I don't know.
They're talking about taking him, and he's already got Josh McDaniel lined up. That's what they want to do.
Got it.
Josh.
He was the OC. He was the old OC at New England, right? Yeah. Where's he now? Didn't he take a head coaching job at Indy and backed out? And backed out, right?
Oh, he got fired twice.
Oh, he got fired. I thought he took him backed out.
Yeah, doesn't matter.
Oh, sorry. Well, you're not getting the photos. We're having technical difficulties today, so I'll have to tell you.
Where's John when you need him?
Right.
Honest. Come on, John. Come back here in the mornings,
waiting
please.
for you to accept these. So I don't know what you want me to do. Anyway, so Trivoli. Tony, I got one for you.
Okay.
Your son, really into food. Does he eat eggs?
My son?
Yeah.
We're not like you people. We eat everything. Come on. I mean, you know that.
A truffle.
He just went to Alinea. He eats everything.
Okay, so that's what I'm telling you. They make, no, it's expensive. You could take care of it. It's expensive.
It's us? Can I take care of it? Will you help me?
He's a Alinea guy.
Okay, it's way less than Alinea.
All right, go ahead.
Okay.
Oh, the place you went to?
It's a French Trivoli, which is down by Green Street Meats. So it's hog salt, the best of all their restaurants. That's what they do. They take all the different foods. They have a truffle omelet with some kind of cheese in it. It could be the greatest thing I've ever eaten. Now, you know how to make a French omelet.
I was going to say, is a French omelet for Sadler? Do they spoon the butter on there?
I now need to learn how to make a French. The texture was perfect. I just don't know how they got it to.
From a pop-up place, too?
No, it's a real restaurant.
Oh, it's a real restaurant.
It's a real restaurant.
Oh, you've seen it. It's right next to Green Street.
It's right next to Green Street. In the summer, it's great because you can sit outside and it curves.
Really pretty.
It's really pretty.
I don't think I've been there.
It's great.
You haven't been there, but it's right next door. But it's
Why
really
haven't you
pretty.
taken me there?
I'll take you. Want to go for brunch? It's really hard to get a reservation, but it's worth it. So if you want to surprise the missus and the little one.
Oh, you got in? My man, I love you.
Right?
And I love her, too.
We had a slight issue. Manager had to come over. I'm not going to get into that, but I mean, besides that, I'm tight.
Is the connection still good, though?
I'm tight with the manager now.
All right, good. You saved the day?
Hold on. What happened?
I can't tell you.
Oh my God!
I can't tell
I need to know.
No, it wasn't the 6. We literally were the first people in the restaurant.
Yeah.
Legitimately.
Yeah.
And they put you by the bathroom.
No. We had a fine table.
I had that happen.
So waitress comes over and we said, "Listen, we're going to give you everything. We're just fire everything," and we way over ordered. Their potato pancakes, lights out.
What'd you guys do wrong?
What?
What'd you guys do wrong?
Nice salmon tower, beautiful.
What'd you guys do wrong?
Pancakes. Okay, we didn't do anything wrong.
Hey! I would like to say they did something wrong for the 20 if I could.
Okay, I'm going to tell you, and then you can tell me if we did something wrong.
Yeah.
So we said, "Listen, fire everything because we have to leave. We had to be somewhere." So we're like, "Don't wait on anything. Just fire it all." Wait's like, "Great, we'll turn your table for you. Get the next people to come in, right?" Okay, so we get the potato pancakes and the salmon tower, both out. They're both excellent. Okay.
Sounds good so far.
Great, nice, the big potato.
All right. Yeah.
So we're waiting.
They didn't bring you your sour cream?
No, we got sour cream and applesauce. So we're waiting and they came out within 5 minutes. We order drinks, 7 minutes, food. Perfect.
Bada bing, bada bop, bada boom, you're all good.
Place. We eat.
Now we eat.
It's 25 minutes. I'm like, where are the eggs? Food's coming out of the kitchen everywhere. Now, they can't say that there was a lot of food ahead of us because we were the first people to order. So I asked the waitress, I said, just could you
check on the eggs?
She's like, they're making it in the kitchen. I'm like,
oh, that's good, because if they were making it in the bathroom, I was going to be pissed. I was going to be pissed. If my eggs are in the bathroom right now, I'm
like,
wait.
all right, so they're making it in the kitchen. All right, we'll leave that alone. So manager walks by. I'm like, she's like, can I help you with something? I said, just wondering, because it's been like 25 minutes, the whole thing. Let me check on it. Food comes out. The real manager comes over. I am so sorry. We didn't do what we told you we were going to do. Salmon tower on me. I said, not necessary. He's like, no, we didn't. I said, you don't have to do that. He's like, nope, we didn't do what we said we were going to do. Can I bring you dessert? I said, absolutely not. He's like, all right, I'll catch you next time. So, Michael, tell him you know me.
I'm going to say, hey, Michael, remember the guy who got the free salmon tower? I'm his friend, okay? So we put us someplace nice, okay? Put a two-top with 4 people, though. Just give us a little extra room. So we
I don't think we did anything wrong. Why is that wrong? I just asked. It was 25 minutes after we got out of the...
You ungrateful SOB.
I would feel guilty to be like you guys.
I didn't ask for anything. I
Be
just
like
said,
you guys? What do you mean by be like you guys?
Yeah, what do you
talking
mean?
like that.
They're always
talking to my friends.
working like for free something.
It's not. I said it's not necessary, and I tipped her. So, in case you're wondering, as if we paid for it, I tipped her more than that. So it had nothing to do with that. It was just asking a question. You think
I
the
think
food's
you've
supposed to
changed.
come out?
I think this story changed.
As Tony would say, what do you say? Hand to God?
I don't say hand to God, but I could.
What do you say?
I just think there's something.
You say something. What do you do? One of these or Star David?
I usually say, I swear on my kid's eyes, and then every kid goes, ah! That's what they do. They all do it.
I like that.
They all do it simultaneously.
All right. Just telling you. It's excellent.
All right. I believe you. That's him you got to convince.
I mean, you would wait 5 minutes for the first stuff, 25 minutes for the other. You wouldn't just say, could you just...
Scott, I would have said something.
Right, could you just check? Sure. Like, I wasn't complaining. I'm like, but there was a great line. They're making it in the kitchen. That was second to, we did have a problem a long time ago. The 6-ordered lobster, and she had me taste it before she did. It tasted like somebody dropped a box of Morton salt on it. So I don't say anything. She takes a bite. She's like, I can't eat this. I said, well, I wasn't going to say anything, but it's horrible, like crazy. So the waiter takes it back, comes out and says, chef suggests you order something else because the lobster's salty because it comes from salt water.
It's a good point.
Oof.
That's a damn good point.
Oof. I looked at her, I said, I'd go with the filet.
I wouldn't order. Because whatever's coming
I have had stuff like crab legs before that they taste like they're just pure salt and
disgusting. It's disgusting.
But there's
I had king crab legs. They were amazing.
It doesn't have to. They're not rinsing them. They're not doing something correct. Whatever. If you have fresh fish, should be crazy salty. Anything coming out of the
I
ocean.
agree. Nothing should be crazy salty. I agree with you. I agree with you.
I'm
My
just saying,
king
I've
crab
had it
legs were
before too,
outstanding.
where it tastes salty.
Did you eat it?
Yeah,
of course he ate it. What are you kidding me?
But
Eat
I'm
like
just
any other
saying, it
elephant,
tastes
Ralph.
salty. I made it myself. I didn't put any salt on it.
Oh, you made it yourself?
Yeah.
Well, when you buy your frozen whatever, wherever you buy it.
What year did you buy these? Because I know they were probably frozen in the bottom of your
They were less.
freezer.
Oh, speaking of which, TJ's has Harry and David Paris. Excellent.
Trader Joe's?
Yeah, Harry and David Paris.
What are you doing at my Trader Joe's?
Wasn't yours. I was the one. Oh, no, I was the one on Diversity, actually.
Don't go near my Trader Joe's.
Why?
Because it's kind of like a special place for me. I don't want to.
TJ's? I'll leave the one by you.
He goes like in his pajamas and stuff. He doesn't want to be seen by anybody that he might know. You know what I mean?
Did
Like,
they say anything when you walk in, or they just look at you and go, he's back?
Well, I mean, I know everybody there.
oh my God. He must. Thank God for
We're
Trader
not on a
Joe's
first
being-
name basis, but, I know everybody. I've been there.
What are you, like on a knowing nod basis?
Yeah.
You do?
Hey, how you doing?
What's up?
What's up?
What's up? You really are.
I seriously been there 1,000 times.
I'm sure you have been.
Like, why?
I don't know, just for everything, because it's my neighborhood place.
See, now if I said that, and I said, I went to Trader Joe's 1,000 times, you would look at me and go, you're so bougie.
Right.
Right?
Totally.
Totally. How about Costco? You don't go there anymore? The problem, Costco is so busy. It's so busy. Like, I think about going, and I'm like,
I had my biggest Costco order ever yesterday.
You went or you?
We went.
Like, did you get gifts or just surprise?
No, it was just some
What's your
food.
What's your biggest order ever?
$12.50, $12.40.
Oh, that's good effort.
Yeah.
That's good effort.
It's a good effort.
And that's not with like getting.
Well, we got like we got one. They make these like rugs now, ruggables. No,
Yeah, they do ruggables.
they're ruggables. They sell them there.
Oh, do they? My kids have ruggables. You throw them in your wash. They're good.
Yeah, you can throw them in the wash. Right,
Yeah,
right.
good.
So we got a big one down there. That was a couple $100. So that was like an add-on. You know what I mean?
Okay, you're still over 1,000. That's good effort. They appreciate it.
Yeah.
Right.
Yeah.
I love the fact that you can't go by yourself.
Well, I'm not allowed. By the way, it's my anniversary, and not my anniversary. The first day that I actually pursued the wife.
Oh my God.
That's embarrassing.
That's what I said.
Okay, I'm sorry. That's pathetic.
That's pathetic.
That's pathetic. I'm sorry.
You've already heard the story 8 times.
Wait a minute.
3.
Like, the first time I actually thought about her, is that an anniversary?
No,
too?
we met in Barney's. We met.
No, we heard the story. I can tell the whole
met
story.
in Barney's?
We met in Barney's. I was buying shoes. She was buying shoes for a boyfriend. Started talking, blah, blah, blah. So would you like to go across the street, get a quick cup of coffee? She said, my car has the flashes on them in the 15-minute zone, but sure, I'll come have a cup of coffee with you. We sat there for 4 hours. She was late for her.
Oh my God, I already heard the story today. Like, oh my God, it's painful.
I want to hear it. Go ahead.
She was late for her dinner date.
You sure you weren't selling shoes there?
Yeah, did she take the shoes with her?
Yeah, she bought shoes. She actually bought shoes that were 3 sizes too small for him.
Why would she do that?
But 3 sizes too small because she wasn't
Okay.
paying attention to what box she grabbed because she was so captivated.
Oh my God.
Oh my God. So you paid for the shoes and
No, I
said,
didn't
if you
pay
go
for
for
the
coffee,
shoes.
I'll
I
pay
didn't
for your
pay for the
boyfriend.
shoes.
Oh, yeah, you did.
No, we didn't. But when we put down our credit cards, we had the same credit card.
Twinning.
Oh, that's so cute.
Look how happy.
Did she have to pay for her own coffee at Starbucks?
No, I paid. I
Oh,
paid because I was first in line. I felt embarrassed.
Did you let her get like substitute milk substitute for the
She
extra
was,
for like 50
no, it was
cents?
fine. It was fine. It was fine. We were sitting there.
So
I was in my prime back then too. I mean, I was looking.
You're looking good.
I was looking good. I mean, I was looking really good. Hand to God. Oh, there you go. I say it. I didn't know I said it. Hand to God. We're sitting there, and a woman comes up to me and taps me on the shoulder.
Says, you want to go for coffee? You go, no, I got
No,
this.
she says, the answer to your question is yes. I didn't ask her any question. I didn't say anything to her. And my wife, well, my soon-to-be wife,
oh my God,
looked at her like, oh my God, I can't take you anywhere. And then the lady walked away. To this day, she thinks I put the lady up to it. I, hand to God, didn't do nothing.
What was she saying?
I don't know. I think she was hitting on me. It sounded like she was hitting on me. She said, I'm with the woman.
At least that's how you remember it.
Oh, that is such a setup.
I'm
You paid her.
I was
You're in
hitting
line,
on
you're
all
like, hey.
Saz. Back then, I was all cylinders.
Hey,
Had a little
here's $20.
cash.
Just walk up to me and say,
Felt working out.
So you can't go back. Barney's is closed. So now you got to go to the
Barney's is
Cartier.
closed now.
You got to go into Cartier and pretend like you're in Barney's.
No, we don't go back to reenact.
greatest thing ever, Barney's closing.
I slow played her,
I
by
like
the
that.
way.
You didn't like Barney's?
I never went to Barney's. My wife spent a fortune.
I slow played her. I slow played her. It was.
Oh, let's hear the slow play.
I didn't talk to her for. Well, I mean,
2 hours. 2 hours.
I said, listen, you
my
gotta.
Revisionist history.
You got a boyfriend. You got a boyfriend.
Okay, here's
I
how
don't want to
really,
be that. I don't want to be that guy. I'm newly out of the house. You know what I
can't
mean? I don't
take
want to
it.
be that guy. I don't want to be the house wrecker.
Wait a
kind
minute.
of guy.
She was your first after.
No, I was dating.
Oh,
Oh my God.
Stripper.
Wait, the
Before
softball
that.
game?
What's that?
The softball girl?
No, that was prior. That was first. That was first administration.
He couldn't be alone for 12 seconds. Okay? I stop with this story.
It's not my fault. I just
Literally
they
12 seconds.
grab onto me.
He couldn't be alone for 12 minutes.
They grab onto me. They know they see a good thing. I mean,
When you're
you know.
crying, you're screaming, come on, please.
So I told her, I said, you got a boyfriend. I don't want to be that guy. So if you ever lose a boyfriend, let me know.
Here's my number.
Here's my number. She gave me her card because she was a real estate agent. Those MILFs are real estate agents at that point. You know what I'm trying to say, right? Either a hairdresser or a real estate agent.
God.
I said, call me if you. That Wednesday, she called me on the phone. She didn't say hello. She said, is that soon enough? I knew exactly who it was. I said, yeah, that's soon enough.
Wait, from Saturday to Wednesday?
Mm-hmm.
That's not bad.
Do you know I've listened to this story twice today? It's only been a 3-hour show. Okay, I've already had to hear the story twice.
I apologize for anybody else that listen. I like the story.
Thank you.
Now I'm gonna have to.
And
next time I see Chris,
from that moment on, we never stopped dating.
I'm gonna have to ask her next time I see her what really happened.
Oh, you can ask her. She'll tell you.
That's very sweet.
Thank you, Beth. I
very
appreciate that. I appreciate that.
Tom, do you want to share your story?
No.
She did tell me I had to take like a disinfectant shower though, like with all the garbage I was doing. So there is that story too.
There you go.
Oof.
Oof. Bar soap or liquid soap?
Bar soap always. Come on. You know that.
All right. Mm-hmm. All right. Should we get to some business?
Sure. My James says him and his wife celebrate anniversary the day they met too.
Oh my God.
Okay, wait a minute. I know the day.
So you know the day.
Yeah, but
do you say anything to her, or does she say anything to you?
Oh my God.
Yeah,
I mean, so if you were doing a show for 3 hours, do you think you might mention it?
No. But
I had you.
I would say to her, happy September 18th.
Yeah. Okay. So you know. Saz, do you know your date?
That what? No, I don't. I do not know.
That what? Wait, were you talking? That's what he's going to say. I know the date of what? Wait, were you saying something? Because I stopped listening.
I wasn't paying attention.
Like 15 minutes ago.
Mm-hmm.
I don't know.
Yeah, you do.
You do. You know. You're lying.
The day I got married?
Could you give the month? Not married.
Yeah, you could.
You know your
if
anniversary.
I call up Teddy right now, he would know.
You know your anniversary. Yeah, you were at the bar with Teddy, weren't you?
Yeah. Sometime in the winter. I don't know.
What's the name of the bar?
I don't know.
You're such a liar.
Such a liar.
I have no idea.
I guarantee you have a T-shirt from the place
I
for
swear
sure.
to God, I don't have any idea.
Hey, can I call Corinne, see if she knows the date?
She doesn't know it.
I bet. What if she does?
She knows.
Get the night off?
What?
Does she get the night off? She does?
No idea.
She knows for sure.
She knows for sure.
100%.
For sure.
Yeah, for sure. Hold on.
She's sick.
Oh my God. Hello.
Hey, baby, I know we're on speakerphone right now and you're live, so don't say those things that you like to say to me when I usually call, okay? All right, so listen to me. Today happens to be my anniversary, the day that I met my wife. The question to you is, do you remember the day you met the great one, Mr. Tom Sosnoff, in that bar so many years ago?
Absolutely.
There's no chance.
He says no chance.
Oh, yes, he was. He was across the bar with his friend Teddy, and I was with my friend Donna sitting at a table, and I watched him flip his hair and pull his
Oh my God, I'm getting chubby. Say it slowly. Say it slowly.
Yeah.
He flipped his hair?
He flipped his hair with his hand, like, you know.
Oh.
He pulled his T-shirt out, you know, to get the nerves up. And then him and Teddy strolled over to the table where I was sitting with my girlfriend Donna, and it was in Larchmont, New York.
Larchmont, New York. Do you know the date?
Date.
She doesn't remember the date.
The day was, it was January, I think it was January 18th, something like that.
January 18th.
She's making it up.
She ain't making it up. Thank you, sweetheart. You made my day. I'll call you later, honey.
All
right, baby. Bye.
Bye.
Bye. January 18th, Sosnoff. You owe me 100.
Yeah, I figured Teddy and I, we had struck out about 12,000 times, so we figured, what the hell?
What happened to Donna or whatever? Who was her friend Donna?
You flicked your hair. Did you give her the 2 flick
He
like
fired
that
her.
before you walked up? Could you
Teddy
see
did?
him walking up?
What?
Teddy fired her?
She was cute. She was a steward. She was a flight attendant on United and stuff like that. And,
Oh, you almost said the unwoke word. You almost said stewardess.
and then he fired her. I don't know why.
It's Teddy. All right.
You guys
tell you
are so
something.
cute.
You and Teddy, that could possibly be the worst 1-2 combination known to man. Am I lying?
No.
I mean, honest to God, these broads must have been so desperate, okay?
They were drunk.
They were drunk. Is that what it was? Good.
Yeah,
It was late.
That's not a strong. That's not a strong 1 and 1A.
We were out late. It was just late.
Snowing out.
It was snowing. It was winter.
Oh my God.
Miserable. Going
All right.
sideways.
Are we ready for some business?
Sure.
By the way, she just made all that up.
No,
That was all fact.
It's all fact on
She's the best.
on
That was awesome.
cold like that.
Yeah,
Oh,
for sure.
Come on. I'm just glad she didn't say what she usually says when I call her. I mean, you're available?
Top 15 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom, for you, number 15, Amazon at a 33. For everybody else, NVIDIA at 29, Tesla at an 85, PLTR at a 66, AMD at a 41, MSTR at a 46, AVGO at a 51, Apple at a 25, Coin at a 50, iBit at an 88, MUMU at a 28, Meta at a 24, Mara at a 28, RGTI at a 40, Goog with an L at a 36, and number 15 for Tom, Amazon at a 33. Rounding out the next 10, Intel at 57, Walmart at a 37, TQQQ at a 41, SoFi at a 41, SOUN at a 41, SMCI at a 31, RUM at a 123, Netflix at a 66, and SOXL at a 46. Are you caught up on Landman?
Am I caught up on what?
Landman?
What is rum? RUM?
I'm going to go with some alcohol company.
I am
Bacardi,
caught
is
up
that like
on
Bacardi or something?
Landman.
I wouldn't be surprised if it's Bacardi. What is it?
It's Rumble from $7 to $13, up 84%.
$7.
$6 today.
What is Rumble? Please tell me not the boxing studio. I can't be publicly sure.
I'll give you this in 1 second.
Are you caught up on Landman?
Yes, I am.
It's good.
Oh, more Ali Lauder. Yes, yes, please, baby. Please, baby, please.
Billy Bob is great.
Calm down, Sparky.
Billy Bob is great.
I don't know, but it's surging. We didn't mention Ricky Henderson.
Oh, yeah. What did he die from? I saw they didn't disclose anything.
I think
pneumonia.
Yeah, pneumonia. How do you die from pneummonia
I'm not
in this
sure.
day and age?
Oh, I could tell you when I had it, I thought I was done.
Oh.
Ricky Anderson pneumonia.
And I was only 53.
Oh. Okay.
No, it was. No, it's what I was saying. 53. I was 50.
Oh.
Sorry, I was 50, and that was I did 3 times that summer. It was rough. I mean, if you're immunocompromised, you're done.
Oh, we got a revision of history. It was 116, not 118.
What's 116?
January 16th, not January 18th. I just got a text message. You don't mind we text message.
I don't care what you do.
Yeah. He's getting so jealous right now. He's going to call her afterwards.
Please.
You freaking don't answer the bat's phone. You don't answer his. She's sexting me right now.
With the dates?
With the dates. Dates. Hair flip. Oh my God, you got it all. You got all the moves. We're gonna take a quick 90-second break and come back.
That up to make.
We got more Tasty Live after this. Go ahead, flick you. Oh, never mind. We got more Tasty Live.
Used to.
Oh yeah, you used to.
I used to have flickable hair.
Yeah, you had flickable hair.
Yeah, not
back in the
for
day.
a couple years.
Not for a couple of years.
Follically challenged.
A little bit.
Yeah, it's all
Every
right.
once in a while.
I'm good with it.
But you. We're going to take a quick, don't ever roll your eyes at me like that again. Okay, that was disgusting. We're going to take a quick 90-second break, come back. We got more Tasty Live after this with some hair flippers themselves. Liz and Jenny, peace.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level?
Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby. I like the looks.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. I have no idea what happened before the show, Jenny, but somebody in the chat is saying that we should bring some sanity back to the show. So if anybody can give us a brief recap of what those three knuckleheads were doing, that would be great, because Jenny and I were ferociously planning our show. So I don't know if there's going to be sanity or not in it, but...
I was going to say, the day before Christmas Eve, I don't know if we're going to bring any sanity into the show, because my life is insane right now. I'm guessing yours is too, Liz.
Yeah, it's been fun. I love it, though. I love Christmas time. It's kind of fun. And we're both dressed in red and green.
Wearing my red and green. And I told you, my daughter brought this up at Debate Club. Thanksgiving or Christmas, hands down, 100%. I will pick Thanksgiving every time, because I don't enjoy the whole Christmas shopping, wrapping, baking all at once for 2 days. It's like too much. You know, I'm in like a real laid back, easygoing person, and this is just too much go, go, go.
Oh, it's been fun, though. It was my husband's birthday this weekend. You throw that in there. And I know we have a lot of other Christmas birthdays. You know what? Change your attitude, change your life, Jenny Andrews. That's my new motto. Put a smile on your face and wrap some presents.
Hey, my mom and I were talking. We both said, I say this every year. Every year I say, because, everyone goes overboard with presents. So every year I say, let's just do 1 or 2 presents. Like, stop going overboard with presents. And my mom finally called me and said, you know what, Jenny, instead of presents next year, let's all just go on a vacation. Let's hop on a plane, get out of town, and all go on a vacation instead of all these presents. So next year, I'm out of town.
It only took 50 years for it to sink in. That's so funny. You know what? My favorite gift I get this year, and I mean, I'll say it after Christmas too, because you're going to see me probably, we come on Thursday, right? Yeah, so we'll be on Thursday because we have Christmas Day off, and then we come back in on Thursday. And my husband, for the last 11 years, he's been doing this, makes a video of all the pictures of the kids and everything that we've done for the past year. And I sit on the couch and ugly cry, and my face is swollen for probably 2 weeks. So you'll see me on the 26th, still crying.
Oh, well, that is a nice thing to get the video every year.
Yeah. Well, and that sprung from 10 years ago, or 11 years ago, my daughter's like, we're just going to make presents for each other. And so that's how we got there.
Oh. And what did you make? I had a year where I told everyone we're going to make presents for each other. What went on when you guys made presents? Obviously, you got the video, but what else did everyone make?
I got the video. I don't remember. I mean, the kids were little. I'm pretty sure I got people got like a necklace. You know what I mean? Like they were, okay. So if Annabelle, she was 6. No, she was 5 when she invented this. So I'm pretty sure it was a whole lot of pictures and, that kind of stuff, but it was fun.
Well, so I got the idea from, you remember from the trading floor, Joe Bob, whatever you want, Joe Bob, Joey Bag of Donuts, whatever you want to call him. He was our good friend on the trading floor for years. Now he works for, I won't name any names of what firm he works for now, but why can't we name the name? Oh yeah, I guess we can't. I don't know. But his family would make gifts every year. And I thought, oh, that sounds really nice. Let's do that, where we all make someone. We did this on my in-laws side. We all make someone a gift. And I actually made a squatty potty. It was when the squatty potty was a hot thing on Shark Tank. I made a squatty potty. That was the gift I brought.
Sometimes I don't know what to say to you.
Well, I thought it was a good idea.
I don't know what to say to you.
I thought it was a good idea. So then the winner was my brother-in-law. He actually he built a lamp. He made a lamp, built it from scratch.
Used wires together and let there be light.
made a lamp from scratch. That was the best one.
That is awesome. I love it.
So I thought it was fun the year that everyone had to make gifts, but not everyone is crafty, so not everyone could hammer together a squatty potty.
Okay, hold on. I got to read something. This is from Frank. No, I'm not reading this live on camera. Because he just put in the chat, let's see if she reads it. I just texted Liz what Tom was doing. I'm not. He's recapping what the 3 knuckleheads were doing.
Okay, let's talk about what we're doing today. We're getting towards the end of the year. We have our Guess the Market game going on. John, if you could pull up that art card, we've got our Guess the Market game going on. Guess the Market. You've got to get these in by you have until January 3rd to get these in, I believe.
I mean, honestly, this is in trading terms, this is forever. I'm going to wait until the very last minute.
So if we could go to my platform, it was just like Guess the Market. You would think it would show up here, but it doesn't anymore.
What do you mean?
But like what I typed in, where it was like tastylive. What was it? tastylive.guessthemarket.
No. All you typed in was tastylive.com/guess.
Okay, tastylive.com/guess. But I did not type in this, docs.google.com/forums. I did not type in that. I just typed in tastylive.com/guess for this Guess the Market. Where do you think the S&P SPX will close on the last day of each quarter in 2025? $1,000 cash prize for Q1, Q2, Q3, $2,000 cash prize for end of year. What say you, Liz? What is your guess?
My guess doesn't matter because I can't win, but guess whose guess does matter? I can't wait to get my son in this.
Oh, yes. Yes, good idea. I'll get Logan in too.
Yeah, for sure. Why not?
Oh, for sure. Yes, definitely. So I'm going to ask you a question because this is separate from the Guess the Market. Anytime I go on anything like make a comment, leave your 5 stars, whatever you want to do, when it tells me to sign into Google, that's when I'm out because I don't even know how to sign into Google.
It's just to save your progress.
So you can guess the market without signing into Google. But whenever you get like a pop-up, like review, give this place a review, and then it says sign into Google, that's when I'm out.
Wait a minute. Do you know you know what? Everybody knows our email address. They know our location. You know what, Jenny? We could put our guesses live on air and fill this out. Not right now, but let's do it on Thursday.
I thought about it.
Because I was going to say, it's not like, do we have to put a phone number or anything? And no, they just need our email address, and everybody knows our email addresses.
Yeah, so I thought about doing it.
Let's do it live on air
right now. I could do it
No,
right
well,
now.
I think to give yourself better footing, it's like writing in sand. Just give yourself till let's do it. Let's do it closest to.
Oh, you think I'm going to get better footing waiting till the very last minute? You think that might give me
I think that's going to give you a leg up, Jenny Andrews.
No, I'm going to do it. I'm going to do it right now.
Okay, let's do
Jenny
it.
At tastylive.
Well, that's not your name. Your name's Jenny Andrews, but that's okay.
No, Jenny at tastylive.com. This is my email. Oh.
Yes.
I was on the wrong.
We'll work on this together.
Okay, Jennifer Andrews. Let's see how this goes. Now, you're going to have to tell me right now, where's SPX right now?
SPX right now, Jenny, is, hold on, let me go to, and I'll give you anything you want to know, like where the SPX currently is 5925.42.
Okay, 5925. Okay, so where do I think SPX will close in Q1? I'm going to go with 58.50. Okay?
Okay.
That's where I'm going for Q1. Then Q2, I'm going to go with 60.
You know you can put the cents in too. If that but all I'm saying is you might get closer. Like if you have 5850.01, you know what I'm saying?
I'm just gonna go. You know what? Maybe I want something more like 57.50. Okay.
Oh, you're going down.
Well, I just wanted more of a like where there might be more open interest, like more of a 57.50. Or do I want 5,800? Do I just want an even 5,800?
You can do however you want.
I'm going 5,800. Then I'm going 6,100. Then Q3, I'm gonna do 6. I don't think we're gonna move too much then. 60. I might go 6,100 again. What do you think of that?
Whoa, you're getting crazy. You're getting crazy.
And then end of the year, I'm going
6,100.
500.
Oh, okay. All right. Hit confirm and send and ship it.
And nobody copy my answers and send.
Good job. Good job.
Done.
See, that was fun. We'll do mine next week, okay? Just so we don't bore everybody with both of our guesses. I mean, I'm not saying yours were boring. I'm saying, just because.
I mean, do you see how much thought I put into that?
A lot.
Because this is kind of like, this is kind of, I was thinking about this earlier, like our $5 ride butterflies in Tesla. Our chance of actually hitting this is very slim.
Slim to none. But you know what? It did happen this morning. Okay, spoons are only down 11, so we've been moving all over the place. But take a look. 2 GTCs hit.
Oh.
And I will push those out while you're looking because I was surprised when I saw these.
Micron, I didn't even think Micron was up today, is it? No, it's down.
But whatever it was, did you see Micron hit at 831? So it was right on the open.
So on the open, we bought our putback. We must have had a GTC for 50%.
Yeah, we must have.
That's a miracle because my Micron position, I looked at mine, it wasn't winning today, but now Micron's down. Let's see, on the open, yeah, you can see that blip up. Open,
yeah,
90 on the open.
GTC for the win, baby.
Gotta love them. Gotta love those GTCs.
Yeah, you do. It's kind of crazy.
Okay, and what was the other one?
EWZ.
Oh, EWZ, Tim Knight's bearish trade. Now EWZ has been running down. EWZ.
I think we lowered our bar on that GTC on Friday though to try to take it off. Well, can you pop up the side? Let's see what we did. I don't think it was 25%.
Oh, what? Yeah. Oh no, that's okay. Hang on. EWZ in the last 7 days. We were only looking for, because it was a big blizzard, we were only looking for like 10 or 15%.
Okay.
So if we took in $1.29 credit, 10% would have been $13, and we took $30 out at 20%. We got 20%. That's what we wouldn't have looked for more than that on a big blizzard.
It's not bad.
No. So that's a reverse big blizzard. I actually put in, because I actually have some long delta and I have some bullish positions and I have all my little like scattered SPY end of the year stuff. So I threw in a reverse big lizard in SPY, and I want to say I threw it in know if I threw it in for just like year end or if I maybe put in for regular Jan. But
you're in SPY, not EWZ though, right?
Yeah, I mean, I'm just saying like we put in a bearish reverse big lizard. I just put some in SPY only because I want to have some positions that will make money if my other positions are losing money. And if I lose money on my SPY reverse big lizard, I'll happily make that donation because that would mean everything else is winning.
So let's walk through it.
Okay, I think I went to the 25-day. So 25-day reverse big lizard is selling an at the money straddle.
I mean, you've got at least almost a 30% IVR, which is great for a SPY.
If I make it $10 wide, selling the 590, buying the 580 put, I'm getting 1360. And if I use that 360, it's very little risk. So look, $389 in risk, and you're getting $10, and you have a $10 wide put spread. My thought behind this was if we drop down towards this 580, you're not going to make that much out of this. If you drop down to the 580 and vol expands, and that 580 will expand, and you'll make $100 out of it.
Yeah, that's not bad.
But
I mean,
you're only risking $389.
You can't expect to make much more when you're risking so little.
No, okay. So we took 20% out of that EWZ, but I do think we collected a little bit over, as if we had like here a $9 wide put spread, and we're getting $9.89.
Yeah.
I think we collected a little bit over with the EWZ. If you're looking for 20%, I think you need to have collected a little bit over.
Yeah, or you just need to let this thing go. You're not closing this at 21 days till expiration if you put it on 25.
But if you take in 1013 credit on a $10 wide, you can make 10%, which is $100, which is I think the profit target on something like this.
I mean, if you think about your risk reward scenario, if you're risking $338 and you're making $100 on it, that's pretty good.
Yeah. And if I lose on this, great, because then everything else is in good shape.
And this account is bullish right now.
Right, yeah, you can see like we have more red on the screen than green, and this is a day that, oh, look at AMD making a comeback, up $6.
Wow.
Whoa.
Oh, and can we talk about another little random stock that you and I both had in our accounts? And I know your son had it too. So Rumble.
Okay. Rumble. Now, this I remember, and I think I got like hate emails on this.
You did.
So a friend of ours who trades, he had told me, oh, get into Rumble. And there was a lot of premium there. So it was like 2 years ago or something, or 3 years ago, or 4, I don't know how many years ago, that I had to do a piece for Luckbox magazine. And my trade for the magazine was a covered call in Rumble, because I think it was $10 and the calls were $1. So I said, if it's
I want to say the calls were more than $1. There was a lot of premium in this when we were doing it.
There was so much premium, but I think I said, if you buy 100 shares and it's $10 and you get $100 a month selling a call for $1, you can own this for free in 10 cycles, or however long it takes to get $100 each call. And the thing dropped immediately.
Yeah.
Right?
Yeah. That's why there's so much premium.
I mean, the last time it was $10.
It wasn't too long ago.
It wasn't that long, but whenever it was and I did the covered call, then it just dropped.
Yeah.
And it's never been back up to this. Now, 1350. Whoa. Rumble.
Yeah. That was a shocker this morning when I was like, what is this? I rubbed my eyes.
So my question to you, are you going to sell half of your Rumble? Are you going to sell any of your Rumble? Or are you just holding on, thinking this is just the beginning of something big in Rumble?
No, I'm going to sell aggressive calls against it until it gets called away from me.
I don't know what kind of premium there is now. Let's take a look.
I don't think it's going to be that bad.
Oh,
Yeah,
look,
that's
13.5 calls, $2.
It's pretty good.
Yeah, that is good. And then
Yeah.
even the puts, what I'll probably do around my stock, I'll probably sell like the 15, 10, 220.
That's not bad, but when you're doing it around stock, but yeah, look, your 10 is cash. No, it's not. Because you don't have stock here. Never mind. I was thinking you had stock and you don't.
No, but if that's probably what I'll do around stock. If I didn't, I'm not getting in now with Rumble up 6.
Yeah, no.
I don't think so.
yeah, no, I'm
Would you?
gonna sell
If someone says like, "Oh, I want to get into Rumble. What should I do?" What would you say here?
I wouldn't fiddle with this now. It's up $6. I think you missed it. That's what I would say. I think I was in this by chance, not by choice. Do you know what I'm saying? Like that's what happens is I was in this by chance, not by choice. Like, and then it just sat there because I haven't seen it in years, and it was just one of those. It was in where things go to die.
Yeah, right. And I don't even have that much of it because I think at some points in time I have sold strangles around it or calls around it, and I've had a lot of it called away.
Yeah. Okay. It is 10:18. This is the time of the show where we got to decide if we're gonna trade the Jejune trade or not.
Okay. Sure. Let's do it. I mean, it's
we've
the holiday.
been all over the place, right? So we've been down, we've been up. What is the VIX doing? Before we do it, can we look at the VIX? The sage that VIX is.
Up 30 cents.
Up 30 cents.
So that I would take that as a little more of a bearish sign.
Well, it's reversing though too, because now we're only down 12 where it was up 60 or 80 cents earlier.
The VIX was?
Mm-hmm.
Yeah. I don't know. Maybe that's a new part of it. Like if VIX is up, you don't do the Jejune.
Yeah.
Yeah.
Huh. But let's take a look at it though, because now we're only down 10. If we would have put that in, we would have been out.
Okay. We were only down 12 when I pulled this up. It was 255. Now it's 275.
Yeah, we would have.
It was 255 when I pulled it up.
So, Oh, 9. The timing was right.
Yeah.
It's okay. We don't have to do it now.
I have what have you been doing every day in SPX?
This in the ironic turn of events, I don't know what possessed me this morning. I don't even think I was paying that much of attention. I did the Jejune trade on the open this morning and got out immediately. Well, pretty quickly, and thank God I did because then it went down. Because I just figured I didn't want to risk my $5,000 on a trade, so you
just did the Jejune trade.
I just did the Jejune trade.
Yeah, now it was 255. Now it's 285. I don't want to buy it now.
Yeah, no, I get it. We're only down 8. It's kind of a crazy day.
Let's see. Do I wait? You can't. It's tricky. The Jejune trade is tricky. Let's go to Twitter, see if any of our peeps are putting it in. Let's see what's going on in Twitter today. I'm just going to refresh. All right, we've got Bob on fire with earnings. Hello, Bob. Have a Merry Christmas. I can only imagine what Bob's cooking for Christmas.
No kidding. I would love to be at that household. It's going to be delicious.
No earnings for the next 2 weeks. Wish both of you and your families superb holidays and best wishes for the new year. We'll resume earnings post for the week of the 6th. So looks like we don't have any earnings.
Yep.
I know.
Well, this week, I know there is programming tomorrow, but it ends at 10, so we won't be on. So we're off Tuesday. We are off Tuesday and Wednesday, and then we'll be back Thursday and Friday. And I can't imagine anybody would try to put earnings in those days.
No, you don't really see much. I mean, this is okay. Here's this. This is this week, the end of December.
Yeah.
And then next week, nothing.
Yeah. And it's kind of the tail end of earnings season anyway. That's why it's earnings setup. What is it? Earnings setup calendar season right now.
So I agree with you. I think we look for some, because you see here, then the following week we have the banks, and that kind of kicks off earnings season. What are you laughing at?
Thank you, Jejune. I love you. That's what it says in the chat. It must have worked for somebody.
Well, we're supposed to around 8. It's still here.
But no, I know, but they might have done it earlier. So I have no idea. I'm not watching all chats. That's pretty funny.
Okay, so no earnings. Let's see if there's anything going on. With the holiday week, things can be slow. So as far as most active, GDX, which, GDX is, we can look at our position. Our GDX position doesn't look good. So GDX, 35 calls, 20,000. Here's GDX, 35 puts, and it's through our put.
Yeah.
Otherwise, you're just seeing a lot of SPX, SPY, SPX, VIX, March 40 calls. That cracks me up.
No, it is pretty crazy.
Yeah, let's take since GDX was brought up, let's take a look at our
we have a Jade Lizard and it's about $1.50 through the put.
Right. So when people ask you what is the management for a Jade Lizard, what do you say?
What would you do with a put?
Right.
That's the only management there is, because I'm not rolling the call spread down. A long time ago, when we first started this, I would take that call spread and roll it right on top. I don't think 30 cents does anything for $1. I mean, you could, because there's still 25 days left if you wanted to, because you would take your dollar wide call spread, roll it down, you'll get another 23, 24 cents, fine, whatever. I get that. The next thing is, and there is still 50 cents in this. This is basically a synthetic covered call. So it's that same management as I would do with a naked put or a synthetic covered call.
Right. So I agree. We used to say, oh, we'll roll down our call spread, but the 30 cents doesn't really do much. So we don't anymore. The next step is going to be the put out in time, which we could. You can go to, so the 36 put in Feb, you're getting 54-cent credit. And then you just have a short put with 60 days out.
Well, Jenny, if you look at this, there's still a high rank and there's still some decent premium in the cycle we were in. You can roll down either a naked, so I wouldn't roll down the call spread. But let's look at this. So you could close that call spread and just sell the 37 put or the 36 put. And if it pops back up, then you're out.
You mean the 36 or 37 call?
Call. Sorry about that. Yeah, call.
You want a naked call in GDX, Liz?
No, I don't. No, but it's a Band-Aid over a bullet hole. If you're going to, I wouldn't put it right there, but you're at the expected move for the cycle. I don't think it's going to gap up in there. Do you know what I mean? Or you can sell a $2 wide call spread. All I'm saying is there's still 50 cents in premium in the put that we're in.
Yeah. Okay, so I sold that call spread. We can get 50 cents by selling that call. It's interesting. This reminds me of just a week ago or so, 2 weeks ago in IBIT, how I started selling, I closed part of my crypto, started selling puts in IBIT, and then it was falling, so I added calls, and not long after, then it blew through the calls. And then I'm panicking about the calls, and now it's back down through the puts. It kind of depends on, do you want that stress of like, now it's through the calls, now it's through the puts, now do you want that stress? Because when you're selling both sides, you have to deal with that. And if people are okay dealing with that's what you have to deal with.
John, okay.
Yes?
I didn't know you froze for a second. I don't know if I froze or you froze.
So I don't know, Liz. What do you think? I mean, I'm okay selling this call, but then in a week it could be per call, and we're like, darn it, why did we sell that call?
Well, I guess my point was we don't need the 50 cents by rolling it 60 days when we're going to get 50 cents in 25. So you could just leave that. You could just leave that. It's a synthetic covered call. I'm fine with that in GDX.
I'm fine with that too. I think I would rather.
But I know we said we don't do this, but if you did, you could do the 36, 37. You're going to get 20 cents. It's something. And then no matter what, you can't lose.
Yeah. Yeah.
It's something. 20 cents is something. Even if you have no risk to the upside. We collected over, and we know we collected over already, or we collected at least $1. So then if it gaps up over 37, I wouldn't do the 34 because you can actually lose there. Then you just for the next 21 days.
22 cents?
Yeah. I mean, we have 50 cents in extrinsic value right now. We have 52 cents. So it's almost giving us another 50%. That's what the Jade Lizard does. I don't care. I'm fine just leaving that put, though, too.
I mean, I threw in that spread for 22 cents. If we get filled, we get filled.
I agree.
We've said so many times that it's not, that 30 cents doesn't help you, but that's when we would have Jade Lizards in bigger products. So we used to have Jade Lizards in SPY and IWM and in the ETFs. And when you're looking at a product that big, it's like you have to roll out, you have to move out, you have to go out in time.
IWM was our biggest Jade Lizard.
Mm-hmm. Mm-hmm. And you know me, sometimes I will, and again, it could cause problems and you could end up getting too big, but sometimes I'll buy this put back and do like, remove my puts, but add to it and then kind of give myself better footing, but then you're doubling your position. It only works if you didn't start with your initial like full size.
Every time I've ever done that, my position gets way too big.
It depends on what I'm in, and certain products I don't mind it. It kind of depends on what I'm in.
Yeah, I think you're right. It does depend on what you're in. Oh my God, Spoos are only down 6.
Mm-hmm. Yeah.
Judging for the win would have been good.
Let's see. Here it is. It's $3 now. So it was $2.55 when we came on. So yeah, 5 cents away from closing.
Yeah.
Judging. Okay, so as far as our positions go, we really have nothing to manage. I went through the account, made it maybe to M. I don't think there's anything pressing. I don't know that we're going to be back on Thursday, so it's not like we have anything expiring between now and Thursday.
No, but we do have. Can you take a look at one position that I was glancing at today, Jenny? Coin. There's only 4 days left. What do we have in coin?
Oh, we just put it on. Remember, we sold a put spread and bought a call spread. It was like a cheaper way. It was just cheaper than the diagonal because I think the diagonal was expensive. So it was just a cheaper way to keep a bullish trade in coin.
Okay, so you're right. We put it on Friday and we are above the 265. We don't make any money. We don't make any money until it goes above our call spread because I think we paid for it. So this is going to be a loss.
And I put these on, so someone was asking, I put these on just about every week. And I'm not up by doing it because your risk is small. And coins had it's had more of a bullish year. But I look at these all the time. When coin goes down, I'll look at, can I buy back my short call? And usually never. Usually you never see the premium come out of these coin options.
Oh, coin is out of control.
Yeah.
It is always out of control. Can we take a look at bonds too? Do we still have our ZB position? I want to take a look at that because those are down again. The 14 handle.
Well, I think it was like a full point lower last week. So 14 handle's not terrible from compared to how low it got last week.
It was 13 last week.
Yeah.
Let's see.
Last week it was as low as 113.17.
Oh, it just looks like it's the low point of this, so I wasn't sure. So
it got this low last week.
Wow.
Yeah. So this is 11 days. It's a put spread. There's not really nothing you could do with it.
And that's through. I didn't know if we wanted to. I mean, I know this sounds bad. I know it's a loser. I didn't know if we wanted to add to it or put something on that will make money if it pops back up. That's kind of where I was going from with this.
So when it was down, we put in the zebra and TLT. Last week. So you see 4 days ago when we had that down move, we put in a TLT zebra.
And it's this 87, 88. So it's not like it's that.
That's right. Yeah. So it's like, it's pretty much right there where it was when we put on the TLT zebra.
Okay.
So I think that's fine. Like we have this, I think we're fine with just the TLT zebra. We had this discussion.
You don't need to reestablish this. You don't need to ratchet it. The zebra's fine. And the other one's a full loss. So we're on the wing in the prayer program for that just popping back in at some point. When I looked at that at 14, I was like, oh, maybe we could pop in.
Now, Baba's up today. Are all the Chinese stocks up today? JD's up today.
Yeah, a little bit.
And what else? PDD. Is PDD up today?
Well, we have Baidu. We have Baidu and Baba, and they're both up.
Yeah. And PDD is down today. Or what am I in? I'm in D.
So
PDD is down today.
Baidu. What do we have in Baidu? It's right underneath Baba.
We just have a short put spread. I'll put in a GTC for this.
Okay.
That's
And then let's take a look at some earnings setup calendars. What do you think?
Oh, yeah, for sure. So Baidu, I put in a GTC. Baba, I'll put in a GTC for this as well. This is a big lizard. So I'm going to put 15% on the big lizard.
Perfect.
Okay, so earnings setup calendars. IBM comes to mind. That's usually one of the first. Yeah.
So IBM 29 rank, earnings are far out. Let's do it.
Now, I almost think we have to buy the 39-day, not the 60-day.
I agree, because it's going to be way too expensive if you buy that.
Yeah. And I was hoping for a 217 strike. But
I know, they never have it in IBM until you get closer.
I know. So if we just do an at the money, and it doesn't matter. Like, it doesn't really matter puts or calls. If you're doing the at the money, they're going to make money the same.
They will, and they'll be priced around the same too.
So let's see, the 220 puts, 365. Are you surprised it's that much?
No, because when you were buying the one you were buying, I expected it to be more expensive.
Yeah. 365, or I'll price out this 225 call. 225 call, 417.
Yeah, let's take. I'd like it for cheaper, please, Jenny. I'll take the cheaper one.
The 220.
So the problem with, and there's no problem, but the interesting thing with these, so the concept behind an earnings setup calendar is that we know that the one that we're buying, that earnings cycle is going to continue to inflate. We're kind of saying it's going to stay around here, and we only want to get 10% of this.
I know. So it's basically, and well, we've seen earnings setup calendars get 20%. We've seen plenty of earnings setup calendars get 20%. So I think that's okay, because it's different than a durational calendar.
It is, and you know what else has happened with these? Sometimes they go wildly against you and come back on earnings.
I know. So you never know. You never know. So if we pay 365 and look for, I don't know, what do you think? Somewhere between 10 and 20%.
10%.
If it was wildly against you, we could be out 365. But to your point, sometimes they come back.
So this is a volatility play, right? So we're already looking at a 30 IV ring, which I'm good. I think we should do this in IBM. But so the whole crux of this is we know we're buying a 32% implied volatility and selling at 25. We're well aware. But the one we're buying, that 32, as we get closer and closer and closer to earnings, should continue to inflate.
Right. Now, if we wanted to make it cheaper, we could move this to one more week out. But it's not that much cheaper, 308 or 365. I don't know. You could move it 1 week out.
No. Let's pop this one in, and then let's look for some more, because we can show on the watch list how we can find things that have earnings. I want to see something with the low IVR. IVR was kind of high.
I know. Yeah, I know. I'm kind of surprised. Okay, so IBM, we're working that to pay 365 for the 220 put calendar. More earnings setup calendars, usually in the beginning, Facebook. I was going to put in Facebook, Meta. But that's going to be expensive. That's going to be expensive.
As these prices go up, those calendars go up.
I mean, this is going to be crazy expensive. I'm just going to look. $595.
I think $41 for it.
$2,000 for the low price of $2,000.
No, there's better things to do there.
No. Okay, what we have to do is go to the watch list and go to Tasty Default. Where is that? Tasty Default, and sort by earnings. Right? And you want to find one that has earnings somewhere between 25 days and 60 days.
Yes.
So,
which is almost all of them right now.
Apple, Amazon, Baba, CMT.
Then let's look for things that aren't that expensive. So I would go Baba, Baidu. Those aren't that expensive.
Right. Baba, Baidu, Disney.
Disney is an earnings setup calendar.
Google.
That's only $193. Because we know Meta, when you're looking at a $500 product, it's a lot more expensive to put a calendar in.
Okay, so Starbucks. So there are quite a few. Okay. What do you think? Disney? Earnings setup calendar?
Check, double check. To the bullish side, please. We have an earnings setup calendar in Disney.
Yeah, we do. We do. And we don't have the GTC in. I'm gonna put GTC in for 20% for these earnings setup calendars.
You're crazy. You're certified badass.
All right, what else was on there?
Baba and Baidu. We have stuff in for both of them, but they're cheap.
Okay, so we have Baba, but we can do a different cycle. So let's see. If I buy the 85 call and the 60 day, And go to the 30-day and sell the 85 call. $1.88. That's not bad.
Ship it. And then put a GTC in to keep these things. Oh, you're filled right away.
Okay.
Good job.
Okay, then by having multiple positions, but having working orders, we'll see what is what. They'll just be
What is what?
Yeah, then we'll know like what order is what, and they'll be down here working.
Yeah, that's true.
So now when I look at Baba, I don't have to think it's a big mess. Okay, here's one trade that's working. Here's this trade that's working.
Perfect.
Okay, back to this list. What else? Cisco, CMG. That probably won't be bad.
So that's the one after it split, it never really went anywhere.
Well, good. We don't want it to go anywhere with an earnings setup calendar.
No, I mean, I'm saying usually like, all those other ones that split kind of had this up move. CMG never got that lift.
Do you want 60 or 65?
65. Only because my kids go there so often. Do your kids go to Chipotle a lot?
No.
They don't?
No, they don't. They don't.
It's locked and loaded with teenagers every time we go there. Chipotle and Cane's. If Cane's were public, I'd be buying that too.
It's weird. Our Chipotle isn't that busy.
Really?
It's interesting. So, and even yesterday we were driving home from church, and we had a little bit of time, and we pulled in, and it's like Panera, Chipotle. They're right next to each other. I'm like, do you want Panera or Chipotle? They all wanted Panera, and our Panera is always busy, and our Chipotle is not that busy.
That's crazy because the Paneras are shutting down by us, but the Chipotles are crazy busy.
And what a difference in the kids over there, and we're only 25 minutes away from each other.
What is Panera doing? We haven't done that in so long.
I don't know.
PNRA.
I'm gonna throw this in.
I would for sure.
The 65 calendar, I'll pay $1.55.
And this is something that I wanted my son to look at too, because he does go there so much. That's why I was like, you should buy what you know. Because all he's doing right now is buying stocks, because I haven't really showed him how to do anything else yet. I'm going to do that over this break. He's not at basketball. But Chipotle is one of those things where.
So these earnings setup calendars, really easy to put on. I throw them right around at the money. I mean, here it was trading in between two strikes. That's why I said to Liz, pick a strike. And then I put in a GTC to take 20% out of it. Now, if the market has a big move down and all these products go far from these will lose. If the market has a big move up and all these products go far from our strike, these will lose. The market has to stay in a range or come back to this area.
Yeah, but not right away. Like with an earnings setup calendar, especially the one we just put on an IBM, I don't care if it moves right away. I don't. Yeah. It just at some point has to come back.
Right. I agree. Okay, so you want me to look at Panera, PNRA. What is it?
What wasn't it PNRA? Did they not go public anymore? Can you type it in?
Maybe not. Maybe they went private. I have no idea. Was it ever public?
Yes, PNRA. Why would I be making that up?
I don't know. If Frank's had on the trigger, he'll.
I gotta look into this.
He'll let us know. So I'm not sure, but our Panera is busy. Our Chipotle is not so much. Like I could walk into our Chipotle anytime and there's no line.
Public company. Hold on, I'm Googling it right now.
All right. Let's see what Tesla's doing today. Up $11.
Oh, I know. Tesla's up.
It's good for JD. And we just
you know what else too? We now have Dogecoin on here. Speaking of like Tesla, because the whole Elon Musk thing. Now we have Dogecoin on our platform, which is pretty cool.
Cryptos. So they're all down today. $32.95. This is exactly where I bought Ethereum on Thursday, and then on Friday it was like 30. I don't know how high it was Friday, and I thought I was a genius. So if I felt like I missed it, I could get back in with more.
You can get right back in.
I know I'm still in. I never closed it, but I thought like, oh, what a buy, and now it's right back there.
In 2017, they took Panera private.
Okay.
So it was public.
Why are we getting a chart on here?
I don't know.
Is it because we have too many?
No.
Because isn't that weird? We're not getting an Ethereum chart.
It is bizarre.
Yes, here we have the Bitcoin. Here we have.
Yeah, but you can do the Ethereum chart just on the trade page. Just go to ETH chart.
And here, okay, so we've got Dogecoin today. What you said we got that last week.
Yeah, we got it last week. But you can just go to trade.
Yeah.
ETH, yes.
Yeah.
Yeah, there you go.
What do you think of the cryptos here? I still have my strangles and IBIT.
I mean, I look at cryptos. I kind of look at cryptos in a different way, and I don't know whether this is right or wrong. I'm asset gathering. I'm asset gathering with cryptos. When they go down, I buy a couple more. I've just been asset gathering with those. I don't know if it's right or wrong. I did the same thing with gold and silver in my IRA. With these, I'm just kind of asset gathering. I do scalp in and out of one or two, especially Ethereum, but not really.
Yeah.
Because it's not. I mean, because you can't sell it short. Like you can't go in and sell Bitcoin short. You can do something in IBIT, but not the actual Bitcoin. I'm just kind of asset gathering.
I do. I mean, these do have a decent amount of premium in these IBIT options, which I did like. Like you go to regular Jan, look at the premium here. There's a lot.
There is quite a bit.
A lot of premium. So, yeah. But down $1.78, my puts are in the money. I think my puts are 55. But there's still a lot of premium in those.
Yeah, there's still a ton of premium in those.
Mm-hmm. And I told you last week I was sweating the 60 calls, or what I had the short 60 calls, and I was sweating the calls more than the puts.
Yeah. 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 So Frank was just texting that, yes, Panera did go private, and he's saying Nordstrom is going private as well, JWN.
Oh, I feel like that's been over for a decade. They have talked about that.
Yeah, I feel like they have too. And -10 IVR. Am I looking at that right?
Okay, Spoot's up on the day. What do you think? I never put in that reverse Big Lizard and SPY.
You agree we didn't press the button on it?
No.
I mean, it's fine. You're not risking that much in it. You're going to take a very low amount out of it. But I will tell you, so Jenny, only because, and I like the reverse Big Lizard. You're only risking $300. But I almost think the calendar could be very similar. You want the same thing. So when we're looking at those, a lot of times you do want the same thing for a calendar.
What you want, so with that reverse Big Lizard and it's the 580, then it would be putting it at the 580.
Yeah.
Yeah. Yeah. It'd be putting it at the 580. So here you're risking 368.
And wait, what cycle were you in? The 25-day?
Yeah. So you'd be putting this 25-day, 11-day.
No, your risk isn't at the 580.
No, what you want it to do is go to the 580. You want it to go to the bottom strike of your Big Lizard.
Gotcha.
You know what I'm saying?
Yes.
That's when this will come off. If we go down to 580, or if we go down, that's when this will come off. Yeah, it'll come off slowly if we stay right here. But if we go down to 580, that's when it would come off.
And how much was that calendar? You could do 585. You can do anything to the downside.
230.
So they're all kind of versions of the same trade, right? When you're only risking $300, risking $200, you can kind of look at this stuff. And that's why I love learning the synthetics. I think it's fascinating once you learn how options work, that things are all kind of, as long as you're risking that same amount, they're all pretty similar.
Well, we always say calendars and butterflies are the same. Calendars and butterflies are the same. And I actually usually prefer calendars because then you've got more time on your long.
I agree.
Yeah.
And when you're looking at selling premium, this whole 21-day mark really messes with our heads. But in calendars, we don't feel like we have that pressure. Like, you know what I mean? No. You don't feel like you have that pressure.
So I'm just I'm gonna take a look. Most active, I didn't see anything. When we looked at our GDX,
I think the volume is down a ton today. Hold on. Okay. Now look at this. Go back to the VIX. VIX is now. Oh, we don't have to. I'm sorry. I'll let you finish what you're doing. But VIX is now down 30 cents, and the market's up.
Well, yeah, because the market's up. So it's like, now it doesn't look like things are so shaky. It looks like it's going to be a quiet day.
Yeah.
Yeah. Cancel crash. Cancel crash. We still have our little, we did sell one. So we sold a 604 in the 0 day. We've got 8 days till the end of the year. Let's move it.
Yeah. I don't know that I think we got it because it was through the weekend. I don't know that we're going to get anything for the 604.
No. Not for one day.
No.
No. No. So I did start new ones like here,
I don't mind that. I really don't.
But then you got to stay right here. If we're going to stay right here, 282.
Yeah. I don't
and
mind
then
it.
you got the hope of every day selling one.
Selling one,
But
selling one.
That's only if we just sit right here. When did Chris Vecchio say the Santa Claus rally starts? Next week?
No. I'm not pinning this on Chris.
No, even Vanetta said she didn't know there was a specific time frame for the Santa Claus rally until she heard Chris Vecchio say it.
So, this was last year, and I don't even know if it was Chris that said it, because we did go up between Christmas and New Year's, and that was the technical term for the Santa Claus rally, is the week between Christmas and New Year's. I think Santa Claus rally, and I think leading up to Christmas. That's my bad. But it's the Santa Claus rally is technically after Christmas.
Right, and I think it goes to like what day? January something. I don't know. I can't remember, but Vanetta was talking about it this morning.
I thought it was the week between Christmas and New Year's, but you know what? I'm going to Google it. So you just stay right there. Don't worry, your pretty little head. Hold on.
Now, when we were at the SIBO, I don't know if it was last week or the week before, we were on the SIBO. And do you remember they were trading some ratio spread, and we asked, like, is that the Christmas tree? We didn't know if they were getting some Christmas tree orders over this time of year. And do you remember what the guy told us the Christmas tree was?
The Christmas tree. It was 3 by 2 by 1.
3 by 2 by 1.
Because it's 3 by 2 by 1.
So
you're selling 3, buying 2, buying 1. So it's all kind of spread off. Okay.
Then go to the 30 Delta and sell 3.
Okay, so the Santa Claus rally, and this is what Google came up with. A sustained increase found in the stock market during the last 5 trading days of December through the first 2 trading days of January.
Okay. So you've got like a whole week.
I didn't mean to do that.
I will. Well, I'll look at those days in a minute. Okay, so sell 3 by 2 by 1.
Yeah, that's a Christmas tree because it's all spread off.
Sell 3 by 2 by 1.
How'd you choose those strikes there, Jenny Andrews?
I didn't know.
Just winging it.
So you're taking in a credit, but you do have risk, but it's capped.
Pull the one you're buying up. Why'd you go down so far? There you go.
One?
Yeah, that looks more like a Christmas tree.
And what is that? I want to see what this looks like on the analysis page. Why do they call this a Christmas tree?
I think it's just because they're laddered in like this.
Okay, analysis. I'm going to get rid of these calls and take a look at this and see why they call this thing a Christmas tree.
I don't think it has anything to do with this chart because this looks like a jade lizard.
This looks like buy a call spread and sell a put spread.
Mm-hmm.
Or whatever. I don't know.
I mean, you're taking into credit, but you can't go down. It's not like it gives you much room to be wrong.
Yeah. Yeah, there's just.
I'd rather just sell $2.14 call.
Like you're selling a put spread.
Yeah.
Huh. But I see here the 2 green tops and this red bottom. It looks like the base of the tree. I don't know. I don't know why this ever got the name the Christmas tree.
I don't know, but I thought it was 3 by 2 by 1. Or was it 1 by 2 by 3?
Maybe Frank remembers. Okay, so when you say the last 5 trading days of December.
And the first 2 of January. Now, granted, this is from Google.
Okay. So it should not start until December 26th. So when we come back on,
Although Christopher Tate is telling me that Vanetta and Chris both said starts tomorrow.
Starts tomorrow. And
Rally.
All right, and then it will end January 3rd. So I'm going to go to January 3rd. If you thought we would rally from tomorrow until January 3rd.
Yeah. Yes. What would I do?
What would we do? Would we do some type of diagonal where every day we're moving our out of the money call, where it's like we have the 596 and then the next day we move it to the 599 and then the next day we move it and we keep moving our short.
You're selling a call?
No, it's a diagonal where I bought one.
Oh, I'm sorry. Like, I was wrapped up in the Christmas tree.
I bought one in the 11 day, which gets us to the end of it, and then then the short term sell one out of the money and keep moving it. But tomorrow we're not here, so I can't sell it there.
You know what I say? I say big money, no whammies.
So then we go to the we sell it on the 3 day to the 596
to the expected move. If we think it's rallying, go to the expected move.
597.
Yep, this is it.
And then when we come back on the 3 day, then we're going to move it out and up again.
Yeah.
Yeah. Out and up, out and up, out and up. And this is our Santa Claus rally trade. Now, we're paying $5.40 for it, and the distance between this isn't even $5. But it's very short term, and our hope is to quickly move this out and up.
Yeah.
Yeah.
I like the 1 day better.
We're not going to be here.
I know that, and you know that, but I like the 1 day better.
But what I don't like is buying it at the money and paying that much in extrinsic value. That's too much.
Well, the rally says you got to do it.
Or instead of paying that, we're better off doing a zebra.
The zebra's gonna be too expensive. The price out of zebra, it's crazy expensive. Even the 11 day. And you're like, this is against your religion to have a zebra in under 10 days.
I know. I'm gonna make
it doesn't bother me as much as it bothers you, and this is gonna be expensive.
Well, okay, so 1320. I'm gonna see how. Yeah, it's expensive. It's expensive, but I don't like $6 in premium at the money. So
well, you're running it today, so I'll put it in on Wednesday when I'm running it.
So then I think to combat that is you just buy a real wide call spread, and that's like your long. So your long is like a real wide call spread, and then you're not giving up so much.
You're not giving up anything, right? Well,
a little bit.
You're giving up $1. Just wrap it around the at the money, so you're not giving up anything.
So 588, 600. There's a $12 wide call spread. And then what are we gonna do? Sell call spreads against it every week, every day?
No, I don't like this trade at all. I like the 11 day 1 day. I'm gonna sell call spreads against a debit spread. The extrinsic value is a problem. Like paying extrinsic value is a problem because that is delayed. Like that's just decay. So if you think it's going up,
like we got to go up more than 50 points to combat that extrinsic value. That's
correct. Except that's in the 11 day, and you're getting $1 a day, and there's only 11 days.
If we're not going to get $1, because.
Hey Jenny, you know how you get set up for the Santa Claus rally? You just have all the rest of your positions be bullish because that's exactly what we've got.
Yeah, right. You're just locked and loaded with bullish positions. You know what? I'm just all in on Intel. I'm just locked and loaded in Intel. It's pretty much all I have. The only thing I look at in the morning now is Intel. It's the only thing I've got going for me.
Oh my gosh, that's so funny.
That and a little bit of Rumble. No, I don't know. I have barely any positions on anymore. I mean, I've got my little. I have plenty of buy, call spread, sell, put spread to pay for them. Those are baby trades. The bulk of my account right now is long Intel. And you know me, sometimes I get nuts. It's kind of like my Spirit Airlines position.
That's how big your Intel is? No, Jenny, no, it's terrible.
Well, honestly, it's like one of the only things down. You know, I only like to buy things that are down. I don't like to buy things that are up.
So can you do me a favor, Jenny? Can you go through everything that we did today to make sure I've got it all pushed out?
Sure. 10:57. We're almost out of time.
Yeah.
We did do some earnings setup calendars. Okay.
I
All
think we did a
symbols
little bit.
today. Our Micron GTC hit. Our
Okay.
EWZ GTC hit.
Perfect.
GDX, we bought back that
Call spread.
call spread. We never got filled on the other one, but whatever.
It's fine. I don't think that matters. Yeah.
We put an earnings setup calendar on in BABA and CMG. We're
Okay,
still
perfect.
working. Okay, here. Did this get that far? Oh, that's a different trade. Or is it? Is this a new trade? No, that's to close.
Yeah, those are we got filled at everything we were trying to do today, I think.
No. Here's the IBM earnings setup calendar. We never got filled on.
Oh, how far away is it? 7265. I mean, that's
I'm going to cancel that. We can look at it next week.
okay. Yeah, it's not like a pressing issue.
No, and that GDX call spread for 22 cents, I might cancel that too.
Yeah.
Now,
Excellent.
AMD, I know we have an AMD position. We looked at it earlier. It's having quite a rally. This short put, which caused us a lot of pain during that big fall, is now profitable. I'm just going to let you know, Tim Knight was bearish on AMD.
I don't care if you get rid of it. Are we painfully profitable?
$16 only, but we took a lot of heat.
Well, and we took a lot of capital. I remember looking at this being like, what the hell?
I know. We took a lot of heat and it used a lot of capital. So maybe it's just something we don't want to worry about over the holidays.
Yeah, just take that off. And Jenny, in years past, because I've known Jenny for a long time. Today is the eve of the eve. Are you going out drinking tonight?
Are you serious?
I'm kidding. We used to when we were in college.
No, do you know how many presents I still have to wrap?
Do you want to meet me? Do you want to meet me at the bar later? The eve of the eve.
You know where this would be a brilliant idea. Brilliant idea. There should be a place where you bring all your bags of presents. There's a bar. You hand it over to someone. You pay them whatever, a present, to wrap all your presents, and they wrap all your presents while everyone sits at the bar.
I think you got a new business model, Jenny. Andrews on it. Sounds like a plan. All right, everybody, happy eve of the eve. Remember to have a wonderful Christmas.
Yeah, everybody have a wonderful holiday. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Teddy show. We'll see you on Thursday.
Yeah.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick,
Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddy, Mikey Butler. How's it going, sir? I see you have your DraftKings pullover on, even though nothing positive happened for us in the DraftKings realm this weekend.
Absolutely vaporized. I thought I was gonna be good, but Mike Evans did nothing, and everyone else did a lot. Like Jonathan Taylor, Justin Jefferson, just massive explosion days. But how did the people in the Tasty Live playoffs do? What's the story there?
Well, it'll be me, I think, versus Paul. I have to look at the other matchup. I spanked Frank Caberna, I should say, not Frankie in the chat. Frank Caberna, the indoor kid. Spanked him around a little bit, so I'll be playing for the title.
Nice.
In the Tasty Live side, the Tasty Trade side, I unfortunately I missed the playoffs by a hair. It's tiny.
There you go.
So, but I had McCaffrey, so it's like,
yeah.
What can you do?
What can you do?
Best player in the league, just hurt the whole time, so didn't really play into my strengths.
The number one pick was the worst pick this year. Very rare scenario. Because even if
first time ever, basically.
Yeah, because even if you didn't pick McCaffrey, if you pick like Tyreek Hill, he didn't really do much. CeeDee Lamb didn't really do much. So you were just done. You needed to be like 5 and beyond to do well this year, which is interesting.
Yes.
Yeah. What's going on with this market? Seen a little crypto sell off. Ryan is gallivanting around Buffalo. Ooh. Congrats to him and his Buffalo Bills win yesterday.
Yes, Bills are looking good. That's a nice franchise to be a part of.
Correct. And now there's commercials. Like I saw some commercial about some guy who like was a kid and he was a Buffalo Bills fan, and then he grows up and he got some Bills attire at some shop, and then he grows up to be a grandpa and he brings his granddaughter there to get her some Buffalo Bills attire. It was like a MasterCard commercial or something. But yeah, they're in the forefront these days.
Well, they're America's team. I mean, we're sick of the Dallas Cowboys being crowned the America's team, considering they stink every single year. So yeah, I'll give the Bills that title. The Bills or the Lions. Those are two of America's teams.
Give us a Bills Lions Super Bowl.
And you can't make the Chiefs that title either, because they're the Swiftie team. They have their domination, their world domination.
Yeah, I mean, I'll support our internal Swifties, of course, but I'm just so sick of them. I was indirectly watching that game, and it would be like 3rd and 9, and I would him like throw the ball, but getting tackled at the same time away, and I'd look back and it'd be 1st and 10. I'm like, what is that? Did I just getting flags on every single play? And the answer is yes.
Yeah, Travis Kelsey.
He's done. Dust.
He nuked us a little bit, but that's okay. He was our leverage. He was our leverage spot. Sad.
Yeah.
Sad that we didn't get that. Anyway.
Yeah.
E-mini S&P 500 futures, a little bit of a choppy session here to start the day. We are sitting at 60.10 on the E-minis. We've had about a 70-point intraday range in the overnight session. It looked like we opened 20 to 25 points higher. When I went to bed, we were higher, and then I woke up and we were down like 20, 30 at one point. So kind of the weakness coming in the morning. It's been kind of a slow grind rally since then. Definitely a little bit of a bid on a holiday week. You figure, there's probably some of that baked into it. NASDAQ up 118. It's basically the high of the day, or, 20, 30 points off the highs. The Dow down 157 and the Russell down 10. So the Russell, the weakest of the group, it has been the weakest, given up most of the last, couple months of upside movement we've seen there. Oil 68.78, giving it up a little bit, near the lower end of where it's been trading. Volatility futures 1760. That was a swift vol crush that we saw after last week's little sell-off. Bonds down 15 ticks. Rates continue to go higher. Gold down $13. Silver up 34 cents. So big move in silver relative to gold. And then, as Mikey alluded to, Bitcoin getting smoked today, down to 94,000. It's been weak all over the weekend. I mean, it has been down basically the whole time. If you look at Ethereum as well, Ethereum down $700-800 from the highs. So definitely a little bit of a pullback there.
Yeah. Very interesting to see, but at the same time, this price range is expected. So we always just have to remember that, the weekly expected move for Bitcoin is like a $10,000 range.
Yes.
At a minimum. So yeah, we're seeing some chop, but we will continue to see chop going forward. Yes. That's for sure.
In the market as a whole, there's a couple big movers. So you have a lot of the chip names kind of bouncing back today. You have AVGO, AMD, Intel is above 20, NVIDIA back to around 140. So a big move in some of those stocks. SMH, if you pull that up, it's been a pretty strong couple sessions here in those names. On the downside, and just the big tech stocks as well. Meta having a nice $10 or $15 up move, back to like 600-ish. Tesla was up 12 or 13 at one point today. Apple has been very, very strong. Microsoft as well. They're all, wrapped around that, that higher end of where they've been trading. On the downside, it's pretty much everything else. So most of the upside moves have been in the chip names or the big name stocks. Everything else kind of not participating, it seems.
Yeah. Yeah, I'm pretty much long all those things you've mentioned, but I got in at lower prices. So AMD, I need a lot higher.
You got
NVIDIA,
in at higher prices.
Yeah. Yes. Did I say lower prices?
Yeah, you said lower. I was like, oh, that's good.
Yeah. But yeah, I mean, I've got it the 145, 155 call diagonal spread in NVIDIA. I've got the 520, 540 call diagonal spread in the Qs. In AMD, I actually had a 145, 155 long-term call diagonal spread, and it basically just sold off from there. So
yeah, me too.
I need some help there, but 25 days left on that one, trading for $100. Could certainly add risk. We've talked about that before, but I'm kind of long. I'm long the Qs and long NVIDIA, so I don't feel like I need to triple down in that sense.
Yeah. No, I feel you. I've got a lot of those positions in the chip names. I have AMAT, I have AMD, I have LRCX, I have NVIDIA. So I'm locked and loaded in that upside move. And I think I did an SMH trade for one of the recent 3 trade ideas. which we did. Let's see when I did this. I did this like 2 weeks ago on the 12th. Closed it pretty quickly, so I'm locked and loaded there. And speaking of the 3 trade ideas on Thursday, so just to give everybody a quick PSA, tomorrow for the Tasty Live show is going to be a half show, so ending at 10. The market is going to be open. I believe it's a half day in the market. I think it closes at 12. Am I correct on that?
Yeah.
I believe
Let
so.
Let me
confirm with me while I go through the rest.
So Christmas.
Yeah, go on. You got it? Ooh.
Yeah, Tuesday, December 24th. Each market will close early at 12 p.m. 12:15 p.m. for eligible options. And yes, the NYSE late trading sessions will close at 4 p.m. Central.
Okay. So the futures will trade, but the stocks and options will close at noon. So half day tomorrow for the show itself. It ends after Tom and Tony at 10. Wednesday, of course, we've got that off for the holidays. Hopefully Santa brings everybody some wonderful presents. And then Thursday, we'll get back to our 3 trade ideas. We're going to have Katie on. We're going to do 3 trade ideas, but we're also going to recap our year, give you some stats and kind of figure out best stocks, best performing stocks for us, worst performing, maybe some takeaways, stuff like that. So tune in for that on Thursday.
Mm-hmm.
Yes.
Yep. And then next week, I think a lot of people might think that New Year's Eve is a half day or off. It is not. It's a full market day. So we will be live and in the chairs on Tuesday the 31st. Wednesday, New Year's Day, everything's closed.
Yes. One more quick PSA. SPX, guess the market, tastylive.com/guess. You have until the 3rd to put your guesses in. So it's coming up. Put those guesses in so you can win some cash. $1,000 a quarter with $2,000 going to the 4th quarter winner. Quick little words of wisdom. Game theory, think about it, and go to decimal places. So this is on SPX. Instead of going to 6100, go to 6101.50 or 6101.22, something. Pick something that's off the beaten track so that you're not splitting with anybody. A lot of people will be focused on those round numbers. So that is my quick little word of wisdom. Mikey, do you know where you're going to go? What's your guess?
Yeah, I've already got them all. So I got 63.37 for quarter 1. So that's a nod to, the 1337 lead. Okay. All my gamers out there know what I'm talking about. So that's Q1. And then I've got 6666 for Q2. So that's my satanic shout out, I guess. And then 6900 for Q3. And then we're going to end the year with a bang, 6969.
Oh, of course. Okay. All right. So I haven't done mine yet. I'm going to take a look. I think, the easy way, the other things that you can use at your disposal is using the expected move. So if you go to the quarter, just if you wanted to go to like a high probability guess, or at least one that is projected right now to be a higher probability than most others, you would just go to the quarterly expiration. So March 31st, this is your 98-day expiration. This is the first quarterly expiration. You have a $432 expected move. So the probabilistic person might go to somewhere around, 6,500, or if you are bearish, maybe you go to 6,400, something like that, 500 points in either direction. That's kind of the projection. Of course, you can kind of put your own spin on it, whether it's going to be inside or outside or whatever the case may be. But that's another way to kind of just project what the market expects through the end of the year, and build your assumption off of that. So I think we'll be higher. I think I'll go higher. I haven't figured out, am I going to go first quarter rally, maybe like second quarter, like a little pullback, and then off to the races? Because you got to kind of project into there a little bit of, can't go up every single day forever. So I haven't
Correct.
pulled that out. I'll think about that more. Maybe have something by the end of this week.
Yeah, and that's really another layer of looking at the quarterly expected moves is just thinking, okay, that's the current implied volatility right now.
Yes.
And then you have to decide whether you think it'll be inside that move, outside that move, and to which direction.
Yes.
And to put context around what the market is expecting as of right now. But I did put a link to the quarterly guests in the top of the YouTube chat. So if you want to join us on YouTube,
yeah.
we're streaming live there. So yeah, tastylive.com/guest, or you can just click the link at the top of the YouTube chat. It'll bring you there. And yeah, let's see what you got. Take Tom's money. There's nothing sweeter than taking Tom's Sosnoff bucks.
It's the most valuable dollar you'll ever get.
It really is.
It's very hard.
Really is.
It's very hard to pry from his cold, dead hands.
Yes. But yeah, it is Monday, the day before Christmas Eve. I'm kind of surprised to see the expected move for this week is still 70 points. I was expecting maybe something a little less, but maybe they're accounting for the fact that we have limited days, so maybe people are going to be, keep giving us some high volume days. I don't know. What do you make of it?
I don't read much into it. I mean, volatility is higher now than we've seen. So that's, we got kind of lulled into a 50 point or 60 point SPX move. But yeah, I mean, you've got a couple days off this week. So, or a half day on Tuesday, full day off on Wednesday. So it is a short week. You really only have 3.5 trading sessions. So I would expect it to be kind of inside, but
yeah. What are your thoughts on volatility in the coming year? Implied volatility or realized volatility?
I think if there's any lesson we learned from the first Trump presidency is that for trading specifically, I don't care about the politics side of it. For trading, it is going to be a fun trading environment. And what that means is there's going to be volatility in both directions, not only for price, but also just, I think the environment for volatility relative to what we've been used to in the last year is going to be much more volatile swings in volatility, which will make for a trader's market. I think for the next couple years, it's going to be a good market to trade. I don't know, the political side and ultimately where the market goes, I can't project that, but I think from a trader perspective, it's going to be back to the golden age, which I think 2020 to, or 2019 to 2022 was pretty much as good as it gets from my perspective.
Yeah, I think I agree. I think we'll stick around this 20, the average of a VIX of 20. We'll say,
which is much higher. I mean, we haven't had a VIX of 20 it's been like when we were in this period from August where we had the VIX, the yen carry trade explosion hoopla thing. I mean, that was the only time we had 20 volatility. You have to go all the way back to April-ish. So I would love 20 to be normal. Yes. Beautiful. Hell yeah.
Yeah. So yeah, bring the two-sided action.
Yeah, and 20 represents like roughly a 1% move in either direction every day, which is amazing.
Yeah,
up, down. Some days you'll have sideways, which will be great. That's what I'm hoping for.
I have not done anything today in this portfolio, but I've got my eye on the MU Micron call diagonal spread that I threw on after the big explosion to the downside. I've got the NVIDIA call diagonal spread. I've got the Qs call diagonal spread. Those are the three that I think I'll be paying attention to. And I guess the XLE long call diagonal spread there as well. But those are three that are close to being taken off. So we'll see if we get a little spike today.
I think I'm going to buy back this put.
Yeah.
I'm glad you brought MU up because I think somebody gave me this trade idea in the middle of last week. I just sold the 80 strike put in Micron. I did that at $1.53. I just closed it for 91 cents, so $62 little scoopy in a couple sessions.
There you go.
Freed up some capital too, which is good. So I got more.
And yeah, when we normally prep for a holiday week, and really it's 2 weeks because we have New Year's Eve next week as well. So if you're prepping for an extended time, ultimately what we do is we look at positions that are a scratch, maybe a small loss, small win. We look to close those because we're just really the goal is to desensitize the portfolio to directional moves in the market. So that means closing scratches to just remove monetary risk, taking off winners maybe that are, if we're shooting for 50% and they're at 30%, if we want to take those off, we can do that as well. Or we can move them out in time. So if you have a January position, moving it to February or even March is one way to add more premium to the position and really just remove some sensitivity to near price movement. So yeah, I feel like I'm in a good position in that regard. I've got a bunch of diagonal spreads in this portfolio, and almost all of them are in February or March. I have some near-term stuff in January, but it's mostly like leftover long options from diagonal spreads, or I have a zebra in SLV. I've got a gold call diagonal spread in January, so it's just I'll be sticking with those, but everything else is in February, March. So this portfolio is pretty much where I would want it to be for not paying attention to the markets for a couple days.
Mm-hmm.
All right, hopping over to the YouTube chat now. Again, if you want to join us there, we're streaming live on Tasty Live. Let's see here. Do we think an alien invasion is a bullish signal? Probably not. Probably not. It's just wild. There's a lot more activity in that space, or perceived activity, we'll say, because no one really knows.
Tinfoil hat Mike is coming out. He's ready to rock. This is his moment.
Just tell us what these drones are. We need to know. All right, let's go to Neri here. Got 20 put credit spreads in 15 different underlyings, mostly expiring in January. A third of my short strikes were breached, maybe on the downside move last week, but I'm waiting until 21 days to close or roll. Any advice? My advice would be to kind of temper that 21-day rule, because the 21-day rule or guideline is really more about undefined risk positions. It's more about getting as much as we can out of this short premium in the near-term cycle and then rolling it from 21 days back out to a 45-day cycle, which is typically what happens if you're rolling from month to month, right? You're adding about 30 days, brings you to a 50-day cycle. With credit spreads, first of all, your decay and your implied volatility exposure is going to be significantly dulled, just because your long option that has Greek exposure is now offsetting your short option that has Greek exposure, and they're right next to each other from a strike basis. Mm-hmm. So for put credit spreads or call credit spreads, if you're trying to defend those positions, you have to roll those before they go in the money. Because if you wait till, and really, regardless of days to expiration, if you're at 30 days and it's about to be tested, if you roll it out in time, you can still pick up a small credit. You desensitize that position. You give yourself more time just in case it does go in the money. But if you have fully in the money spreads, regardless of whether you're at 21 days or 30 days or 14 days, you're paying a debit to roll that out in time. And sometimes it's not that big of a debit. Maybe it's like 10 cents, 15 cents, but still you're going to be paying a debit. That's going to reduce your max profit, increase your max loss, and you still need a directional move. So I guess it depends on how far in the money they are. If they're kind of teetering between in the money and fully out of the money, maybe you look to roll. But if they're fully in the money and they're trading near max loss, there's not much you can do about those.
And how wide the spreads are. So if your spreads are, synthetic naked positions, or, if you're in Tesla and you're in an IRA account and instead of selling the 400 strike put, you're doing a 100-point wide put spread. Those positions, I think, I would be more inclined to roll into that down move because you have both the benefit of the move to your strike in terms of the credit that you get from the roll, but you also have the pop and volatility that occurs, which also helps to inflate that premium further out in time. So both those are benefits. If you're talking about $5 or $10 wide spreads, I say, forget about the 21-day mark and make the decision whether you want that short-term directional risk or you want to reduce your directional exposure and give yourself more time and roll out in time. Both those, it's a little bit more of a gray area if you have $5 wide or $10 wide spreads because they probably don't even move all that much into the down move.
Yeah. Justin asking, what's the furthest option you've ever held, both long or short? Long, multi leaps, so similar to Theta Trader, so like 2026 options, long options. Short options, I would say 60 days, something like that. Because you have to think, like, if you're buying an option and you're buying a leap, I'm fine with that because you're well outside of the implied volatility exposure in the near-term cycles. It's a slower decaying option if the market's not moving. It's still a very volatile directional option, but if you're trying to get a slower day-to-day decay, then a leap option will do that. But for short options, we still are sticking with that 30 to 60-day window because we're trying to sell implied volatility. We're trying to sell premium related to the implied volatility of that product, and that's where the implied volatility really is. As you go further on time, you're just selling time value. That option can still move on direction, but if you're trying to sell more exposure to implied volatility, it's got to be in that like 30 to 60-day window or shorter. What about you? Same answer?
I agree. I mean, for short premium, I think 60 days is about as far as you can go. For long premium, you have more flexibility. Like I get, and it depends on what your assumption is and what you're trying to accomplish here. Like if you're trying to use leverage in the sense of like an option has, leverage via its being a lot less or a lot more capital efficient than stock and a lot less costly up front. If you're trying to be long whatever stock for a period of time, you can go as far as you want. I mean, I think past a year is a little bit of aggressive. When you get to 2 years out, the value of the option, a lot of that is baking in big moves in both directions. A year out, which is a typical leap, somewhere between 6 months and a year, those options, you have some unknown baked into it. When you go 2 or 3 years out, that all the unknowns are kind of baked into the value of the option. So I think that's the farthest I would go for a long option.
Yeah.
As we were talking, I was looking at DraftKings because I sold a put in there last week on the 13th, 10 days ago. Closed it out a couple days later, but it's having a nice little sell-off here. I had the 39 puts that I kind of scalped out of after a week. What do you think about just selling a January at the money 38 strike put? Gives you a break even down at like 37, really where the low and this nice gap. Now you're the gap trader here, so maybe we get a gap fill down there.
I do love my gaps. Yeah, I like it. I think it's fine. You're selling into extrinsic value strength with the sell-off today if you're selling a put. Yeah, sure. And you know what else? You know what?
I mean, I sold the one, just to give you an idea, I sold the 39 strike for 164. I did that 10 days ago. So, with this down move, you're getting paid the same credit or around the same.
Yeah.
33 IV rank, not bad. Might be back in play.
Speaking of in play, I am going to enter my year-long trade in IBIT
Ooh.
right now.
Okay. As soon as you said that, I knew it was coming.
Yeah. Because like really, I want to lean bullish slightly through the year. So of course, getting into it now into the sell-off, we're getting a lot more premium here for the 50 strike specifically. So I am going to sell a skewed strangle.
Okay.
And I'll probably have on a skewed strangle the whole year because there's so much upside call skew that you can really sell pretty far out of the money a call option against the stock price and collect a really good amount. So like selling the 50. So I'm going to go to February.
Okay.
Just started off with a nice high premium option here, but I'm going to go to February. 50. Short put at 50, short call at 65.
Oh, you're doing strangle.
Strangle.
Oh,
yeah.
I thought you were going to do the psycho something, whatever it was.
No,
I think
I'm just going to keep it simple.
Yeah.
Yeah, I'm going to keep it simple and start with a strangle. I really like the starting premium of this position, $5.65, starting with a strangle, similar to DraftKings, but I picked up $4 in DraftKings with a straddle. So, and this has, I have plenty of room for this thing to move, and I can manipulate this significantly. So, we're in right now. 565. Instantly filled. Okay. 565. We're in. So this will be the year-long trade. I will manipulate this throughout the year. I will keep short premium on throughout the year. And we'll see what happens.
I like that.
If you missed our DraftKings year-end trades, we did do those a couple of weeks ago.
It's on our YouTube channel too, and we pinned them. We put them both together.
Nice.
So it's in our anatomy of a trade bucket. If you would like to go watch those together, you can see all the adjustments, all the good stuff.
Glorious. And yeah, I'll put the link to our show page from tastylive.com. You can see DraftKings Anatomy of a Trade 2024 and then DraftKings Anatomy of a Trade Part 2. So yeah, I am going to do that through the year.
Beautiful. I like it.
All right, continuing on here. I want to make sure diagonal spreads are calendar spreads. Got some answers in the chat. Yes, they are calendarized spreads still. So a diagonal and calendar are both spreads where you're buying a longer term option, selling a near term option. The difference between a diagonal spread and a calendar is just that a diagonal spread has a vertical spread embedded in there. So you're using different strikes.
Yes.
Yes, it does add a lot of debit risk to the trade, but it adds a lot of max profit to the trade, and it removes risk from one side. So that's the big thing. A calendar spread, you have risk on both sides because it's a pure extrinsic value trade, where a diagonal spread has no risk to one side if you are paying a debit that's less than the width of the spread.
Correct.
So we can show that in whatever example you want us to look at if you have a specific one.
Yeah.
Micron had a 109 call, 109, 113 vertical spread financed by a 95 put before earnings. I rolled the 95 put out and down for a credit. The call spread expired worthless. Why does my order change show a minus 600 P&L?
Oh, we'd have to know the rest of what we're looking at. But if you just have the 90 strike put on, it would depend on how much. I imagine you did this for a debit. I mean, if you take the order chain and you take your average trade price and just measure it relative to whatever the value of the option is, and I don't know if you went to February or if you're in January because you were in the weekly, I don't know, but if you're out $600, that means that your net credit on the position, if you are in this 90 strike in February, your net credit is probably 25 cents or something like that on your position.
Yeah. And I would also just make sure that you don't have other trades being pulled into that total P&L.
Yeah.
Because if you traded other stuff in MU, it's going to show you at the very top all of your trades. So you kind of have to isolate it to the near-term trade. But yeah, if you that trade, if you sold the 95 put and bought 109, 113 call spread, and you did that for a credit, and then you rolled the 95 put out and down for a credit, you're still showing, you can still see a loss, even though you're rolling for a credit. But what it tells you is that if you're collecting, and it just means that if your new option expires worthless, then it will wipe away whatever realized loss you've booked with the transaction of rolling out and down. But if you send us an email with a screenshot of your order chains, we can look at it further. But hopefully that helps. Like rolling for a credit doesn't mean you're not losing right now. Like you're probably losing right now because MU is down 20 points after you put that on.
Yeah.
Is it possible to construct a backtest on a broken wing butterfly or regular butterfly? You should be able to. You should be able to customize it, I believe.
Yeah.
In the backtest feature. Are you planning on defending your NVO short put at 100?
Yeah. Hopefully we get like $5 or $6 up move, and then I can do that. But right now it's basically just a stock position. I didn't want to sell anything into the hole against it. I'm trying to get the back tester up. I thought we were going to go there, but NVO, I have this 100 strike put. I mean, I was looking at selling the 90 strike call against it today, but I was like, you know what? Stocks at lows. You were telling me it had like that was the biggest one-day move it's had in 10 or 20 years, some crazy thing like that. So I just got to sit here. I have my net on this position is 423. So we get up to like 90, 95. That would be ideal for me. I could take that, roll that out in time. That would be a beautiful thing. $3 or $4 up move. And then I could roll this out to February. I buy this back, sell the 100 strike call, and I'd want to do like the 95 and do this, into strength of the move, maybe even the 90, something like that. So for the back tester, so you could do, we can add, so if you wanted to do, so we would buy, sell, buy. I'm just doing calls here. So the past 12 months, we'll do two. We'll do it. What should we do? 30 days out?
Sure.
30. I mean, we could do 45. 30. Let's do limit the number. We'll do this one trade. And we won't have it enter a new trade until those go. So, what did I error out here? Maybe it doesn't like this. Maybe I have to do one I'm doing them all at the 30 delta. Oh my God. Okay. Go on, grab another question while I'm goofing around here. Because I'm like, why isn't this working? Okay, so we'll go to 30 delta, we'll sell at the 16 delta, and we'll buy at the 5 delta. We'll do this twice.
Yeah.
Okay.
Bada bing, bada boom. Yeah, Weiss rolled to Jan. Initial trade was for a 24-cent debit, so negligible. But yeah, you have losses on your short put, and maybe it's taking in your call spread, losing all of its value. But net, really, it's just a matter of your short put, your new short put expiring out of the money. Okay, there you go.
Yeah. still there.
Beautiful.
But yes, you can do broken wing butterflies or butterflies or anything you want.
IBIT shows 14 EM out to February 21st or 39.68. Expected move? Why are you choosing 50.65 for your short strangle? So really, the longer I know I'm going to be in a trade, the less I care about the strikes, because it's really just, it's going to be about rolling for an entire and just seeing where the product's at and how much premium I've collected at the end of the year. So 50.65 is just a round number. Both of those strikes are very liquid. You can see the strikes around them have a lot less open interest. So I usually just go to like the nice round numbers for that reason, because you know that there's always going to be more liquidity there. So I'm not going to have liquidity issues.
And you're not really leaning all that long either, because there's tons of skew to the upside. So it seems like you're leaning very long when you're $3 out of the money versus $12 on the upside.
From a delta perspective.
Yeah, from a delta perspective, that's what I'm saying, is there's so much skew to the upside that, your 50 strike put is a 36 delta. Your 65 strike call, which is 4 times further out of the money, is a 27 delta. Like, you're leaning 10 deltas long here, although your price risk is certainly, you certainly want the stock or the ETF to go up, Bitcoin to go up.
Yeah. But yeah, I think just thinking about this going forward, like if we rip higher to 65, I will buy this back in Feb, roll it to March, manipulate the strikes. I think my goal here this year will probably just to make sure that short call is always out of the money. And I'll use that short put to help finance rolling up and out if it does happen. But if we sell off here and we just stick around here, I'll probably just keep the similar structure. Well, I'll just keep my 50 strike, roll it perpetually, see what premium I can get by keeping that call on. But I'm almost always going to lean with a higher upside bound on my short call here through the year.
70% or mid 60% implied volatility. You can do whatever you want here.
Yeah, it's going to be nice. It's going to be crazy to see how much premium we get at the end of the year.
Yeah.
Wall Street has a MU naked 100 short, or had a 100 short for January 17th. Now it's in the money, so I made it 100 straddle and moved to February. What else could I have done? Yeah, I like that adjustment.
Mm-hmm. Yeah.
So even right now, like,
cut your delta in half. That was perfect.
Yeah. You're picking up premium, you're adding a short call component. Even if you get a rally from 90 to 100, yes, the short call will increase in value, but your short put is worth 5 times the amount as your short call. So it'll still be a good scenario for you to get intrinsic value out of that position. And then, if you wanted to, if we get up to 100, you can buy back Feb, roll to March, and move it to a strangle, something like that. Mm-hmm. But yeah, you've cut your deltas by adding the short call. Even if you didn't add the short call, I think the only thing we would have done is just move the short put from Jan to Feb, like you already did.
Yeah, that's just totally both are relative to whatever directional lean you have here. I selling the 30 delta call there to cut your delta in half. That's perfect.
Mm-hmm. What 0-day SPX strategy is best if we think it will end flat or in a particular 20-point range?
Iron fly?
Yeah. Iron fly or iron condor?
I mean, the projection for tomorrow is a 33-point move. So if you think that we're going to stay within 20 points of 59.50, which I don't think is a bad thought, doing a iron fly is probably your best bet. Especially if it comes in well inside that. If you think 25 is the max, then move it, to the 25 and do it as an out of the money iron condor and go as wide as you are comfortable with. Like, that's totally on the table too.
Yeah. If you're comfortable with the risk of an iron fly, 25 is a good bet. If you're comfortable with the risk of an iron condor, then move it to the 25 and do it as an out of the money iron condor and go as wide as you are comfortable with. Like, that's totally on the table too. Yeah. If you're comfortable with the risk of an iron fly, like a 5950, 6000, 5900, allows you to collect $29, which gives you a plus minus 29 point range in either direction. So that fits your assumption.
Yeah.
But it's a $2,000 max loss for one day. If that's too large, then you got to go with the Iron Condor and then just set your strikes 20, 30 points lower and then define your risk based on your tolerance. But yeah, that's pretty much it. I'm curious how often you guys use charts or patterns to decide if you'll enter a long or short position. I would say we look at charts daily. We don't really like super analyze it, but it's nice to see like if you like AMD. I want to get AMD is near the bottom of the range. Tech product that's very popular. Like we'll use that because at the end of the day, it's really still like managing that position if we're wrong. But I think you have moving averages on your chart, right?
Yeah, for Ryan gave me those. It's the 8, 13, 21 day moving averages. I like how they look on my charts. I do not believe in any sort of chart patterns or anything like that. I think if they work for you personally, go for it. I'm all for it. I don't care, how you build an assumption or what makes you comfortable trading. That's beautiful and amazing, but it's not my cup of tea.
There you go. Yeah, I agree with you. I think it's, building an assumption and finding a chart pattern that fits your assumption is one thing, but you still have to trade in a size where you account for being wrong. Yeah. I think thinking that you're going to be right based on something signaling something is a surefire way to feel some pain at some point, because everything fails at some point, right? Yeah. Jake wants to buy a call diagonal spread in TLT. So I forget who was asking about diagonal spreads.
Okay.
Dave was. But yeah, let's set up a call diagonal spread in TLT. 85.90 with a long 60-day, short the 25-day. I'm getting hung up because IV rank is high, but based off IV, it's a smaller move. Is this a dumb way to look at it? And is this an efficient dollar trade? Yes, this is an efficient dollar trade. So this is a good example of IV rank only accounting for one side of the coin, right? I don't care what TLT's IV rank is because IV is always going to be low in TLT. So we have to look at IV rank and IV at the same time. Like IV rank is a nice thing to bring your attention to a product, but if you're selling premium, you still want to see an IV number to the right of the order chains here of like, I would say 50, 60% at a minimum. That's going to be a good number where you're going to have a high return on capital potential. It's going to be an efficient use of capital for undefined risk positions. With TLT, like I don't think I've sold an option in here by itself in like many years because TLT's IV is just so low that you're not getting a lot of premium to like sell a put in here for an $80 stock. For 60 days, you only collect $1 to sell a put that's 2 points out of the money.
Yeah.
I don't really like that use of capital or risk relative to reward. So I totally agree with you. If we're trading TLT, it's with diagonal spreads or it's with zebras. But yeah, long the 85 Feb, short the Jan 90.
Hey, I don't hate it as like a poor man's cover call. I mean, it's
it's a small way to participate in an upside move here. And it's a 350 debit. If you get a move up to 90, you make $200, I would say. Because you'll have your 350 turn into $5 of intrinsic value, and your short option isn't really going to explode too much because IV is low. So yes, your thought process is definitely on the right track there.
Yeah.
Enough of this trading stuff. I got myself a pre-Christmas gift of Hugo Boss bottled. I assume that's a cologne.
Ooh, there you go. Vinny could tell you all the notes.
There you go. Notes of mahogany.
Yeah, and like vanilla and citrus in the end.
Are there any other binary events you guys tend to keep track of besides earnings or dividends? Yes. I look at this Market Watch calendar here. I'll put it in the YouTube chat. But this is kind of just what I look at to see like when is there a Fed announcement or a CPI report or a PPI report. These are the ones that have been more popular, especially recently with inflation worries being ran. We've seen huge moves from a CPI or PPI report. Any kind of economic data that is potentially meaningful to the broader market can certainly move the market. That's like the calendar I just pull up to see what's going on for the week.
Yeah, I think those are, I mean, earnings events obviously are significant for specific stocks as well as, sectors. We like to do a lot of those sympathy play type trades where instead of playing the binary event of NVIDIA earnings, we trade SMH, and it allows you to not be as, have as much volatility exposure to the binary events. So that's another kind of way that we use earnings. I would definitely say that Mike's, pointing out that market events such as JPOW speaking or employment numbers, CPI, PPI, those have definitely become much more relevant in the last like 3 or 4 years. I think prior to 3 or 4 years ago, I don't think we ever even talked about any of those. They were a non-event because nothing.
Interest rates were zero.
Interest rates were zero. Inflation was zero. Volatility was basically zero. So it didn't matter, what was happening. And now, all those things have kind of exploded in our face.
Yeah. Quick rapid fire here. Is NVIDIA going to break out soon?
I think so.
I would not be surprised to see it rip higher. NVIDIA was one of the only tech stocks that did not participate in that 200-point sell-off after the JPOW announcement. It was only down like 1 point. So based on it ignoring that move and kind of staying steady at 130-ish, 140-ish, I was saying like if the market's going to reverse to the upside, I wouldn't be surprised to see NVIDIA go higher. But I guess the question is, how high do you think it's going to go? That's when we would look at the expected moves for each cycle and just get some context around what implied volatility is telling us.
Yeah.
Why do we like calendars so much? It's an efficient way to sell premium in a near-term cycle while keeping risk defined and inventorying delta in a longer-term cycle. And it's a very high return on capital trade if you are directionally correct. So with these diagonal spreads, if we buy a 10-point wide diagonal spread for $500, if the spread goes in the money, we're going to make $500 or somewhere around there. So it's a high return on capital, defined risk way to take advantage of near-term implied volatility while putting a long option in a further dated cycle that has less implied volatility exposure. Do you draw directional bias from option skew? You certainly can. Option skew tells you where the market perceives a high velocity move of risk to be. So in IBIT, in Bitcoin, in NVIDIA, and Tesla, you're going to see call skew in these products because the market perceives a high velocity quick move to be to the upside if it's going to happen. It can happen the other way too, but based on realized volatility and implied volatility, and really that's a thing, right? If a market has neutral skew and then all of a sudden that market rips up 30% in 2 days, you are absolutely going to see call skew going forward in that product. So realized volatility can influence future skew. But if you think it's going to keep going higher, then taking part in that skew by selling that higher out of the money option and with like a call diagonal spread, going back to the diagonal spread thing, if you're continuously bullish on something like that or bearish, then you're going to be able to set up a nice high return on capital trade if you're selling premium on that skewed side, even if it's of part of like a diagonal spread. I've got shares of TLT. Would a covered call be okay if it's a bag hold? It's just tough because there's not much premium.
Yeah. You have to build an assumption on what you think about rates.
Yeah.
I don't know if you're buying bonds here, you have to think that rates are going to come down at some point. So that's, you're not really playing anything else.
Shares of TLT and a tax deferred IRA. So yeah, I mean, you can still manipulate. So I would look up offensively rolling covered calls. That's something I would consider if you're trying to sell premium, but also have the ability to manipulate where the strike is. But yeah, it's still tough because the premium's not really, even in February. Maybe you wait for and then sell premium, something like that. What is a reasonable return on capital per month and year with active trading? I think if you're active trading, your goal should be to beat the risk-free rate of return, of course, in a multiple of that. And also if you can beat the S&P consistently, then you're doing great. But sometimes the S&P, like today, this year, the S&P is much higher. So if you're bullish on anything, you probably did well. But there's going to be years where the S&P is flat, or it's only up 2%, 3%, 4%.
What are you talking about, Mike? 20% a year, that's the new norm.
I'm just putting out a theoretical, but that's really where options trading, I think, has a big leg up, because if you're put or even strangles and the market's not moving, or if it's down a little bit, that's where you're going to outperform in a much more significant way.
Yeah, and I
or
think
have the ability to.
At a certain point, you have to put into consideration how much capital you're using and trading with, and the amount of flexibility that you have, obviously, with trading to make both short and long-term decisions. There are things that you can do now that will, if markets will, like if you're buying leap options or doing stuff longer duration, that don't necessarily move with the market now, but, with time can be big things. So I think, keep your expectations in check.
Yeah. Couple more here. SPY volume has consistently been decreasing since the bull run. Do you see this as a bearish signal? Not necessarily. I think it's with the holidays, you're going to see less volume for sure. But also, when you see the markets ripping higher, you typically see kind of a less volatile market because more people are complacent. More people are just sitting back, watching their long-term positions. If they're long, gain money, and there's less activity. But then you have a 200-point sell-off, and you see huge volume spikes. So I think it's complacency.
Mm-hmm.
That's it.
Beautiful.
Glorious. Well, thanks for tuning in. If you got any questions, you can find us on Twitter. I'm at Trader Mikey B. Nick is at Trader Nicky Bat. We've got plenty more content coming your way on the YouTube channel, as well as tastylive.com. So stay tuned. Again, we will be off the air tomorrow, but the morning show will still be on from 7 to 10. Wednesday, markets closed, so go watch football on Netflix. Thursday and Friday, we'll be back. So we'll see you on Thursday for 3 trade ideas and a review of the year. Peace.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He
we
was
did-
my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Welcome. This is a special edition of Futures Power Hour, our 2024 year in review, and our look ahead to 2025. This episode was recorded on Monday, December 23rd, 2024, and we hope that it provides a jumping point for trade ideas for the next several weeks and months. We'll be examining some of the top themes that could impact markets in 2025, the risks that they entail, and the opportunities that they might afford. With that said, welcome. From the impact of the U.S. presidential election and its policy shifts to the ongoing challenges of inflation and interest rate hikes, 2024 has been a year of significant volatility and transformation. Which of these themes will continue in 2025? For this discussion, we have Ilya Spivak, our head of global macro. Ilya, welcome to Futures Power Hour. You and I have been doing this together for a very long time, so it's fitting that we wrap up the year together. But let's talk about this 2024 year in review, because it was quite the year where a lot of risks never materialized, a lot of surprises came together, and in the futures market, we had some surprising performances across asset classes. To no one's surprise, Bitcoin comes as your top performer, up by about 120% year to date in the futures space. But cryptocurrency aside, it was a pretty good year for equity markets. The NASDAQ right now is our top performing equity market, up around 27% year to date. There are still several days left to go in the year. So by the time you watch this early in 2025, that information may be out of date. So hopefully it's not too out of date. But Ilya, when you look at some of these performances, natural gas up by 46% or wheat prices down by nearly 5%. On the other end, worst performers, you see that bonds at the long end got hammered down to about a 10, 11% loss or so. What was the biggest surprise in terms of market performance for you in 2024?
I think probably the biggest one was the upswell in natural gas, because when you look at this, what you find is supplies are ample. The geopolitical situation is, if nothing else, unchanged. And so to see this kind of a rebound will be interesting, or has been interesting, and it'll be interesting to see what happens next.
Natural gas prices obviously explode 46% on the other end, heating oil down by nearly 12%. Ilya, in 2024 saw a great deal of resiliency in equity markets. The worst performing U.S. index was still up by nearly 11% or so as of December 23rd. And it wasn't a bad year for crypto. Now, the crypto stats are obviously a little skewed because there are only two futures products in the crypto world. So one will be the winner and one will be the loser guaranteed. But if you were an Ethereum bull, it wasn't that bad of a year either, up 43.94%. It would have outperformed every other product performance except for natural gas in terms of top performers. Crypto obviously is going into 2025 on very, very strong footing. But I don't even think that makes the list of one of our top risks for the market heading into next year. These are listed in no particular order. We have 10 items here. Obviously, some may be higher or lower. This does not reflect any order of importance, just to be clear. The top risk to the market is not central bank policy error per se. But as we think about central bank policy errors, Ilya, we're going into 2025 where central banks around the world are facing a complex landscape of policy risks. One of the primary concerns on my end is the divergence in economic conditions across major economies. For instance, the ECB is grappling with stagnant economic growth and rising disinflationary pressures. This could lead to additional rate cuts in the near term, which may impact the euro, could impact global trade dynamics. On the other end, the Federal Reserve is adopting a more hawkish stance due to persistent or more sticky inflationary pressures. We also see that growth in the United States has been much more resilient than many people expected it to be throughout 2024 and perhaps going into 2025. There's likewise some political uncertainty here regarding the independence of central banks. So what are we thinking about for 2025 and the impact of central banks on markets?
That divergence in growth is staggering because the U.S. economy is obviously powering ahead here, while the other two major engines of global demand, the Eurozone and China, are in dire straits. The Eurozone is shrinking again after an aborted attempt to come out of recession in the first half of the year, and China hasn't found any demand in its economy, and we'll talk about this as we go on. It's now into its almost sixth quarter of economy-wide deflation, which makes the U.S. the only game in town. It makes it very challenging for global central banks to dial in the cost of money. And of course, that is the primary input into every other kind of economic activity. So this is a treacherous road ahead because it's all on the Fed, and they really can't get it wrong.
One of the central banks that brought a good deal of surprise to markets this year was the Bank of Japan. They finally started to move away from their zero interest rate policy. Talks of rate hikes have rattled the markets at that point. We saw one of the largest VIX prints in history in the wake after we see a number of BOJ policy moves in July and August. Should we be focusing on the dollar-yen exchange rate heading into 2025? Is this going to be another intervention point now that Donald Trump is going to be president?
If you want to look at what the dollar and yen exchange rate is doing, it's very easy to look at that and then to look at U.S. 10-year yields because it's basically the same idea. Dollar yen reflects the direction of global interest rates because, of course, in Japan, despite a bit of a turn to a hawkish direction by the BOJ, rates are dramatically lower than any other comparable economy. So when interest rates elsewhere are on the rise, the yen tends to weaken. And vice versa. So this is a very good barometer, the yen, for the direction of global borrowing costs. And of course, it moves around the clock. So if nothing else, it will be a very important indicator.
As we make our way to risk number 2, global trade war is certainly something that we should be thinking about. One of the primary concerns is the renewed focus on tariffs by major economies, in particular the incoming Trump administration. But it's not like the tariff war hasn't been going on for a number of years. Trump obviously kicks this off in his first term, but the Biden administration has continued it. According to the Tax Foundation, about $89.1 billion worth of tariffs were collected under Trump. About 144.3 have been collected under Biden. According to the Tax Foundation equilibrium model, the long-term impact to the economy has been roughly 142,000 jobs lost as a result of the cumulative tariff impact between Trump and Biden so far. How serious are the tariff threats for next year? Is this a literally or, well, not so literal situation when it comes to the tariff man?
This is going to be the major question for markets next year because, of course, even within the incoming Trump administration, there are competing visions of what this means. There is the perspective from people like a Scott Bessent, a Howard Lutnick, that favors tariffs more as a bargaining chip, something that is a threat that is then used to strike deals that doesn't actually levy the full breadth and the full impact of economic weight with their implementation. And then, of course, the time it takes for them to actually bite. As with monetary policy, this can take months and quarters to be fully realized. Then there's, of course, those people that see the trade deficit as a problem unto itself, though that is, of course, a very debatable conclusion economically. And what they then do is want to impose those tariffs to correct those imbalances because they believe that is an instrument that can do that. And so that, of course, raises very important risks as to how serious are these tariffs actually as a lasting policy tool, and also what kind of retaliation they'll bring, because, of course, it's the countervailing response that then leads to escalation, that then leads to global calamity, not unlike what we saw during the Great Depression.
Risk number 3, staying with the political course, is that the labor market in the United States could be destabilized in the next year. One such reason is because the incoming administration has been promising a high degree of deportations almost immediately. There has been a high influx of undocumented immigration into the United States under the Biden administration. The figure here on the left illustrates that. No more words needed. But the impact of deporting some of these people would be profound because we're taking people out of the economy. According to various estimates, one of which I have here on the right, it could result in a cost of about $114 billion to the U.S. economy if the deportations go through. And this comes at a time when the prime age working force in America is really sitting at multi-decade highs. For all intents and purposes, everyone who is able-bodied and wants to work is working right now. So where is the friction here right now? Where is the problem, so to speak, that could emerge in 2025 if mass deportations take place? Is this a growth story? Is this an inflation story? What do you make of this?
Well, it's both of those things. We just said how critical it is that the U.S. economy continue to grow because there is no plan B. Between the Eurozone, China, and the U.S., you have 58% of global GDP, and the remaining 42% are largely vendors to the former three, without which they don't have demand. So in an environment here where the U.S. is the last peg of the global growth stool standing, it would be very disruptive to, first of all, hurt consumption by removing people from the economy who consume any amount of them. And secondly, of course, there's the inflationary impact of disrupting labor markets. We've heard from the Fed repeatedly that one of the reasons why we've been able to have a disinflation that hasn't created mass unemployment is that the labor market has been well stocked thanks to immigration, and that has continued to create a level of economic activity without lifting prices and getting in the way of the disinflationary move. If that were to change and inflation were to spike because the supply of labor were significantly diminished, that would, of course, entice the Fed to keep raising rates at a time when more rate hikes would not be helpful for a U.S. economy that's already dealing with high rates and where that U.S. economy must keep growing to avoid a global recession.
The U.S. economy has seen a really resilient labor market in recent years, and obviously there is a huge increase in undocumented immigration. Whether or not those jobs could be filled by American workers is certainly open to debate, but because of, let's call it, the wage expectations gap, particularly that younger workers have right now, to fill those jobs, we would require higher wages throughout the food chain, essentially. And that would mean higher inflation, stickier inflation moving forward. So that big spike in food prices that we saw over the past 4 years, that would not go away and perhaps could actually get worse. 2025 is not the only year, of course, where that would be an issue. It's something that would continue thereafter. We'll see how that plays out. What about risk number 4? What if inflation is stickier for myriad reasons? What if it's because of the labor market being destabilized? What if it's because the economy is just staying strong? New administration brings in tax cuts, deregulation. The Federal Reserve is actually able to keep cutting rates. And we kind of glide into that, well, super glide scenario, Ilya. It also brings up the question about what would happen if inflation goes up for the wrong reasons. This is a chart that everyone likes passing around from time to time. I happen to pull up the one that Bank of America put together. It's the 1970s inflation analog, which in recent months, we've started to see that headline CPI, core CPI, PCE, core PCE have bounced up a little bit here at the end of the year, which when you look through the data series and the base effects, it's not all that surprising, right? But this is still sitting in the back of people's minds. Should we be taking inflation analogs to the 1970s seriously as we go into 2025?
I think we have to be taking seriously the possibility that inflation is not done rising, even if we don't extrapolate from that it's necessarily going to follow this exact path. So we see here, the analogs are really about the trajectory, not the individual moves. You can't expect things to rhyme perfectly, as the title of the chart here implies. But what you have to absolutely take seriously is that increasing the price on imports, which tariffs are, if you do it in earnest and in a lasting way, is inflationary. Mass deportations that reduce the amount of available labor and thereby increase the cost of that labor and increase the cost of producing anything and doing anything in the economy. That's inflationary. We add on top of this inflationary pressures from abroad, where there is a situation where all this capital starts flooding into the U.S. because of anemic conditions elsewhere, lifting prices for all kinds of other things. And so you have here a situation where things could get unfavorably sticky. The UK right now is a good foreshadowing of how this could look. In the UK, inflation is primarily for discretionary income reasons, one would think, hospitality and recreation. But despite the fact that the economy is vastly slower than it is in the U.S., they're not falling apart because all of those things are labor costs locked into markets that cannot be shaken even with economic malaise. This is a very scary sort of a scenario for the U.S. economy, given how important it is, and certainly a cautionary tale.
Risk number 5, wars and sanctions end. Why would that be a risk? Well, it's a risk for financial markets. Having capital unlocked that's been sitting on the sidelines for a number of years, changing the flow of where commodities move throughout the global economy, not needing to use intermediaries like India, for example, or maybe moving more money into a financial haven like a Qatar or Switzerland, could be very real impacts of the sanctions against Russia ending if that were to transpire in 2025. Ilya, there's also the prospect of sanctions going in place against Europe, as we've recently learned, unless they just buy more gas and oil from the U.S. So what do these sanction risks entail? What does the end of wars in the Middle East or Eastern Europe entail for markets, knowing full well that this could not be a risk per se, but really an opportunity because there's now peace, an opportunity for prosperity, and more importantly, asset dislocation because of this new future that is unfolding?
The first chart that we see here tells us a story of abundant supply. This is U.S. oil production, and in overall petroleum terms, the U.S. is now a larger producer than Russia and Saudi Arabia combined. So we're looking at a world that is awash in supply. The second chart here is showing you that even as OPEC plus production declines, that's the yellow line, the price of crude, that red line, it actually keeps falling. Not only does that tell you that there's abundant supply in the U.S., it tells you that the counter to that, the OPEC cartel and its allies, they cannot manage the price higher even when they reduce their output. In other words, if you were to take geostrategic risk and geopolitical fears out of the equation, if you were to start to wind down some of these wars, the bias for crude oil prices would be probably lower as supply and demand entered the picture. Of course, you'd have to counterbalance that with the economic benefits, as you've just mentioned, but those are much longer to finally arrive and subject to all kinds of other factors. This, of course, factors into the inflation calculus because crude oil is such a huge input into that story. And so this has implications for what the Fed does, for what rates do, for what the U.S. economy does. It could be a tailwind. It could be a headwind, depending on which assets you look at. In any way, though, this is a very important thing to watch.
The branch of the Federal Reserve in Dallas does a survey every few months where they ask producers locally how much it's costing them to take oil out of the ground, the cost of maintaining a well, the cost of putting a new well in. And right now, the break-even rates for much of Texas are in the 50s or low 60s. U.S. productive capacity is near its peak. That said, the definition of productive capacity is how many wells could be turned back on within 30 days. And so we are tapped out to a certain extent from that metric. But there are many more wells that could be turned back on. It would just take more than 30 days. And that potential influx of supply coming into the market is obviously something that's concerning other oil producers because OPEC Plus has announced going into next year that they are not only delaying the resumption of their production, but when they do resume, they're going to be extending the window from 12 to 18 months for that supply to be reintroduced in the market. It's not just that they're worried about demand, they're worried about more U.S. supply coming. This is a significant overhang for energy going into next year. It's one of the reasons, perhaps, that despite all of the headlines we saw in 2024 about Eastern Europe, about what's happening in the Middle East, if it was Israel or Lebanon or Iran, and Iran is having a whole new can of worms going into next year, oil has been mostly range-bound. And it's because there's so much supply keeping things at bay. Ilya, risk number 6, fiscal policy errors and the siren song of populism. I take very specific issue with the promises being bandied around by certain political interlocutors who are suggesting that the U.S. government is going to trim all of its spending, all of its government waste in one fell swoop and unleash an era of productivity for the U.S. economy. I'm taking particular aim at the Doge Commission, which seems like a nice trinket for Elon Musk and Vivek Ramaswamy to play with. But in reality, the way it's been structured and has been established is it's one of those what's known as a blue ribbon committee or a blue ribbon commission. And in the United States, blue ribbon committees or commissions don't have any statutory spending power. They need to produce a consulting report, if you will, like a McKinsey. And they give that to Congress, and Congress then needs to make the decisions on what to actually do. But part of the reason why I'm so down on the idea that we're going to be able to deliver on these promises of getting rid of all this government waste is because, quite frankly, the places that have been identified to get rid of the waste, you really can't get rid of. For example, the chart on the left comes from Elon Musk's At America political PAC, super PAC. It's one of the charts that he's been bandying around in support of Doge. And he points out that there's about $659 billion out of the $900 billion or so every year that are being wasted to pay down interest on government debt. Now, I'm obviously not as smart or as wealthy as Elon Musk, but my basic understanding is that you can't just decide not to pay your interest on your debt. If the United States were to do that, it would put our credit rating at risk. So in reality, looking for $900 billion of spending cuts, unlikely. It's probably closer to 250 billion or so, being generous. And then you have to think about the timeline for all this. And so when I think about fiscal policy error, if the market's expecting any sort of slowdown in government spending coming, I would say it's the exact opposite direction. The spending that we've seen over the past few years, these big government deficits and ballooning debts that have emerged, they're likely to continue. They're not going anywhere. Ilya, there's been fiscal dominance recently, and I think that the error here that people may be assuming is that that error may be over, when in reality it's probably here for a very long time.
Indeed. As you've just pointed out, what the Doge Commission is empowered to do is study the issue and tell Congress what it thinks should get done. And then, of course, the people in Congress, many of whom have tied up interests in the spending that they ostensibly would be cutting, have to come up to a consensus to vote it out. And then there is the time that would be elapsed before any of those things kick in. And then after that would be the time when they actually have an effect that's meaningful on government outlays. So we have a very long, winding road in the best of times if this is going to work, assuming everything goes magically according to plan, which is, needless to say, very unlikely. Meanwhile, passing tax cuts should be quite simple to do, given that you now have a very strong constituency and an executive that is single-mindedly focused on getting that done. In other words, you probably don't have a big reduction in the amount of money going out, but you probably do have a reduction on deck, at the very least in making the first Trump tax cuts a permanent fixture, in money coming in. All of this, of course, actually speaks to fiscal expansionism, not fiscal austerity, which again fuels growth, but also, of course, fuels inflation and empowers the Fed to keep hiking rates. That's the right decision if inflation is sticky for the U.S. It is a scary decision for global economies where the Fed, despite their own central banks, is the pace setter for the cost of credit at a time when those economies need lower rates, not higher ones. So the risk here is very significant and again stokes the possibility that a global recession is somewhere on the horizon.
You know, I'm reminded of what happened in 2017. 2017 was a year of really, really low volatility. And it felt like there was so much uncertainty around Trump and what he would do in his first term. People were kind of waiting for the shoe to drop. And in hindsight, a lot of the actual policy things that were done, not all of them, but a good chunk of them were kind of just standard Republican policy fare, because the first administration was staffed by people who came from the Republican establishment, for lack of a better phrase. So maybe that's what happens here, right? Maybe that's what we're looking at in 2025, where we're waiting for the shoe to drop of this big spending cut initiative. We're waiting for some big debt agreement, and we kind of just kick the can down the road. Nothing's really addressed. And so while we're all waiting and watching and just sitting around, these issues never really come home to roost. That's kind of my disposition here. Fiscal policy is on a preset course right now. It remains expansionary, and that's unlikely to change. The Javier Milei taking a chainsaw to the budget is not as easy to occur here. And then I would actually point to what just happened with the government shutdown in December, Ilya. That almost happened because of the thin majority in the House. And who's to say that a thin majority in the House in the next Congress won't make life difficult for passing significant spending cuts? Ilya, risk number 7, China deflation continues. When we think about the past few years, China's been mired in a bit of a slowdown since COVID. We've seen that the real estate market has been in a constant state of decline. The Chinese government has announced wave after wave after wave of stimulus, some fiscal flavored, not to the degree that we think it's appropriate, more about supply than boosting aggregate demand, but a lot of monetary policy efforts as well. The issue here, however, is that as the Chinese government's been pumping all this money into the market, fiscally, monetarily, traders, investors, mom and pop homeowners, they're not putting it back to work. They're putting it in their pocket. they're putting it in the bank, they're putting it into Chinese government bonds, which are trading at the lowest yields that we've seen since the global financial crisis. Ilya, we think about inflation risks here in the US because our economy is going so strong compared to everyone else. Is there a global deflation risk at foot because China can't get itself out of the slump?
Absolutely. And much of what we have been talking about is China having so much excess capacity and so much excess stuff that it is dumping it on global markets, which is part of the reason why there's been such pushback against China's trade practices, not only by the US, but also by Europe, also by other economies, because that drives deflation and disinflation elsewhere when all of a sudden, let's say, a whole bunch of Chinese steel at rock bottom prices shows up in your markets. The situation in China is indeed dire because they are not creating demand. We're looking at, as we mentioned at the top of the show, 6 consecutive quarters now that real GDP growth is outpacing nominal GDP growth, which tells you that the price coefficient, essentially the implied inflation GDP-wide for the economy, is negative to the tune of almost a full percentage point of GDP of the world's second largest economy. That is a staggering deflationary environment that basically speaks to a total lack of demand, and the authorities in Beijing do not seem all that serious, despite their talking about fiscal stimulus, about countering it by pushing real demand through the system. The implications of this are multifaceted. There's social cohesion risk in a country that got their zero COVID restrictions taken away with protests, which were not crushed, but which were caved in to by Beijing. There is the hoarding of cash and the lack of any kind of confidence domestically in the ability of the government to turn this around. Then there's, of course, as we've been talking about, the lack of a safety net for global growth. If the U.S. stumbles while China continues to take this problem in a non-serious kind of way, we have a very significant one single point of failure situation for the global economy in aggregate. And that, of course, is a very dangerous place to be, generally speaking.
Thinking about the 2024 year in review, the worst performing metal was copper, HG, down nearly 5%. It's an interesting dynamic because when we close out this year, we see an Australian dollar that's falling on its face, Chinese bond yields falling on their face, copper holding near recent swing lows around $4 a pound. The China story, for all intents and purposes, isn't looking all that strong. And, you know, we talk about their potential trade issues. If they get some inflation in the economy in 2025, one reason may be because they have to stop buying oil on the black market. Sanctions end, there's no more workaround for Russian oil. And so they're bringing inflation in because the cost of actually energizing the economy is going up. That's not the right kind of inflation they're looking for. That's not going to boost aggregate demand overall. And it leads to a different kind of issue, not stagflation per se, but still a flavor of something that you don't like. I have a hard time trading FXI, A shares, Baba Baidu around these stimulus announcements, only because it's such a one-way street. Yeah, sure, some of it overdone. We know that, of course. But at any moment in time, overnight, the Chinese government can pull the levers and send asset prices soaring. So as a retail trader, when you approach this in 2025, it's much easier to fade weakness than it is to fade strength, if you know what I'm saying. There's a lot less risk, if you will, trying to stand in front of the PBOC. Maybe that's not the best decision, as some gold bears have learned this year, as China's been buying up all of those assets. Ilya, risk number 8. Is this a risk? The U.S. economy continues to perform like it's the number one economy in the world. It's really difficult to put into terms how strong the U.S. is, so we'll try to do that here. But before we do, Ilya, I want you to walk us through this S&P 500, or rather this S&P Global US PMI chart that you put together for us today. What are we seeing in the economy heading into 2025?
What we're seeing here is a measure of U.S. economic activity and the pace of its growth across manufacturing and the services sectors, and then the composite brings the two together and, of course, scales it by the reality that services is a much larger portion of the economy than manufacturing. Now, global manufacturing has been anemic basically since COVID, and so what you'll find is that it is slow, shrinking, or otherwise idling in almost every single economy, and that's no different for the U.S. The way these indices work is 50 is neutral, neither growth nor contraction. Below 50 is contraction. Above 50 is growth. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So what you see here is U.S. manufacturing is in mild contraction territory, but it isn't deteriorating. It's basically digesting COVID irregularities in goods demand, in supply chains, and this is a global story. But the real runaway success here is the booming U.S. service sector. The issue here, of course, is that most of these service providers are domestic. And so what we have is a U.S. economic boom with surging economic growth here. We can see the trajectory of the composite index is steeply up and to the right. But all of that demand is staying in the U.S. for the most part. It isn't spilling over to other economies for whom both that orange line and the comparable dark gray line are pointed down. In case of Europe, all of this is below 50. In the case of the UK, all of it is idling at around 50. In the case of China, it is nowhere near historical norms and basically at standstill. So we are looking at a situation where the U.S. has completely veered off somewhere to such an extent that even Canada, which exports close to 80% of everything they sell to the U.S., isn't able to find a sympathetic rise because external demand is just not there. This is a precarious situation where the entire global economy is teetering on one leg.
It's a pretty strong leg, though, Ilya.
It is a very strong leg.
Throughout 2020-2024, I was fairly, indignant about the fact that we were going into recession. We did our scorecard updates here on Futures Power Hour, talking about whether or not we were looking at a soft landing or no landing or hard landing. And quite frankly, when the Fed cut rates in September, we were of the mindset that this was a maintenance rate cut. It was not because of a recession or an emergency. It's because the economy was doing well. And that cornerstone of our belief system helped guide us into staying long equities for the end of the year because stocks like it when the Fed cuts rates for maintenance reasons. Ilya, you mentioned the services economy booming. What does that mean for an index like the Russell 2000, which for all intents and purposes was the worst performing U.S. equity index this year? If smaller cap companies with a more domestic focus have this tailwind of strong U.S. consumption and money circulating internally at their backs, maybe the story of 2025 is of a small cap outperformance over those mega cap names. Even if you look to the Trump administration's first term, those mega cap tech names were really the winners 3 of the 4 years in 2017 through 2020. Ilya, risk number 9. Commercial real estate has been a thorn in the market's side. Of course, everyone remembers the 2023 episode when we have Silicon Valley Bank, among others, go down, which amount to some of the biggest bank failures in U.S. history, eclipsing what we saw with Washington Mutual back in the global financial crisis. The Fed didn't really change course. They hiked rates a few weeks later back in 2023, if almost to signal that this was not a systemic risk and it was nothing that the market should be broadly concerned about. But because of that episode, there has been a slowdown in the commercial real estate industry. Maybe that has to do with the pandemic. The shift from working in office to allowing employees to work from home has led to depressed activity in major downtown areas across the United States. Going in a bit of a clockwise fashion here, starting in the top right, we see that commercial real estate prices are down about 8% year over year in the most recent quarterly update. Likewise, we've begun to see that commercial real estate default rates are starting to tick higher. They're not accelerating by any stretch of the imagination, but they're rising to a point where they were back in 2014, 2015. And moreover, when we think about the decline, the recessions that have set in previously, when you have these big pullbacks in commercial real estate prices, it usually means defaults go up in the commercial real estate sector. So this risk, it hasn't been front of center. It has been front of mind. It's been kind of festering and percolating in the background. Ilya, walk me through chart number 3, I suppose, on the far left. Is this the year that we need to be worried about the real estate market, or is it just going to be that thing that kind of stays in the background that we all know about but don't really worry about?
One of the critical things happening here on the residential side of things, as all of the issues in commercial real estate sort of digest over and hopefully work themselves out slowly and not all at the same time, is the difficulty with which the residential market has had in basically clearing markets and turning around. What the Fed's rapid rate hike cycle did was lock in both sellers and buyers. Sellers looked at the market and said, well, the average U.S. outstanding mortgage rate is less than 4%, locked in for 30 years mainly. You then have market rates that got up near 8% through that rate hike cycle. If you're a seller, you're not exactly enthused about selling the home that you have that you've financed at less than 4%, and then going into a home, because you do have to all have to live somewhere, that you have to finance at close to double that rate and with prices higher. So sellers have been discouraged from selling. That, of course, has discouraged prices from falling. That, of course, has discouraged buyers from buying. And so the market has been locked up with very little inventory for a very long time. Now, the mortgage market is, of course, a derivative of credit markets. And when those started to anticipate Fed rate cuts, yields came down, as did mortgage rates. And what we see here is we've seen something of a stabilizing here going into next year, but with a bit of a worry. The traffic from this survey by the National Association of Home Builders and Wells Fargo, the traffic of prospective buyers that the survey shows us has anchored but hasn't gone up. It's stalling at the lows. Meanwhile, the number of prospective sales over the coming 6 months has been rebounding. This, of course, implies that sellers want to be selling, but buyers don't necessarily want to be buying. The difference? You need a downward adjustment in price. As these sellers come in and finally start to sell, the market starts to become unlocked, prices start to clear, inventory starts to change hands, things start to come down in price. And this can be a process that takes a long time in housing. It's not like selling a stock, click and it's done. This can take months per transaction. So we are looking at maybe the start of a protracted adjustment lower in the residential market, even as the commercial one is still very much working out its issues.
With the residential market, it's one of those really interesting facts. One of the reasons why people think that buying a house is such a good investment is if you look at the house price growth in the United States going back to the end of World War II, it's been positive basically every single year, but for 4 or 5, where like 1 year it's flat and you have a few declines of 3 to 5%. Of course, who can forget 2008? And so when you see like a slowdown in the real estate market, a lot of it's regional. In New York, for example, rent prices are still going up in the city. But in Austin, Texas, they're, I think, down 7 or 8% year over year because of all the additional supply that's been introduced to the market over the past 5 or 6 years. And so there is the national home price story. If it slows down, that means house price growth slows to like 2 or 3% as opposed to 5 or 6 or 7. If it goes negative, that's actually a really unique historical situation, and a retrenchment, a pullback on the national level in home prices would likely mean more dire economic outcomes in other segments as well, because it's just such a rare thing that occurs. But then again, if that occurs, you probably get more interest rate volatility and certainly more equity market volatility. Ilya, as we wrap this up, let's talk about another risk here, which this is more of an investor risk. but it's certainly something that traders talk about: valuations and sentiment. As we look ahead at 2025, valuation and sentiment risks are clearly key factors because we're talking about a market going into the next year with stretched levels, for example. This is now the second year in a row where we've had gains of 20% plus in the S&P 500, 3 out of 4 years where we could be looking at a 24% plus gain. And that's led to a run up to valuations to relatively high levels by historical standards. For example, the S&P 500's forward PE ratio is projected to be around 24 by the end of 2025. This effectively means the market's price for perfection. Decomposing what this means, because PE ratios aren't necessarily something that traders care about. It's math. Anyone can do it, as Steve Cohen might say. High PE ratios indicate that investors are willing to pay a premium for future earnings, reflecting optimism about continued economic growth and corporate profitability. However, this optimism can turn to pessimism if there are unexpected shocks. High levels of investor confidence can lead to complacency, making markets more susceptible to downturns. So why do we preface all that with this? Because we go into 2025 where, according to the Conference Board, this chart produced by Axios on the left shows Americans are the most confident ever that stock prices will keep going up over the next 6 months. And I juxtapose that with the chart on the right, which comes from Ed Yardeni. And these are the PE ratios for various segments of the market. The dotted pink line would be those mega cap 8. We think about the mega cap 8, Alphabet, Amazon, Apple, Meta, Microsoft, and Netflix, Nvidia, and Tesla. The S&P 500 large cap is the red line here, sitting up at a PE right around 22. We see that the mid cap and the small caps much lower, near 16. Ilya, long diatribe to get to this point. Are the valuations, is the excessive optimism going into next year enough of a reason that traders should be cautious trying to run up the ball in 2025?
I think you have to take into account that sentiment is most positive just by definition at the top. Now, is this the most positive that it can be? Maybe, maybe not. That's unclear. It can get more positive. This does not mean that just because it's very positive that it's the top. However, historically speaking, we are getting to scary levels. We've had for the past decade plus a very closely watched Bank of America survey of fund managers that asks them how overweight they are equities relative to benchmark. December gave us a record number. It also gave us a record number of money that funds pumped into American share prices. The U.S. share of global market cap is at unheard of levels, records there. We are currently looking at the U.S. stock market being over 70% of developed market equities. So this is a situation that is very close to watch. That same survey from Bank of America, as well as data from JP Morgan, tells us that the allocation to cash is at record lows. So we're looking at a market that is incredibly positive, incredibly optimistic, incredibly imbued with risk appetite. That doesn't mean it's a top. It does mean that if you are worried that the peak in all of these indicators is at the top, you need to be looking at this, because the runway is very clouded now with a lot of these metrics at levels they've never been to before. And you're muted.
Well, there you go. But good ending to this. But, I think about what you mentioned here with these valuations and this potential bubble blowing, and I'm reminded of the reread I just did of The Alchemy of Finance by George Soros, and how Soros would be approaching markets like this where valuations are getting a little out of whack, and you're seeing signs with certain types of financial assets, particularly in the crypto space, that maybe things are getting a little frothy. I think Soros would have emphasized the importance of understanding reflexivity in markets. Reflexivity suggests that markets' biases and actions can influence the market fundamentals, creating a feedback loop. This means that bubbles are driven not just by fundamentals, but by the psychology of the market participants themselves, which, as you mentioned, really, really optimistic right now. I think Soros would advise traders to identify the underlying trend in the short term and the misconception that's fueling the bubble. For example, in a real estate bubble, the trend might be rising home prices due to easy credit, but the misconception would be the belief that prices are going to rise forever. So if you recognize this dynamic, you can see when that relationship pulls apart like it did in 2007, 2008, and try to find a way to capitalize on it. But he would also focus on the importance of timing, because if you're right at the wrong time, you just lose money. Trading bubbles successfully requires entering and exiting positions at the right moment, which is obviously very difficult from a timing perspective. But that really means riding the wave of the bubble. It means trying to profit from the upward momentum and then ruthlessly getting short once the momentum breaks, but not a second sooner. You don't want to be a hero here. You don't want to try to call the top. So investors are looking at asset allocation going into next year and thinking things are really expensive. But as a trader, you have to look to what the market gives you in terms of pricing, volatility, the chart setups, and you have to stay open-minded to change your mind at any point in the future. Ilya, I think that we've done a good job covering 10 risks here for today as we wind down this year in review and our look ahead to 2025. I think that wraps it up, quite frankly. I hope that people listening in, if it's over the break while Ilya and I are taking some time off on the holidays, they find this interesting, engaging. Hopefully it stirs the pot and gets people thinking about certain sectors they should look at, certain products they should look at, how they may want to approach different themes, challenging their own views, reaffirming their views, what have you. But it was a great year on Futures Power Hour, Ilya. You, of course, have been a co-host year long, so I thank you for that. I want to say thank you to everyone who's tuned in over the course of this year. Hopefully 2025 brings more good things to come. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading, and see you in the new year.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. I thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us presents. What is this all about?
This is so nice.
Oh, a little mini fridge. I love it.
Oh,
I love
look
it.
at that. And it's red.
It goes well with my Mr. Coffee here.
She gives you something hot. She gives you something cool.
Tom's is a regift.
What? Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before.
I want the refrigerator.
It's for your pistachios.
It's for your
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
and
use that hole for anything else.
Shells in there. Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you. I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're holding a little
basket. I got a little basket.
Okay, you're at Trader Joe's.
Okay, that's fits me.
Random guy, me.
Yeah.
Standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
you don't
so.
Say anything.
I am not clocking Min's in the line.
I would say,
do that.
Hey, your fly's open.
I would do that.
I would think it's a trap that he would want me to talk with, like, purposefully. So I'm not going to say anything.
What if he says to you, more importantly, what if I'm the dude in front of you?
Yeah, do not engage.
My fly is open, and you say, hey, your fly is open. I go,
thanks.
Do you like that?
I would like.
What do you say next?
Thanks.
I want to go home.
I was a late bloomer.
Were you too busy?
Yeah, I was an athlete. I was.
Oh yeah. You're too busy with Aragon and Argon?
Yeah.
In the shower, what's your go-to for soap?
Like a Dove liquid soap.
Thank you.
Unscented.
Thank you. Liquid soap.
Yeah.
These two guys,
liquid soap.
These two guys use a bar. I'm like,
hate it.
What year were you born that you still use? It's disgusting.
Pretty disgusting.
Huh?
I can't stand liquid soap.
So that when you pick it up, there's hair all over the bar, and you're, oh my God, it's disgusting. Like, actually, I got to remember in your bathroom, do you have a pump with liquid soap, or do you have a bar in your bathroom in the first?
No. Communal bathroom use the liquid soap.
Yeah, right.
This I have to hear. What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with Tony.
They're not cleaning their in my powder room. Okay, that's the logic.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the holiday edition of what it is that we are trying to do. This is the last day of From Theory to Practice before Christmas. So we've got obviously today, and then tomorrow is Christmas Eve, where the network is going to go dark right around the midday part. And so there will be no live afternoon programming, I should say. And so From Theory to Practice will be on vacation. We will be out tomorrow. We'll be out Wednesday. We'll be out Thursday too. We'll be back Friday. And so you guys have me for today, and I have you for today. And then we have each other on Friday too. And so I really, really hope you guys are getting ready for a very, very fun and joyous holiday week. So some housekeeping. So number one, well, I guess like number two, that was already kind of some housekeeping. Number two, I should be all cleaned up on emails now. So obviously, if you wrote me this morning, I may not have gotten back to you this morning. But if you sent me an email from a couple days ago, a couple weeks ago, like 2018, I should have cleaned that guy up over the weekend. Like I went back and I think I got everything that was outstanding. If for some reason you sent me one and it slipped through the cracks, which does happen from time to time, send it again. Send it again now, and I should be able to get back to you really, really quickly. So I appreciate your patience very much as I was kind of trying to get my head above water. But if you are watching on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation, you can join the discussion, and you can communicate with our brethren that are also watching the show. You can celebrate if you're a bull, I guess, today. Maybe commiserate if you're a bear. I really lost track, but it looks like the Santa rally is indeed going to come this year. So let's pop in. Josh, go ahead and bring us into the portfolio here. Yeah, let's have a look, man. You got EME S&Ps. Man, EME S&Ps up 26 on the day. Got the NASDAQ risk-free instrument, also known as the tech-heavy, extremely high-risk product. NASDAQ futures up 185. Got the boomers down 70. Then you've got the Russell 2000 Futures Index down 12. And, got some red on the screen, got some green on the screen. It's very festive, you know? It's very holiday-esque. I mean, you can't go holiday and go all green. Like, you can't go holiday and go all red. It's got to be a mixture. It's got to be a gimme gotcha type of thing. And so that's what we have here. That's what we have here on the screen with at least the market indexes. So the bonds, that's like saying the Facebook bonds down 23. You got notes down 13. You know, gold kind of getting hit down 17. I think silver, isn't silver up today? I think silver's up today, which is weird. And so hold on a second. Let's take a look at that. Silver, for my silver bros. Yeah, look at silver. Man, silver's not only up today, silver's crushing it today. And so, wow, silver up, gold down, Bitcoin down. So what trade is that? Is that the Trump conquers Mexico trade? Is that what that one is? Because if it is, that's some good stuff, man. That's some real good stuff. And so if you look at silver up, gold down, what, we're playing a real life risk now? Like, my man's playing a real life risk game. Like, I'm like, man, I've been waiting to do this my whole life. As every, young man around my age, or even old man around my age, has been waiting to do. It's like, man, I got this blockade in Australia, and we're branching out. Like, I'm collecting my 2-3 armies each turn, and we are branching out. Trump's doing it for real, man. My man is just rolling the dice. And so, yeah, so silver up 26 cents. Got gold down 17. Got Bitcoin down a little bit. Bitcoin bros, yeah, I don't know. They're struggling a little bit. Down to 93,000. That's kind of a crash. I mean, the Bitcoin bros, the internet assured me that we would not see below 100,000 once we eclipse 100,000. We are now comfortably below 100,000. So, all right. So, also some more housekeeping. This is like item number 4 now at this point. So I am going to be back in Chicago. This is like, I don't think we have art cards because I think this is all just it's like just happened just recently. I'm going to be back in Chicago on February 4th to record another digital collectible, another live bash thing, which is going to be amazing. But the night before, so on February 3rd, apparently there's a pop-up event that's going to be for my deal, for my show the following day that I'm going to record to no audience. But if you want to come and see me like do a dry run and like, practice my, B- jokes and do all those kinds of things in front of a live audience, like, I don't know how Tom is doing. I don't know if it's invitation only, if it's just walk-ins. I'm not sure. But, everything is transparent here on the show. So I'm going to let you guys know. It's February 3rd in the evening, maybe 5, 6, 7 o'clock, something like that. And it's going to be at Bad Coffee. And so if that's something that you want to be a part of, then I would email Tom. I don't know if you have to sign up. I don't know if it's walk-ins. I have no idea. But let Tom know you want to be a part of that if you're in the Chicago area. And we can hang out. We can hang out. We can, we can do some deficit push-ups to get a nice little pump before we do our event. And then, yeah, man, that's going to be that. So, all right, let's go ahead and, there is an art card. Thank you, Josh. Wow, that thing looks great. Look at that thing. That looks amazing. Wow, look at that. The team really, they really did something with that. Look at that. That's so cool. So they've got, let's see here. They've got the, they don't have the pop-up event. So that's going to be, it's going to be live on February 22nd. Man, they are turning that thing around fast. Wow. So I'm recording. I know Ryan records before me, the crypto section. Then I record. Then I think Mike is after me. And so they're gonna turn this thing around by February 22nd? That's crazy. Wow, anyway. Yeah, it's gonna be super fun. Beginner trader from start to finish. That's what we're doing. And now I see Mike on the screen. And so my objective with this digital collectible, it's going to be kind of similar to a crash course, but not exactly. There's obviously going to be a lot of overlap. And so wait a second. So Mike's comes out on March 29th. Okay. And so, all right, good stuff. So they're all going to be kind of released at different points in time. That's cool. And so I guess mine is going to be February 22nd. Oh, there's the whole schedule. Josh is on it, man. My man's recovering from surgery. My man's operating at like 60%, which, I mean, his max is only 70%. So he's pretty close to, full health. But still, I mean, look at that. That's pretty good. That's some really, really good stuff. And so, all right. So, yeah, you can come hang out with me February 3rd. We can all drink coffee on Tom's tab, and it's gonna be some good stuff. So, all right, let's get in here though. Let's take a look at. All right, let's clean things up going into the holiday week. So I don't have too many positions on. I think some things expired last week, and we took some things off, so that's good. So going into Wednesday, we're gonna be out Thursday. You've got the holiday week. Things getting kind of slow. Obviously, Santa is back in town. I want to take a look at everything that's going on and make sure that nothing needs our attention, and then I'm going to get to you guys, man. I was so off my game today. I didn't even pop a comment in the stream. So I don't even know where previous shows ended and my show begins, but I see Sam L's in the house. Man, I see Finwest, Anka's in the house, Theta Trader's in the house. Man, I see Robert's in the house. David Galmore's in the house. Weiss in the house. Man, Dave S. Emmett, look at you guys, man. Look at you guys. All right, so where are we at? So let's start with our futures options. So, man, this is going to be a pretty quick, painless discussion, I think, because you've got the market up big. So that's going to be great for our put ratio spread in MES. You can see that right here. We've picked up almost 40 points on the spread so far, and every point in the MES pits is worth $5. And so we're up almost $200, $180 on the trade. And so that's really, really good. If you look at MNQ, this was just a standalone short put that we sold as, the sky was falling, the apocalypse had arrived, and blood was in the streets. It was like, well, this is the time to sell a put. And so we did that, and it is now working out quite well. And so you've got NASDAQ now back to 21,750. Man, what's the high in there? It's like 20. Is it 22.3? I want to say it's like 22.3 is going to be your high. Oh, no, it's actually more than that. It's 22,425. So the high for NASDAQ, which was obviously hit a few days ago, is 22,425. So we are only, man, isn't that crazy? So we are only 700 points away from the high. We're 3.5% off the highs. And man, after Wednesday, it felt like we had, entered another Great Depression. Like when you start talking to people, you start reading comments, you're in subreddit threads, which is a nasty, nasty world to live in for any more than 2 to 4 seconds. But you start talking to these individuals like, man, the depression is here. Like Uncle Jay, the purple tie couldn't even save us. Uncle Jay couldn't even save us. But yet we're only 3.5% off of all-time highs. And so, man, the NASDAQ is just incredibly, incredibly strong. So if we go back to the short put, though, man, we're in a really, really good spot. We've already picked up about 160 points on the trade, which is about $300 in terms of P&L. There's no reason to close this right now. I'm just going to let these guys cook. There's still plenty of time. I've got 39 days to go. I prefer to stick to my profit targets, especially with MNQ, where it has a more clearly defined profit target of about 50% of max profit, which is what I go for. With the ratio spread in MES, it's a little bit different because there's a lot more flexibility. There's a lot more customization. And so a lot of times with that flexibility and customization comes the gotcha of not necessarily having clearly defined, end objectives. And so we're going to sit tight on both of these. We'll revisit these guys when we come back on Friday. And so that's MES and that's MNQ. It's pretty quick and relatively painless. Then if you go to Apple, AAPL, Apple's actually down today. What's going on with that? You got the NASDAQ up 190 now. Apple is negative. Let me just take a quick scan at the Mag 7, maybe the Mag 8. Apple down 40 cents. Amazon is up. I know those two are in the Mags. So that makes sense. And then if we keep going down the list, we've got some other Mag favorites. You've obviously got Google up 272. Makes sense. Meta up 1460. Makes sense. Microsoft down 78 cents. That's basically just similar to Apple. It's a little bit unusual. Netflix, I don't know if Netflix is in the Mag 7 or not. I might be playing a little fast and loose with the truth here. But Netflix up 475. And then, of course, you have Tesla, which is everybody's darling, up $11. And so, yeah, the individual names, I mean, they're all pretty much holding serve. You've got Apple, a little bit of weakness, but nothing super crazy. So we have a short call spread in Apple, though, and so the weakness is actually helping us a little bit. All right, so App Lovin', this was an Anka special that surprisingly has not cost us any money yet, but the night is young, as they say. And so you've got Apple, which I know Anka's watching today. So thank you, Anka, for bringing me this trade. I really hope it works out for both of us. And so we've got 25 days to go in the Apple Lovin' trade. I'm going to sit tight and wait. We're basically right around unchanged. There's no reason to take it off yet. We've actually got a little bit of room now between where the stock is and the short put strike. So let's use that. Let's use that to our advantage and kind of see where the wind blows us over the course of the next couple of minutes. And so 230, 220. And that's going to be that. And then Bank of America, of course, this is our lone stock position. This is it. We are hinging our financial future. We are hitching our wagon to 100 long shares in Bank of America. And we are actively choosing not to do anything with these shares. This is what people who buy stock do. They buy the stock, they stuff it in their sock drawer, and they forget about it for a while. Like sometimes decades, centuries, right? So we're going to do the same thing. Right, maybe we can last a couple of weeks. I'm not sure. It's been maybe 2 weeks so far. Maybe we got another week or two before we finally start getting the itch to sell some premium against this position. But again, we're going to start weaving in some more stock positions because I know that there are so many of you out there. You have stock in your portfolio. You have individual names. You have mutual funds. You have index funds, whatever. And you're not quite sure either A, what to do with them, or B, kind of how to start to transition into taking a more active role. And so that's part of the reason, maybe the biggest reason, why we're including some stock in the portfolio. Is it a strategically superior choice to options? Of course not. We know that, right? But again, on Fridays, we have to kind of sneakily weave ourselves into these discussions. We have to kind of, we're at a cocktail party with a bunch of long-term stock investors, and we're the only active options trader. You can't just start hitting them over the head with short premium. You can't just start slamming them over the forehead with high IVR. You got to be sneaky about it. So that's exactly what we're doing with this Bank of America position. So that is Bank of America, obviously getting hammered today because, again, it's Bank of America. But GLD, so GLD, we have an iron condor on in GLD. 25 days to go. We're actually up we're up about $1.70 on this trade. This one is a little bit more interesting because it's a very wide iron condor. You can see we're $15 on both sides. 25 days to go. We're very close to our short put strike. I actually think we are going to take this trade off right now. And the reason why is quite simple. Number one, it's an iron condor, so we don't have the luxury of undefined risk where, things can, at least the theta can bleed off the position very, very quickly. Now, we do have a decent amount of theta in this position, over $7, almost $8. But just compare that to like an MNQ short put, it's nearly double. A UAL short strangle, it's more than double. Right, so there's a good compare and contrast between undefined risk and defined risk. Well, because we don't have that clean theta coming off of this position, it's not as attractive to hold to me. But also, number two, we're riding the line on that short put strike. It's very possible that, because again, if I wasn't going to be out tomorrow, I would not take this trade off. But we're out tomorrow. Markets are closed on Wednesday, but then we're out on Thursday when the markets are open. We could come back on Friday with gold at 235, gold at 234. And that's going to really be a stick in the eye because it's like, man, we had a chance to take this off for a nice economically significant profit of almost $2. Yes, it's not 50% of max profit. Yes, it's not the original target, but you do have to be flexible. You have to be willing to come up to the line of scrimmage and call an audible. Like sometimes you have to be willing to fake a fumble, pick it up and throw a touchdown pass, right? Just hypothetically speaking, right? So sometimes that's just going to happen, and you've just got to be willing to adapt. So let's go ahead and let's close this guy down. And that'll be that for GLD. Let's see here. Let me move. All right, so we push that guy over. Man, the GLD, the big boy Scotty S. Iron Condor wins again. Man, those $15 guys, that was nice, man. Normally with an iron condor that's $10 or less in terms of its width, you hit the short strike on either side, you're not profitable on that trade, especially not this early. Like we've only held this trade for what, maybe a week, maybe 2 weeks at the most. We'll check the chains here in just a second, but I don't think we've held this trade for that long. And so let me go ahead and let's try like 356, see if we get filled. No takers at 356. All right. Let's go ahead and try 359. They're just eating away our profits. Just eating away our profits. All right, so 357. So all right, so we got Phil. So yeah, how long did we hold that trade for? I don't think it was it was so 2.5 weeks. Yeah, because we got in on 12.5, and then we just got out right now on 12.23. So 2.5 weeks. That's pretty nice, man. 2.5 weeks for $1.70 on the trade, getting even close to 50% of max profit. That doesn't usually happen with iron condors, and so I really, at least the tighter iron condors. This is, when I put the trade on, you can go back and watch the show on 12.5, and you can see me work through the analysis. You can see me work through kind of what I was looking for and kind of why I was choosing, to widen the strikes the way that I did. And one of the things I know I said, I remember saying, because my blueberry game has been very, very consistent as of late, by widening the strikes so much so, we are able to tap into more of an undefined risk field to the strategy, which is really, really nice when it comes to, having more exposure to theta, having more exposure to even, vega with volatility contraction and things of the sort. So that's really, really good. So we got out of GLD. All right, so now let's take a look at IWM. This is just a strangle that we put on just recently to take advantage of the volatility spike, and you can see that it is, the stock has rallied significantly. Well, actually, wait a minute. Let's check our market state snapshots. I go to the chains and I right click. I go market state snapshots. Where was IWM? Okay, so basically the exact same price. In fact, almost an identical price. So 221. So 221 on entry and 221 today. So you can see that the stock hasn't moved really at all. But man, we have gotten paid nicely on this trade. So, I mean, we're already up $1.60 on the trade. That's not all from theta. The theta in here is good, but it's not that good. The theta in here is strong, but it's not that strong. So we're getting paid from the volatility contraction. So you can see the IV rank right now is 31.8. Let's go back to the market state snapshots again. I think IVR is one of the ones you can choose, right? Yes, IV rank. So there you go. You've got the IV rank when we put it on was 53.8. Now it's 31.6. So that's a huge collapse. You can even go to IV index. This is pretty snazzy. The IV index, which is kind of like the IV of IWM. The reason why it's called an index is, I don't know why they call it an index. I don't know what is in the mind of the Sosnoffs and the Batistas. I'd rather not know. But an index makes sense because with any given stock, across an option chain, across expirations, none of them have one implied volatility. Every strike, every expiration has its own implied volatility. So you have to come up with some type of averaging, some type of indexing value. And so that's what the IV index is, intended to represent here. And so you can see that the IV index entry was 30.5. So where is it now? So if I go, actually, let me bring that back up. If I go to the overview, you can see, look at the IV index, 25.5. So we've taken 5 volatility points out of IWM. Stock hasn't moved, and of course some time has gone by since we put the trade on. But man, we've been paid so nicely on this trade. That's why the P&L has reacted so favorably in our favor, just simply because of the volatility crush that has occurred in there. So IWM looking good. All right, and then we've got Nvidia. Nvidia's good. Right, I mean, up another, $4.70 today. We've got 25 days to go. Short put spread, hold over from earnings. We sit tight, we do nothing. Tesla, obviously, short call spread. We're getting hammered, and so we're going to sit tight and just continue to get hammered as Tesla goes up to maybe 500, maybe 550, or by middle of January, MLK Day at the latest. And then UAL. Short strangle, we sit tight, we're not at 50%. And then Uber, I'm going through this very quickly because there's nothing to do, and I want to get to you guys. I see you guys are all over my chat, man. All over my chat. And so I want to be there for you guys. Uber. We have a long 67.5 call. We've got a nice little uptick in Uber today, which is good. But this was a holdover from a diagonal spread that we put on with Uber, and I'm going to wait for more of an uptick before I look to sell premium against that guy again. But all right, where are you guys at? Man, look at you guys. I see Pavel on fire. I see Wallbib. Man, look at you guys. Theta Traders back in the house at the bottom of the chat and the top of the chat. Man, he's everywhere. And so that's some really, really good stuff. So let's see. Where was I at? I like putting my comment in because it allows me to – excuse me. I ran out of my Allegra today. And so that's brutal, man. But I got some more, so we'll have to take our Allegra today. Allegra, by the way, is by far and away the best allergy medicine. I don't want to hear anything from my Zyrtec guys out there. I don't want to hear anything. Is there even a third option? Claritin, I guess. Claritin is some straight garbage, right? So Claritin is like, I mean, that's like, I don't know. That's the off-brand version. Even the name brand of Claritin is off-brand. And so then you've got Zyrtec, which is okay, it's decent, but Allegra is like, wow, I feel unbelievable. But I ran out, so my apologies for the nose blowings. That will continue for the next couple of minutes. But let's see, where are we at here? Finwest, I think, was the first comment, maybe. Good morning, Dr. Jim. Happy Monday and Merry Christmas to you and yours. Yes, you too there, Finwest. I know I got back to your email. And so I appreciate you, my friend, so much for being patient with me. NASDAQ up 200 now. And yes, thank you for being a part of the show. Thank you for all the support. Man, Merry Christmas to you and yours. I really hope you have an amazing week and just a really, really joyous holiday that is coming up. Anka says Merry Christmas. Merry Christmas, Anka. Merry Christmas to you too. A great gift, a great present if you were thinking about getting something for me. You could get me maybe 15 to 20 points to the upside in app loving. Like, that would be amazing. Obviously, you have some kind of inside connection with this company, like whether it be with the higher ups or even the lower ups. Like, I'll take whoever you can give me, right? Give me 15, 20 points to the upside in app loving, and that would be an amazing gift. But thank you so much. Don721's in the house. I know I got Don721 email back too. It says, Merry Christmas, Dr. J. What's going on there, Don? I appreciate you so much for being here and just being a part of what it is that we do. So thank you so much. And yeah, you guys are just, it's because of you guys that we can do what we do, man. So thank you guys. I really can't thank you enough. It's just, you give I feel such an amazing sense of purpose in what I do. And I really, I hope and pray and wish that everybody in whatever career they choose can feel the sense of purpose that I feel in what I do every single day. And it's because of you guys that I feel that way. And so, I mean, the relationship that we've, developed over the years, and I've gotten to know some of you really, really well, and some of you maybe not so well, but hopefully that'll change, as the weeks and the months and the quarters roll on. But I feel a tremendous amount of purpose and responsibility in what I do. And it's only because of you all that any of that can even get started. So thank you guys so much. And especially those of you that watch on a regular basis. I just appreciate you. Robert says, the same hat. Of course, I only have 3 hats, and 2 of them are black. Like, this is the new black hat. I've got the old black hat, which is right back there, kind of hanging in the stable there. And then I've got my blue Red Sox hat. I told Autumn, she asked me what I wanted for Christmas. And so I gave her my list, of course. Protein bars, protein shakes, stuff like that. Fat grips, Versa grips, like all that kind of stuff. But then I said, hey, I would also like a white Red Sox hat. A white Red Sox hat, because I oftentimes will wear, a white ensemble, and I don't have the right hat. I'm like, I got to get the right lid for, the white giddy up. And so hopefully she comes through. I'll let you guys know on Friday. But I appreciate you there, Robert. Sergio's in the house. Jim's in the house. YouTube Jim's in the house. What's going on there, YouTube Jim? Says, greetings, Dr. Jim. Man, thank you, my friend. Thank you so much. Glad I could be here. I always learn something. Thank you, and happy holidays. Man, happy holidays to you too, my friend. And it really means so much to me that you take some value away from my show and just all the shows that we have on the network. That's really, really cool, man. And again, I mean, that really stokes the flame. That really feeds the fire. And so I really appreciate you very much there, Jim. And of course, I'm always here. If there's anything I can do to help, please let me know. So Junior Max in the house says, good morning from Australia. Isn't today Christmas for you guys? Or Boxing Day or whatever? Is that tomorrow? I think maybe that's tomorrow. And I'm not sure that's an Australian thing. I think that's a UK thing. I think it's also an Australian thing, though. But I'm like only 60 delta on that. Maybe 40 delta, actually. And so, yeah, but I appreciate you, Junior Mac. Have a great Christmas. Blessings to you. Great work this year, man. Thank you. And be sure that you email Tom and say that same thing. In regards to my work, because I'm not sure that he feels the same way. Like, if you saw the show this morning with Tom and Tony, scanning options, abstracting applications, we talked about strategically diversifying in 2025. Solid piece. We didn't reinvent the wheel. Like, I wasn't out there like splitting nuclear atoms, right? But we did a little something that might help you guys out. They're actually out there trading, trying to make some money, not just trying to, bloviate about duck home fee and all this other rigmarole. Like, we're trying to make some money, right? And so I thought, this might help. Tom, on the other hand, he's like, I don't know. He's like, it's not that great. And so you should send that email to Tom there, Junior Mac. I would really appreciate that. And so Robert, in fact, you guys want to get me a Christmas gift? Here's the Christmas gift. You all should email Tom at tastylive.com. You also email Tom. If you enjoy my show and you get a lot of value from my show, email Tom and tell him that. If you don't, then don't, obviously. If you don't email him and tell him that you don't. Just don't do anything. Just go status quo, default setting, like you never heard this. But if you do, shoot him an email, right? Because that would not necessarily hurt your boy. And so, man, I appreciate you guys. And so Sam L says, Dr. Jim in the house. Sam L's in the house. What's going on there, Sam L? Sam L and I have the Mike. We have the Mike Israel bridge connection, right? We have the Mike Israel bridge connection, which again, he's really, really good. He's too much for me a lot of the time, and I could do without a lot of the language. But the comedic timing is phenomenal, absolutely phenomenal. And so David Gallimore, Dr. Jim, let's see, on then crazy high risk short butterflies, on them, got it. I am up $28,000 over 49 closed trades without any trade being a loss. Average $570 per trade, per closed trade. I could not have done it without you. Wow, that's amazing. So I would like to revise what you guys can give me for Christmas now. And this only applies and pertains to David Gallimore, right? You can send Tom that email, but I could also use just a little cash, just a little something off the top. I mean, 28 grand is 28 grand. I mean, 20% is not that crazy. Like, I think that's very reasonable. Do you think that's reasonable? I mean, I think that's pretty fair, right? 20%, maybe 30%, right? It's kind of like when you go buy, like, you know, like my new chicken guy. Got a new chicken guy now. This guy's amazing. But the only thing I don't love is my man, you know, gives me his chicken, which is some amazing chicken. I mean, he hands me the bag. It's still warm, right? When I go to pay, though, and I scan my card, like the option to tip the butcher is there. I'm like, all right, this is when it's gone too far, right? Now, obviously, tipping your favorite YouTuber for short butterflies, that's definitely a fair game. But tipping the butcher for his chicken? Man, I don't know, guys. Like, tell me, is this over the line? I think this is over the line, right? This is just my thoughts. Maybe I'm way out of place here, but I mean, come on, man. Like, I mean, are we gonna start? Am I gonna be tipping my urologist now? Like, what's next? Like, we probably already can do that. It's crazy. So Weiss says, but that's awesome, David. All kidding aside, that's so amazing. It's so amazing. And the greatest thing about what David Gallimore is doing, and he didn't even really, I mean, he talked about short butterflies, whatever. But here's the greatest thing, and David, I'm sure you wouldn't mind if I share a little bit of our exchanges with everybody. David and I have been emailing back and forth for a while now. But when he started talking about this strategy, I never actually suggested that strategy on air. So let me give David full kudos, David full credit. In fact, David, you don't even owe me 20%, man. We'll just kick it down to 5%, just a little finder's fee, and we just call it a day. But this is David's strategy. It's not my strategy. But I used to say on the show that these junky butterflies just don't really make a lot of sense to buy them because it's so hard to make money. So what David did, and he emailed me about it, he's like, hey, I caught what you said, and I flipped it around. He's like, wait a minute. If these aren't good to buy because they're hard to make money, then why don't I sell these? Why don't I take the other side of that? And so that's what he's been doing. It's been incredibly successful. And so that's amazing. It's amazing to me not only because of the results, but what's the most amazing about that is the critical thinking, right? The innovation, the creativity that David applied to something that I didn't even explicitly say on the show. But something I did say got the wheels turning, you know, the open discussions, the back and forth. And it's like, that's amazing, man. That's what we're trying to do. That's what I'm trying to do. I don't want you guys to just rotely follow me through the forest. Like, you're going to get hurt. You're going to get hurt badly. Don't do that, right? But hopefully you take some things that we learn along the way together, and you're able to build up a strategy that makes sense for you based on, you know, your skill level, your risk tolerance, your availability, your schedule, account size, all the things we talk about all the time. But that's so good, man. That's so amazing there, David Gallimore. So Weiss says, Dr. Jim, hello. Good to see you. Man, Weiss, it's good to see you too. I like your segment this morning. Can you repeat the appropriate delta range for a $25,000 to $50,000 account? Yes. So thank you so much for watching this morning, Weiss. So it really all depends on how much leverage you want to carry. So I'll actually use a $60,000 account because that will be the easiest one. So actually, before I get into this, because we've done this a couple times on the show, but before I forget, if you go to the YouTube channel and you click on one of the crash courses, I don't know, because Ryan's always changing the names and thumbnails and stuff to try to get more traffic, which is amazing. Like, that's terrific. But I know it has 4 episodes, and it's about portfolio management. So Weiss, if you go in there and you watch, it's in the first episode. The first episode, I actually walk through, like, so you can pause and rewind and like write things down and take notes. I walk through exactly how to determine how much delta you should carry based on your account size and how much leverage you want. Right. And so I'll give you some examples on the show. So that might be more beneficial and more helpful than what I'm going to do now, because we're just going to kind of do this kind of verbally. Right. But if you've got, let's use 60,000. If I've got $60,000 account with the SPY at 600, 100 shares of SPY is also worth 60,000. So if you have a $60,000 account and you have SPY at 60,000, then 100 beta weighted delta is the same as 100 shares of SPY. Well, your account value is the same as the notional value of 100 shares of SPY. So in that scenario, you have a $60,000 account with 100 beta weighted deltas. You have 1-to-1 leverage with the overall market because you're carrying the same exposure as 100 shares of SPY. Okay, what if you only had 30,000? Right, so I'm using numbers slightly different from yours, but they fit a bit more easily into kind of SPY at 600. If you only had 30,000, now you only have half the notional value of 100 shares of SPY. So for you, if you carried 50 beta weighted deltas, that would be 1-for-1 leverage with the overall market because your account value is only worth 50 shares of SPY. Now, if you still carried 100 beta weighted deltas in your $30,000 account, then you would have 2-to-1 leverage to the overall market because your account size at 30,000 is only worth, 50 shares of SPY, and you're holding beta weighted deltas that are actually worth 100 shares of SPY. So you have 2-to-1 leverage. And then from there, from those two examples and the crash course resource that I pointed you towards, hopefully you can kind of figure out if you want 2x leverage, 4x leverage, different account sizes, kind of things like that. So hopefully that helps you a little bit there, Weiss. And so Harsha says, Dr. Jim, if you had $1 million account, which who says I doesn't? Who says I don't? Who says I doesn't? I do have a 5-year-old daughter, almost 5 years old. She says I doesn't all the time. And so, Dr. Jim, if you had $1 million account, so hypothetically speaking, what would you sell to generate $10 premium per month? I believe the word you're looking for there is income. What would I sell to generate $10,000 in income per month? Well, I would sell options, of course. I would just sell puts, of course. I mean, that's what I would do. And by the way, if you're brand new to the show, let me be very clear. That is sarcasm. That is internet sarcasm. Because if you are brand new to the show, I get very fired up at this whole notion of selling options for income. It is so misleading. And it is so dangerous because it just doesn't work that way. And I'm not going to go down that rabbit hole, or maybe I will if you guys continue to push me. But yes, sell options. It's an amazing strategy. It should be the cornerstone of your portfolio, but it ain't income. Like it ain't regular. It ain't stable. It's not like your job. It's not like that. Anyway, you correctly said premium, Harsha. Nice job. $1 million account. So let's do some quick math. $1 million account, $10,000 a month in profit is only 1%. That's only 1% of your account value. So that's 12% a year. That's very, very, very attainable with what we do. And so what would I do to do that? All the same strategies, that we talk about all the time. So strangles, short puts, ratio spreads, etc. Right? Even some verticals, some iron condos, some things like that to mix it up. But when you have $1 million, the one thing that I would probably do, or maybe I am already doing behind the scenes, is I would do very, very few defined risk strategies, if any. Because all of the benefits, well, it may be a bit superlative to say all, but I'm going to go ahead and put it out there because we've already done it. All of the benefits of premium selling can really be, maximized with undefined risk. So with undefined risk, strangles, puts, put ratio spreads, call ratio spreads, etc., you're able to tap into the clean theta. You're able to tap into the clean vega. It's just going to make for a much smoother ride. And if you have $1 million, you have a 7-figure account, you can get super small. You can do one ES contract for $5,000. That's 0.5% of your account. That's 0.5% of your account. That's microscopic in the grand scheme of things. So there's just no reason why you can't size down as small as you want to be. And so you could do all the things that we do, Harsh. So I wouldn't necessarily say that there's one specific strategy that I would use over any others. I mean, I've said it many times on the show, and I'll say it again right here, right now. Strangles, short puts, and put ratio spreads are my top three and my three favorite. Those are the three I would primarily focus on. But 1% a month is very achievable, very attainable in my opinion. I don't think you can sleepwalk into it. I don't think you can just show up and it happens. Like, I think it's going to take some work. I think it's going to take some skill and some ability, especially to be able to do it consistently. Like not consistently where it happens every month, i.e. income, but consistently to where on average, when you look over 6, 12, 18 month, time horizons, it does average out to, around 1% a month or whatever you might be targeting. I mean, I think up to 17, 18% a year is possible with enough skill and ability, and understanding, which, that's 18% a year is a significant number, even when the, market average is around 10, maybe 11 now because the market's been so strong as of late. But 10, 11. So I think 12 in kind of all markets, like through various market conditions, is attainable. But strategy-wise, I mean, those are the few that I would focus on. So Emmett says, good day, Dr. Jim. What's going on there, Emmett? I appreciate you, my friend. I got your email back too, I think. Sam L in the house. Team full range of motion. Yes, absolutely. I mean, if you're going to be on board with Mike Israel to any form or fashion, man, you better be, it's not even about full range of motion. You're going super ROM at this point. This is his own term, I believe. You're going super ROM, right? You're going way beyond where you were biomechanically built to go. So you're going to get hurt. You can bet your bottom biscuit on that, but man, it's going to be fun. It's going to be fun while you make your way to that point. And so, pushing your delts past where they should go, pushing your biceps past where they should go, like all kinds of pec strains and all kinds of this and that. Man, it's good stuff. So Dav's in the house. What's going on there, Dav? I appreciate you. Sergio's back. Dr. Jim, this has been such a good man, look at you guys. Man, Sergio, man, I'm going to give you that cash. I'll tell you what, I'm going to give you that cash that we talked about when David sends me that little 5% VIG off the top of his winnings this year. But Sergio says, this has been such a good show the entire year. You have done more for me than you can imagine. Man, you guys can make me tear up, man, on the show. What are you guys doing? I've already been blowing my nose. Like I'm blowing my nose. I'm crying on the show. You guys can't be doing that to me, man. But Sergio, I appreciate you so much. Thank you, man. You are welcome, and thank you. I mean, you're a staple, man. You're part of the core. Like you're right in. You're daddy's chicken and oatmeal and peanut butter and blueberries. It's every day for lunch, every single day. I don't miss a day. Like we're in Cal Ripken land at this point, right? And so I appreciate you, man. I appreciate you so much there, Sergio. Thank you. And I'm always here to help if anything else comes up. And so Robert says, isn't it the Twitter, the internet? Yes, I believe the Twitter and the internet and the Facebook and like the bonds, like I was talking about earlier. I think that's what you're talking about. Yes, that is correct. And the internet and the Twitter are the same thing. So Dave S., Dr. Jim, have a Merry Christmas, man. Merry Christmas to you too, my friend. I'm so excited. I'm so excited because of the surprises we have for our kids. I'm not even going to say it on air. It's just I don't want this leaking back to my son. But I've got a great gift for him that he's going to be so pumped. He has no idea that's coming. No idea that's coming. I'm very excited. And obviously we got Henry and Huggins, the kittens, for Penelope. And then Amelia, she's fine. She doesn't need anything. And so Emmett, all over that. I think you might be talking about the pop-up event. That'd be awesome. Be great to chat with you there, Emmett, if you can make it. And so Chris, let's see, Crispy Close says, I can't message much in the chat since I'm at work, but I've been listening in for the last 2 weeks in the Chicago area suburbs. Wow. Cool, man. That's great. And yeah, don't get fired over me. Don't lose your job over me. But if you want to sneak a little something, when you got a couple of seconds, by all means. But Crispy Chris Close says, love the entire live stream, but your quick wit is unparalleled, Dr. Jim. Man, I appreciate you. Oh man, I appreciate you so much. Oh no, my nose is bleeding. Oh no, that's not good. Well, we'll have to clean that up after the show. Hopefully you guys can't see that. No, I think I'm okay. But my nose is bleeding for those of you that might be wondering. But anyway, man, look at you, Crispy Close. I appreciate you so much. So much. We try. And it might be quick. I mean, the quality suffers, right? The quality is B-, but it's quick. At least it's quick. We get it out efficiently. And then that's going to be that. But anyway, Mike, Merry Christmas Eve, Dr. Jim, and the Tasty Bunch. Yes, Merry Christmas to you too. There, Mike. And my children are very, very excited about the fact that it is Christmas Eve. They're very clear to the concept. They're counting down the hours now at this point. And yes, it's gonna be amazing. So Gilbert's in the house. Merry Christmas, Happy Holidays, Tasty Nation, man. Merry Christmas to you too, my friend. Merry Christmas to you too. Where did I leave off? Man, you guys are blowing me up. I gotta scroll way up there. Thank you, Gilbert, for being here. I appreciate you. So Theta Trader, Dr. Jim, greetings and salutations. What's going on there, Theta Trader? I'm ducking in right before I go to work. Happy trading to all. Man, happy trading to you too, my friend. And go easy on everybody, because if people are coming in for like crowns and like, extractions 2 days before Christmas, you got to go easy on it, man. That's the unwritten rule. That's the unofficial deal that you're making with these people, right? I don't want to hear people crying. I don't want to hear people in pain. Like, you got to give them the extra good stuff, man. Give them, like, I don't know. Do you guys use morphine in the dental on the dental streets? Like, you guys are probably using that good stuff, like that blue stuff from Breaking Bad. I didn't even watch Breaking Bad. I know he's cooking some blue stuff at some point, which apparently was the good stuff. But anyway, I digress. Wall Bib, don't let you corner yourself. Make some winning trades, man. I'm gonna try. I'm gonna do my best. But sometimes we're just not very good at it. Pavlon Virus says also coin is down. Yeah, that would make sense if Bitcoin's down so much. Coin, yeah, coin's getting hammered, down $14, 5%. Wow, that's a pretty big drop. Bitcoin's not even down that much. Yeah, man, I don't know. Nasdaq selling off a little bit, not a ton, only up 170 now. And so, yeah, Robert says, can you reinvest the dividend on your Bank of America position? I don't know. Maybe we'll find out together. I don't know. I mean, we got to kind of see how it goes. I mean, the dividend that we're going to pick up, what are we going to pick up here? I know we just missed the dividend payment when we bought it. So yeah, I mean, we've got to, so let's see here. I got to do some quick live stream Julia Spina math. I've got 100 shares, right? I'm going to get 26 cents a share. If I'm getting 100 shares and I'm getting 26 cents a share, that means I'm getting, what, $26? That feels like it's is it $2.60 or $26? Yeah, that's 26. I'm getting $26. And that's a ton. I'm getting $26 in March. Guys, we need to just buy stock. We need to just straight up buy stock. Forget all this other garbage. I'm going to get $26. So if I wanted to, so I just got to wait until June, and I'll be able to get a whole nother share of Bank of America. For doing nothing, well, I'll be able to probably get 2 shares by that point, because June, Bank of America will be in the 30s, no problem. So it's like, wow, this is great. I don't know if we can do it. It's probably not going to make a lot of sense to do it. But I mean, we'll have the cash will show up in our account, so we can. I mean, we can look at the statement. I mean, we can see the history tab and see the dividend payment coming in. And then, I mean, $26 that gets you halfway to a bonefish fillet. Like, you're halfway there, maybe 60% of the way there. And so it's like, man, I don't know. This is some good stuff. And so maybe we'll just, maybe we'll just do that some more. But let's see. Gregor V-Dub says BOA deserves what it's getting. Beautiful trade. Yes. Agreed on both fronts there, Gregor V-Dub. Emmett says short the Jan 37.44 put spread in DraftKings. Any suggestions on how to manage? Yes, usually with defined risk, it's do nothing. Usually with defined risk, I mean, you're just hanging tight. Yeah, I mean, obviously the stock is down a lot, but you just sit tight. You just got to make sure that your position size is in check on entry, and assuming that it is, then you sit tight, you do nothing. There's not really a ton of creative management that you can do with a short put spread. So Michael Mike, I just bought stock for the first time on my Tasty account. Man, look at you. RGTI per Jamal. There you go. RGTI. Is that Rigatoni? RGTI is Rigetti. Is that Dave Rigetti? Rigetti Computing. So Dave Rigetti, right? The baseball OGs from the 80s will know who I'm talking about. I think he was a pitcher I'm pretty sure he pitched for the Yankees at one point. Dave Rigetti has his own computing company now. I mean, that's a pretty good retirement plan, because I hear the MLB union is actually not paying very much. And so that, I mean, maybe I should invest in some Rigetti Computing. I mean, that makes sense. I mean, I thought he was a solid pitcher. I think he won 150 games or so. I think he pitched for a really long time. But guys, we made it to the end of the show. I can't believe it. I cannot believe it, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm all caught up. At least I think I'm all caught up. And so my response time should be much, much better than they have been in maybe the last couple of weeks. And so my email is jschultz@tastylive.com. If you guys want to connect on Twitter, that would be a great way to connect as well. I'm at jschultz_F3 over there. But stay tuned. We do have Jamal coming up next. And in the meantime, guys, trade them small, trade them heavy, and Merry Christmas. And I'll see you guys on Friday.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Putting on strategies?
That's easy. Taking off strategies. That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. Hope you all had a great weekend. Hope you're not extending too much capital in this market because things are fairly quiet. You can see volume's pretty low. We'll get to that in a little bit. Weekend for me was pretty nice. It was really calm. I didn't really do a whole lot. Had a party on Saturday, holiday party. Those are always cool, right? I mean, this time of the season when you're getting together with people, you're talking, you're hanging, you're talking about the year, you're talking about next year, all of that. So it was cool. What did I got to talk about something I watched this weekend because I know it's been those of us who are sports people. First of all, sports was awesome this weekend. I mean, football was like just in your face, left and right. And it was kind of cool to not only have NFL games, but also those college playoff games. You know what? I was never really too happy about the fact that they went from 4 to 12 real fast. I just feel like that's how you can like make something a common commodity really quick. But, you know, to their credit, I mean, obviously the atmosphere was awesome at all the ones that was this weekend because they were home games, right? They weren't in some, you know, neutral site. I mean, they were home games. I mean, Notre Dame played at home. Texas played at home. And it would seem as though home advantage really is a damn advantage because all of those teams that were playing at home just handled business. So I guess we're going to have to wait till the next round, which they got a couple of weeks in between. That was always the thing for me. I always was like, how are you going to really make this, you know, when they started talking playoffs and stuff, it's like, how are you going to make this normal? Because, I mean, most kids are done with school in December, early January, they're out. But these guys are going to be playing all the way through. And so, I mean, they're professional athletes at this point, right? Like, it's just kind of what it is. And, you know, the amount of commercials that they were doing, just everything about it is not amateur anymore. And I'm one of the few people that was always okay with that. I mean, I was because, look, there's a lot of adults making a lot of money off of kids. And that statement that I just made is not only going to translate from college, but you're going to see it soon translate to high school, too. I'm telling you, you can just book it. It's on the way at some point in time. But anyway, good games this weekend. That was fun to watch. I along the sports line, I did watch the Netflix thing on Aaron Rodgers Enigma. I watched it. We watched it. We watched it this past weekend. I think somebody told him after the more recent Hard Knocks that it makes him look human if he comes out and talks on his own behalf. And I mean, it's pretty decent. I'm not gonna lie, like it's pretty decent. I mean, I think he's allowed to explain. Like for example, always heard about all the stuff that was going on between him and his family. I don't know how much you guys follow it, but if you don't, there was this public rift between him and his family. Doesn't talk to him. To his credit, he didn't come out with it. It was actually his brother who kind of came out with it, and his family, more than his brother than anything, because his brother was on like The Bachelor or something like that. I don't know. Anyway, he sort of goes through it and talks about, I guess now this is the thing, like I guess they were in a really strict household growing up, in a real sort of church-based family growing up, which is nothing wrong with that. But then to be the guy that he is now, there clearly is some clashing. And so that kind of gets to the root of it. So it's kind of interesting to hear. He really is into those like big time retreats. Like, I don't think I can do it. I mean, maybe I should do a darkness retreat over break. Maybe I should do something like that. What do you guys think? Maybe that would be something to do. I'm certainly trying not to trade too much over break. That's really what it gets down to. Let's pull up the platform and let's take a look around markets and see what we can see. You can see AVGO flying today. I've been eyeing up this name more recently. I got a little small something in here, but nothing major. My bigger plays have been in those calendar call spreads I've talked to you guys about quite a bit at times. I'll get to those in a second, but Palantir is one of the plays that I've had on more recently. So I originally just sold a put in here. And that runs you about $3,000. I think I've kind of decided that this is one of those names that I'm kind of, God, it just pains me to say I'm bullish on just because of the work that they do. I'm not, I hate to say that word, but when I look at stock chart patterns, when I look at something like this, when I look at how, it was dancing along the 1 week and 2 week moving average for quite some time, and then makes a strong move here, which I think might have been in earnings. I can't really remember. It doesn't really matter. It really made a big move on volume, and it continues to make big moves on volume. And look, it pretty much comes down to either the 1 week or the 2 week moving average, and continues to bounce off of it and continues to go higher. I mean, when you see a name like that, that's straight up momentum, right? If you paid attention early on in NVIDIA, it was the same deal. So this is one of the reasons why not only the IV is a little bit high right now, which is one of the reasons why I chose to sell this put eventually. I just turned it into a put spread today because I really didn't feel like using $3,000 of buying power on any one individual name. So I did turn this into a put spread, but here's the kicker. I got some upside. I got a couple of contracts on the upside. And again, this is not a tasty style of trade, but this is not a tasty style of name right now. Honestly, I don't necessarily think this is a name where you want to sell a strangle in when this name is moving as strong as it is. That's where you got to be careful. And even if you do, you got to wait for it to calm down some. I made that mistake in ABGO. Actually, I had sold strangle in February, a couple of weeks back. I shouldn't even say a couple of weeks. It was actually early last week. And then I actually took it off because we had such a strong move to the downside. I felt like there were now better opportunities in the market than having an AVG strangle on. So I closed that out. This is one where I just think I'm playing it like a momentum play, and I'm long these contracts to the upside for the eventual, I feel, $100 print in Palantir, and I'm using this put spread in the meantime to sort of finance some of that. So that's kind of the play I'm doing there. NVIDIA is kind of a similar deal. Exactly same deal, except it's a little bit reversed. And I'll tell you why. I mean, so the first part is I'm short this put spread. Actually, you know what? I need to close this out because it's way lower. It's actually 50%. I sold this at 305. I'm going to try and close that out. And I want to sell a different one. God, that's actually the one I want to sell, but it's, let's see, I'll sell the 130. It's a little bit in the money, but whatever. I'll sell this 130, 121. Let's take a look at the chart here. Yeah, and this thing is obviously, it bounced off of that 100-day moving average around 127 and change. That's actually when I put the position on. because it had been so weak for a while there, right? And now it's trying to go back up to the 50-day, which in this case is 139.71. Everybody uses different sort of moving averages sometimes. I like using simple moving averages. Some people use EMAs. I mean, I don't think it really matters too much. You can get in the weeds of the difference between the two. I think as long as you're keeping it consistent, that's all that really matters. Moving averages are kind of moving averages. They just show you areas where people are keyed in on the stock. So, I mean, I don't trip on whatever moving average you want to use. I just like using SMA because it's real simple. This thing's going to run away from me, isn't it? I know it is. Let's assume, geez, I'm going to leave it for now. I'm going to close that. I'm going to wait till it closes and then I'll put something else on. But yeah, this is the same deal, except this time my upside is in January because, well, these are a little bit cheaper than going out to March. I mean, look at that. Like, let's just say the 144, 145s in Jan. You go out to March, man. These are real deal, high expensive options here. But it's $139 stock. Palantir is one, just an $80 stock. Very different, right? So I do need to reorganize this thing, though. I'm going to have to. Yeah, I'm going to close it out, but I'm going to let that close, and then eventually I'll just throw on another put spread in there. You know what I got into this past Friday? For those of you who might have been watching the show, Julie and I were discussing some of these quantum computing stocks, and this was one of them that popped up that was more interesting than the rest to me. I think there was this one. I forgot. I don't even remember the other names. You guys can shout it out if you remember the other names of one, but it didn't really matter. This to me was interesting because there's actually quite a bit of volume, not only in the stock, but just today, and I talk about this website I look at all the time. I'm going to pull it up for you. I got to move this out of the way. I'll show you guys, and I'll put it in the chat here. This is one of my favorite sort of trading tools to look at. I look at this every single day. It's like an idea generation tool for me, looking at top option issues, right? Like I look at that every single day. Oh, yeah. QUBT, Preyers, Profits, and Permaculture. Thanks, man. Thanks. Yeah, QUBT. So I wasn't as interested in that one because you just don't see, like, for example, RGTI. If you look at the thing that I just put in the chat on the OIC, you can see RGTI is, well, it was earlier. It was in the tops. Oh, no. It changed out. Hold on. It looks like it got drowned out by some other names. Intel jumped up in there. Who's trading calls in Intel? Stay on that one. iBit's up in there. But you can see NVIDIA's been in the top two. NVIDIA's been in the top three for the past 2 years, basically. As high as SPY and Qs. That tells you something about NVIDIA. Palantir's been in the top 10 for a while now, I've noticed. ABGO's been in the top 10 for the last couple, month and change, ever since the big explosion in Move. RGTI was actually up here early in the day, but looks like, there's other names that have drowned it out. When you got Intel, et cetera, that's going to drown it out. But look at the volume in here. I mean, there's a lot of volume, particularly in the front, right? You can see it. But then you can go out to the next expiration. You can see, a little bit of volume. Of course, a lot of it is upside more than anything. Does that mean that it's automatic? Just because you're seeing a lot of volume on the call side, does that mean that the stock's going to take off? No, not necessarily. But when obviously it has mostly been generating volume because of upside and you play upside, well, that's a different story. So what have I done? I bought $200, or I should say 200 shares of stock, 100 lots, 200 lots a piece. And I actually sold some upside against it. So obviously my play is that this thing is going to keep moving to the upside. And then you have, I just arbitrarily chose strikes. I chose the 15 strike. I chose the 20 strike. I went all the way out to May. Who knows if I hold this thing that long, but I didn't want to do February. It just didn't seem enough for me. And then also didn't seem enough premium. I mean, when you can sell this, I think I initially sold this for, let's see. I sold the 15 call for 280, and then I sold the 20 call for 215. So when you can sell that kind of premium, I mean, that's pretty darn good. It also tells you that upside is pretty juice, right? As you would expect in a name like this. So That's the weird part about a name like this. You can see the implied vol is 179. That's the times where I don't think in IV rank really. This is where you can't just rely on IV rank, is what I'm going to say. Obviously, IV rank is matters here, but this is showing you that. I mean, this thing is really jacked. 170 plus vol just on the flat vol is pretty damn crazy. So I figured I'd get some stock in here and sell some upside against it. We'll see how the position plays out. But everybody's been talking about this quantum computing stuff ever since Google really kind of came out with their new chip, right? So there's always this situation when you start hearing about certain names. There's the big name that everybody wants to trade versus it, and then there's other names that eventually pop up. It was a similar deal, I feel, like a couple of years ago when we first started keying in on AI stuff. For a while, Microsoft was the name to trade, right? It was the big box name to trade because they were the first ones who sort of made an investment in OpenAI. But then, of course, after a while, it was like kind of the picks and shovels thing when you're talking about mining for gold. NVIDIA became the one of the picks and shovels. You're going to make more off the picks and shovels than you are going to eventually selling picks and shovels for people who are mining gold than just the gold. And so that's kind of how eventually things played out. Is that what RGTI is going to be? I ain't saying all that. I'm just saying sometimes it's more interesting to trade these than trade the big names like the Googles, et cetera, of the world. So like I said, I'm really not trying to trade a whole lot when you have, we're just reaching 1 million contracts on SPOOs, right? I mean, we should be at 1 million by somewhere between 10 a.m. Central and noon Central, and we're just reaching 1 million contracts. This is going to be that kind of week. I mean, this is going to be the slow week. Last week was all the fireworks more than anything, right? So, I think you just got to be a little bit careful. ARQQ is another one of those names, really. These, I don't know how much you want to get into a lot of these things. Look at this thing. I mean, 900. This is not even 1 million contracts. I'm sorry, not even 1 million shares, and it has no options. I mean, really, this is the option contracts. Yeah, that's when it gets down to liquidity, man. I'm not trading that one. It's not really interesting to me. What'd you say? QBTS is another? Well, you guys are all over these names, huh? This one is this one interesting? 93 million, $8 stock, 93 million shares. Maybe that's a little bit interesting. Let's see. Let's look at indicators. Let's look at volume. How much volume has changed more recently? Let's see. Let us see. I guess this is something you would expect for a name like this that's been trading very little more recently. 214 million on that day. 12/18 last week. That's probably the same day. Let's look at this one, RGTI. 12/18, was that just a day? That's a pretty big day, and then turned down on the downside on that one. I mean, all of these are going to look similar, right? Because it's been more recently that this volume has popped up. QBTS is the other one. And wait, what's the ARQQ. ARQQ is the other. All this volume is in the same general vicinity, 967,000. I mean, you're always going to want to go with the one that has not only the volume in the stock, which clearly this does, but also in the options as well. I mean, this QBTS comes close, I suppose. It's another one, obviously high implied vol on all of these. Volume seems to have a decent amount of volume in here too, and in the front. Let's look at Jan. I like the fact that it has multiple big expirations. So you got your Jan, you got your Feb, you got April, things like that. Although I don't imagine people are trading much further out than Jan, but still, it's always kind of nice when you see that. That lets you know it's somewhat of an established name that you're going to end up trading. But I mean, for me, I got the one. I don't really know what else is that fascinating or interesting to me. But yeah, I'm gonna keep keeping an eye on this name, this RGTI. I mean, I laid it out such that obviously my biggest risk is stock here. You can see my break even is down towards 7 and change. we get a nice little move. I mean, I'm expecting, if it's going to really start going, I would expect it to get up to 15 in fairly short order, and then we'll see what we get from there. I don't know how this is really going to play out, but I just figured it was a nice little play for the time being. I didn't really want to sell any vol in it. I mean, I could have sold a put, but I just decided to buy stock in this situation. And so this kind of gets to something that I said a lot throughout this year. For those of you who were able to go to the live shows, the Building a Portfolio show, sometimes you wonder, like, why in an active trading portfolio would you have stock versus just, options? And I feel like when there's a name that's actually fairly low dollar, and in this case, I can have a margin account, so you can actually get this on and kind of play more for the upside, which is what I'm doing. I mean, I'm unabashedly playing for upside in this name. So I'd rather buy some stock in the meantime, and then I have those short options on the upside in the case it does start to really go. I'd rather do that than just have, very kind of, these are high. I mean, this is 34 IVR. We know the actual raw implied vol is fairly high. You could totally sell a put in here, but I would just rather, I think this is a momentum play, and I'm playing for the more upside than just this finishing out of the money when this is trading $15 and I'm short the 9 put. I'd rather buy stock in this situation. So, and again, buying stock is not that expensive. Matter of fact, it's almost a little bit equivalent, if not a little bit cheaper than selling this put because of it's a margin account. So that's a position where I can have the long stock and hold it a little bit longer and get more out of it than just a short put in this case. We'll see how it all ends up playing out. The other thing I got going on, I'm a glutton for punishment, man. I got in long bonds once again. I did go further out. I am sort of taking a bath on it. I don't know if I want to roll this down or not. I'm really undecided, just because the bond trade has been that hard over the past several months here. I don't know if it's worth it yet. I don't necessarily know if I know what causes a bid in bonds anymore. I really don't. I mean, it's beginning to get a little bit confusing. And I just think there's a lot more that bond traders are waiting for in the new year to see what's going to happen fiscally to the government, et cetera. So I don't know. Bonds are either one of the best trades out there right now, and we're all missing it, or it's those who aren't in it are being smart to stay away until more is figured out. And right now it feels like the latter is true, but I'm not sure exactly what I'm going to do with this position yet. I'm still holding on to it. I know IVR picked up a little bit over the last week when markets sort of faded, but that's my story in bonds. Other than that, I really, again, there's other things I think going on. I really don't want to get too short vol in too many different things because most of it is earnings right now, right? When you get to this point in the year, most of the stuff that's again, most of our January is 25 days to go, right? I don't really want to trade any weeklies. You could in some of these liquid names, but that being the case, most of the vol, if there's an elevation in IVR, it's stemming from the earnings that are going to be in February. I mean, Meta's one of them. Just look at the major names that we all pay attention to. Apple's another, right? And so I don't necessarily like to sell vol in these names ahead of earnings. I'd rather just wait till close to earnings and make a play. So I really haven't done much outside of that. Beyond that, I still have these calendars that I've talked about for those who watch the show regularly. I've done a lot of calendars in some of the big ETF names. So whether it's Diamonds, whether it's IWM, whether it's SPY, that's a lot of my portfolio right now, particularly sort of in this case for Diamonds, it's like short upside and Jan, and then long upside in the February contract. That was something that I kind of had on right before we had the downturn in the market. And it's nice because, I wasn't really too invested in being long at the time with where markets were. And then they pulled back some. So I was able to add on that day of the Fed meeting and a little bit after. And I've just kind of been holding since. IWM's the other one. Of course, these have been the weakest, right? When you're talking about market breadth, which clearly everybody is talking about right now. When you look at anybody talking about equity markets and stocks, everybody's talking about the names that are participating in the rally and, the names that are not. And this, I think, is the biggest These two names sort of exemplify a lot of what's struggling in the market. When you talk about small caps, so you're talking about some of the down names. UNH obviously comes to mind, which is the name that struggled more recently. But I'm banking on them bouncing back at some point, and so that's why I sort of have these positions on. They're just a little bit out of the money, which I think is good right now. If we get some more rally towards the end of the year, these are going to end up paying off pretty well. Again, these are always, in January going to be worth less than the ones that I got out here in Feb. And so that's kind of my bet there, playing that. My SPY ones I got, they're a little off. I got to figure out, I might have to reorganize some of them. Now, these are some shorts. These 600 and 605, I put those on the other day when markets were really down, when this was like 589. In this case, I'm long Jan in the SPY. Because, again, this is much higher dollar and a little bit more vol than either diamonds or IWM, which is fine. So I'm long in the upside in Jan in here, and then I'm short sort of the same upside in a couple of these in the end of the year expiration. I might have to adjust this a little bit to make it make a little bit more sense. But if markets rally, then I don't really have to worry about it at all. We'll see. Nevertheless, this is another one of my trading engines that I look at from day to day. There's not much I want to do in here right now. What I always do is sort by, so this is the Dow, right? Sort by market cap. You can look at IVRs after that. Walmart. I did see this was down today. This is one, I normally would trade if everything were equal. But again, I'm really not trying to expend a whole lot of capital right now. Today and tomorrow are my last couple of shows for the year, so I don't really want to put on too much heading into the end of the year where I'm going to, take a little bit of break here and there, hang with family and do all those kind of things. I don't want to have any near-term positions on, that's for sure, and I don't want to have anything that's going to move too much while I'm, sort of taking a little bit of a mental break. So I don't want to put too much on when it comes to that. I'm just going to monitor the few positions that I have, and that's pretty much it. I don't even think there's going to be much that I'm going to set up for the becoming year outside of what I have in the SPYs and the IWMs and the diamonds. And let's just hope for a rally. Folks, that's the show. That's right. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. I'll see you tomorrow for the last show of the year.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us presents. What is this all about?
This
What
is
this
so
all about?
nice.
Oh, a little mini fridge. I love it.
Oh,
I love
look
it.
at that. And it's red.
It goes well with my Mr. Coffee here.
She
I don't know
gives
if
you
can-
something hot. She gives you something cool.
Tom's is a regift.
What?
Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before.
I want the refrigerator.
It's for your pistachios.
It's for your
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
and
use that hole for anything else.
Shells in there. Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you.
I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're holding a little
basket. I got a little basket.
Okay, you're at Trader Joe's.
Okay, that fits me.
Random guy, me.
Yeah.
Standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
Disgusting.
Huh?
I can't.
What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with Tony.
They're not cleaning their in my powder room. Okay? That's the logic.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
Oh, yeah. Tasty Nation, good morning.
You know you need it. Got to know.
Hello, everybody. Welcome to Christmas week. Just got a few days left this year, a few trading days. My show this week will be on today, obviously, and Thursday and Friday. A little bit of a late start for me today, so I will go at an extra brisk pace to get through the symbols. So let's jump in. Here we have our good friend, the spider. Well, last week was very exciting. We had a huge tumble on Wednesday, a big recovery on Friday. We're not doing too much of anything right now. I mean, actually, if you take the incur and the RTY and add them together and divide by 2, you get pretty much 0. So it's kind of a wash. But we're up a bit on the spider now, and let's just use Friday's highest resistance. If anybody cares, not that they shouldn't, I sold my really short-dated spider puts, the December 31s, early today because I was just kind of hoping things would just fall really swiftly, but they didn't. But it was a good profit anyway. Got them on Friday at a good price. So that's out of there. I'm back to my old self where like I've got months left on these positions. That also almost guarantees a big crash before the 31st. So I'll be furious with myself, but not until then. Here's the EWZ Brazil. Nice drop on this one. It keeps on keeping on. And so we've got a cool new gap based on Friday's low. And I maintain those March puts, and it's just doing what it does. It's a gorgeous pattern. It's pretty much a daily feature on the show, and it's just cruising along. So yay. And what'll help that, I think, is its biggest component, PBR, which itself is down about 1.5%. And if we can break that dashed red line at the bottom, that'll help goose things along. The small caps had their day in the sun after the election, but that's kind of gone already. This is the ratio chart between the NASDAQ 100 and the Russell 2000. And tech has just grabbed the baton and is sprinting ahead again. The mega caps like your Apples, your Alphabets, they continue to dominate, gobbling up a bigger and bigger percentage of the entire market's market cap. So yeah, small caps are not so great anymore. As you can see, the NASDAQ is raging. One item that I sort of regret, but I don't blame myself too badly, is ARM. We've talked about ARM Holdings a lot. It's one of the semiconductor stocks. And this was a real fake out, I got to tell you, because I am a patterns guy. And up until about here, this was still looking pretty good. It was the third instance of a nice rounded top, and it had moved higher, but it was still within the confines of its pattern. But it broke above that, and I just threw my hands up and my arms and was out of it. But it
for those a little more stalwart than myself, it peaked here with a shooting star on the 13th, and it's moved from about 156 down about $30. So ARM is basically at the lowest levels it's seen since early September. And congratulations to any of you who hung on tight. Like I said, the reason I don't really beat myself up too much is because, just kind of hoping things work out isn't a great strategy. The rationale here is a pattern. If it violates the pattern, I'm out. It could have easily gone to $300 a share. And, you just don't want maybe that's it. No, you got to have some kind of rules. But it did tumble quite hard. So there you go. Even some of the most powerful equities are starting to look pretty shaky. Walmart was at the highest point in human history just like 3 trading days ago. And, this is not a collapse or anything like that, but even the likes of Walmart are starting to feel a little bit of the heat. And our old egg friend Calm, even Calm has been falling. This has dropped from 114 back down to the double digits. So it's lost about, I don't know, what's that, 12% or something in a matter of about a week. FICO, whose incredible ascent has always baffled me. This too was at a lifetime high earlier this month. $2,400 is about $340 lower than that right now. And there's one more, Carvana, CVNA, which had this unbelievable rally from almost bankrupt to hundreds of dollars a share. And this had this cute little top and has reversed away from that. And it is approaching its first meaningful level of support, this gap, which is the election gap. But if it breaks that, well, it's probably more to it. One last one. And this is one I took profits on a few weeks back. This was this monster top, Lumen, Lumn, and this is continues to move lower. I had basically taken profits when it got to the bottom of this pattern, but it's even violated this. It's pretty messy. Like I said, when I got out, it doesn't really thrill me when things pierce deeply within the pattern. Again, it kind of negates it. But long term, it's probably going to go what I had anticipated in the first place, which is a massive drop from here down to maybe even just penny stock land. Archer Daniels Midland, this is another long-term chart that we look at, and it's kind of like morphing into, it's like those little babushka Russian stacking dolls. We've got this pattern here and a smaller version here and an even smaller version here. It just keeps scalloping its way lower, and major support does not go all the way down to this trend line. And another one I got out of, Wingstop continues to do nicely. We've done some damage to this support, and this long-term trend line failure could portend nasty things ahead. So the charts are working really well, whether I stick with them or not. Energy, I continue to think, is a really interesting long-term bearish play. Yes, XOP is really, I don't like using the term oversold, and I probably shouldn't. But it's been down really hard, very persistently, all the way back Thanksgiving. So from one holiday to the next, it's almost red every single day. And long term, if this pattern completes, which I'm really confident it will, we could be looking at another one of these again. And in fact, just to be fair, its own top was more like that. So you can see, and this is much bigger. So head and shoulders there, head and shoulders there. It seems really cheap in quotation marks, but it's really just putting the bow on the Christmas wrapping there of what could be a monster top. And so there's individual items, of course, within that look just as good. There's BHP, for example. Here's BP, like so. And then, of course, the only one I'm in actually is COP, Conoco Phillips COP. Nice little top on that one. I'm going too fast for a change. I don't want to run out of symbols before I run out of time. So let's modulate a little bit. Here's a few other bearish positions. I'm still in 14 different bearish positions. And like I said, the one loony one for me, the December 31s, I took profits on that. So these are all minimum March 17 expirations all the way up to January 2026. Here's Caterpillar CAT. And this one, I've lowered, in a lot of cases, I've just cranked the stop loss down to take advantage of the droopage we've had already. Here's Cracker Barrel, down almost 2.5% more today. And this is a weird one because it's like top, and then an attempt at a base here. But it seems to have sort of flopped, which is what I'm counting on. So I'm going to see it curve away from that failed breakout. EWC we mentioned already, so we'll blow past that. Huntsman, HUN, down about 1%. This is a slow mover. These are 2026 puts on this one because, like I said, I want to give it many months of time to sort of burn up. IBM, down a little bit, 0.25%. This one was at a lifetime high just on the 9th. And we've had a couple of nice red days since then. And so I've tightened up the stop to the shooting star peak on Friday. And a little more dangerous one here, Palantir, PLTR. This lifetime high today on an intraday basis. And it got some really good news over the weekend. And you would have expected it to just explode higher. I didn't have a position then. This is a new position today. But it did not. It actually fell a little bit. So like I said, this is probably the most hazardous one. And I've got a tight stop on PLTR. Just to mention crypto in passing, Bitcoin down $4,500. As we zoom in here, you can see that, and these lifetime highs, none of them, be the equity or crypto, none of them are that far away. This lifetime high was just on the 17th. $108,268.45. So that was the peak. So since then, we're down about $16,000. And this is not the first time Bitcoin's gone down a lot. You've had instances where it's lost 50, 60, 70% of its value and then went right on to lifetime highs. I'm sure any crypto person will tell you that. But the crucial thing about the whole crypto space is that it's so important to the psyche of the market, the general zeal for assets. Even if the vast majority of equity people couldn't care less about Bitcoin, have never traded Bitcoin and wouldn't even know how to, if they read that it's getting zapped sometime in the next year, that will give them pause, I think, because assets, more or less, they have some gravitational pull with one another. And if it does, of course, MicroStrategy will feel the pain on that. MSTR is down almost 9% today. It once again this weekend gobbled up billions and billions, like Carl Sagan, billions and billions of dollars worth of new Bitcoin. It is absolutely dependent on Bitcoin's continued price ascent into the literally $1 million coin targets that people are talking about. Just to wrap things up, here's a blast from the past in EE. You know what? I'm going to give this one another shot because as disappointing as it was earlier this year, it's worth another try. So new position today on the $72.50 puts for NEE, and with a nice clean stop on that one. And finally, this beast, which is a ratio chart. It's the equal weighted S&P 500 divided by the regular old S&P 500. And all it tells you is how is breadth. And if breadth was perfect, if stocks were moving exactly the same amount, all 500 up or down, it would just be a really boring flat line at 1.0. As it is now, it's nothing of the sort. It had a rally here, and it's resumed its breakdown, which means what we all know, that fewer and fewer stocks are doing all the heavy lifting to keep things propped up, and that's unhealthy. Okay, well, you know what? Tomorrow's Christmas Eve. I'll be off Christmas Day, but I believe I'll be back on Boxing Day for you. So you have a good holiday, and I look forward to seeing you on the 26th. Bye-bye. Thanks.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us presents. What is this all about?
This is so nice.
Oh, a little mini fridge. I love it.
Oh,
I love it.
That.
and it's red.
It goes well with my Mr. Coffee here.
She gives you something hot. She gives you something cold.
Tom's is a regift.
What?
Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before.
I want the refrigerator.
It's for your pistachios.
It's for your
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
and
use that hole for anything else.
Shells in there. Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you.
I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're holding a little
basket. I got a little basket.
Okay, you're Trader Joe's.
Okay, that fits me.
Random guy, me.
Yeah.
Standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
you don't
so.
Say anything.
I am not clocking men's in the line.
I would say,
do that.
Hey, your fly's open.
I would do that.
I would think it's a trap that he would want me to talk with, like, purposefully. So I'm not going to say anything.
What if he says to you, more importantly, what if I'm the dude in front of you?
Yeah, do not engage.
My fly is open, and you say, hey, your fly is open. I go,
thanks.
Do you like that?
I would like.
What do you say next?
Thanks.
I want to go home.
I was a late bloomer.
Were you too busy?
Yeah, I was an athlete. I was.
Oh yeah. You're too busy with Aragon and Argon?
Yeah.
In the shower, what's your go-to for soap?
Like a Dove liquid soap.
Thank you.
Unscented.
Thank you. Liquid soap.
Yeah.
These two guys,
liquid soap.
These two guys use a bar. I'm like,
hate it.
What year were you born that you still use? It's disgusting.
Soap
Pretty
sucks.
disgusting.
Huh?
I can't stand liquid soap.
So that when you pick it up, there's hair all over the bar, and you're, oh my god, it's disgusting. Like, actually, I gotta remember in your bathroom. Do you have a pump with liquid soap, or do you have a bar in your bathroom in the first?
No. Communal bathroom use the liquid soap.
Yeah, right.
This I have to hear. What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with Tony.
They're not cleaning their in my powder room. Okay, that's the logic.
Oh my god.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the last call, my friend. Even the S&Ps, sneaky, quiet, up 22 and change. A little over 1 million cars have traded, almost 1.1. Not horrible volume, but they seem like they've been ticking in 25-cent increments all day, like not too much volatility to them. NASDAQ up 151. I think that's led by NVIDIA. We can see what other stocks are going higher today, but NVIDIA up $4 and change. A lot of volume on the option side in NVIDIA too. Russell down 11, been down all day long, and the Dow down 50, been down all day long. Volatility in by a full dollar, Sadnov. Traded 1860 when we left the show around 10 o'clock this morning. Been steadily going down, and the likes of Tesla IV rank is 76. It was in the 90s early this morning. So volatility coming across the board. You pointed out something a little bit weird to me on the break here. Bitcoin down almost $4,000 on the futures to under 94,000, and yet you got Ethereum up $50 to 33.70. A little weird that both are.
Well, I know. I don't know if you watched Ethereum last week when Bitcoin sold off from 105 to like 96, 97. Mm-hmm. Ethereum went from like 4,000 to 3,300, 3,200. So ETH got killed. I sold some like 3,900 last week. And I figured, you know what? I'm just going to hold the rest, hoping. And I looked at it the other day and I was like, oh my God, I can't.
Why didn't they sell it all?
Why didn't I sell it all?
So easy in hindsight, isn't it?
Hindsight's really good.
It really is good.
Yeah, hindsight's really good.
Hell of a trade if you could use hindsight.
Yeah,
no doubt about it.
No question.
Oil hanging out at $70, just under $69.40 and change. Gold down $17. IV rank of 57 in there. Silver doing the opposite, up 27.5 cents. Nat gas down 5.5 cents after making recent highs last night when you were on the show on Sunday. Steadily selling off from there. Let's take a look at what's moving the market to the downside. Those buckers, obviously, coin, MSTR. Somebody sent me an article. They bought another 500. I don't know, MSTR. Let me take a look. They bought 5,262 Bitcoin for $561 million. Talking about MicroStrategy's MSTR. They bought them sometime today. Down $31. It's not helping. Costco down 6, ARM down 5, Microsoft down 2 and change in the NASDAQ. On the upside, looks like you got Lilly almost up 27, Meta up 12, TSM. I know you said you had a position there, was kind of struggling with. It's up $10, and Tesla up $8.60. That's all I got for right now.
I find MicroStrategies to be fascinating because if they don't buy, then
they're not helping the cause.
Then it looks like something's wrong.
Right, not showing solidarity with the product.
And
the apes.
And when Bitcoin goes lower, they are the only buy. I mean, if you bought whatever $1 billion worth of Bitcoin here, you're the buyer. Otherwise, it would be down 12,000.
Sure.
So how does MicroStrategies...
Self-fulfilling prophecy.
Yeah, I know that, but how do they ever... Like, here's the one thing that I'm not sure anybody... Is there actually a way out? I don't know. I've read all the garbage on MicroStrategies regarding, everything from why it trades at a premium to, I've read every single article on how, like all the different reasons why it trades at this giant premium to Bitcoin. I think it's all people just talking their own book. I just want to know what happens when MicroStrategies goes to parity, and then they have to, and nobody gives them any more money to keep this thing going.
The dream alive, yeah.
I don't know. It's kind of weirding. It weirds me out a little bit, but it is what it is. So I'm managing a small position on MicroStrategies. We had a good day in there today, but nothing crazy, just a good day. Biggest winner for us today is Tesla by far. They killed premium in there, murdered it.
Yeah, they really
myrtleized it.
Yeah, it was well over 100 the other day on Friday. It closed there also. Now it's 76, so down by 25% or so.
Yeah, I mean, it's our biggest winner today. Tesla, we had a bunch of winners today. We had Tesla is our biggest winner. SMH, let's see what else we got. Intel, GLD, they killed premium in. Baba, Baidu, Boeing, AMD, a lot of stocks. We also had some pretty big losers. Bonds. Ugh.
Yeah, your bonds. I meant to say this. I mean,
I know you don't have to say it. Bonds.
You do have a 3-tick profit now, right?
No, stop. I don't have any profits. Bonds. I just bought some at 20 or 21, whatever. They're 13.23. I can't believe they're in the 13 handle again. The other day I thought we were going to get over 15. I can't believe it. So we got killed in bonds. We got killed in notes. We got killed in Japanese yen. And we got killed on S&Ps versus Russell today. That moved $35 against us. So
yeah, that's one of your problems.
So we have no losing equity positions and 5 losing commodity positions. That's bad.
And you got a green scratch going on, so that's not bad. Yeah. Intel's up today. It's up 62 cents. That's going to help you.
Yeah, I said Intel helps.
Yeah, no, I'm just saying.
I've got some short deltas, but generally speaking, our equity positions were fine. Our commodity positions got killed today. It's very rare, but it happens. And
it's very rare that we get killed. No, it happens all the time.
It's very rare that just our commodity positions.
Oh, just our commodity positions. Got it. Usually it's everything.
Yeah.
Yes, I got it.
So we're going to salvage the day, but I was kind of quiet today. We're only going to make.
We got 20 minutes left. Day's not over, so you never know.
Day's over. Day was over at about 9 o'clock this morning for me. But we made 50 trades. Somehow we ground out 50 trades today. So that's not too bad. We're relatively flat. We got some small short deltas. We got some decent theta. We have a pretty low extrinsic. And considering we're about to roll in...
You're going to, tomorrow's a half day. Friday's technically a roll day.
Right. So we're going to have a very low extrinsic going into the new year. We're going to have a reasonably low delta, very low theta. Right now, our BP usage is under 30. We're usually around 35 to 37. We're just a hair under 30. I think that's just because of expiration on Friday. A lot of our positions came off.
Yeah, sure. And we haven't traded that much today, as you said. And
I haven't reloaded today.
Right.
Tomorrow
you can put that NASDAQ E-mini S&P or NASDAQ, the Russell E-mini S&P or Russell NASDAQ trade on. You can put that on again.
Thank you. I already have it on, and I'm not putting it on again. But thank you for your help and concern. The S&P's actually just sold off about 15 handles from where they are right now. They were just only up about 13, 14. Now they're up 29. So they
rallied. They didn't sell off.
They sold off in the last hour, and they just rallied back in the last 15 minutes.
Oh, so you're talking about the last half hour and not the more recent last 15 minutes?
Yes, I will explain to you.
I'm sorry.
Listen closely.
Because I'm looking at them, and they're $3 off their highs for the day.
Listen closely, Grandpa.
Got it.
Got
it. Because they sold off,
We just rallied back 15 handles. We were 15 handles lower. These things are moving around at quite the clip. We sold off 60 handles on Friday afternoon. We just rallied up 30 handles today. So it's anybody's guess from here for the rest of the week. Where are we right now? We're just over 6,000.
Yeah, 6,032.
Yep.
Mid-range pretty much for the after this big sell-off that we had. You know what? I'm telling you, Saz, I know you've done your picks. I haven't done my picks yet. But by the end of the year, it's going sideways, Saz. We're going to be somewhere wrapped around the 6,000 number. $50 above or below, probably above.
Well, it's too late for you to pick the 2024 end of year contest, but we'll look at your picks for 2023 and see how close you were.
And I didn't want to tell you, but I'm gonna let you know. You actually beat me 3/4 this year.
I knew it.
Wasn't too, you didn't know it.
I said it earlier. I beat you 3/4.
Yeah, but you didn't know. You wouldn't bet. You wouldn't bet $20. You weren't that confident. But
I wasn't that confident because I thought you cheated. But yeah, I knew I beat you 3/4.
I admit to you, we didn't talk about it. I admit to you that you beat me 3 out of 4. But it's how you finish the race, not how you start the race.
Some people might say that, but I would say that my batting average is 750. Yours is 250.
It's not a batting average. It's not a batting average. You were just less wrong by 1% than I was. It was still horrible.
Sounds like 750 to 250. Sounds like.
Meanwhile, I tell you I was wrong. I admit it. And you go, I thought you cheated me. I was just showing you my integrity.
Oh, God. Anyway, tomorrow.
The S&P's making new highs, sound up 33 and change.
Yeah, tomorrow I need the bonds up because if the bonds go up here, then the Russell will go higher. Bonds and Russell are tied at the hip.
They do seem to be tied at the hip. You are right.
But the NASDAQ actually went down on the day a couple times today.
Mm-hmm.
Not anything significant, maybe like 5 or 10 handles, that's it. But it did have a couple of downticks early on, and then once it got stronger this afternoon, it was all bets are off.
Yep.
Yeah, some of the strongest stocks today, every strong stock today was a NASDAQ stock. AMD, Tesla, NVIDIA, those are the big ones. Let me see if there's anything else. Oh, Meta, up $13. Google up, and... yeah, those are kind of the biggies.
That's it?
AVGO, TSM, but AVGO, yeah. That stock moves around. It's crazy.
AVGO does move around, and I'm not particularly fond of the markets in there either.
They are minimum 2 ticks wide, maybe 3 ticks.
Yeah.
I find the markets in Coinbase and actually MSTR to be almost better than AVGO.
Oh, wow. Okay.
Also, if you are an uber goober player, stock's up $1.30 today. You can finally make some money on those short 60 puts in Uber. I just covered mine.
It took a little while.
I had to wait a little while.
Mm-hmm.
Yep.
That's okay.
Let's see, what else do we got going on here today? I don't know if you trade IBIT, because a lot of people write to me about that. That's the Bitcoin ETF.
I don't, but yes, I get the same.
I'm going to tell you, it is a very, even though it's only a $52 stock.
Good IV rank of 80. I mean, we've talked about this.
No, I know, but I'm going to tell you right now.
Relatively low stock price, high implied volatility, and a product that, moves around, that should be nirvana.
Crappy markets. No matter what you want to fill in there, they will not trade it 2 cents off mid-price. So you basically have to go in minimum 2, maybe 3 cents off mid-price. So I only give it 2.5 stars, even though it is a $52 stock. It's hard to get filled.
Yeah.
If you haven't traded it yet, it has an 80 implied volatility rank. It has a very high implied volatility. It's probably worth having a position on because it makes you track Bitcoin, but it is not the greatest vehicle. I would trade it small.
Good. Okay, I agree with you.
One of the stocks that I was worried about to the upside today, but didn't go anywhere, was MU. I think if you're looking for a play, like a relative play, MU compared to everything else out there, it's a little bit, it's cheap relative.
MU. Yeah, I got the emails about MU all weekend. I've traded MU. I've had okay success with it, but it seems like it's pulling teeth at times.
It's not the greatest. I just sold some put spreads in there to give myself a little bit of long delta. It's a challenging stock. It's a challenging stock.
Yep.
What do you think here about? Well, it's, I kind of
volatility, dude, down another 6%.
I know, and I kind of want to get a little short here in Nasdaq on the close, but I got to tell you, with the Nasdaq up 184 today,
yeah,
I kind of feel like you got to wait till tomorrow.
Wait till tomorrow and then cancel if close, kind of thing.
Always cancel if close. Some of the best trades I ever made is the ones
I'll just turn green. America.
Some of the best trades I've ever made are the ones where I want to cancel if they get close and I forget.
Yeah, because you reach your max pain. You're right.
Yeah.
Just buy some notes too.
I did buy some notes. I paid 16.5. 108, 16.5.
How does Daddy do it? Another tick.
Yeah. No, I'm long a lot of notes here. I didn't even want to buy these. I sold some on Friday.
You're no different than MicroStrategies.
I sold some on Friday right around one. Did they trade 110? I think I sold them over 110.
I believe you did. You talking about the
I want to say I did, or very close to 110. So they're, or was it 109? Now I'm freaking out. I don't remember. 109 it must have been.
109.
Yeah.
109.
I was looking at it, and I can't be 110. It has to be 109.
Yep. 109.
Sold some a little over 109, 109.3, 109.2 on Friday. They're one.
Right, talking about on the 20th. Yep.
17. If you ever want to get long, like bonds or notes from listening to us talk, I got an email from a truck driver. One guy, he told me he's a cross-country truck driver. He wrote me over the weekend. He said, Tom, I got a question on one of my positions. So he listed out the position. And he goes, I would be, how did he put this? He said, it's a defined risk trade. So normally I would let this thing be able to go. But somebody took me down in the bonds.
That would be you. You're famous for that. You really are.
Somebody took me down in the bonds. He goes, just saying, you might know him, okay, but somebody took me down in the bonds.
Funny.
I'm like, oops, sorry. But if the bonds are too big, the notes
You're a good person. You just did a bad thing.
If the bonds are too big, the notes are half the size. If you see the bonds today, they're down 25, and the notes are down 13.5. That's like basically half.
You are correct. They don't have to, well, they are. I mean, they don't have to move like that.
They don't have to, but they
typically do over time. Right.
Yeah. Yes.
There's no arb there if they don't move half a point. That's what I'm trying to say.
Totally agree. And as we head into this kind of Christmas break, weird Wednesday, tomorrow is a half day in the markets. I believe that when the markets are closed, the S&P futures close as well. At least the first session, the Globex session, I believe the Globex session will start Christmas night, at 5 o'clock, but it will tomorrow at 12:15. The futures will actually be closed. We are going to do Tasty live tomorrow morning from 7 a.m. to from 7 a.m. till 10, like we always do. Tony and myself. Hey, who's doing the show right now? Is it Ryan? Ryan. Hey, Ryan.
Yes, Tom.
Are Pete and Frank on tomorrow morning?
Let me check for you.
What do you say?
I think he's checking.
Oh, okay. I'm going to check and see if the Forex team's on. But because we only have one last time before Christmas to bring on the dream team of Dylan, Chris, and Ilya.
Yes, as far as I know, they're on tomorrow morning.
Okay, so the shows in Chicago will start at 6:30 a.m. Tomorrow morning with Pete and Frank, and then Tony and I will come on at 7 o'clock. And our shows globally will start at 1:30 a.m. Central Time with Angie and Rich, and those guys will go to about 4 in the morning, and then we'll come on at 6:30 and go straight till 10 o'clock. So let's go to Dylan.
It's time to cook your goose.
Yeah. Let's go to Dylan and Ilya and Mr. Vecchio.
Yes, let's do it. The overtime team. How are you, gentlemen?
Oh, we got no sound.
You don't have sound until I put my ears in.
Because but there's a logical answer for that you and Tony will appreciate, which is because there's an issue with the Italian culture, and I say this with only love and respect.
There's an issue with the Italian culture.
They tend to use a very small number of first names to the point of being even a cliched joke. Which I say that with, again, love, please. I'm not calling anybody a joke. But it makes it easier to keep track of Italians if you call them by last name. Hey, Battista. Hey, Vecchio. Because otherwise it's Tony, okay? And I can't tell who from the one from the next.
Totally makes sense. Totally makes sense.
All right.
Thank you.
All right, Radigan.
If I say Battista, they know. Yeah, exactly.
100%.
Irish, you could say the same thing, probably the similar.
I'm okay with just saying
they're like different.
I'm okay with
Radigan,
being all about Radigan and Batista. All right, boys.
I had a football coach. He never called anybody.
You played football?
Sorry.
Protect the head. You're not allowed to play football.
I mean, listen, it was a different time. We didn't know. It was just fun among friends. Now it's a whole thing.
I know.
Anyway.
I played too. I coached too.
All right, Vecchio, we've got a few minutes left here.
Really? Fun.
Mm-hmm.
We got an opportunity to go around the horn to talk about what's going to happen maybe on a very shortened day tomorrow and maybe over the next couple of days. Is there anything on this screen that looks really cheap to you, and is there anything that looks really expensive?
Really cheap in terms of what's going to be lower today than it will be in a week. I'd say stocks. NASDAQ and the S&P look good, and the Santa Claus window is about to open up on Friday. So ho, 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 happy holidays.
That's what looks good to you. Anything look bad to you?
Gold and silver still don't look pretty good to me. I really wish they were performing better here at the end of the year, but it's a lot of chop, and that silver ugliness makes me want to stay away. So staying away for now, despite the temptations of those silver bells.
Mr. Spivak, I know you're not going to be thinking the same thing that Mr. Vecchio is, because
I am not.
That's why we do a point, counterpoint, whatever we are.
McLaughlin report for the.
Is there anything
20s?
Before we get into anything that looks expensive? Is there anything that looks cheap to you out there?
Euro looks cheap. The bonds look cheap. The pound looks cheap. I want to be long European currencies, and I want to be long bonds.
Is there anything that looks super expensive to you?
The U.S. equity indices, the Russell looks the least cheap. It's already had a significant down move. I've enjoyed it. I still have it. I haven't jumped ship, but I think it's obviously cheapened more than the others. I think the NASDAQ probably looks the most expensive. S&P looks expensive as well and is holding up worse than the NASDAQ. So that's the one I'm probably eyeing with the most the most bearish intent, and I'm already short, so I hope it keeps going.
You know, Dylan, when I went home when I finished the show on Friday, I was like, I'm just not comfortable. I'm not short enough. And of course, they're up 40 handles today, of course.
But you didn't do anything really to add.
No, I didn't do anything. I was just mad at myself for not doing anything.
Well, you got an opportunity. You got 4 more minutes. Keep going.
I'm very
trade for another 15 minutes.
I'm very aware of the time. Thank you.
Okay.
Dylan, anything that same question goes out to you. Anything seems super cheap here to you, or anything I
love Ilya's euro, long euro, or derivatives of long euro in the first quarter. Only just on the rhetoric, on the macro rhetoric, which we shall see. But I think that I like that. I also respect Vecchio's long equities just as an admirer of something I'll never understand. And but I appreciate it. And then I still think that the sort of tech that the first buddy short has room for everybody down over the next 3 months. So I'd be short the first buddy, admire the stock buyers, but won't play, and I love the euro. And so I would do a long euro, short Tesla, just to make it weird.
When I think of like what gets you, like when a dog sees food, they start to foam a little bit, drool and foam. Mr. Batista, what makes you foam at the mouth? Stocks.
Yeah, that's a tough question.
Commodities.
Because we haven't had any two-sided action really.
Not really.
That's lasted at any moment. So I don't think anything's really making me foam at the mouth. I'm not looking to pick up things on a down move here, because I believe like some of the other gentlemen have said that, I think Radigan was just touching on it for a minute there, that you'll have a chance to buy it lower on its first kind of dip down. I'm really excited for what's going to go on for next year. I think we're going to have a lot of volatility in the market. I think it's going to be completely different than this year, whether it be because of the administration or changes that we go through or perceived changes, whatever it may be. So I think next year is going to be a good trading year for those who trade strategically. So for me,
what scares me about next year is the market. They've always said the market loves to ride the wall of worry. And I, and for years, I think I've been probably repeating that stupid phrase because I don't even know what it really means. But I can't imagine that there is going to be a year of more worry than 2025. And so what scares me about 2025 is that, will the market just ride that wall and work its way higher? I will say, Ilya, to your point, if you love the bonds here, then you can't be short the Russell, because if the bonds turn around, the Russell and the financial stocks are going to go higher. So I think I think you got to be long Russell, long bonds, and then you can be short everything else. It doesn't matter.
The bonds aren't working for me here. The Russell is, and I definitely see that point. So when the time comes and there's a reason to unwind one and lay into the other, that will definitely be a time, because I see it. If yields come off, all of those little banks in the Russell, all of them are going to feel that much better. So there's definitely a vector there.
Dylan, I'm foaming at the mouth to sell Tesla short. I think the party's about to end, and it's going to end abruptly, and it's going to be ugly. Is there any
you think
point,
the first buddy makes it to the inauguration?
Is there any point in 2025?
100%.
Is there any? I don't think he makes it to inauguration. No, I do not.
What a market.
Is there any point in 2025 when you can't have some downside play in Tesla? I think you got to always have downside play in there.
I think it's the best trade for 2025 is just short the first buddy structure. But I disagree with the wall of worry hypothesis. I think 2025 is a year of glory, because I think that there's actually a lot of energy that's going to be released creatively just because of the time of transition, just new people in new positions, which creates new opportunities.
I like that. Half full.
All right, boys. Have a great holiday. we have the whole world covered. Dylan in Milan and San Francisco and New York. So we've got half the world covered with you guys. So have a great holiday.
We need Victor. We'll go 4 large.
Oh yeah. We throw Victor in there. We got the whole damn world
Then we'll
covered.
have a global property.
Why isn't he up at 4 a.m. local time?
We'll get a big international Hong Kong bank to sponsor it.
There you go. See,
We don't even do
there
deals
you go.
like that.
All right, boys. Have a great holiday. Enjoy.
Thank you, man.
All right.
Appreciate it. Stay
You
tuned.
too.
See you
Thanks,
Thursday.
guys.
Yep. Stay tuned. We got more overtime right after this.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It's a wonderful time of the year. That's because stocks are up again. It's Monday, December 23rd, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. For the final episode where the Three Musketeers are here, I'll be out the rest of the month into the new year. Dylan and Ilya also taking off some time for the holidays. So sporadic schedule here the rest of this week. Overtime will be here on Thursday, Monday next week, Thursday next week as well, and then back to regular programming once we get our way into January. But until then, let's talk markets, guys. Welcome. If you're on the platform, come over to YouTube. Tell us what you're trading. If you're on YouTube, come over to the platform or tastylive.com and see what we're all about. Guys, it was a rocky day, so to speak. Ilya, you and I on Futures Power Hour spent a good deal of time talking about the big risks on the macro level for 2025. So we really didn't focus on today's price action. But I can tell you that from when I looked at the markets last night, when the NASDAQ was up 0.5% to when it was down about 0.5% this morning, to now back where we are today, up by 0.78%. there was some good two-way volatility here as we start this holiday shortened week.
Indeed. We are seeing sort of what we talked about in the wake of the Fed last week, the idea that we hit important levels of support across a lot of markets in that sell-off, and that there was likely to be a pull-up off those levels because there was really no reason to panic and run around with your hair on fire. That, of course, the adjustment has to be respected, but that no critical levels were taken out. And although the trend, for example, in the S&P here, where you see the uptrend from August has rolled over, where you have some serious technical damage done, you nevertheless probably don't have the impetus for a stampede out in the waning days of the year. And so you'd have a pull-up, which is precisely what we're looking at. A pull-up that gives you the correction, but doesn't overturn the breakdown. That line in the sand around 6,100 that marks the break, that's holding. This looks corrective for now, but obviously the range in which this could be corrective is big and wide and could be very, very traumatic for those of us that are bearishly inclined to try to front run. Thankfully, I'm short off the top there. And so I'm just sitting here waiting, letting this move work its way out. And once it finds where ultimately it will grind to a stop, eyeing an opportunity to lay in a little bit.
I mean, Chris,
Not
how
yet.
far does it have to go? How far does it have to go until these non-believers start to quiet their souls and just give up? You know, you would think they would have already stopped thinking anything.
I actually disagree. I think it's completely opposite. I think what would get Ilya on board with being a bull would be like a full year of the S&P moving sideways. That way, earnings catch up, and we can see, and the economy can catch up.
Okay. So is that oil? Is that this SMH chart? You got some good sideways charts.
Well, like if S&P was at 7,000 tomorrow and we woke up, right? I think Ilya would be way more bearish than he was today.
100%. I would be so bearish. I would be indignant.
So I don't think there's a number. It's like a question of how, it's not just the destination, it's the journey, the pace and velocity. And so I think people are looking at this market as we covered. I encourage everyone today to go back and look at the archive for the Futures Power episode for Monday, December 23rd. It's going to be running during that typical 1 p.m. Eastern slot for the next week while I'm out. Ilya and I covered the risk for 2025, and we have a discussion around valuations. We cover a bunch of these various issues, Dylan. But if we're going to a place where the market is heading into next year with sentiment at all-time highs, effectively forward earnings estimates at all-time highs, then you probably have a market that, if we continue to push higher, the bearish folks are actually going to get more incentivized to get short because they're going to think it's even further out of whack and there will be an even bigger correction. So I don't think capitulation's here yet. And that's one of the reasons why some of these charts that I look at, like SMH up 3.14% today, and it's still grinding sideways, but getting to the apex of a potential consolidation. If this begins to break out, semis have not been a participant. And they would be a real kick in the pants for this market to get another gear to another new level of all-time highs. So this, to me, can't be ignored. At least for the next week and a half. Because the Santa Claus rally window opens up on Friday. Friday being one of the final 3 days of the trading year, Friday, Monday, Tuesday. And then the first two of the new one, S&P has averaged a gain of 1.3% since 1950 during that window. In some years recently, it hasn't worked. But again, that's why we look at the long-term average. Nonetheless, we're heading out this final week with markets starting to move up. Ilya, I wanted to talk about the trade ideas that you were mentioning, though. Get away from my perma bullishness. And we don't even go into the charts that I was sending you and Victor and one of our former coworkers over the weekend at like 3 o'clock in the morning to talk about why it was prudent to stay bullish. But I want to talk to you about the other ones.
I was actually up and reading them.
You were responding. And last night I saw a text message from you at like 3:45. I'm like, this son of a bitch doesn't know what time it is. He's like, he should know that I'm not sleeping. It's like, well, I'm actually not asleep. So how could I be mad that he's texting me? That's really. But you mentioned two things in particular.
We're degenerates, folks. We're degenerates.
I'm one of those people who only sleeps like 4 or 5 hours a night. My wife will debate that with me, but I really don't need to get a lot of sleep. You talk about positioning here. These are charts that I shared with you over the weekend that caught my attention. I tweeted them out. If you didn't see me tweet them out, it means you're not following me. Follow me at CVecchioFX. Daily Sentiment Index, a gauge of how people are positioning, how people feel in terms of, well, we'll talk about the dollar index here. Right now, it's sitting up at a level that is in the 3rd percentile. We're talking about TLT, where the daily sentiment index is now in the 10th percentile. In fact, it was even lower than that when the reading came. What we're getting at here is that the market is at an extreme place. Everyone is basically bullish the dollar to a level unforeseen in years. Everyone is bearish TLT, at least the way that the market has moved in recent weeks. TLT has seen a shift that's bearish enough, that unseen since, well, late 2023 when the bottom was in. Ilya, you mentioned your high conviction trades. Dylan, you agree with him about the euro. A long euro trade is effectively a short DXY trade. It's effectively a bet on TLT going up because it means that yields are going down.
That's right.
Ilya, are these charts of the positioning and the sentiment that we're facing in the rates and currencies markets indicative of how you feel that equities may behave until the end of the year? And so I guess wind that back, break it down for us. What are you doing with this information on the screen? How does it impact your trading ideas? Does it reinforce what you said to Tom at the end of last call? And then talk about equities.
No, it absolutely reinforces it. I think we are in what is essentially bizarro September when it comes to the Fed rates dollar story. In September, the markets wanted the Fed to be really dovish. The Fed came out and was indeed very dovish. The response from markets, you're too dovish. You're giving us too much of what we wanted. And so what's going to happen is you're going to reflate the economy. And so we've had a massive rise in the dollar, massive rise in yields, massive sell-off in bonds. Against that backdrop, we, of course, had U.S. economic data getting firmer, which is why the markets reacted the way they did. Now, in December, we've had the polar opposite situation. The markets, after 2.5, 3 months, thinking the U.S. economy is soaring, the Fed is off sides, they need to be more hawkish. The Fed, again, gave them what they wanted, almost to the basis point. And the markets went, oh, now you are way too hawkish, because guess what? U.S. economic data is now going the other way. It started to cool. The PCE numbers last week were a little bit cooler. The consumer confidence numbers we just saw, unexpectedly soft. This is starting to happen the other way. So it looks like bonds are overcooked on the downside. They probably have room to bounce as markets unwind some of their hawkish repositioning. The dollar has room to weaken. That means things like the euro, the pound, look like they're shaping up bottoms and might bounce. What this interestingly means for stocks is on a day like today, you have a perfect example where you have yields rising, stocks rebounding. I actually think we might be in a situation going forward where yields coming in, bonds coming up, and the dollar weakening isn't a good story for stocks because it's a story about global deceleration. We talked earlier when we spoke about the idea that the U.S. economy is the only game in town. Of the 3 major global economies that power growth for real, you have the U.S., China, and the Eurozone. Of them, China hasn't grown in a year and a half. The Eurozone is back into contraction mode. Their rebound from recession in the first half has failed. The U.S. is the only one growing. If the U.S. slows, as the data might be starting to show from about mid-November or so, as it cools, you have a problem. And valuations
do you have a problem,
are,
or do you have a stronger euro? Do you have a benefit to?
You have a better euro. You have a weaker dollar probably across most vectors, but what you have is an equity valuations issue, because if the U.S. slows, there's no plan B. And that is a bad scenario for risk sentiment in a year when a lot of debt rolls over, in a year when all of these other global economies need for the Fed to be easier, not tighter, because they need global credit cost looser, not tighter, because they're not growing like the U.S. is, or anything remotely close to it. So we have an issue developing. So I think, yes, bonds higher. Yes, dollar weaker. But that might be a story about equities coming down this time. Just picture today's price action in reverse.
The dollar story is definitely worth watching into next year. We've shared the, I think it was from Steve Dunce, the Pictet Asset Management in Japan chart with the dollar index analogy for what happened after the 2016 election going into 2017, where the dollar peaks in January 2017 once the drums of trade war begin to beat a little bit louder. And contextualizing that analogy then, given what we've heard out of the Trump administration saying things like there's going to be tariffs on the EU unless they buy more of our gas, or that we're going to annex Greenland, buy it from Denmark, or we're going to take back the Panama Canal, right? There is a very heavy trade war story behind all of this right now, right? The Panama Canal is about trade first and foremost, but this is really about control of the global trade system. And so I look at a dollar index here with that analogy and the sentiment index, and it makes me think that we could be looking for a bit more weakness in the DXY at the start of the year. And also then, if we think about what happens historically speaking, this is a great chart from Jake Bernstein. We see here 10-year Treasury yield after the DSI falls to 10. Well, we just had this happen here at the end of last week on Thursday. Historically speaking, a month later, yields are lower, about by 0.24%. We see a month later, 1.81%, 2.5%, 3 months later, 4.66%, and 5.79%. As you move out in time, directionally, it gets a stronger push for yields to move to the downside. So this could be the exhaustive move in the short term. And I think that's what Tom is getting at, Ilya. If all of a sudden the dollar's getting weaker and yields are coming off the board, that decline in U.S. manufacturing production that we see through the PMIs, we're in contraction territory, maybe that picks up a little bit because U.S. made goods look a little bit cheaper in relative terms. And we're the place that's growing after all, so why not buy from America? Dylan, one thing that happened at the end of last week as well as we look at the end of this year is how breadth improved in the market. This comes from Sentiment Trader. We saw that we had the worst breadth day in 3 months on Thursday, followed by the best one. And when you have that happen, when you go from the worst breadth day in 90 days to the best one in 3 days, what occurs thereafter? That's the 20th time in history that you've seen that flip in breadth occur to such a degree. A week later, the market's higher 70% of the time. A month later, higher 80% of the time. 3 months later, higher 85% of the time. A year later, higher 85% of the time. Kind of feels like last week may have been a seminal turning point where we did our chop and grind and reshuffling of the deck through the middle of December through the Fed meeting. And in the short term, the risk may be cleared. So why not super glide?
And I think it just also speaks to, I think, to your point about Ilya, and just about more broadly than anybody's point of view about a sideways market, insofar as any bought time without meaningful price level changes, time that allows earnings, revenue, cash flow systems, logistics, customer service, all things that actually businesses are, to get better without changing the price. So if you can stay, like to your point, if you can stay sideways for a year, then you get a lot of repair work that happens inside balance sheets and customer service and supply chain.
Yeah, I mean, absolutely. If you can hold up over the course of the next year, it need not be a correction in price. It could be a correction in time, whereby things digest. It need not be an aggressive sell-off. The balance.
Is that where we are with oil? How about an oil short just on the Trump oil boom?
I was going to do the Don Draper, like, hear me out. What if there's no correction and we just keep rallying?
Yeah.
That's how I'm going into next year, right? I'm riding. I'm not going to be actively trading the next few weeks. I was joking with people like, should I take this time off? Should I not? My wife's got to work. So, okay, my daughter's going to be home from school. Do we get a sitter? And I work. It's like, what if I have a day where I'm trading and I lose a lot of money? So I just spent a few $100 on someone to watch my kid for the day while I sat at home and lost money. I would be a very grumpy dad. So just going to take the time off, no trading, what am I content with holding into next year when I really start checking my book again on January 6th? Well, on the follow page, got to stay long NASDAQ, got to stay long ES, got to stay long Russell. Not going to swat the hand that's been feeding me all year long, Dylan. So
I'm going to keep my short too. For now.
Okay, well, Dylan, I'm trying to be like the ghost of Christmas
How about
past.
we get consensus on a Tesla short? Is there any?
Yeah, we got a Dennis Gartman trade out there before. For those who don't know Dennis Gartman,
we're never going to agree on the stock market.
Oh no.
When I first started working, his letters were very popular on the street.
Yes.
And he would offer really interesting trades, like short Japanese rice in euro terms. And you'd be like, what the hell are you talking about, Dennis Gartman? But I was hearing something from Dylan before. You were kind of pitching a short Tesla in euro terms. Why do you feel like
I was saying long euro currency versus the dollar, short Tesla. I'm not saying short Tesla in euros.
Well, if you're doing both of those trades at the same time, you're effectively...
That's what you end up with, essentially.
That's what you're ending up with, right? Tesla's a dollar-based currency.
And this was really what Dennis Gartman was talking about.
Right.
Where he'd be like, long wheat in gold terms. You're like, okay, so you just want a gold trade.
So you're saying you want me to short Tesla in like Milan or Frankfurt in the euro ADR?
Maybe. But so why do you feel like the first buddy trade is something that even needs to be discussed right now?
Well, no, there's this big, it's only because Sosnoff likes to talk about price extremes, and Tesla's the best extreme that exists since the election. And so it just gives us the most opportunity for a clear possible repricing.
Is there anything that's happened in recent days that make you feel that way? Like Donald Trump saying that Elon Musk can never be president?
Not just the biochemistry of two highly unstable billionaire psychopaths in the same car.
Fair point. Ilya, is the Tesla trade coming undone?
I think you have to be really careful here. Obviously, I'm highly skeptical of the first buddy presence as an idea and as a lasting thesis as well. I think anybody should, because when you look at valuing a company, you have to look at and say, okay, well, what is this nebulous thing that Elon Musk's proximity to Trump going to achieve for Tesla specifically? And yes, his presence will achieve something maybe, but what? What exactly could the administration do unilaterally for Tesla only, specifically? Very difficult to imagine.
What about large government contracts?
Yes, there's a report out this weekend that Palantir, Anduril, OpenAI, SpaceX may be putting together a consortium to jointly bid for government contracts moving forward.
But that's not unilaterally at the hands of the president and the president only.
No, it's at the hands of Congress, which are funded by Peter Thiel, who has significant sway with the Palantir and Anduril folks. So it kind of feels like...
I think the Sosnoff's biggest point this year actually just came last week in a Truth or Skepticism, which is the only asset that's at risk is the integrity of the markets, for the very reason where Chris is sort of wandering now, which is that, if there's too obvious a layer of corruption to the point where you're wrong, Ilya, or because the president does just assign huge contracts to Musk consortium companies or not, that risking the integrity of the American contract and financial markets is the number one risk that the Trump presidency represents. Whether that's a massive or small risk is a matter of debate. But
idea. Go ahead.
No, I made my point.
I mean, the idea that the markets can live with these contracts going to these companies is, I think, a reasonable one, because, of course, these companies are the best at what they do. Palantir is the best at what it does. Tesla is the best at what it does. SpaceX is the best at what it does. These are deserving companies. There's no question there. The question is, does the move make sense outside of all of those things? And if the entire logic here is Musk proximity to Trump to some sort of unspecified win outside of the norm, outside of
Let
those
me ask you
companies.
this, Ilya. Let me ask you this, good sir. Let's assume that there's the coming first buddy breakup.
Sure.
Do you think
Which I think is coming.
Okay. So do you think that reduces either the dollar value or odds of confirmed win for the Musk-Leighton Defense Consortium in the government contracting process?
I think it depends.
It's irrelevant.
I think it depends. I don't think it's particularly relevant because I think since these companies are the leaders in their fields, I think they will get those looks anyway.
This is where you and I diverge because these people, this is a vindictive. This is not.
Well, and so this is my next point: is if the breakup is a bad one, I think you're right. I think the president has shown a vindictiveness to his enemies, and if Musk suddenly becomes an enemy, which I think is unlikely, I think he'll just kind of move out of the
Cauchy's saying it's
sphere.
50-50. Cauchy's saying it's 50-50 in a year.
Yeah. So I mean, Doge doesn't have any power anyway. It just has the power to write a report and have some ideas in it.
Only showing that the primary asset is social proximity of Musk.
That's exactly right.
President.
That's exactly right. And so I look at the move in Tesla and I say, which part of this outsized move is the proximity versus the contracts that would probably go to these companies anyway because they're leaders in their field?
90%.
Which is the outsized
90% proximity.
Okay. Last week,
as a move in the price, as opposed to the realized reality of contract.
The majority of the price move since the election.
Exactly. I agree. And so I look at that and I get skeptical.
Okay.
But you don't want to short with us. That's what I don't understand.
I don't want to short because it is a move built around hopium and wishful thinking as opposed to solid foundation.
It's based on the certainty of the psychological matrix of psychopaths' inability to sustain intimate.
That kind of move can go on for a long
contact.
time, though, because it's untethered from anything economical and real. So that can happen for a very long time and can be very painful. Would I short Tesla individually then? No. NASDAQ? Yes, absolutely, just not yet. And a company like Tesla, were it to get cheap enough, I'd be a buyer.
What about the Musk contract on Cauchy, 50-50, that he's even involved in 12 months?
I don't put much stock in that.
I'll tell you what, like I go back and forth. Last week I was on The Price of Truth with Victor saying I think that Trump is disrespecting Elon by giving him Doge. And then I see the events that happened in the following days with the government shutdown. And Musk liked the final plan, and Trump was not a fan of it because it didn't include a debt limit extension, which understandably so, right? Why would Democrats give that up? That's the leverage to extract concessions when you're in the minority. Republicans have done it. Democrats have done it back and forth. So why would Democrats just give that leverage away? They wouldn't. So that was never going to be in there if Democrats were going to support the continuing resolution. Nevertheless, I can't help but think from a political strategy perspective, Dylan, if I'm a Republican congressman or senator who's in my 40s, 50s, or 60s, who's going to butter my bread in 4 years' time? Trump or the guy whose net worth is 60 times Trump? Whose good graces my long-term political survival depend upon? Those of an 80, soon-to-be 83, 84-year-old man in a few years? Or the guy who's in his 50s, 60s, who's worth $350 billion and who's now curated all?
440 billion, I think it is.
440 billion. Okay, so Trump's worth what?
It's gone
6?
up a bit. It's gone up.
So Trump, so he's worth 80 times Trump, right? So
I would go so far as to say Musk is clearly the most powerful human being on earth. Full stop.
Probably
because he knows how to run political financing at a grassroots level, digital door knocking, and regional money in congressional races, primary challenges, all the little game that's played. He clearly knows the game.
Yeah,
and is, I think, the most powerful. He's more powerful than the president.
Well, because the game is, in hindsight, obviously simple. Like, why isn't Trump knocking on doors? Like, well, because you don't need to knock on doors. Everyone has their phone in their hand 24 hours a day.
And if you know how to then fund little congressional races and primary challenges where there's never a primary. It's a huge amount of work. So basically, when Musk says, if they don't do this or this or whatever, I'll fund a primary challenge to them, whoever they are. What he's really saying is, I'm going to make them spend their time calling people, asking for donations of money. Because the more you have a primary challenge, the more the incumbent politician has to spend all of their time on the phone calling and begging for money to deal with the Musk airwave campaign. And so just the threat of an unlimited financed primary on television against an incumbent is very persuasive for any marginal decision to go in Musk's favor, as the debt limit demonstrated. And maybe even more than marginal. It might be total control.
That makes me think that Tesla is not fairly priced at 430.
Meaning it should be more. Because it's the most powerful man in the world, full stop.
If you're working backwards from the basis that the new system of governance that we're heading into is going to be one that's more
access-based,
like more of an oligarchy than times previous, and that Musk, like, look at the muscle he flexed this week. He flexed more muscle than Trump, legitimately.
And he knows how to. He'll be like, all he has to do is show up in any primary and say full budget, and it just makes the incumbent life a nightmare.
Dylan, you've run a congressional campaign before. I've been on the inside
and
one
to
as
do
well.
it against a well-funded opponent in a primary who's just going to make the candidate spend all of their time raising money and still get smoked.
Like he could drop $1 million into every single district and not even think about his net worth.
Oblivious. 10 million into every district.
Yeah, right. And so that's the sort of Damocles now that looms over. And I think that means Tesla's gonna be a really interesting stock for next year, right? This is not to be a Musk bashing session. I know I have historically.
But I guess the argument is that Trump has more power. He's the president of the United States, and Trump can say, "Don't get so close. Back it down." It's not just money.
And that is very true. And Musk could take his money and with Vivek and conjure up a group of people to challenge what's now the Republican
primary challenging system.
Yeah, and basically say these people are not, they're too enamored with Trump. They're not really trying to make America great again. We need to do these things to make America great again. Like they try to take the mantle from it, and they have the media apparatus and Twitter.
Let's say the most likely thing is this is the beginning of a techno-utopian third party. Andreessen, Sachs, Thiel, Musk. 4 years from now, there's a third party candidate. That's J.D. Vance running as the Thiel Musk candidate. And you have Republicans and Democrats. Is that still good for the Tesla stock or bad for the Tesla stock? It's
irrelevant for the Tesla stock right now because it's too far afield to really make any kind of trading decisions.
What about Vecchio's point, which is a fascinating one, that Musk proved himself as the world's most powerful man this week with the way he manipulated and controlled the debt ceiling negotiation.
This is one thing. It's one thing.
So the president can't even do this.
Well, it's one thing.
He's technically not the president, but
he's not the president.
Well, can we take a step back? How crazy is it that through this entire process, everyone has been treating Trump like he's the president, and Biden is just like a non-factor in this discussion whatsoever?
Well, there's that, and of course,
so
there's
nuts.
also
because he is.
It's nuts. But also,
crazy.
Remember,
Biden and Harris.
They always do this.
Biden created that. Biden created this. This is Biden's creation.
They always do this, though. The debt ceiling always is extended. It is always extended in the 11th hour because they're always jockeying until the last
I know, really, but Musk is.
So what has he done?
He's controlled the whole negotiation. He stopped the deal.
Nominally.
Recut the deal.
He nominally was present. But they always do this.
He took over the whole deal. And of course, they're going to make a deal, but he took over the term sheet and used the threat of
Tesla's undervalued. Dylan, if we're going to techno-utopia,
use the threat of primaries to influence the fact that the Democrats, the president of the United States, not the president-elect, not the current president, not the Speaker of the House, not the Senate Majority Leader, but an independent billionaire was the most influential, I think, in the term sheet to get on the last 72 hours before that thing passed, which is a remarkable show of power. I think
there is, of course, a very reasonable argument to say that Elon Musk is J. Pierpont Morgan. That this is the new kind of private sector steering node for all things. As J.P. Morgan Sr., and frankly his son as well, demonstrated over and over and over again in a prior robber.
And Tesla's cheap on the double.
In a prior robber baron age, and that this is another robber baron age, only now it's Silicon Valley robber barons. It's not bankers and oilmen and railroad men. Okay, that's possible, sure. Also, those of us of Soviet extraction walk around with a similar mindset on but one thing, and it's this idiom. The government always has one round in the chamber extra. And
that's a 2025 prediction that Donald Trump will have Elon Musk killed. Go on.
This is the simple reality that you can be as rich as you want and as powerful as you want, but unless you are the government, you're not the government.
But if you control
and Trump is the
votes,
government.
But if you control the votes, you're the government. And if I have digital door knocking and grassroots campaign,
can't call early elections in the United States. Doesn't matter. That's if this were Europe, yes.
But I can control votes in the Congress during the tenure of the presidency on fear of primary challenge within 2 years.
Not if the president decides that you need to be relieved of your power and your money, and the president has the means to do that.
But Chris's point is that this dog is out of the barn, the horses have left the yard, whatever you want to say.
Maybe.
And that Elon Musk is going to be rich and
dogs
powerful.
out of the barn.
And that
the dogs are out of the barn. No, maybe.
But Dylan, I've read enough Philip K. Dick.
Permanent voice.
I've read enough Philip K. Dick. I've watched my Blade Runner and Aliens. I'm into the Ridley Scott lore. This is how those companies start.
Yes. No. This could be Skynet. This could be Skynet.
No, this is like Waylon West. This is like how you get Waylon Yutani. You have someone who's entrenched interest. And listen, I have been wrong in many regards. Maybe he is still a huckster showman, and I'm right about that. But he has leveraged and flexed his power in a way that makes me think Tesla has more in the tank. And if he gets removed from Doge, forget the Kalshi betting markets. I wonder. He is also someone who is very keen on making sure that he is not treated disrespectfully, he's not embarrassed publicly. And I don't think that Elon would go away quietly if Trump and him met on bad terms.
And if he's J.P. Morgan, if this is the next robber baron age, and he's J.P. Morgan, then it's not necessarily the case that he, in his mind, is after unchecked power for its own sake. J.P. Morgan, for all of his non-competitive string pulling and manipulation of the markets, in his mind was doing the benign thing and working for the good of the nation.
Yes,
he was convinced that this is what he was doing.
Because why else would he open up his personal liquidity to keep the stock market afloat?
That's right.
Right.
That's right.
What a generous thing he did for the New York Stock Exchange.
What a generous, benign thing to do.
What did that afford him?
And to create massive railroad cartels, because we don't need instability, folks. I just need to have people from my bank on every board, and then everything's okay.
SMH here, up 3.14% today. Big day for semiconductors, which continue to grind into nothing for the past several months. October, November, now most of December, we've been bouncing around 240 to 250. It's basically the midpoint of the trading range from the July highs to the August lows. For those that have been range trading this, good on you. I have done that a few times in the recent months, but not recently. And that's a damn shame, because just like oil prices, it's been moving sideways. Dylan, oil heading into next year, looks like there's a good deal of supply coming online. Global growth is in question. But geopolitics are basically gone. In terms of seeing what's happening in Eastern Europe and the Middle East, I suppose the most noteworthy thing is that Bashar al-Assad's wife is leaving him. Apparently, she was okay with staying his wife when they were gassing people in Syria. But once he starts a podcast and moves to Moscow, that's just a step too far.
Step down too far.
But like Syria's done. Maybe this HTS becomes a problem. Iran is going through a gas crisis right now where they've actually, over the weekend, according to reporting, were forced to decide with powering the nuclear power plants in the country or providing heat to people's homes. And they went to heat to people's homes. So the presidential palace in Tehran was without power for 48 hours. Iran's influence in the region is waning. And obviously, Trump is angling for some sort of resolution between Russia and Ukraine, because we've heard Zelensky making the rounds and we've heard all the talks back and forth. Putin's been on the airwaves himself saying how he's looking forward to talking with Trump. What happens to oil in 2025, Dylan? Or is this something we should stay away from?
Lower.
Why?
Because I think the U.S. administration is pro-deregulation and pro-drilling and pro-less regulatory that drives away from crude and in favor of less regulatory and more permitting that's more in favor of more supply, combined with the end of the war with Russia.
Ilya, you and I were talking about
make a lower oil price.
You and I were talking about this earlier today, Ilya. Just give the brief recap for people. Where are we looking for oil for going into 2024, or rather 2025?
I mean, I'm with Dylan on the unraveling of geopolitical risk. We can see, and folks should definitely check out the archive of that Futures Power Hour we did earlier today, because there's a chart there showing U.S. output booming. And that's with the number of oil rigs active coming down, with the number of fracking operations coming down. So the U.S. is more efficient at extracting and is able to get to more petroleum production than Russia and Saudi combined, while it reduces capacity, which is incredible. If we were to increase capacity further, because the new administration seems to want to do that, then we get astronomical amounts more oil, and we start to export even more, because a lot of the oil we produce, we can't refine. We refine a different grade of oil. So we're going to start to flood the market with oil and gas in particular. So that's a thing. Geopolitics, of course, is on the wane, because Iran is losing its entire network. Hamas in shambles, Hezbollah in shambles, Syria off the board. Among other things, how do you resupply a Hezbollah, for example, if you can't move the arms by land across Syria because you don't control Syria anymore? I don't know how. You certainly can't ship it. Iran doesn't control the shipping lanes. The U.S. does. So you have an issue here where Iran probably sits down and doesn't aggravate anything for a while, which is to say, if Israel, the U.S., and Western powers more generally are engaged really in a contest with Iran, Russia, and their proxies in the Middle East, there's probably not escalation from the Russia-Iran side here. Russia's busy. Iran's defanged. So you probably have less geopolitics as a premium for risk in the price. You take that out, and the supply-demand story is oil abundance. So I'm with the short. I just need the price action to start to recognize it.
Ilya, before we go on here, just want to remind everyone, Tom was talking about those trading hours on last call. The trading hours this week for the futures market, at least, they are a little bit staggered. If you're trading equities and interest rate futures, ESNQ, ZBZN, they close at 1:15 Eastern, 12:15 Central Time tomorrow, and they reopen at 6 p.m. Eastern, 5 Central Time on Christmas night for the Thursday trading session. Thursday, regular open, close there. Crypto, FX, energy, and metal futures, they close a half an hour later tomorrow, 1:45 p.m. Eastern, 12:45 Central Time. And then they reopen same time as everything else, Wednesday, Christmas night, 5 p.m. Central, that's 6 Eastern. Grains, livestock, CFE, that's the VIX. You're going to see some staggered times as well, but the VIX futures are closing same time as your equity and interest rate futures. So next 2 days, odd schedule. not atypical for a midweek thing, just like you would see around Thanksgiving or so. Geopolitical risk seems like it's at a low point. I mean, Tom was bringing this up before as well, how, people talk about the wall of worry, Dylan. What's the wall of worry for next year? That's kind of like, that is one of my sticking points.
U.S. government policy unpredictability because of new people. That's the number one new risk for the world.
If this is such a risk, why isn't gold going up more?
I'm not saying it is a risk. I'm saying that is the only material change in the chessboard where risk can emerge.
Because gold is not a safe haven, and if you thought it was a safe haven, change your mind.
I suppose that's one way of going about it. What? China's buying gold again. Where's the enthusiasm? Yes. Is this just a dollar and yield story at the moment?
I think it's a dollar and yields and China story together, because if you look at what's been going on here, you see gold in that very tight range starting December. It busts out of that range on the top side because of the China story. It comes back in because of the Fed story. It's basically reset into that range now. So we now have gold basically unchanged for all of its various swings in December, back to where the month started, a narrow band where it's looking for how these forces balance. If the Fed story is indeed that the markets overcooked it on the hawkish side, and indeed, look at the economic data, it's turning. So if that's what's going on here, then, and you get a weaker dollar, you get lower yields, and you get a China buying that the numbers continue to show when we get the December numbers for FX reserves, well, then all of those things fall on the same side of the equation. And I think that's why you see gold actually holding in this range, broadly speaking, going really to the beginning of August, where that support is with that gray line across the screen, as opposed to what's going on with bonds, as opposed to what's going on with the dollar. If gold were only a creature of the dollar and of yields, as it historically is, we would be getting a gold that is collapsing right now. Certainly since August. And we're not. It's holding up. And it's holding up because China is buying. And I don't think anybody really cares about geopolitics that much. I don't think that's really a major contributor to this story. Because if it were, then crude oil wouldn't be on its back. But it is. And so when we look at this whole thing, I think it's the China buying and the Fed story coming into alignment with higher bonds and a weaker dollar that ultimately catalyzes gold higher, and probably by a lot.
We were asked what we thought looked pretty weak going into the next few days. I mean, silver prices are up by 0.84% today, but with gold teetering the way that it is, and it's starting to try to creep below that uptrend from the July, August, November swing lows here, seeing a little bit of damage done to that uptrend. I noticed that silver prices, they're rallying back to, but not getting over the neckline in this potential topping pattern. So if we find ourselves on the other side of the 1 week moving average, $30.57.5 per ounce, that does take you through that uptrend that we lost, get you back above the neckline, and that negates the potential topping, at least momentarily. Of course, it could reverse lower again. But in that case, you then have all right, we've warded off a bearish breakdown, trade back to the other side of consolidation up towards 32.5. You have a reason to press on those longs that I was looking at getting filled and did not last week, thankfully. That would probably mean that gold holds up here. I find this area around 2,600 to be like, that's the line in the sand. The pre-FOMC swing highs that you have in August, the low that you have on September 18th, right where the closing lows are in November, and we find out that China's starting to buy again. And sure enough, we haven't been able to move back below there since that information was revealed to the public. So below 2,600, you got a problem on your hands. But between gold and silver right now, they're kind of in a no man's land. And that's a tough trade to operate around in thin markets over the coming days, which, speaking of coming days, there are some treasury auctions this week. Today's 2-year note auction was pretty strong. In fact, highest foreign demand for 2-year notes that we've seen over the past 6 months. When we look out along the curve, one of the seasonality being something that happens, a pattern within the data. In this case, whenever you have holiday periods with auctions, the auctions are typically some of the weaker ones during a 6-month look back window. Just people aren't around. So if you see weaker treasury auctions this week and next week in particular, I don't read into it too much. The market is already telling you enough. Volatility is starting to go back up as prices are going down. Today you had a good number come across the trade desk and no one really cared at the end of the day. But we're looking at closing lows now for ZN and ZB here. We already brought up the chart that we have for TLT positioning. What's the most efficacious way to play this, Ilya? If you want to be a person who says, you know what, I don't know if this market's going up, but I know when it's going to go up. Rather, no, I don't know when it's going to go up, but I know it's going to go up. So it's not a question of if. I want to get some long delta exposure here. Thinking about that TLT chart that we shared a few minutes ago, how does one position themselves to do so for, say, like a trade for the first quarter?
I think if you're looking at the various flavors of this, because there's expressions of this idea across various assets, I think actually looking at it in FX first becomes attractive, because the price action in something like the euro, for example, looks a lot better to try to play for a bottom, because you've already started to put that in and you have a clear risk reward matrix with at least a 2-to-1 risk reward setup, basically saying that low is going to hold. And I'm really only looking for the swing high on that range. So let's say I'm looking back at getting to, let's say, 108, for example. Or even something lower, even just the very, very top of that immediate range around 106.40, 107. Even that gives you attractive risk reward here, whereas the bonds have not made a similar turn. So if you want to look for something now and lay something on, a micro futures contract, even one that's not options based, low margin, doesn't tie up a lot of capital, doesn't move wildly like something less liquid. The euro, of course, the euro USD exchange rate, which is what this is possibly the most liquid financial instrument in the known universe. So this is not going to move erratically like some other things, most likely. Unless, of course, Martians land in Paris or some such thing.
Why not just be long the bond? Why get messed up with a second?
Because the bond hasn't shown you a sign of a turn yet. I am long the bond, but it's bleeding out, and I'm holding it still because I have a vertical on, and so I'm at max loss, and it's a very modest max loss because I've locked it in that way, only at about 1.5% of account equity. So there's really no reason to mess with this. Would I lay it on fresh now? No, because there's no signs of a turn here yet. Once there are, there are. In the currencies, signs of a turn are occurring, which give you a low against which to benchmark risk and to say, if it's below this low, I'm wrong. Whereas here, who knows where that is? Yes, sure, you can look at the swing bottoms from mid-year and say, that's the line in the sand. You could do it that way. But in currencies, you've already started to turn. So at the very least, your risk-reward calculus has meaning.
Currencies have started to turn a little bit, which is noteworthy here because so many of them have been dogs recently. The yen, of course, is staying on the floor today. This is something that I may need to manage soon, so maybe I won't be done trading. 11 days to expiry. Kind of bleeding out here. Need 30 more pips. Show me the money. This was the trade that was taken back in September, Dylan, when I was being jocular and saying the BOJ is never going to raise rates again. This thing is going right back to where it was earlier this year. Wish I had a little bit more time on my side because this data bleed is hurting me. But if we get 30 more pips, it was a good call. 0064 puts. We're currently at 0064.29. That was put back on. We're trading closer to 0070. The yen isn't a typical currency that has, it's not like an emerging market currency. So I don't know if we want to view it through that kind of lens. But some of these other currencies, like the British pound, the Canadian dollar, the Australian dollar, they're showing some more issues that I wouldn't call them emerging market currency behaviors, but they're certainly things that happen to currencies, or they're hallmarks of currencies that are facing some sort of crisis or issue, like current account external financing problems. If you see drops in foreign direct investment, looking at the lack of export growth, thinking about a country like Canada, for example, how is the U.S. domestic economy so strong and one of our largest trading partners not benefiting whatsoever, right? That's a problem for the Canadian dollar as we go into 2025.
And the dollar and the pound both show it. You do wonder about are the dollar and the pound actually also likely to go down another 50%? Like, are they just going to become second-class currencies over the next
dollar? I mean, dollar obviously no.
No, I mean
pound,
Canadian dollar.
Oh, I mean Canadian dollar. I think obviously no, because you're attached at the hip to the U.S.
It's been getting weaker. It's been the
Canadian
dollar ain't what it used to be, sir.
Well, no, of course, and it's because the U.S. economic boom has not spilled over even into Canada,
right?
Because everything is going on.
And the British pound, it's the same or worse. The domestic economy is isolated.
You know, believe it or not, the pound is actually the least worst performing
this is the
major currency
interesting
this year.
thing. So this is the interesting thing. In the UK, you just not only had a situation where inflation was high and growth is weak, which is madness for the central bank. That central bank has had a chance to opine. We had a Bank of England policy announcement last week. They were dovish. They picked growth over inflation, essentially, as the main concern, and the pound still couldn't sell off. That's a sign of tremendous underlying strength. Eventually, we'll have to see. The situation with the Canadian dollar largely exists because the U.S. economic boom is centered on services. And Canada exports mainly goods. And in fact, most things the U.S. imports from anywhere is goods, not services. And all of the boom then is primarily benefiting domestic firms. However, we have the largest split, looking at PCE data, of demand, if you want to look at inflation pressure as a proxy for demand, more inflation pressure, more demand. We have the biggest tilt favoring services over goods in 2 decades. This is going to correct eventually. U.S. consumers will want stuff eventually and not just services. So I don't think Canada is going anywhere fast as far as becoming a second-class citizen in the G10, but certainly their current issues are multitude. Political chaos, essentially a lame duck administration, even without calling an election or losing it. They're effectively out of power already. And an economic situation that's dire. So, no, I don't think Canada is going to fall off the map. I think ultimately the proximity to the U.S. will be a benefit, and North America as a whole, U.S., Mexico, and Canada, will be the powerhouse over the next 5-10 years. Today, the Canadian situation, shorter term, looks awful.
Well, once Canada is the 51st state, or 52nd because we're getting Greenland first, maybe 53rd once we invade Mexico. I don't know. It's so hard to keep up with all the craziness these days.
It gets complicated. It gets complicated.
Yeah, but, you know, it's quite the way to end the year. Dylan, Ilya, it's been an absolute pleasure working with both of you gentlemen this year. I'll see you both in 2025. Happy holidays.
Thank you, Chris. Merry Christmas. Merry Christmas. And then, Ilya, I'll see you on Thursday.
Yes, sir.
For my friends and colleagues, Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Overtime is out of time for today, and I'm out for the rest of this year. So good luck trading. Dylan and Ilya here on Thursday, Monday, and Thursday next week as well. So be sure to tune in. Otherwise, happy holidays and see you soon. Stay tuned, though, because Tasty Live is still on next with Macro Money and Ilya Spivak.
See you there, everybody.
Rock, paper,
Scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
What a year it has been. 2024 has obviously been a year of many, many headlines, tons of market volatility, explosive moves for a whole host of financial markets. And it now winds up on a quiet week with not much macro to speak of and a holiday in the middle for most global markets. So what we're going to do here on Macro Money is look ahead to what is coming for 2025. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is first, we will review how the year has progressed so far. Take a look at some almost over statistics for market performance, and then see how things begin to look as we enter the next calendar year. So this is the performance year to date. This is December the 23rd that we are looking at this 2024. So not quite the full year, but almost certainly, and comparing it to 2023. So we can see stocks on the whole had another year and a year of similar performance in 2023 versus 2024, looking at the S&P 500. NASDAQ, for all of everybody's screaming and stomping about its outperformance, it's actually done less well this year than last, though, of course, still a very impressive rise of nearly 28%. Risk sentiment at the other end of the spectrum getting a big boost, looking at Bitcoin up 120% as compared with the prior year's 157 almost. So a bit of a slowdown there, but certainly a dramatic increase again, and that speaking to the risk appetite on display in stock markets, but of course amplified by a less liquid speculative assets volatility profile. The interesting thing here happening in the meat of the table, though, so we can see yields basically unchanged at the front end, but a touch higher on a year when the Fed is actually cutting interest rates. The 2-year up 2.3% on last year. That's most likely because, of course, speculation for rate cuts was already well underway toward the end of last year. And this year we got just about the rate cuts we were expecting. So yields are even a touch higher. The 10-year showing a much more significant rise. So rates at the longer end of the curve, steeply higher by comparison, 18.8%, almost 19%. Curiously, in that environment, the dollar is stronger. Euro down 5.7%. The yen, the most interest rate sensitive of the bunch, down 10.4%, even as the Bank of Japan started raising rates, the only major central bank to do so. And even stranger still, against an environment where yields are higher and the dollar is stronger, gold up 26.8, almost 27%. This is an asset that hates a stronger dollar, hates higher yields because it is a natural foil for fiat currency, and it yields nothing. So when interest rates go up, gold is typically on the receiving end of selling pressure. Not this year, though. There's an interesting recharging here happening, and the mix of assets here seemingly telling us an interesting story. Crude oil, before we go on here, down for the second consecutive year, albeit less so, and that's despite ongoing geopolitical stress. This telling us that perhaps that geopolitical stress, not much of a disruptor for crude oil markets beyond general media headlines. And so the implications probably limited now that geopolitical risk seems biased to be more contained going into 2025 versus less at the beginning of the previous year. The situation in the Middle East, the situation in the Russia-Ukraine theater, seemingly not inspiring any kind of concern for crude oil, and it's marching to the beat of its own drum, and that beat is leading it a touch lower. But the story in stocks, coupled with the story in rates, coupled with the story in currencies and gold, tells an interesting tale. It tells a story of a robust U.S. economy, which, despite Fed rate cuts, has driven up yields because economic activity has demanded that rates be higher, especially down at the longer end of the curve. The dollar has continued to benefit from those higher yields as its yield profile against other currencies has looked more attractive. And gold has seemingly found a reason to go up, disconnected from geopolitics, because, of course, if it was a haven and if it was behaving as one, it would show up in crude oil gains. That, of course, the chief geopolitical risk on the board this year. And clearly, if oil doesn't care, why should gold? And indeed, gold is up with stock markets. Not much of a haven then. But gold seems to have found its support in the situation happening in China. They've bought a ton for their reserve account. They have resumed buying in November after a pause from April. And that's been an important reason why gold has managed to hold up, even as the dollar has strengthened, even as yields have gone up. But that increase in yields and that stronger dollar with stronger stocks seems to speak to the very impressive performance of the U.S. economy. As we look here, we can see as of December, the U.S. economy raging higher. The performance here being estimated by PMI numbers. They're more timely than GDP. We can see here that toward the end of the year, the composite index, which takes in both manufacturing and services, it's moving aggressively to the top right side of the chart. As a matter of fact, that is the fastest growth that we have seen in the U.S. since March of 2022. So a very significant acceleration here. As ever, these PMI numbers work around a center line of 50, where that's neutral. Above 50 is growth. Below 50 is contraction. Manufacturing, we can see, is still in contraction, albeit at a modest speed. The further you go under 50, the faster the contraction. The further you go above 50, the faster the growth. So we can see a very buoyant service sector is pulling the U.S. economy higher, and slight contraction in manufacturing is not holding it back. That ostensibly helps to explain how you get very strong stock markets, you get higher yields and a stronger dollar, even as the Fed cuts rates. But when we look at the situation globally, we find something much more circumspect. Take a look from the beginning of this year for the global PMI numbers that include the U.S., of course, but also the other economies. And what we find is we haven't done a whole lot. The composite index here, only very little change. There was a pop in the first half of the year. That pop has since fizzled. And so the pace of economic growth is just about where we started the year. It has seemingly stopped improving. And that's because the global service sector has taken quite a few steps back since the middle of the year. And manufacturing, although it was much worse earlier than it is now, it seemingly has returned back to the neutral reading of 50. It nevertheless remains downbeat the world over. So what's going on here? Well, we see here, of course, that the U.S. is mainly powered by its service sector, and we know that most of U.S. imports, that is from the world at large, are on the good side. Services are mainly furnished by domestic firms. So a lot of this boom is staying inside the US and not spilling over, even to very close proximity, very integrated economies like Canada. And so this is why the global picture looks much more anemic than the US one. Now, global GDP growth is mainly dependent on three core economies. The US is, of course, the biggest one. And then there is the Eurozone and China. We can see here that the remaining 42%, to those three economies, 58%, are mainly vendors that depend on demand from the former three. So think Canada and the US, or Mexico and the US. Think Southeast Asia, or the commodity exporting countries in South America, Australia as well, New Zealand as well, and China. Think Central Europe, Nordic Europe as vendors for the Eurozone. And you can see that these three economies are really the linchpins of where growth comes from. And we've already seen that the US is very strong. The situation in the Eurozone is much more sobering, as we can see. The regional economy shrinking for the past 2 months, the composite index sub 50, even as services rebound in December. The situation in manufacturing, as it is globally, anemic, but the rebound that we saw in the first half of the year, arguably a big reason why this global number started to pop by mid-year, that has fallen away. And now the economy is again flirting with recession-like conditions. The situation in China is one of standstill. These numbers run through November. We haven't seen December's figures yet, but as we can see, these are official figures here. This is China's reopening from zero COVID restrictions. We get a brief pop in service sector and composite demand. The pop in manufacturing much more modest. And since then, after just basically a quarter of an initial upswing, the economy drops and settles into standstill. These numbers are barely removed from the center line at 50. So in one major node outside of the US, we've gone basically nowhere in 6 quarters. Indeed, the economy is in deflation mode, where real GDP is outpacing nominal, suggesting that there is virtually no demand to speak of. And in the other, we've returned to what can become recession-like dynamics. Once again, after this shallow recession-like dip late last year. So the world is operating on what is essentially one leg of the stool. It is the US that is powering global growth, and there is no plan B as we go into 2025. Where this becomes a challenge is in the US, inflation has stopped cooling and is starting to tick up a little bit. The most recent numbers for the Fed's favorite inflation gauge, the PCE index, showing that we're holding at 2.8% on core, and the headline number even moving higher, albeit a little bit less than expected, to 2.4%. Now, this is, as ever, we can see having to do with the service sector being as strong as it is, core services where that inflation lives, core goods still slightly negative in their contribution to price, which of course tells you why the US boom isn't spilling over, as we've just mentioned, and housing still largely locked up by what the Fed has done with hiking rates as sharply as it did in 2022. So that bit is waiting for the central bank to cut rates more and perhaps unlock this market. But as we start to get a tick up in core inflation, and indeed at 2.8%, what this means is essentially we have not seen disinflation in the US of any kind since June June was the last time that we ticked down on core year-on-year PCE. Since then, for the subsequent 5 months, inflation has not fallen. And so what we understandably have seen as a response is the Fed has become more hawkish. The markets have called for it, and the Fed has responded. We can see here that where the policy curve looked like it was going in September has been adjusted substantially to a more hawkish setting, even as the Fed began to cut a little bit in the waning quarter of the year here. Of course, 50 basis points cut in September, a 25 basis point cut in November and December, respectively. Nevertheless, the path forward now much shallower. Rates expected to be a full 100 plus basis points higher, closer to 4 than 3 by the end of the year, because inflation has proven stickier. Now, it's possible that the markets have overcooked this a little bit, because we can see that since mid-November, U.S. economic data has actually been cooling relative to forecasts. So maybe this adjustment has gone a little far. Maybe the markets are a little bit too hawkish, bonds a little bit too weak, rates and the dollar a little bit too high. But none of that changes the inflationary path. So although the markets might be wrong by a little, they're probably not wrong by a lot, and they're probably not wrong about the trend of adjustment here. So we're looking at structurally higher rates next year in the U.S. than we thought even 3 months ago, 4 months ago, and by a significant margin. This, of course, represents a problem not just for the U.S., but for the world over. So we can see here in the latest numbers from the Bank of International Settlements, and 2022 is the last time they had an update. There'll be another one next year. They do this every 3 years. But these numbers don't change terribly, especially when the disparity is this large. Notice almost all global monetary transactions are settled in the U.S. dollar. Those of you that have heard various chatter about the BRICS maybe coming up with an alternative should look at this sobering total here. This is all of the turnover moving through the BRICS, of which, as we can see very clearly here, most is China. And everything else, India or Russia or indeed some of the others are clearly a pittance comparatively. Here's South Africa right here. So, and of course, there's Brazil. So most of what's here is settled in dollars. And that's because the dollar is so liquid that it is sometimes cheaper, even when there is a bilateral deal to transact from one non-US dollar economy to another. It is cheaper sometimes to trade that currency for dollars and dollars into the third currency versus to do a bilateral deal, because the liquidity of the dollar is so abundant that that's the cheaper way of trading. So not surprisingly, almost all global commerce is settled ultimately in dollars. And what this means is that if the Fed gets a little bit more hawkish and rates don't come down by nearly as much and dollar credit is more expensive, then global credit costs are higher in general. And we can see that as we look at the way that an average of interest rates from the key economies in Europe and the Asia-Pacific region, Germany, UK, Australia, Japan, the top 4 outside of the US, how their interest rates have moved in lockstep with the US 10-year, even as central banks in the UK and in Germany have cut. The Bank of Japan has hiked. The Bank of the central bank in Australia, the RBA, they've done nothing. But even as that has happened, the rise in U.S. yields has brought a rise in the average of the other 4 of the alternatives. And that just tells you how ubiquitous the dollar is in global trade. That, of course, sets up a very interesting situation for 2025, where the robust performance in the U.S. means higher rates in the U.S., but also higher rates on weak economies that are not seeing the boom that the U.S. is seeing. Moreover, since the world is dependent on a single point of failure, the U.S. economy's economic strength, it is certainly a point of interest that interest rates are set to be higher there, even just locally, because, of course, that would perhaps start to hold back U.S. growth, and to that extent, hold back global growth because there is no backup. So the risk to global economic performance is a significant thing to keep an eye on, and a significant risk for markets as the calendar turns to 2025. Moreover, the stock of global growth is huge by any stretch of the imagination at a time when interest rates are going to end up higher than expected, it would seem. We can see here the full breakdown from the IMF. We find that in debt to GDP terms, because, of course, debt is not scary in absolute, it is only scary if you can't afford it. And debt to GDP tells you how affordable is the debt, are you producing enough economic growth to service it? And of course, in the COVID years, we can see there's a massive surge for global debt as well as for the major economies, the emerging markets, the US and China. The change in global debt was significantly lower in the subsequent years because inflation was roaring and inflating that debt away relative to growth. Well, that seems to have stopped for the world in 2023, where public debt is starting to grow a bit. That's mainly powered by what's going on in the US, of course, and China, and to some extent, emerging markets. But we are now in a place where inflation has come down a lot, almost everywhere, from double digits or close to them, to levels that are much closer, if not quite at, central banks' targets in the sort of 1 to 3% range, depending where you look. And with that, the shaving away of debt relative to GDP, so the affordability improvement that we saw here and here and here and here, is ostensibly over. If you were to find yourself in a global scenario where the US buckles under higher rates, where already weak economies outside of the US have to deal with those higher rates without the benefit of stronger growth, you start to see how a treacherous debt risk starts to emerge. This is made that much worse because this particular U.S. tightening cycle has been unique since the modern era. This is a chart from The Economist going back to 1972. Very important look back period because that's right around when the modern financial system as we know it is born, with the uncoupling of gold and the US dollar and the dawn of the fiat era. So what we find here is that in every other tightening cycle, they're listed here, the outlays by non-financial firms, that is regular businesses, on credit increase when the Fed raises rates. That's, of course, exactly the idea. The Fed is looking to slow inflation, slow the economy, and so it's raising rates to increase how much firms are spending to borrow, to discourage them from borrowing, and cool the business cycle. The 2021 to 2023 rate cut cycle has not done that. And the reason it's not, the reason that actually credit outlays mysteriously are falling even as rates go up, is because during the COVID years, everybody gorged on cheap credit. Well, that cheap credit comes due mainly next year and 2026, and at interest rates that are 200, 300, 400 times those that were incurred. If this happens at a time when GDP growth slows because rates are already high and going to be higher than previously anticipated, then of course debt affordability is that much scarier. Couple that with the most bullish disposition for risk sentiment that could be imagined. A survey here from the conference board showing in the U.S. the percent of respondents expecting stock prices to be higher next year, off the charts. The allocation to equities has only been higher all the way back here at the start of the global financial crisis, and then back in the dot-com era. The allocation to cash has never been lower, looking all the way back to the second half of the 1990s. And so what we find here is tremendously robust risk appetite, which of course is clearly on display when we look at this performance. Now, given the risks, one has to wonder. Optimism is always highest at the peak. This is by definition the peak. But is this the peak? Or could optimism continue to build? It certainly could. But the way the table is set, one does have to wonder if indeed we've reached that peak or close to it, and if equities are in for a rude awakening next year as markets digest all of what's ahead. And that is macro money for today. As ever, we are here right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. It is a holiday-shortened week, but we will be back on Thursday after market closures around most of the world, and we'll have two shows for you next week as well around the New Year's holiday before we come back to regular scheduling. You can follow me here and, of course, opining on the platforms formerly known as Twitter, as well as now on Blue Sky at Ilya Spivak. Thanks for watching. Have a great holiday, whatever you happen to be celebrating. Macro Money will be back on Thursday to finish out the week.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, of course, Katie McGarrigle. Where do I start? Crypto for Beginners, episode 9.
Niner.
How are you?
I'm doing well. How are you?
Yeah, pretty good.
Yeah?
We're getting through the week, right? It's hump day, Wednesday.
Cruising?
Yeah.
We're
I like
not
Thursdays.
boozing, but we're cruising.
Not boozing yet.
I saw they popped some bottles out there.
Without us.
Without us. How rude.
Per usual.
Yeah, I know.
We always get left behind, Katie.
I know. Maybe there'll be some leftovers when we're done.
Maybe.
We can only hope.
Katie, we got to shout out the chat. We're streaming live on YouTube. If you're watching anywhere else, get over to YouTube if you want to type something crazy into the chat. Grumpy Mike, what up? VW Diesel Dork, what up? Those are the only two I see thus far. So if anyone else types in there, I'll scream out your name as well and say, what up? Where do you want to go first, Katie? This is going to be the last episode of Where Do I Start? I think you're going to continue to spend some time with me on air. We've got a lot of exciting things planned for next year, but it's going to be our last show of, I guess, pre-Christmas season. I'm out next week. I don't know what your plans are, but I'm not doing
girly.
this show. Okay.
That's okay, though. You know, it gives people a chance to miss us.
Yeah.
You know?
I'm sure
you
we'll
want
be
to,
missed.
like, have a little mystique, a little, I don't know, je ne sais quoi, so that when we come back, it's going to be even better.
Coming back, bigger, faster, stronger, 2025. This will be the last one for a week or so, but we will be back on Monday the 30th. Last episode of Where Do I Start? We're going to talk about DeFi, liquidity pools. We talked about Uniswap a bit on the last show. Before we do that, though, a little bit of volatility in the market today, Katie.
Indeed. A little choppy chop after that little FOMC announcement.
A hawkish rate cut, as I understand it, and everything's unraveling. I personally think this is a dip to be bought in crypto specifically, but in other areas of the market. How are you thinking about things over the last couple of hours? Because this is pretty quick unwind. I mean, the VIX went to, what, almost 30, maybe almost doubled.
Yeah.
3% down in the S&P. I mean, that's a big move post FOMC.
When you get the text from your dad, like, hey,
Oh,
what's
no.
going on? That's when you know.
That's when you should be buying the dip.
Maybe.
Yeah.
I mean, I'm with you.
The fear is real.
I think I don't think that Santa Claus. Mikey said it earlier in one of our side chats. He's like, "Uh-oh, Santa Claus fell off his sleigh before the rally." I'm with you. I think he maybe just lost his footing a little bit. I think we will see a little bit of a rebound. But as far as crypto goes, I wanted your thoughts on that because this is my first. I'm trying to think of when I bought like my first little bit of like Bitcoin or ETH. First or second FOMC announcement. And this is obviously the first one I feel like we've had a material reaction.
Yeah.
So what are you thinking in terms of like how does it normally work when you see, these larger market moves in terms of like correlated assets kind of all falling at the same time? Or do you just tend to see a little bit more volatility in terms of price action?
You definitely see more volatility with the price action. I think as a result, you see the correlation strengthen. So there are periods of time where we see this positively correlated. There's a strong positive correlation across risk assets when you're moving higher.
Right.
You do see that at times. But like everything else, correlations go to 1 on those down moves. So you have a risk-off move. There was a catalyst today. Jerome Powell, FOMC, interest rate cut, but maybe not as dovish as everyone had priced into in terms of the forward projections into the market. So you see that correlation strengthen. How long does that last, though?
Mm-hmm.
No idea. I don't think it persists. I can look at pockets of crypto right now, some of the areas that we've talked about that are interesting, whether it's in memes or it's in these AI agent tokens and other areas of the market that in some cases, we've got stuff that's up 10 to 20%. When I look at the move to the downside, well, yes, everything is selling off. We were down a lot more in percentage terms, a couple weeks ago.
Right.
Down 4.5% right now. So a little bit of a recovery. We've got ETH back towards 3,700. This is kind of normal course of business. I think if you're, excuse me, I've got something popping up in my chart. But yeah, just looking at a couple of things here. I mean, we got TradingView up. So what? It takes you to the bottom of the range, off of the top of the range. We're going to ping back and forth in between that. We were here just a few days ago when you look at Ethereum. If we go back to Bitcoin,
Right.
Same thing. I think your range is, probably 105, 95, 110 to 100. But I'm looking to buy pullbacks here.
Okay.
Still structurally very bullish. Aside from the fact that, maybe caught a little bit of levered longs off sides with the commentary here following the FOMC. I don't think anything has changed necessarily.
Yeah.
Could this be a redo of, I think, 2018 in December?
Oh, yeah.
We were, this was, I think, the Fed hiking or attempting to hike and then kind of had to reverse that. There was a little bit of volatility in the market. Maybe it's something similar to that. I don't necessarily think so. I think when you look at the kind of more macro picture, still pretty supportive from that kind of growth inflation perspective. So yeah, again, just long-winded way of saying, I think you have an opportunity to buy the dip. Does that dip extend into the mid 90s? Possibly. We know again that Bitcoin can move 10, 20% in a week. So down 4.6% on my screen right now isn't that crazy. I don't think you rush into it, but in terms of how you think about it, I mean, maybe that was it and this is the beginning of the end, but I don't think so.
Yeah. I tend to agree with you. We'll see, right? I mean, and the interesting thing about this is that it trades 24 hours. So, like you're saying, you don't have to have like this lull period that like the futures are closed right now, right? And so is the U.S. market. So you can just keep watching it all night.
That's a great point too. And I want to expand on that, and that this is not just a U.S. thing. It's not the S&P 500. It's not a single stock. Do things like interest rates have an impact? Absolutely. We've done some research previously looking at this, though, and there's not that strong of a correlation. Over time, this stuff has gone up. So with a limited data set, it's hard to find a very strong relationship, given that it's trended higher and you have volatility in between. Some FOMC announcements, it's up a lot. Others, it's down a lot. But there really isn't a strong correlation between that announcement and what happens, within the moments thereafter or the following day. We can't forget, though, that this is global. It's an internet digital asset. Yeah, rates matter. The Fed matters. Absolutely matters to global markets. But so does, Chinese liquidity, liquidity out of the ECB. What the Bank of Japan does, what the Bank of England does, like those things matter too. Sure. And so again, I just want to reiterate the point that this is so much more global in nature that I think Fed interest rate decisions probably matter less over the long term. Like, you remember what happened in the S&P, the last FOMC decision? Like, do you even know if it went up or down?
I mean, I'm assuming it probably went up a teeny tiny bit.
I don't know. I don't remember. But, I think you kind of apply a similar perspective here.
Exactly.
I don't think this was a make it or break it FOMC announcement for the future of Bitcoin.
Yeah. Well, something that I want to reiterate really quickly before we actually get into the meat of today's topic is that we have a couple of new digital events live on tastylive.com. And one of them, if you are just tuning into Where Do I Start Crypto Edition for the first time, Ryan is actually going to be doing our January digital Tasty Live event. So everything you wanted to know about crypto, but were too afraid to ask, hosted by you. I'm super excited for it. You can also sign up for 2 other events that we're going to be hosting in February and March. Yeah, look at that. Great pick of you.
Not bad. They found one good one.
Hey, trust me, there are so many
it's the lighting.
Awful pictures that are probably floating around after having been here this long. But yeah, sign up, tastylive.com/events. It's free. You will get access, of course, to the airing of the digital collectible, and it will be given to you as a collectible after the fact.
Yeah, you can see the others here that are coming in 25 as well. We got Dr. Jim, Mike, his friends, and his whiteboard.
Yeah.
So,
I wonder who his friends are.
I don't know.
We'll find out.
Yeah, I'm excited to meet his friends.
Yeah, I'm excited to meet his friends too. I'm excited that he's reviving the whiteboard though.
Hell yeah.
It's going to be great. So anyhow, I just wanted to give you that quick little plug because I have just gotten so much out of this, very short series with you. I'm looking forward to continuing it as we kind of enter 2025. But if you want to get caught up while we are, in a lull period, you can, of course, rewatch all the archives that we've already done, and then you can catch up again in late January.
Yes.
It's going to be dope.
Well, you want to wrap things up, talk a little bit more about DeFi, Katie?
Yes, I do, because it is still an elusive space to me. I sat in with a meeting with you and Shelly and Tom today, and Lawrence, and I think I got every third word.
Okay.
So I'm excited to continue to discuss all of the applications and uses of DeFi. So what are we kind of talking about today in that space?
I want to throw up the slides here. And today I want to talk about the other side of what we illustrated on Monday. And that was decentralized exchange. On Monday, we talked about decentralized exchange, trading tokens on a permissionless peer-to-peer basis through a protocol, a platform, whatever you want to call it. But in this case, Uniswap, trading through the Uniswap decentralized exchange as being a very pure form of DeFi. What represents DeFi? We're talking about decentralized finance and this concept. Here's a real use case, which is just trading tokens, but without a brokerage firm, without the New York Stock Exchange, without some of those traditional intermediaries or counterparties that you would think of. Instead, it's just using smart contracts, using code. Mm-hmm. So we talked about that. We hit on Uniswap a little bit. I want to talk about where that liquidity comes from and how you can also participate in DeFi as, I suppose, a market maker or a liquidity provider. Mm-hmm. And you can generate yield by allocating your capital to facilitate the trading process.
Okay.
In the same way that you have market makers that facilitate the trading process in the traditional sense, you can play a similar role on chain as an individual. And it can be quite lucrative.
Okay.
So-
I'm curious. Tell me more.
All right. Real quick primer on Uniswap, decentralized exchange built on Ethereum. We've talked about this last show. We've talked about this many times on the show. You can swap tokens. You can also provide liquidity. You need to do that from a self-custody wallet. You have to have control over your keys. You have to be able to sign the transaction yourself, and that gives you the ability to interact here. So you need a self-custody wallet. You plug the wallet into the exchange, connect it to the exchange, however you want to think about it, and then you can participate in this way. A couple high-level things, more jargon, stuff to explain here. This uses an automated market maker model instead of a central limit order book.
Okay.
So there's not really a bid ask in that sense. You have a single price that's through an algorithm. Automated market maker is the model.
So is there slippage? Is there arbitrage?
There is, yes.
Okay.
Yep. All those things exist. And all those things help to, in some ways, keep the market in line. Arbitrage opportunities do for sure. You interact with smart contracts to execute trades. We talked about that. You don't have a counterparty. You just interact with the code base, if that makes sense.
Yep.
It's non-custodial, self-custody wallet. You maintain control over your funds. So you don't have this risk where the exchange is a custodian in the way that FTX was, right? So you are always in control. You're just using this application, but you remain in control of your capital. It's trustless and it's permissionless participation. You simply just connect and you use it.
Okay.
So that's Uniswap. Liquidity pools are one of the ways that you can participate. The liquidity pools themselves facilitate this automated market maker model. So the trading works because liquidity is provided in these pools. It's provided by individuals, institutions, you name it.
My question is like,
anyone can participate.
okay, so is there a single wallet for the institution as well? Or do you think that that's kind of dispersed?
It's the same for everybody. Now, you might have infrastructure that has varying degrees of security that's internal to that firm and its own risk controls.
Sure.
But the way that you participate is the same. At the end of the day, that big hedge fund has a wallet, and you have a wallet, and you're interacting in the same exact way.
Got it. Okay.
Now, what kind of security surrounds that wallet and what services support it might be different than what piece of software you use, but you're interacting in the same way.
Got it. Okay.
So where are we? So liquidity pools and liquidity providers facilitate this whole process. To do this, to facilitate the process, you deposit a pair of tokens into the pool. I'll show you this and it'll make more sense in a second when we look at Uniswap. But if I want to provide liquidity for people to trade Ethereum against US dollars, so just ETH priced in dollars, I've got to have some Ethereum, I've got to have some US dollars. I bring both to the table, put them in the pool. That facilitates the trading process.
Okay.
When people use the exchange, they're either buying or selling one of those tokens. So if people want to buy ETH, what's actually happening is that they're selling USD and they're buying ETH, or in this case, USDC, the stable coin. So that pool is going to reflect that for every trade. There's going to be more or less of each one of those tokens coming into the pool. It's called a constant product model, which is going to be used to calculate the price. But at the end of the day, the output is a price of the token based on how much of each one is in the pool, or a price for the pair. In this case, what's the price of Ethereum?
Sure.
So in the pool, if there's less Ethereum because people are buying it and they're putting dollars in, they're selling dollars, the price of Ethereum in dollar terms should go up.
Right.
If it doesn't, well, then that might present an arbitrage opportunity that you could take advantage of, because over here you can buy something that's cheap relative to where the rest of the market might be.
Okay.
I know that's a lot, but we'll make it real in a second when we take a look at the protocol. The thing that's important about this in providing liquidity is that when you're using this platform, Uniswap, to trade, I want to buy ETH, I've got stable coins. You're going to pay a small fee. 5 basis points in this case. When you trade at tastytrade or any other brokerage firm, maybe you pay a commission, there are some associated fees.
Sure.
The difference here is that those fees go to the people providing liquidity.
Okay.
Those fees are charged on the notional value of the transaction. Those fees do not go to a company. They don't go to a brokerage.
Yeah.
Go to you,
Right.
the user. In a way, you can run your own brokerage on a blockchain 24/7, collecting a portion of a fee that's charged on the notional value of the transaction. And when things are humming, like they have been over the last month or so, and this month's been pretty good as well, there's a lot of capital that flows through this. And if you're providing liquidity to facilitate the trading, you're making a lot of money.
Yeah.
Like we're talking about annualized rates that are at times, and you just look at the 24-hour period and you can annualize it. So it's not perfect. It's going to be wildly variable, but well over 50%. In some cases, well over 100%.
Is there a minimum amount that you would say you would need in order to start participating?
Used to be that you would need a lot more money because the gas fees were so high on Ethereum. When I started doing this, you really only could do it on ETH. And you would pay $60, $100 in gas just to put your pool on. If you wanted to rebalance it, do something with it, interact with the network whatsoever, might cost you another $25, $50. So you had to have enough capital and you had to have a return that generated something, well in excess of the cost to put it on.
To offset it. Okay.
Nowadays, with layer ones, to set some of these pools up, it might be a couple of pennies. So $500, $1,000, I think is a pretty good starting point. So a minimal amount of capital on a layer 2 like Base, Polygon. You could do some similar things on Solana, but we're talking about Ethereum here today. So we're probably going to run out of time, Katie, but I'll try to get through a bit more of this and show you the protocol and interacting with Uniswap. But how do you participate? We're going to take a look at that in just a second. One, get some crypto in your wallet, connect your wallet. So get a wallet, get some crypto, get on chain. Once you're on the Uniswap protocol, you select your token pairs, you set up your pool. I mean, it's pretty straightforward. I'll show you the interface in a second. And then once you do that, you're in.
Yeah.
Generating fees, you can make some changes to your pool, but why don't we just look at it instead of talk about it? Because you can do this in the Tasty Crypto wallet. We've got the DeFi dashboard now. You can do this with the browser extension. You can connect to Uniswap with a browser extension. So just very quickly, and then I want to jump to the browser because I do have Uniswap pulled up there. But here is the current version of the Tasty Crypto wallet. Here's our DeFi tab. Click on Uniswap, and that'll take you to the protocol. You can connect the wallet. We're working on this automatically connecting.
Oh, sure.
But you still have to go through that step and connect the wallet. But you can do that in the upper right corner there.
Either with like your phrases.
Oh, no, this is just a pop-up and you hit another button.
Oh, beautiful.
It's just signing a transaction and basically logging in. You can think of it that way.
Okay.
What we'd like to do to make it easier for people is just push the button and you're automatically logged in.
Yeah.
You can see on here a few other ways that you can interact with DeFi. So a lot of exchanges, Aerodrome, PancakeSwap, Radium, and Jupiter. Those are on Solana. So you want to trade some of these memes and other things that we've been trading. You will go there. OpenSea, you can buy NFTs, that sort of thing. But Uniswap is what we're talking about today. That said, let's jump into the browser, and I want to show you the other side of this, the liquidity pool side, because if you recall, we were looking at swapping through this interface last time. The wallet is connected here, so you can see we've got a little bit of capital in here. Probably can turn this into dark or light mode, maybe a little bit easier to see if we turn it into the dark mode. So our wallet's connected. Straightforward process though. You just click the connect button and then click wallet connect. If you're using Tasty Crypto, you can find the Tasty Crypto app on there, or if you use something like MetaMask, whatever, some of those bigger ones pop up first. But point being, connect your wallet. Once your wallet's connected, the app is able to read what's in that wallet. So it knows, how much of each one of these tokens we have. You can see we've got a couple different chains in here, a couple different tokens. That said, this is the trading interface where we can swap ETH for USDC and any other token that we want. What we want to do next, or instead, is go to pool. So here you can see all of the pools. We've got wrapped Bitcoin versus Ethereum. So this is Bitcoin, Ethereum on Ethereum. USDC, Ethereum. Ethereum, USDT. Another stablecoin, US dollar Tether. So you can see that these pools here are listed by TVL. This is total value locked. You can think about that as the amount of capital in the pool.
Okay, that's what I was going to ask.
Here is the extrapolated or estimated annualized percentage return, and then here's the one-day volume. My advice, if you're just getting started, is to probably go into something that's a dollar base, because now you only have to deal with the volatility of one token. You know, if I'm trading a pair like Bitcoin and ETH, I've got to be aware of both their notional value, the volatility. They are correlated, but does that correlation ever break down? Sure.
Sure.
So if you just trade ETH versus dollars, or you provide liquidity that way, it's a little bit easier to get started,
Yeah.
and you remove the volatility from one side.
Sure. It's like trading, I mean, kind of like a micro currency future or something along those lines, as opposed to a cross, right? Where you're
Exactly.
like, you know, Euro sterling or Aussie Canada. So I get like not wanting to overcomplicate it right away.
Yes.
Okay.
Yeah, I would stick with this, and I would go into something that's got a decent amount of both TVL and also volume. And so you can see here that TVL is 143, but volume is almost 4 times that. So this is turning over quite a bit,
Yeah,
which
there's
means that
participants.
a lot of trading activity, a lot of fees. In the last 24 hours, this pool of $143.9 million generated almost $250,000 in fees. Decent.
Yeah.
Decent return. You can see the makeup of the pool and some other details, and you can just watch as the transactions go through here. So you can see that there's a lot of trading activity that occurs on here. It's not anywhere near what you see in traditional markets, but it's growing, and there's trades that occur frequently enough that you can generate some yield. So all that said, Katie, I want to now set up a pool, or kind of just walk you through how you think about it. Very easy to do that. Here we can see some details about the different pools and then what chains they're on. Here we can create a new position. So when you create a new position, the first thing that you have to do is select the token pair.
Okay. Which two you're going to be entering into the pool.
Exactly.
Got it.
In this case, I want to do this on Base because it's a lot cheaper. So I need both Ethereum and USDC on Base, which we have a little bit for this example, like $40, $30, somewhere around there. But just make sure that you select the token, and then it's also on the right chain. So you
And
can see there's...
you know that that's on Base because of the small little icon in
Exactly
the lower right of it.
Yeah, you have to know that this is the base icon, I suppose, but this is the base icon. This is Ethereum on Ethereum. It is a little confusing that way, and there are a lot of L2s, but you'll see Optimism, Arbitrum, you'll see Polygon. This is Base. This is Coinbase's L2 base network. And you want to make sure that the token that you're going to put into that pool, I mean, this is the way that you would do it, is also that same network.
Got it.
So for here, it'll tell you the fee or the pool that you want to be in terms of the fee tier. When I first started this, the fee tier was 30 basis points. It's crazy. But that was on Ethereum. That was bigger transactions, lower volumes. What you've seen is that this has shifted over time. It's the lower fee, higher volumes. There's more money being made, even though there's a lower fee tier.
It's like a ticket charge back in the day.
Exactly.
The trading desk.
Once you do that, and we are going to run out of time, but the next thing that you do, and we'll continue this conversation into the next show, is you just set your range for where you want to provide liquidity. I'll use a 1 standard deviation range for a weekly basis, given whatever the implied vol and the spot price is. You can provide liquidity across the entire thing, but if you concentrate your liquidity, it's a more efficient use of capital in that for the range, you're going to be providing liquidity only there versus the whole thing wherever it trades. So you're going to get more fees, if that makes sense.
Sure.
So once you do that, you click continue, and you then just simply pick how much of the balance of each token that you have you want to allocate to this. If you were to click the max and you have the appropriate amount of both ETH and dollars, you would just then click review. That'll ask you to sign your transaction. You create your pool. And I don't have one loaded up here, but next time I'll show you a couple live pools. It looks a little bit like a strangle in that you want the price to stay above the low end of the range and below the high end of the range. And as it trades around there, you just generate fees. Then you can collect your fees or shut down your pool. But this is a way to put your capital to work. Yeah. You are effectively constantly trading ETH for dollars at different prices around this curve, but you're receiving a fee for doing that. And so if you're bullish ETH and you put this pool on, this looks a lot like a covered call because you limit your upside. When it goes out of range to the upside, you've basically sold all your ETH. So you just have dollars.
Yeah.
So you're out of range. But you've generated that return off of not only the price appreciation of ETH as it's gone higher in the range, but also the fees that you generate as it just chops around and trades going up there. It's not a straight line necessarily. A lot like a covered call. You have a yield in terms of the premium from selling the call option. You cap your upside. You are bullish. You do want it to go up to that short call strike. But here, you're participating more like a market maker and constantly generating fees as it goes both up and down and chops around versus a static premium received for selling the call option.
Okay. Yeah. This is super fascinating to me. One really quick question. So if you were to flip-flop those and do USDC on top in this example and then ETH on the bottom, that is a different pool?
Nope, same thing.
Okay.
Yeah, you can look at it and set it up that way too. So I could set the price range up as USDC or ETH, just depending on how I want to look at it.
Okay.
To me, it's easier to see it priced in dollars.
Yes.
But yeah, it's the same thing. So the ETH USDC is the pair. You might have people that are buying ETH, selling dollars, or vice versa, buying dollars and selling ETH.
Got it. Okay.
So selling ETH $4.
Right. You're just there on the dance floor.
You're the market maker.
Yeah.
The market maker is the algorithm, but you're providing liquidity for the algorithm to make markets. And the algorithm, people can read the white paper. They can learn a bit more about how this works. There's a lot of similar mechanisms across decentralized exchanges. But the fact that you, as an individual participant, can allocate risk capital to facilitate the market making process and then generate fees as a result, I think is pretty interesting and real use case here of DeFi.
Ryan, I'm very, very excited for what is to come as we close out. Where do I start? My learning journey is not over.
Yeah, we're going to naturally keep this going, and we'll be back on Monday the 30th. But I think we're going to start to trade a bit more, actually do some of these things that we've talked about, put our money to work, talk markets a bit, and I'm sure there will be almost this educational component to it, even though it's not where do I start.
Yeah.
You'll have a lot of great questions. Hopefully I'll be able to answer some of them, and we'll go forward.
I'm sure you will. All right. Well, if I don't talk to you, have a lovely, time off.
Thank you.
Away.
You too.
You deserve it. And hopefully we see a
too.
little rebound this afternoon and into tomorrow.
All right. Fingers crossed. That's going to do it for our show. We'll be back in another week or so. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes.
Yeah, man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby, I like the looks.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Oh, yeah, it is Monday, December 23rd, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And, man, are there some incentives governing our world today? Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be somewhere over here, there's only one place to do it, and that's on the evil, soon to be reformed Google YouTubes. Speaking of YouTube, we should say what's up to everybody that's already in the chat. Shout out to my good friends Donna, Ski. I shouldn't say good friends. Who knows? Maybe you don't think of me as your good friend. I think of you as mine. Donna, Ski, Sleepy Mocha, Cato Prime, Brian Watson. I'm going to mess this up. Taquetsu Sai. I'm sorry. I'm not good. I ain't had much learning. Katan, what's up? Dav, what's going on? So many more. Do me a favor, everybody. Just keep the chat rocking. It'll spoof the Google algorithm into tricking or getting as many people in here as possible. We can save the world one view at a time. Nice one, Victor. I try, my good friends. What a week last week. And we start this week to the upside. Not a ton of huge volume over the last, today, but the S&P 500, my baby's up 0.75%. The NASDAQ up 1%. The ever outperformer. Thank you, Katan, for those random ass characters. Donna says, I think of you as an online trading friend. Okay. I get the degree of separation. Hold on, Victor. I wouldn't say a friend. I would say you're an online friend. You just online friend zone me, Donna. I'm cool with that. Dow Jones, Grandpa's favorite index, up about 0.5%. And the Russell, the little engine that could, down about 1%. What a week last week. I have this feeling, though, and I asked Ilya this question, do you think what we saw on Wednesday was a reason to believe the narrative had just changed, or do you think it's an expiration week and funny things happen on expiration week? I don't know if the complexity, I don't want to say it's not the complexity. I don't know if the texture of the market necessarily changed the middle of next week. We shall see. This is another goofy week where it's hard to get a feel on the market. Why? Because it's sort of a shortened, funky, low volume holiday week. And in low volume, any move can get exaggerated. But nonetheless, my babies, we are above 6,000, right around 60.50, which if you watched last call yesterday, Tom gave you his playbook. He said as the market got anywhere close to the highs on Friday, he'd start to lean against them. And they got there towards the end of the day. They didn't give them up They drifted ever so slightly towards the highs. So not a ton of two-way action. Maybe around from 1 to 2, the market gave a little bit back. But from 2 until 3, that last hour trade, they got bulled up again and traded towards their highs. NASDAQ at 21.7, the Dow Jones at 43.3 after, what was that, like 11-day slide, something like that in the Dow Jones. You know, if you can't make the papers by people buying up the index, I suppose you could make the papers by being weak. And we had just a nasty slide, sort of marked by that Wednesday slide down to 42 and change. Guilt by association, Donna. Skew pops, but 2 tasty rotations. Catan, you're probably using some literary effects there, but I don't understand what you're trying to say. I thought we would have a little Santa rally today, but no, it's almost catatonic trading, a little up, a little down. Yeah, I think so. But I think the interesting thing about today is the continuation of the puncture of volatility. The last time I seen you guys and ladies, you people, what do you mean you people? The last time I had seen all of you, we were looking at a VIX in backwardation ever so slightly on Thursday. And you know, if there's one thing that the market has taught me, and we talked about it a little bit on Thursday, it's that if you're looking for opportunities for short-term risk taking, you know, I don't want to say it like that. Backwardation in the VIX is statistically a decent area to try to pull that off. Can backwardations last longer than 1 day or 2 days? Yes, they can. And we made that point, I think, last Thursday, great financial crisis. I think we're in backwardation for something like 150 days, something. It doesn't have to mean revert instantly, but that is probably the exception rather than the rule. And 2 trading days later, 2.5 if you want to count Sunday, but 2 trading days later, you now have sort of a normal VIX term structure. That front end, both cash and front end futures, we've gone from, I think, you know, at some point we were at 27. We were at 27. Front end of the VIX curve was higher than sort of the back end, and you had full backwardation. We would go from 27 to basically collapsing down to 21-ish, and now at 17. So a continuation. And I would say probably this is probably an area where you probably look for that to settle out. Why? Because your 17, 18 handle, that's your long-term average, long-term normal in VIX and volatility. You know, that 13, 14, that's probably, I don't want to say it's abnormal. I shouldn't say that's abnormal, but I would say that's, things are going swell. And if you notice, we didn't last too long in that 13 handle until we got a pop, and we got a significant pop. So what did we see when VIX was at the 13 handle? What do we say? The distribution curve, you start to get a right-leaning distribution curve. What does that mean? More overall sessions in absolute numbers, more absolute sessions of leaning, higher, grinding higher, but what do you get? You get an accompanying fat left tail. What that means is you're probably going to get more instances where the market just grinds higher. However, statistically speaking, to move your expected value to keep it even, because you have a right-leaning distribution curve, you get a fatter left tail to sort of even out that expected value. So that the pot, this is what Tom says, the pot odds favor the downside move. That's what he's saying. And what did you get last Thursday? You got that nice sort of 3-4% move, depending on which major you're talking about. The Russell's been weak for a couple of weeks now. Shout out to Elias Spivak. But generally speaking, you get this violent 3-4% day, and it takes a couple of days to normalize that out. But that pot odds discussion, when you got upside moves, you're getting moves from like 0.25%, 0.5%, 1%, and when you get your downside move, it's a 4% day. That's that pod odds discussion. I might say it in a slightly fancier way, with a right-leaning distribution curve with a fatter left tail. It's all the same thing. I'm a visual person, so it's not really a fancier way to say it. I'm just explaining the image I see in my head. And others, they're talking poker talk, statistical talk. They're talking statistics. But you did see the payoff. Whether you got the follow through, that was the big question. And I would say emphatically the answer has been no. No, you have not. And our good friend Chris Vecchio has been sending me all these statistics. I think he misses the microphone. I'm telling you, that guy can't take a day off. But he was sending me, I think, something to the extent of all of the times where breadth goes from a large amount of breadth to a small amount of breadth. A small amount of breadth to a wide amount of breadth. So that's basically what we saw Thursday, Friday of last week. You basically had the technology sector leading the market higher, tech leading the market higher. Breadth is absolutely garbage by the middle of that week, and that rally, that explosive rally we got on Friday, that was everything. Everything participated to the upside too. You had sort of a lot of breadth all at once. He sent me this fancy chart with all these fancy sayings on it. I go, that's one of the fanciest ways to say buy the dip I've ever seen. We had a good chuckle at that. Shout out to Chris Vecchio wherever he is enjoying this vacation. Sector money flows today. Technology led the way. Healthcare up 1%. That's interesting to me because we've been talking about just how on their butt healthcare it has been. And it kind of doesn't matter which name you pull out. It hasn't been an individual name story. Let me zoom out here so you can see. Pfizer was on its butt. We started talking about getting long. I'm a little long Pfizer, which makes me sick to say, but I am. Moderna is on its butt. Eli Lilly had a little bit of a discount, not as much, not as pronounced as some of the others. Even if I look at just XLV, the sector ETF, you can see it's come off those highs of nearly, I want to say, 31.5, all the way down to 20. There we go. Try this. Sorry, I had the wrong symbol up there. It's come. I was thinking, I thought that doesn't make sense. 160 down to 140 in XLV, excuse me. But not just these, it's the insurers too. And I know that's not necessarily healthcare. Technically, these are financials, the healthcare companies. The insurance companies. Down from 630 all the way down to 500. There's some extenuating circumstances here, but a lot of these instruments have taken a haircut, right? So maybe the market is priced in the discount to future cash flows with a new administration, perhaps changing in low-hanging fruit regulation. The market's already seemingly pricing this stuff in. Why do I say that? Because I think it's important we all realize United Healthcare didn't just peel off from 630 to 500 for no reason. Right? Is there a change of leadership? Is there a negative headline? A bit, sure, but that's not enough to really change the price of your stock. What the market is anticipating is a shift in the underlying either business or business conditions. So in 3 months or 6 months, when you see some new legislation passed, when the new administration gets sworn in, don't be surprised if you're seeing these stocks do the opposite of what you would think. Because right now, before you get the headline, before you get the new legislation, before you get the more difficult business environment for some of these stocks to operate in, the market already priced it. So now when you get the headlines that drop and they'll start to say the negative things, the market will have already priced it. Watch. Can difficult conditions get worse? Yes. If they start passing things or creating conditions that the market had not forecast, sure, you can see negative reactions. I'm just saying the market on Pfizer didn't go from 30 to 24 for no reason. And currently, the only thing that happened is an election. There was no headline. There was no changing business condition. There was no new legislation that's been passed. So the market's doing its best to forecast a change in the future cash flows, putting it out there. And it's hard for me. You know what I mean? There's a part of me that goes, I don't want to be a part of the swamp. I don't want to be a part of the messiness. There's a part of me that believes Pfizer and Moderna, they've got some explaining to do. Then there's another part of me that goes, look, I got to provide for my kids' college. You know what I mean? I gotta leave something behind when my heart stops working for the kids. And if that alpha exists in a healthcare company, if that alpha exists in a, I don't know, shameless to say, like a private prison company, if it exists, somebody else is going to take it. And so is a weird part of me that just goes, look for the discounts, look for value where you see it, and play it, because the market doesn't care about my investment or not. That opportunity is going to come and go whether I'm a part of it or not. Gosh, the conflicts in this business, I swear. It's tough. Am I the only one? Are you guys going to leave me out here and say I'm the only one that has difficulty making these types of decisions, that knows that I'm participating in a system that I want to be better? But if I throw a few investment dollars at a leadership team or a business model that leaves me conflicted and makes me somehow part of those negative outcomes, am I the only one conflicted by this? Okay. If you're not conflicted, you're probably not thinking deeply enough about this stuff. Like sometimes I look at some of these therapeutics, right? These therapeutic companies that do a lot of, like, let's say plasma donations, right? Plasma's great. It helps save people's lives. It is a good thing, net. Then I went down the rabbit hole one day and I researched the plasma industry. Not great. 75% of the world's plasma comes from the United States. In other words, we are exporting the world's plasma. There's only 2 countries in the world who allow for the payment of donations. I think we allow a donation once every 2 weeks, and we've never done any long-term studies on what frequent plasma donations actually do to the body. Why not? It's tens of millions of people who are making ends meet in an inflationary world by donating plasma. We don't want to know if this has long-term deleterious health effects to those individuals. Shouldn't we have done that by now? I think so. I think by weight, something like that, we export more blood than plasma in the United States. We have the world's most lenient plasma donation legislation, which ultimately is why we allow the payment for the donation, which is ultimately why we supply the world's plasma. Anyways, I don't know. I go down the rabbit hole with this stuff. And then if you go far enough and deep enough, you'll find the conflict. That's what I've realized. Go far enough, go deep enough, you'll find where capitalism and humanism intersect, and somebody's made a choice. Anyways, sorry. By the way, it's my morning. So at least for you, this is 5:30 at night. Imagine waking up at 7 in the morning and this is how you see the world. Energy up 0.2%. Finally, we got one on the board. Let me see what you guys are saying. Texas Redman says, my morals and politics. It's a good book. I don't know if it's a good book, but whenever I'm starting to feel like I'm starting to question capitalism, I read what the Theory of Moral Sentiments. I think think that's the book by Adam Smith. He talks specifically about the morality. Pretty good. Pretty good. Let's see what else you guys are saying. Mess with my portfolio on a semi-regular basis. Catan says, I'm sticking with LP1 stocks. What could go wrong? Here, I'll tell you what could go wrong, Catan. The new administration decides to take a more cautious stance towards Medicare funding these LP1s, and also decides to mandate long-term health studies somehow, some way. That could, I mean, it could, in theory, that could happen. For me, supporting my family takes precedence over other considerations. Yeah, Donna, I know. What you're just saying is you're a rational, self-interested actor in an economic system. But here's the problem. Now look at the prisoner's dilemma. So flip it. In capitalism, we all act in rational, self-interested ways. But in game theory, technically, the way to get the best outcome, if we look at prisoner's dilemma, is for us, in some ways, to not only, it's like Nash's theory of equilibrium, not only to consider our own rational self-interest, but to also consider the best interest of the group. That's the little thing that they never really talk about. Let's see here. Just get the papers, get the papers. Oh my gosh. You like how I did the accent too, Paul? I knew where you were getting that from. Andrew Juarez says, no, Victor, we don't care because you're a nicer person than most people. No, that's not true. I don't think so. I think all people are inherently good. No humans are born bad. You can socialize a good person into bad choices. But eventually, the sinner in us emerges. Catan says moral and politics too. Two messy words for traders. I agree too. You can't trade politics, or shouldn't. You got to be careful. Ralph, you're not the only one. I understand maybe 3% of what Victor talks about, but I'm here to learn so slowly. I don't know if that's a good thing. They say if you can't explain it to an 8-year-old, you don't really know it yourself. So if you're coming here every day and you're only picking up 3%, I think it says more about me than you, my friend. My bad, Sleepy Mocha. I'll do better. What are the LP1 stocks? What's that? Nova. I'm blanking on them. Let's see. There you go. Throw some up for you. So Nova Nordisk, I think Eli Lilly, technically. I think Novo is probably one of the most direct ways, but Eli Lilly, Pfizer, and Amgen are some other indirect ways. And when I say indirect, what I'm saying is it's not 100% exposure. But NVO is probably the closest with the highest amount of direct exposure. They took a chunk out on Wednesday and Thursday. I didn't see that. This one would have been a decent short put candidate. The IV rank has collapsed though, so you can't do any. Hard to sell premium now with only 30% implied volatility and an IV rank at 17. But it is cheap on an absolute basis relative to itself, not talking valuation. Novo at 88.87 and has been as high as 150. If you're curious, I'll tweet it out. I'll tweet it out later after the show if you want to follow me at Victor Jones. The Owen Jones is 0 because I like to be difficult. But the Congressional Budget Office, the CBO, don't ask me why. I check the CBO website, I'd say once a month for the reports that they do. Because a lot of the stuff that they do is interesting and they never announce it. Like not a few months ago, they basically did a couple of reports of ways to resolve the deficit in the budget, not necessarily to pay down the $36, $37, $38 trillion, but to close the $2 trillion deficit that we run annually. So that if they separated the report into two parts, big ticket items and small items. That was an interesting one. The other one was the impact of LP1 drugs and the potential cost and net savings of effectively subsidizing GLP-1s for the public through Medicaid, Medicare. I'll retweet that one out. To me, that one's worth going through because it's like I don't have the researchers to go through and try to make the estimates, but I think it's interesting at least to see where the government is in making their estimates on what will save, what will it contribute to GDP, what the increase in growth is, and what the cost is. The net cost was, I think, another $400-500 billion to the deficit. So it is it's a net negative. With some positive externalities, but it costs. But anyways, I'll tweet that stuff out. It's worth taking a look at. Hims seems to be taking a share from big GLP-1 stocks, but here's the problem. I liked Hims. I liked this stock. There was a few that I really liked in fertility. I like this one as sort of like a fertility or lack of testosterone as testosterone solution. That was my play. But as soon as Amazon came into this business, and that was right around here, this big discount was Jeff Bezos announcing that he wants to sell hair and I was going to say a pretty crass word, hair and erectile dysfunction pills. The stock has since recovered. It ended up being a nice little discount to buy into. I'm still long Hims, and they are, if I'm not mistaken, to your point, starting to work down that path. I'm always curious, why is it like, what is it about hair, and I actually know the answer to this, hair and erectile dysfunction that's linked? But I guess I know the answer to that. Let's keep going here. Brian Watson says balanced budget. Think it's going to happen? Let me ask you, Brian and the chat, let me ask you this question. Do you think we're going to see a balanced budget in the next 4 years? And I'm going to say a balanced budget is if we even get close. So let's say I'm going to give them a fudge factor of $400 million. I'm going to give them a fudge factor of $250 billion. Do you think we balance the budget in the next 4 years? Yes or no? Big trucks, Victor. In the next 4 years, do you think we balance the budget? I'll wait for your answers in the chat. I'll move on, and then I'll come back to this topic. Next 4 years, do we balance the budget? And balancing means come within $250 billion. That's all we have to do. We are currently running a deficit just shy of $2 trillion. All right, let's keep cruising. Before I talk specifically about bonds and notes, let's go ahead and take a quick look at the yield curve. Take a quick look at the yield curve here, and you can see what continues to happen. I thought that's probably a dangerous word. Dangerous phrase. But what we've seen here, the red line is the first cut in September. I remind you every time, but it's just in case there's a first-time viewer. What I like to do is look at the yield curve at different points in time. The yield curve, the yellow or the red line represents the yield curve, or where yields were along the tenors, along short-term rates and long-term rates, where they were at the time of the first cut. The first cut came around September. I think it was September 18th. Somewhere where we started a 50 base point cut. The green line is the second cut in November. The blue line is the third cut, December, just last week, which we've now memorialized with a static blue line at December 18th. And the yellow line, which we've now added, is the yield curve as of today. And you can see as they've dropped short-term rates are over here. As they've dropped those short-term rates from 5% to 4.75 to 4.5 to now 4.25, as they've dropped those short-term rates, the long end is lifting. And not only is the long end lifting, but what's happening as the long end is lifting, the Federal Reserve is also communicating higher levels of inflation expectations. So think of it like this. Why would the long end lift as they're cutting rates? So let's sort of think about the short end is the policy end. So what the short end is doing is monetary policy, because the Federal Reserve actually controls Fed funds rates. So what they do with short end rates, everything sort of in the shorter end is linked to the Fed fund rate. The policy rate goes down. It means that they're not necessarily taking care of inflation. They're easing up on their inflation fight. So the higher they keep those short-term rates, the more confidence the long end is going to have that those high interest rates are going to slow growth and inflation in the economy. But as you drop the short end, what you're saying is we're putting less pressure on growth. We're putting less pressure on the economy. And as you do that, you're unlocking the potential for future growth. You're unlocking the potential for future inflation. So as the short end rates drop, the long end is saying, oh, you're putting less pressure on the things that I care about. Because think, what does a long-term bond investor care about? They care about the purchasing power of their investment. So if they put a ton of money in these treasuries that's paying them 4% or 4.5%, and then at the end of 10 years, they're going to get their principal back. A bond investor wants the purchasing power of all the principal that they're going to get back. They want that paid for. Whatever purchasing power has been eroded, they want that paid for in the yield, and then they want some surplus yield on top of that. So the lower you take short-term rates, the less confidence a bond investor in the long end says, I don't know if I'm going to get my purchasing power back, because I think inflation is going to be more of a problem. The lower you take these rates, the more inflation could become a problem. So I want more yield to make sure I get the purchasing power back. And I want an additional premium I want an additional premium each year, each month, because I have a little bit less trust in what you're doing. So I'm going to charge a little bit of a premium given the lack of trust I have in how you're executing monetary policy. So this is sort of the thinking, very simplified thinking of why we're seeing long end rates go higher. That a bond investor has less and less confidence that they're going to get repaid, the purchasing power repaid, along with an effective yield that covers their risk over this next 10 years. And so we're seeing this dance with the long end rates and short end rates as they move, the short end rates lower, long end rates lift. I sort of thought that as we got to the opposite end, as soon as we got to this point in time, which is what I feel is the pause, after the December cut, they are signaling a pause, that they're not going to move in January. And depending on what the inflation data shows from now until March, they could end up pausing in March. They can end up pausing for using inflation as an excuse not to continue to move rates higher, or lower. And if they do that, they're going to be doing exactly what the bond market wants them to do, which is not to necessarily lower rates, to put pressure on growth, to put pressure on inflation. And so in theory, I thought that on the flip side of this December cut, we'd actually start to see yields move the other direction. We haven't seen that yet. What is one of the reasons why we perhaps have not seen that? Well, because they gave the bond market a little kiss before they left. So before they closed the door and said, we're going to pause, which would have potentially got the market to buy up bonds and then ease financial conditions and then create animal spirits in the marketplace, they gave the reason a market to hold on, the bond market, a reason for pause. What was the reason? They put what's called a summary of economic projections in front of everybody last week. So not only did they cut rates, which the long-term bond investor doesn't love, again, because lowering rates puts less pressure on growth and inflation, which then erodes your purchasing power, which means maybe you're going to sell bonds because you don't have the level of confidence, or maybe you're going to demand more yield because you don't have the level of confidence that they're doing what they're supposed to do from a bond purchasing power standpoint. So what did they do that slowed the potential for the marketplace to go in and start buying bonds and ease financial conditions? They put this summary of economic projections in front of everybody, and they said, hey, be afraid of inflation. They said, remember when we told you we were going to be on pace to get to 2% by 2026? Remember when we told you to expect only 2.2% inflation for 2025? We were wrong. And we weren't wrong by a little bit. We weren't wrong by 1/10 of a percentage point. We were wrong. We're moving that to 2.5%. And that's a pretty big, that's off by a ton. Imagine the Federal Reserve is responsible for two things: stable prices and maximum employment. And they just told the marketplace that their projection for prices was wildly off 12 months in the future. They were so far off, and they had to adjust that from 2.2 up to 2.5. That's a big difference. So all of a sudden you're in a situation where if this is 2.2 and growth is 2.1, well, that would mean a bond yield, doing simple back of the napkin calculation, of 4.3%. And yields in the 10-year prior to this announcement was, I think we're like right here, 4.4%. So in my mind, in my thinking, the marketplace was at 4.4%. Their previous SEP had yields being in the ballpark of 4.4%. And so I was thinking maybe they true up 0.1%, maybe even 2%. And if they do, you're probably going to get a rally down to like 4.3%. You get a rally in bonds and yields come back down to 4.3%. Was the way I was kind of thinking about this whole thing. But I didn't really see a world where they were going to push this up 2025 and then move off their 2026 target to get to 2%. I didn't see that world. Probably should have in hindsight, but I didn't. But this is the reason that sort of kept bond investors from coming in and buying, in my personal opinion, because now you're telling people to expect 4.6% at best. And guess where we are right now, my babies? Yield moved its little way up to 4.6%. Now, inflation expectations, the data could substantiate being worried about 2.5% inflation, or the Fed could have pie on their face, and we could have disinflation much faster than people are expecting right now. There's a case to be made where China's currently in deflation. Germany's economy hasn't looked good, let me say. And the global economy has been slow. But if that's turning, there's a case to be made where they have undershot these growth estimates, that this doesn't need to be 2.1%. Remember, the current administration is trying to aim for like 2.5% or 3%. If they got 3% growth, add 3% onto 2.5%, and now you're talking yields of 5.5%. That's basically how this works, back of the napkin. And I said this on Thursday. This is a what do you believe market. Do you believe growth and inflation are going to just roar in 2025? Or do you think we're rolling and that the economy is softer than the headlines are articulating, and that we're not going to get close to 2.5% inflation? The risk is going to be the opposite, and growth will be muted. In that world, yields look pretty attractive. But I think given the unknowns, 4, 6 probably early. Maybe get to 5 before that becomes an interesting risk reward. Because if you think your worst pain as a bond investor is 5.5%, you're somewhere between the yield should be somewhere between 4.6 and 5.5. You probably start to take your bet with high confidence at 5%, your midpoint. So maybe I'm a little early. At 4.6%, maybe I'm a little early, but I'm risk defined and it's small, so I can stomach it. Let's see what these guys are saying. What did you say about the budget? McNutty says no chance of a balanced budget inside the next 4 years. Brian Watson says 25 delta on a balanced budget happening. I think that's probably good. That's a good number. No chance of a balanced budget. Only if they mint a $2 trillion coin. Smart response. Darren says, hell no. Victoria, thanks for going over this again. Still new. You're all good, Victoria. Cactus Leo, Boomer Bonds. Here's the reason I go over this. One, because I don't think a ton of people on the network talk about bonds. So at some level, it's find your niche and create value across the spectrum of investment opportunities. I don't think I'm the greatest at speaking about bonds, but I think giving people some reason, some fundamental aspect of thinking about yields, it helped me. Maybe it'll help some. Because to me, yields are anything but technical. I could care less. There are a lot of markets where I care about technical analysis. Yields and the bond market are not one at all. So anyways, that's part of it. And then two, I just think, to me, all of risk taking is behind the yield. In other words, the yield is first. And if you understand the yield and the volatility around the yield, to me, then you can start pricing risk further on down the curve. But if you don't have a decent handle on the risk around the interest rate, well, that's the core of your risk curve. That's the very beginning, and everything follows that behind. I can tell my daughter just woke up. Sorry for the crying in the background. I gotta soundproof this room one day. So Shab says, LOL, is the long-term bond a good buy at this price? So safe side, wait for 10-year, then buy ZB1. So safe side, wait for 5%. So here's the cleanest way to say what I just said, Shab. The safe side would be to buy yields above 5%, somewhere between 5.25% and 5.5%. That would be quote unquote safe. We might not ever get there, but if you're trying to be safe and avoid risk, given the current projections of the economy and inflation, the safe side would be buying yield somewhere between 5.25 and 5.5. The more moderate risk and reward, and if you can get it, you probably got a decent price. But the question is if we ever get there. A more moderate area to buy, what you probably have 1 unit of risk to 1 unit of reward, is probably buying bonds at 5% yields. I am crazy, and I already have a position. It's small, so I'm going to ride it out. I'm okay owning ZB at 4.6%. But I acknowledge I'm probably early. So, Shab, if I didn't have a position, if I was coming into this with fresh eyes after just getting a look at the SEP, that's the way I would answer your question. I think this previous low in the structure of the market at 112.5, or I should say 112 to 113. To me, I'm sort of playing the idea that the market may buy yields at this range in a short-term basis, but I'm okay taking pain. So, but your question was, where's the quote-unquote safe? Nothing's safe because none of us know the future. But given the information we have today, it would probably be between 5.25 and 5. My moderate bet's at 5%, and an early aggressive bet is somewhere now at 4.6. And it's aggressive, but the idea is we have had buyers at yields at 4.6 to 4.7% in the past. We'll see if it happens again. No problem, Shab. It's a good question. I realize sometimes I can be the either or, the two. It's like the joke of the two-handed economists. This could happen or this could happen. The truth is, Shab, I don't know what happens in the future. I just construct ranges where I think I've got decent bets and go, do I want to be aggressive, moderate, or conservative in my bets? And then I just hope I've carved out the right ranges. Let's see here. The volatility of bonds is crazy right now. Not sure why you invest in them. Tradable. Now, I would say that's true. So Joe says the volatility in bonds is crazy, or excuse me, McNutty says the vol in bonds is crazy right now. Not sure why you would invest in them. Tradable now. I would agree with that statement. I would tend to agree with that statement. But I also think yields are sort of a F around and find out. We're clearly searching, we're plumbing for higher yields on purpose. And we're trying to do that slowly and methodically. And the idea is the slower and more methodical you get there, the more opportunity that participants in the economy have to adjust to those higher yields. And you're probably going to pick off, the companies that have really high levels of debt, really poor business prospects in the future. They're likely going to shutter their doors. They're going to sell their assets. But you don't want all of that creative destruction in the economy happening all at once. So you kind of we float along making higher yields, but very, very slowly. And if you're able to do that, the unemployment rate ticks up slowly. Zombie companies start disappearing slowly. Consolidation happens to the bigger corporations that have cash to buy up those decent assets or competitors or M&A activity slowly. So in time, you see a consolidation of actors in the economy, hopefully low volatility and unemployment. I mean, that's what this whole thing looks like, right? That's how you get to a higher yield, slow growth, and you try not to crush the economy at the same time. It's a slow, methodical process. Seems like that's what we're doing. And so to your point, why would you invest in bonds? I don't know. I don't know that I would, because I see over time the very real potential of higher U.S. yields unless we clean house internally, right? Unless we give a bond investor more reason to want to buy yields at 4.6% because we are going to be fiscally responsible, and the purchasing power of those bonds are going to require less yield to be confident that you're going to get it back. Until we provide that to the bond investor, then likely what happens, assuming they continue this managed destruction, the likely path is going to be higher yields. Because you don't have central banks buying this stuff anymore. You need to find a natural buyer. If you can imagine how much of this paper all central banks were buying forever, and all of that paper still exists, and we now need a private buyer to buy up all that paper. And we're going to find the real yield, the market rate on all of that paper, both in the U.S. and across the globe. So I do think yields over time creep higher, but it's not always about like where I think yields are going in the longer term, right? As a trader, I'm trading a 30 to 45 day cycle, and though I think we'll be at 5% yields at some point in 2025, I don't think we go straight there. So I like to trade the counter trend move. So if I feel the trend is towards higher rates, some people will only trade with that trend. So they'll wait for a bond rally, then they'll sell bonds betting that yields are going to go higher, bond prices go lower. I'm not that guy. I'll trade the bond. I want to trade the bond rally and the bond fade. But unfortunately, trying to trade the bond rally is hard. The understatement of 2024. I think the good thing is we called that yields are going higher, and we called that it was going to happen on the cut. And we called this rally. I just thought it would have a little bit more staying power than it did, but it didn't. Let's see, McNutty. Part of the selling has to be the fall expansion in what is supposed to be something else. 2022 was a disaster for bonds. I would agree with that, McNutty. You know, the larger the range in the wider the distribution curve of the potential outcomes of rates, that reverberates through everything. Let's take a look real quick. I love going to this FedWatch tool. Most people just, if you just Google this, just Google CME FedWatch tool, something like this, and this is the tool that comes up. It's delayed, I think, by 15 minutes, but it's free, and I think it's decent enough. I don't think you really need the real-time probabilities. And if you do, you have one of the most interesting trading strategies I've ever come across. But most people stay on this current tab, and they're just basically looking at the probabilities of a cut at each one of the meetings. I really like looking at the aggregated tab because in some way it pulls out the implied curve and makes it much more useful for, I think, the average everyday person, what they're actually looking for, which is not only the probabilities that at the next meeting they don't do anything, right? There's a 94% chance that at the next meeting they're just going to hold rates. And then currently a 54% probability that even in March that they're going to hold. And that the first cut of 2025 isn't going to come until May, is when we're now talking about being at a Fed funds between 4 and 4.25, and then for the rest of the year, the market has them holding it. So literally only one cut priced in to 2025, and that's in May, and then it's holding for the rest of the year. And remember, we were just at 3 cuts 2 weeks ago, folks. Prior to the CPI 2 weeks ago, this was at 3 and a possible. It was a December cut plus 3 and a potential. And the CPI came in warmer, PPI came in super hot. And then the FOMC said, you should expect 2.5% inflation next year. And the market goes, oh. And now you've got people talking about the potential for a hike, which I don't see happening. I think if anything, they hold all year. I don't see a hike happening, but I also think this is probably peak hawkishness. Some part of me wants to say this is peak hawkishness, and I think somebody I follow said the same thing. Fed Guy at Fed Guy 12 is the follow on Twitter. He used to work at the Fed. Joseph Wang is the name. He wrote a book as well. I think it's called Central Banking 101. Great book. If you want to know sort of the inner mechanics of monetary policy and how the banking system works at a very, very high level, explained really well. It's a really good book. It's not too long either, a couple hundred pages. Let's see here. Black Swan event has to be when people don't show up for an auction. Scary stuff I try to forget. Agreed, McNutty, but like that's the thing that's the boogeyman that's been there for like decades, Andrew Juarez, I've watched a lot of media traders be early over and over with the long bond. It's much more relaxing to just wait for extreme and go bigger in size. I think that's good advice. I think it's good advice. At some level, I'm probably a little bit damned. Like there are, if I'm being honest about the bias in my job, it's if I came here every day and I just said not doing anything, if I didn't have an idea or I said, I'm just sitting on my hands, that would be a pretty boring show. I'm not saying that I don't believe in the ideas that I do share, but I'm saying I'm probably biased to look for constant opportunities in a way that likely if I didn't have a stream every day, I don't know that bias would be there. I'm just being honest, but there's no part of me that consciously goes, I gotta make up a trade idea. I don't do that. Anyways, let's talk for a little bit about some of the big movers for the last, what book was that? I Need Knowledge. I believe it's called Central Banking 101 by Joseph Wang. It's the only book Joseph has written, I believe. I think his handle on Twitter is FedGuy12. I'll type it all in for you. Central Banking 101. It's a good read, in my opinion. Another scorcher of a day for Palantir, up 6% last week, not day. Trading above, broke the highs up to 82.02 today before falling back. A little bit of a doji candle. I'm sorry for bringing in those words, but Palantir's just been a monster this year. I swear I'm gonna sneeze. Palantir was the biggest trade. The biggest trade of 2024 for me was Palantir. I don't know what to do with it now. I think a short call position just got exercised, so I'm gonna have to reestablish. But man, what a monster Palantir's been. I don't know that I would put an incremental dollar here, but I don't know that I would fade it either. Kind of a tough trade. I was a bit surprised by Tesla today, and I'll tell you why. Over the weekend, I don't want to go too political here, but over the weekend, President-elect Donald Trump was speaking to, I think, a gaggle of reporters over that Turning Point conference or something like that. And he was asked about, there's just like this recurring media narrative, which is President Musk. And in my personal opinion, that's done for an audience of one. Trying to play to Trump's ego. And I think, call me conspiracy theorist, but I think it's purposeful to try to sow division in the alliance of that group. And he responded. He said, President or Elon Musk is not president. I am, something to this extent. And I was like, oh, one, I just thought that was bad politics. Because he he sort of talked about something that was silly in a sincere way, and it breathes life into a story that doesn't need life. But then also I was like, I wonder if that's good enough to bring Tesla down a few bucks. Some part of me was thinking that in and of itself, that the president-elect saying, putting separation between himself and Elon was enough for some downside. And I'm glad to know that that's not the case. Tesla up 2% today. Because I think it would have shown how fickle this rally has been. It's based on a relationship and not necessarily anything of substance. I guess for now, the market didn't take it too seriously. And it looks like this rally has a little bit more legs. Is anyone trying to fade Tesla here? Congratulations if you did it last week. But you think that's over with, or would you still try to fade it here at 430? That's always the tough part of trying to fade Tesla, right? You probably want to fade it at 400, and you're right, but the problem was the price to fade it was 490, and it only pulls back to 430, which means you're still a 30-point loser. That's the tough part of playing both sides of a market. Just a second. I want to sneeze so bad it won't come out. Let's keep cruising here for just a little bit. I'm going to skip over the dollar. I'm going to talk Bitcoin as sort of the implied dollar discussion. If I sneeze here in a second, you're going to know why. But that move off of, it seems like just the weird thing about last week was there was no flight to quality. So like the thing I was asking myself was like, where'd the money go? You know what I mean? Where did the money go? It didn't go to the short end bonds. It didn't, short end of the curve. It didn't go to the long end of the curve. It didn't go to commodities. It didn't go to value stocks. Didn't go to tech. Bitcoin, gold, silver. Is it like, where did the money go? Is the thing I keep asking myself. I suppose the dollar got a little bit stronger, and that's part of the answer. But it was a very, it's not like it went to like overseas markets. It's not like China rallied or Europe rallied or anything like that. If anything, they actually rug pulled a lot of the international markets too. Here's Europe, disgusting down day candle. Here's China. China's not going anywhere, I suppose. Let's go Mexico. Brazil. If I went around the world, you'll see that money came out of all assets globally, and I can't figure out where the hell it went. Help me out. Can anyone tell that the reason I like to watch money? The reason I'm bringing this up is I like to watch money flows. So every Saturday and Sunday, what I do is I figure out, okay, what was the sector rotation? Was there an international rotation? Money go domestic to international, international, domestic. Bonds, commodities. I look at money flow in the weekend, and I'm like, there's this gigantic hole, and I can't figure out where the hell everything went. Just went cash, I guess. And how does that make sense? How does the Federal Reserve telling you that inflation is going to be 2.5% next year, and people go cash? How does that make? How does that make sense? It doesn't. I couldn't figure out the money flow last week. But anyways, Bitcoin down to 94.8. I'm still long a little bit. I told you on anything below 88, I'd have to reconsider. Shab says the money goes to fart coin, I guess. Oh my gosh, I can't believe this is real. How are we not living in a simulation right now? But anyways, Bitcoin down to 94.8. I said I would stay long until 88, and then I would change my thesis. Yeah, at 88, I'd probably have to reconsider the environment that we're in. But I think at 94.8, I don't think this, so there's some part of me that goes, it would be normal to trade around 100,000. I didn't think we would. I thought we would quickly see 100 and then go to 115, 120 to get the hook, to get people. I thought what would happen is the human psychology would say, we hit 100,000. It goes out in all of people's news feeds and their 5 o'clock news programs. And for whatever reason, the psychology of crowds goes, this instrument hit a big number, I want some. And I thought that would be the catalyst for people to go. They would have FOMO, and you get a bunch of new liquidity, moving it from 100 to 115 or higher. I thought that's how human psychology would play itself out. But it didn't. And instead, we're seeing this consolidation around 100,000. So do I think just because we've gone to 94.4 that the trade is over? Not yet. Not yet. I think we've gone 8,000 over, we're 6,000 under. I don't think it's a big deal. I think we could still be trading around 100,000. So I'm staying long. And again, for anyone that's new, we think about Bitcoin on this show in two buckets. One bucket is the stuff you buy and you don't touch. The other bucket is this. We also want to trade around price movement in Bitcoin. We're talking right now about the second bucket. So we were long at 61.5 on a rejection of 100,000 the first time. We got long around 91. I should probably put it here. And we said we would play for something like 115 to 120. And if we had a reversal below 88, that's sort of where it would change my mind, and then I would close out the position. So we're sort of in between. And I think it's very possible we stay range bound around 100. We'll see what happens. Gold at 26.30. Still not a bunch. Found legs at 2,600. I think some part of me wonders if I should move up the target. I had told you guys I would feel comfortable buying at 25 if they broke 25, especially, so in the 24 handle. But it seems like there's buyers at 2,600, and they're not really giving us an opportunity to buy gold cheaper than that, which is why I've changed my strategy from buying the underlying to moving towards, I'm going to say it again, you guys can cook me if you want to, but this is why I've started to buy the miners. To me, there's a bigger discount built into the miners. So do I want gold? Yes. Do I want it cheaper? Yes. But if it's not going to get cheaper, either because China or other central banks or just because of market dynamics, well, then that would be good for the miners in theory. If gold's not going to come off 2,600, to me, they've taken too much out of the miners. And if it does get down to 24, 25, it seems the miners have already been priced that way. So anyways, I'm going long Newmont. I've added to the position, and then the new one, which Pete brought up this Sunday, which is Freeport McMoran, which is a copper mining company. I think about 70% of the revenue comes from copper, so it's highly correlated to the price of copper. It's now at the 38 level, where we've had some support in the past. Let me show you a longer term chart of this. I just do not understand it. I'll speak to this here in just a second. So a decent area. It's not the cheapest area we could be in, right? That post-COVID dip to 25 would be more interesting, but at 39 you get into some sort of a discount. What I don't understand, tell me how. How do you have inflation expectations moving up and commodities, generally speaking, getting crushed at their lows? How? One of those things, it's likely one of those things is not true. And this is why I'm buying bonds and buying commodities. Because one of these two things is not telling the truth, or both. How do you have inflation if commodities are going down? In that case, you're going to have disinflation. Crude oil's not moving. It's flatlined at 69. Copper's at lows around $4. I guess natty gas is sort of doing natty gas things to the upside. But my point is, a lot of these commodities are moving lower. At the same time, inflation expectations are moving higher. What I'm sort of betting by going long commodities and long bonds is that inflation expectations will come in, and commodity prices will come up. In my opinion, those need to converge at some level. And that's what I'm doing, if you're curious. It's a painful trade because, commodities in the last quarter, it goes from like being the most loved, materials go from being the most loved to the most hated. It's this crazy binary trade. And last quarter, it went from being loved to very quickly being unloved. But I think one of these two things are true. Either commodities are at the lows, they're forecasting low global growth, and that means you need to bring your inflation expectations down, which would mean bonds rally. Or inflation expectations are correct, and these commodities need to come up with growth expectations and those inflation expectations into 2025, or they need to converge. But in one way or another, I'm buying that divergence. That's basically what I'm doing every single day. Money went to donations for the Trump inauguration. Yeah, everybody kissing the ring, donating $1 million to get their sit down, to get their dinner at Mar-a-Lago. It's so weird how they do that stuff right out in the open, isn't it? Here's $1 million. Can you now invite me to have dinner with you so I can say sorry to your face, and don't kill my business, please. That's basically what that whole thing is. All right, everybody. It is Christmas Eve for me. So I want to say we got some preparations to do for the day. But I want to say happy holidays to all of you out there. I'll see you back in a couple of days whenever we come back off the holiday. I want to also thank all of you for this year. It's been a cool ride. I know we're not to the end of the year yet, but I'm feeling the festive and holiday spirit mood. I'm wishing you all the best in 2025 in both your trading, your professional lives, as well as your personal lives, whatever your pursuit, whether it's like health, mental health, family, travel, whatever your thing is for 2025. I wish you a lot of joy, and I hope you're able to accomplish all the goals you set out to accomplish and much, much more. I want to thank you for being here and choosing to be here. You can do a lot of stuff with your time, but you choose to spend it here, and it means a lot to me. From the bottom of my heart, thank you. Happy holidays, everybody. We'll see you back here on the flip side of the holidays. Peace.